Market action over in the Asian session, how much of that feeds into the European session, given that yesterday we only saw a 1% drop in the S&P 500. That seems to be magnified across Europe. Remember the futures picture, the DAX was the underperformer. I wonder how much of that we see this morning as well. Let's get these markets open. The FTSE 100 is virtually unchanged at the open. Give it a second to kind of trade out. It might take you a minute to start to see some of the volume shake out. But remember, we are expecting a sell-off. And there it is. The FTSE 100 down about 0.7% and dropping as we speak. Some of the early action, some of the early underperformance really priced in to the periphery. The IBEX down a whopping 1.6%. And you can see the FTSE 100 really isn't able to hold up very much, Val.
Well, look, when it comes to the sectors, maybe no surprise in this risk-off move. The one at the very bottom of the list is banks. The sector is down around 2%. We're seeing some weakness in HSBC, some weakness in Banco Santander, and the likes of UBS as well. So broad risk-off move when it comes to the financial sector. We do at the moment have just one sector in the green. That is healthcare, but the remainder at 19 in the red. And when it comes to the spread between the stocks up and down, we only have 21 stocks in the green so far to start this morning's trade. The remainder 495 in the red. So this is very much tilted towards a risk-off move. The biggest points mover to the downside is HSBC. So again, banks weighing on the broader indexes this morning.
The upside one move is kind of fascinating. Healthcare is the outperformer. Is that a defensive trade right off the bat? We should also mention this is the sector that's been kind of beaten up lately. A lot of this has to do with some of the concerns around the Swiss pharma sector as well. This has to do, there's a whole Novo Nordisk, Metsera trade in there that's been weighing on the sector broadly in the last couple of months. There's a couple of drug trials that didn't quite work out in the States. You have seen that read-through show up into the European healthcare sector as well. So this also feels like, even though it's seeing a broader sell-off, that green on the screen might just be a little bit of a rotation when it comes to that sector.
Yeah, and it does look like it is down to Roche. Shares are jumping around 6% in Switzerland. They did have some successful phase 3 trials when it comes to one of their drugs. So perhaps the main bright spot across Europe today amidst a sea of red, frankly, across our screens. There you can see some of the decliners are also the basic resources stocks, Rio Tinto and Glencore, steeply in the red this morning.
Not surprising. If you're worried about a China read-through, if you're worried about some of the Asian price action, those is immediately where you're going to see some of the pain points. Let's talk about an individual micro story. It feels like a macro kind of day. There is a micro story in the works, though. AkzoNobel has agreed to acquire smaller rival paint maker Axalta Coating Systems. It's a cross-border deal. We don't get a ton of those here in Europe, creating a coatings company with an enterprise value of about $25 billion. Where I'm pleased to say we're joined now by the CEO of AkzoNobel and friend of the show, Greg Pugh-Guillaume. Greg, a pleasure to have you on the program. Thank you for making time for us this morning in this very exciting news. I'll throw it over to you. Walk us through the merits of this deal and why now when you've considered it before.
Well, it's a really exciting combination. It's something that we've looked at for many years. AkzoNobel and Axalta make a lot of sense together, a lot of business sense. As you said, it's going to be $17 billion of sales, $25 billion of enterprise value. It's very synergetic, $600 million of just cost synergies annually. And I think this is also a good remedy for the macro blues. In a time of uncertainty, having mechanical value creation like this makes sense. And it's a no premium merger of equals, where AkzoNobel is paying €2.5 billion to its shareholders up front. And then we make that a 55-45 deal, 55 for Akzo, 45 for Axalta. I'll be the CEO of the combined entity. Rakesh, Axalta's chairman, is going to be chairman. And then we'll be off to the races.
through your decision to move your listing now to being primarily in the New York Stock Exchange. You were dual listed, but after this acquisition, you plan on being primarily listed in New York. What drove that decision?
Well, if you look at the investor base of AkzoNobel today, 62% of our shares are actually in U.S. hands. The coatings space is heavily dominated by U.S. investors. So as we combine the two companies, it really makes sense to be listed in the U.S. and might as well keep it simple and have a sole listing in the U.S.
Greg, speaking of that listing in the U.S., you also made a key point in your previous comments there, talking about a no premium merger of equals. Can you just walk us through decision-making on what got that across the line? Were there some compromises you had to make in those negotiations?
Well, there's always compromises, particularly on things like the governance. You know, who's going to be running the company? How's the board going to look like? What's going to be the parity? What helped the transaction happen is that both companies were actually doing well. So as both companies were performing, we're subject to the same macro pressures. So that's also an equalizer. And at the end of the day, there was a window from a valuation perspective to make it work. We were willing to find a workable arrangement on the governance. I'll give you an example. I'll be the CEO. Rakesh is going to be the chairman. It's going to be a Dutch domiciled company, but it's going to be sole U.S. listed. And also, we're doing away with all the traditional bells and whistles that you have in Dutch governance. So it's going to be a one-tier board, not a two-tier board. We're taking away the shifting, which was the foundation that was kind of a defense mechanism on top of the company. So we're making it as much as a U.S. company as you can be as an NV. And we think this is going to be exciting for investors who are mostly American investors anyway.
Does this decision to, I guess, as you were just mentioning there, become mostly a U.S. company in the way you operate, does that have anything to do with U.S. tariffs and perhaps having a better supply chain in order to skirt around some of the highest tariffs out there that I know that you and your competitors and many out there who are in goods trades, imports and exports have been dealing with a lot of tumultuous decisions around?
No, it doesn't, because AkzoNobel has 130 factories around the world. We've got about 30 of them in the U.S. We're very much a U.S. company in the way we operate in the U.S., and the tariffs are not an issue because we've got local production very much as the U.S. government desires today. So we go from 130 factories around the world to 170 factories around the world. If anything, that makes us even more local, but that wasn't an issue in the first place. It really is about reinforcing ourselves in the U.S. market because it is the strongest coatings market in the world. But it's also having a face that our investors are comfortable with. And once again, our investors at AkzoNobel are mostly U.S. investors, and our peers are mostly U.S. companies. So we're joining the party, and we're excited to be U.S. listed as we will be when we close the transaction.
Greg, it's fascinating that you want to join the party in the U.S. at the moment because we are literally on a day where we are seeing a massive sell-off. We're worried about perhaps some of the market reaction that we are seeing. That being said, take the markets out of this. The economy is also slowing down broadly. So some would argue that the party that's been happening in the United States will not be lasting very long. Just from your perspective, what kind of demand trends are you seeing? Are you seeing a slowdown from some of your customers?
Well, I said joining the party in the U.S., maybe it's, buy low, sell high. But at the end of the day, we're very confident about the strength of the U.S. markets. We've seen some of our markets go sideways this year, but we are seeing signs of life towards the end of the year. And we think this combination with Axalta that reinforces us in the U.S. is going to be very beneficial for our company and our shareholders over time. So it's you don't do these mergers based on a specific window of the market. You do it because it makes sense over time, and this undeniably does.
All right, Grégoire Poux-Guillaume, AkzoNobel CEO, joining us this morning at the market open on a very exciting day for the company, of course, as we talk about merging with Axalta Coating Systems. We thank you so much. He was talking there about the party in the United States. We talked about the sell-off that we're starting to see. Let's get a little bit more analysis on that from a macro perspective. I'm excited to bring Kevin Gordon, head of macro research and strategy at Charles Schwab, over to the show. New fun title, by the way. Congratulations on that promotion.
Nice to see you.
It's nice to see you. You picked a great day. I do feel like every time you come here, the market sells off.
Yes.
So maybe we should.
It only happens when I come to London.
It does.
So.
It does. And I think it's because we're all clamoring for your take on this. Is this a pullback or is this a pop?
So it's interesting because the fabric of the sell-off up until yesterday, I would argue, was actually more concentrated really in these highly speculative, junkier parts of the market, especially if you're just looking at the U.S. So the overlay to a year like 2020 was actually really interesting because what was really rallying at the end of that year into 2021 was SPACs and meme stocks and non-profitable tech. There's a similar flavor of that this year, where most of the concentration in terms of that significant outperformance, both year to date but also off the April 8th low, has been in quantum computing and drones, and it's been in these little bit more sort of arcane and niche parts of the market. It hasn't really started to impact higher quality large cap tech until I would argue a day like yesterday, where there was a little bit of a flip, where it started to infiltrate more of what we think of as sort of the traditional large cap space as opposed to the more speculative stuff. But even if you look at performance over the past month, the underperformance and the severe drag has disproportionately been in favor, or maybe out of favor of those speculative parts of the market. So I still think that there's a relatively healthy underpinning to all of this, especially when you look at breadth under the surface. But I will say, one of the things that's been a bit more disappointing over the past week is we've failed to see so far a pretty impressive jump in, a metric that I love to track, which is the percentage of companies above their 200-day moving average. You just haven't seen that much traction there. And I think if that slips below 50%, then you have to start reassessing if this is going to be maybe more of a drawn-out severe correction.
Well, Valerie and I were debating, and we've debated, I think, with all of our guests this morning, what the catalyst actually is. There's a lot of them here, right? There's the bond issuance, there's the Fed, there's the cryptocurrency piece. What's actually driving this?
It's really take your pick, because I think, a lot of the stress actually started, and what we started hearing was this narrative around the government reopening in the U.S. and us finally starting to get a lot of the data. And I think part of it is driven by the fact that we're really facing this data hole, H-O-L-E, not W-H-O-L-E, in October for U.S. data, because so much was just missed in terms of collection. I mean, especially when you look at something like payrolls, the reference period was missed. Arguably, it was missed in November, although that's probably a little bit easier to retroactively go back and get some of that data. But for something like CPI, you're looking at a whole month of data collection that just did not happen. So, you talk about that affecting monetary policy, the Fed really being hamstrung. I think at the next time they meet, there is a chance where they're just in total blackout mode in terms of the data that they have available to them. So I think a lot of it was sort of this realization that there is going to be a little bit of this flying blind period, or at least impaired vision period for the U.S. economy in terms of the official data that we get. Not to say that we don't have access to certain data that have carried us through, and I think corporate earnings was probably the best bridge that we had. But I do think that has been a fairly significant driver, especially because the reality is we're probably not going to get a clear read on the U.S. economy until, I think, well into the first quarter, maybe even closer to the summer. You think about fourth quarter GDP being artificially depressed by the shutdown, shaving off 1 to 1.5 percentage points. Then you think about first quarter GDP artificially almost inflated because of that bounce back from everything reopening. So it's going to take a while for this to churn.
Yeah, I guess we all want clear data. UK is struggling with those kind of pictures as well. But even when it comes to the U.S., even if we did have a clear picture, the labor market on a weakening track, GDP looks okay. I mean, that puzzle in itself, someone is going to have to interpret on what that means to monetary policy, because it's not even clear if that was, if that was the data we got from October, if that did move into November, what the Fed should do off the back of that.
Well, that dynamic that you point out is really that's the supply story that we've been seeing so far in the U.S. this year, and mostly driven by, there's a heavy piece of it, a heavy chunk of it driven by just aging demographics that we have in the U.S., not a unique U.S. phenomenon. I mean, it exists across developed markets. But specifically, when you look at something like immigration policy, I mean, our immigration flows have slowed considerably, basically down to stall speed. We've also seen a pickup in deportations. The fact that you have payroll growth slowing as much as it did, especially when we got revisions to summer jobs reports, showing that effectively it slowed to zero. But then you have the unemployment rate remaining relatively stable, just shows you that that's more of a labor force supply crunch as opposed to the significant drop in demand where you're seeing, layoffs really spike. So that's how GDP can continue to grow, because the stock of labor is still relatively high. I mean, you're bumping up still against all-time highs. We'll see if that changes in the jobs reports that we get going into 2026. But the fact that you have that month-to-month, income growth for the average consumer in the U.S., that keeps the spending train in motion, that essentially keeps GDP in motion.
Yeah, I'm really keen to hear more of your thoughts on immigration, because I don't think that's being discussed enough. The fact that, border crossings have basically dropped to zero. And essentially, you can even look back onto what happened during COVID under Biden. There was a lot of immigration to the U.S., and that was something that's kept inflation substantially above the Fed's target. Now, flipping that around, a lack of immigration, does that imply a disinflationary force to you, or is just the nature of GDP at the moment now will paint a different picture?
Well, it's interesting because if you look at the forces, well, certainly right now, I would agree with how the Fed assesses this, and that the labor market is not some massive source of inflation. So I think what is still plaguing us from an inflation standpoint, and I will say, hovering, yes, we're averaging around 3%, but that's very different than being, closer to 5 or 6% like we were a couple of years ago. That was happening in the context, as you mentioned, of a labor market that was just red hot and on fire. Now we're very much in cooling mode. So there's just not as much coming from the wage inflation side of things. Does that change a little bit next year? I could see that actually happening in certain sectors when you think of those that are more dominated by immigrants, and in particularly undocumented immigrants.
Like used cars, for example.
Yes, there's that. There's construction, leisure, hospitality, manufacturing, retail. So to the extent you get any of a demand pickup in those sectors, whether it happens via some fiscal stimulus, if we are going to see $2,000 tariff dividend checks go out to U.S. households, if that does become policy and you do see some more demand in those sectors, that's where I think there's a little bit of a mismatch from an inflation perspective, where you could see some stress. But I just think that most of the lingering inflation is going to be what we've already seen, where most of it's driven by the services side. You've seen a little bit of a pickup in goods because of tariffs so far. Whether that extends into next year, I think it's still too soon to tell, because companies have been able to manage that price handoff or lack thereof so far. But I still think that there's enough lingering pressure to keep you closer to 3% as opposed to 2%, and that really hamstrings the Fed, especially because this is mostly supply-side driven inflation. This is not demand-side driven inflation. Very different set of rules and set of sort of a different environment that the Fed has been used to in the modern era.
And yet there are still a lot of rate cuts priced into this market. Yep. Is this market overestimating not only the Federal Reserve's dovishness, which may ultimately come to fruition in 2026, depending on the cast of characters, but also overestimating the impact of the fiscal spend that's been promised by not only the Trump administration, but by a series of other investors around the world?
I think the overestimation is still on the part of monetary, not as much on the part of fiscal. I mean, when you look at, we've actually already started to see some benefits from the big, beautiful bill so far this year. We're only expected to see more next year. When you look at the tax rebates that Americans are expected to get, come April, expected to be relatively substantial. And if we do get more tariff dividend checks, if that happens, that'll be another round of fiscal. So I think that on the monetary side, and yes, you're seeing this sort of firsthand in the market, I would argue that's another piece that's driving the sell-off. Some of the more speculative parts of the market that have really high debt levels, and even down the cap spectrum into the Russell 2000, that's where you've seen the most pockets of stress so far this week. So I think that's more of a rate play in the pricing out of a rate cut, at least in December. But I would layer on to that, and I think what's more important, it's what's really going to cloud the outlook for the Fed, is what happens with the Supreme Court case with Governor Lisa Cook. I mean, that really has the potential to change a little bit more of the fabric of how the Fed is going to operate in 2026. So, and nobody has any insight as to how the court's going to rule. We don't start getting the oral arguments until January 21st. So after that, I think you can start to maybe reassess how you're thinking. After the decision, you reassess or confirm, depending on what the decision is, what the thinking is around how the Fed, decides to handle both labor and inflation going forward.
We've got a fun 6 weeks ahead of us to the new year. Kevin Gordon, head of macro research and strategy over at Charles Schwab, joining us around the table. Lots going on when it comes to this market sell-off. Coming up, more coverage from Bloomberg's Africa Business Summit. Up next, an exclusive with Patrice Motsepe, chairman and founder of African Rainbow Minerals. This is Bloomberg.
coming to you live from Kuala Lumpur. The whole world is here.
APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
Conversation around your company.
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 21 minutes into today's cash equity session, and there is a lot of red out there. The Eurostoxx 600 is down 1.2%. We are trading in the red when it comes to U.S. markets as well, but we're well off the lows. The NASDAQ futures are down by 0.5%. S&P 500 futures down by 0.4%. Remember, the S&P 500 index did cross below its 50-day moving average in the session yesterday, so risk is really feeling on a back foot ahead of these key NVIDIA earnings on Wednesday after the bell. But joining us now to discuss this and more is our Markets Live executive editor, Mark Cudmore. Mark, what is going to take these equity markets out of this negative funk that we've seemed to have been in now for a few weeks?
I think it's mainly going to be time, Valerie. I think we just got overextended to the top side. We had not really seen any volatility in the kind of equities boom of the last 6-7 months. So a pullback started a couple of weeks ago, and we've talked a lot on the show in the last few weeks about how we didn't think that pullback that started at the end of October was exhausted yet. I'm not quite convinced we've seen exhaustion yet, but I feel like we're getting closer to that point. There's certainly no signs that the AI bubble is bursting. This is just about a little bit of froth coming out of the market. The bubble will reinflate again going into next year, and I expect that NVIDIA earnings will confirm that narrative, that there's still the spend going on, there's still the growth in CapEx and in revenues for names like NVIDIA to justify the bubble inflating for now. It will all come crashing down at some point, but not just yet. Now, despite the fact that I expect NVIDIA to kind of confirm that the AI bubble has more to inflate, I actually am not convinced there'll be positive price action. We've talked about this before, but over the last 15 months, generally NVIDIA earnings have actually been a sell the fact events. They've generally shown exploding growth, but people have used that as a chance to take profit on one of the most phenomenal stock stories, and that might kind of feed into the broader narrative.
Certainly something we're going to be watching very, very closely. Mark Cudmore, I'm sorry we don't have enough time with you, but of course we're looking forward to getting your analysis throughout the rest of the week. MLIV Go for more from Mark and the rest of the team. In the meantime, let's get back to the Bloomberg Africa Business Summit with an exclusive conversation between Patrice Motsepe, billionaire executive chairman of mining company African Rainbow Minerals, and our very own Jennifer Sabasaja. Take a listen.
The multinational corporations that are either based in America or in Europe. And I think to a large extent the same applies to the South African portfolio managers and those who invest in some of the biggest companies in South Africa and in the rest of the world. And of course their risk profile is significantly different because they don't have to invest in any particular country or continent. They look for the most competitive countries where the risk is low or acceptable and the returns are very high. So if you talk about what you were referring to in terms of which industries am I most excited about, I like when you talk about industries because that's relevant, but it's always about the companies.
Specific companies.
The businesses that invest in those industries because it's about the management, it's about the CEO, it's about the specific countries within which those companies operate. So we are in 38 countries through Sanlam in our partnership with Allianz Financial Services. We're doing exceptionally well. We've got a bank here, Time Bank, that has got 12 million clients, and we made a huge investment in the Philippines. And then, of course, we're involved in mining. We have a very exciting renewable company, African Rainbow Energy and Power, and the CEO is most probably one of the most knowledgeable executives on the continent. He was the CEO of Eskom, Brian Damas. And we've made a lot of investments in telecommunications, in technology, and agriculture. But Africa is exciting.
But so it's not sector specific. What do you look for when you're trying to find the next time bank? Let's say if you're interested in data centers and AI, what is it that you're looking for? Is it the personnel? Is it, give us a sense of what ARM or ARC is looking for.
Well, you know, African Rainbow Minerals has got 30,000 employees in manganese, iron ore, PGMs, and there's the mining company. And of course, in the mining industry, it's all about grade, it's about cost of production, it's about cash flow, it's about dividends, it's about the performance of the share price. African Rainbow Minerals is listed on the Johannesburg Stock Exchange. And we merged our company called ARM Gold with Harmony. And Harmony's got about 50,000 employees, and it's doing exceptionally well. Copper mines in Australia. There's a huge investment that we are currently looking at in Papua New Guinea. That may require, we've got a partnership there with Newmont that might require as much as $4 or $5 billion to be invested down the line.
Is that what you're planning on doing?
Well, we'll be there for the long term. I mean, copper, if you look at the energy transition, if you look at the green economy, climate change will forever be with us, will forever be a challenge. And copper, as well as some of the minerals that we are mining in South Africa, are very important for the green economy, the transition. We're also trying to get a balance because many of our investments tended to be long-term. I mean, some people are good at making money overnight. I unfortunately have a lot to learn in that regard.
Oh, come on.
Yeah.
Really?
So we tend to do reasonably better with a 3, 5, 7, and 10-year perspective.
Can I ask you about copper versus gold? Because this year we've been looking at the price of gold. I imagine that's been quite a boon for Harmony Gold and for your investment there. But you mentioned copper. In the long term, are you looking at maybe which mineral might potentially be more beneficial to the business?
You know, gold is a very cyclical business. I mean, over the last few years, it's done exceptionally well. And we started with 22% equity in Harmony when we merged ARM Gold with Harmony. And over the years, the gold mining industry has experienced enormous challenges, and that's why we have to diversify. But again, we'll always be in gold. And it has done exceptionally well. The price has gone through the roof. The central banks are buying gold disproportionately. And but our objective has always been to look at gold from a medium to long-term perspective. We're getting good dividends. We've got about 20 billion rand in fact, we've got 13 billion rand of cash, and we've got facilities of an extra 7 billion. And a lot of that money is going to be used in part of it in Australia and part of it in Papua New Guinea. But Australia and Papua New Guinea is primarily copper because, from an African perspective, as well as from a shareholder perspective, you've got to look at those, and when you talk about mining, those commodities where you've got a comparative as well as a competitive advantage. So we'll stay invested in copper and gold, and in South Africa, we will continue investing in PGMs and huge investments in iron ore as well as manganese.
So you do think there is a substantial future for mining in South Africa?
Without a doubt. In South Africa and on the continent, but we've got shareholders all over the world, and part of our obligation is to have a geographic diversification. So African Rainbow Minerals has invested in a copper company in Canada, Surge Copper, and that's going, it's going quite well. But we are competing, whether it's African Rainbow Minerals or whether it's Harmony, we are competing against some of the best companies in the world. And you've got to not just hold your own, but build a track record of success, of successively and consistently delivering competitive returns.
Can I talk about what I think is your other investment, South Africa, this country, right? Sorry, no one laughed there, I tried. Patrice, there has been quite a bit of good news for the country over the past few weeks, few months, 18 months since the GNU was formed. What is your view on where the country is right now? Because I think 2 years ago, many people wouldn't expect we'd be at where we are. How do you see it?
Well, South Africa has got enormous potential. We've got some of the best businesses, some of the best CEOs on the continent, and Elon Musk was born in South Africa, is that right?
Do we want to remember that? I don't know, maybe.
Yeah. But the point is, we've got some incredible people in the private sector. We've got world-class academic institutions. We've got two major challenges. And let me start with what I regard as a very important challenge is unemployment, our youth, the poor who have no jobs. Many of our people have challenges, even those who are employed cannot make ends meet. So we have to create a country, an economy, and the private sector is key. If you look at the most successful economies in the world, they've succeeded because the private sector has identified those countries as good places to invest, good policies, whether it's legislative or fiscal or tax. The governments welcome investment. So the private sector in this country is critically important. But as I said, side by side with the private sector, we've had problems with Eskom, big problems. We made big mistakes there in the past. Eskom was a world-class electricity utility, and we should never have had load shedding. It should never have happened.
Are you confident it's in the past, though, right now?
Well, without a doubt. And why I'm saying that is because part of the mistake we've done in the past is that we would employ people either because I don't know, the person who employs likes you, or you are my uncle, or my,
Are you referring to corruption?
Well, meritocracy.
Okay.
Meritocracy is non-negotiable.
Okay.
Corruption is non-negotiable. And of course, part of our challenges is crime. We can make billions of dollars on tourism. But, when I was at the FII in Saudi, a few weeks ago, I was in Silicon Valley because we spent a lot of time trying to learn and see where, this AI, artificial intelligence technology, generative AI, and its impact, not just on economies, but countries and the future. So one of the biggest companies, the CEO said to me, we want to come to South Africa and open a business. It's a company.
Okay.
And he said to me, but is it safe? Because I need to bring some of my smartest people, and we want to make sure that their families are safe. So it's a reflection of the bad name and the bad reputation that we've built over many, many years. And we have to be more effective in making sure that our crime levels come down enormously. And the perception worldwide of South Africa as a good place for investment is attractive.
Would you say that's the biggest concern right now for the country is the perception? There's, of course, the elephant in the room. The U.S. president is not coming this week for his own allegations about the country. Is it a perception issue about South Africa? Is it an infrastructure issue? Where do you think the improvements start?
Well, there are two issues. Perception has an almost determinative influence on people's views. And what we have to do is consistently make sure, and it starts with our people, the business people, our families in South Africa, making sure that they feel that this is a safe country. And, I've got many friends who say to me that, I went to Cape Town, it's one of the most beautiful cities in the world. I went to Johannesburg, I was told don't walk around, it's not safe, and it's very safe. And then you have, criminals attacking going to a restaurant or kidnapping.
Bloomberg's Jennifer Sabasaja with Patrice Motsepe, chair and founder of African Rainbow Minerals at Bloomberg's Africa Business Summit. Of course, that conversation continuing in Johannesburg. There's a different conversation happening, of course, in a different part of the world at the Dubai Air Show. Our very own Guy Johnson is, of course, in full swing. And Emirates President Tim Clark speaking to him, saying he'll refrain from an order of Airbus's A350,000 aircraft for now. It's a blow to the French aerospace giant. Emirates had previously announced they were placing an order for 65 Boeing aircrafts valued at $38 billion. I want to bring you a little bit of that interview and what Tim Clark had to say, as I said, to our very own Guy Johnson. Take a listen.
We're moving at pace. We've ordered more aircraft here. We've got more aircraft coming in. The 350-900 is coming in. We've now got about 65 of those still to come in.
Yep.
The business is expanding. We're very high seat factors, and Dubai is really moving at pace anyway, so that's underpinning a lot of what's going on at the moment.
Front end of the plane, the premium traffic has been the big kind of underpinning of the market over the last few years.
Yeah.
How closely correlated do you think it is, though, to what's happening in the stock market, which is having a little wobble right now? Crypto, which is having a little wobble right now?
It's very difficult. All this... The increasing demand of the premium cabins predated all of this. Okay, you could say that with quantitative easing going on at the pace it was, a lot of money was printed. Banks are pretty flush. People are making decisions because inflation is kicking in. They want to get the value for the money now. It could be something like that. Frankly, I'm not altogether sure. There are so many things going on in the global economy at the moment, both economically, politically, geopolitically. You can never be certain what is happening. What we do know, people are getting on our aeroplanes, not just ours, in the premium cabins. You see a lot of the US carriers now attending to premium products because they seem to have been behind the curve anyway, realizing that something has to be done there. So at the moment, it's very good. I can never say, Guy, that this is going to go on forever. The cyclical nature of the global economy, the kind of upheaval that we get for all sorts of strange reasons, whether it be natural, geopolitical, or whatever, you just have to deal with it. But at the moment, the going is strong for our part of the world. I'm not going to say that it's going to be the same for the US. I know there's a bit of weakness on the North Atlantic at the moment, but we're not seeing that here.
Okay. You've ordered, you were just mentioning what you've ordered at the air show. You've ordered some Boeings. You haven't ordered some Airbus. Is there any Trump effect in there?
Absolutely.
Is he having an impact here?
No, none whatsoever. It didn't. It hasn't entered the thinking at all.
Right.
This is all about a plan that's been mapped for the next 15 or 16 years.
Yeah.
And looking at the assets that are available to us and the ones, obviously the 777-9 is an aircraft that we got really involved in its initial design. We like what we see, and we want more of them. Now, the hiatus that Boeing's been going through for the last few years, I see a light at the end of the tunnel. Green shoots, all the usual cliches that go with this. Actually looks as though it's going to be. And we never had any doubt about what the aeroplane could do for us, particularly as the 380 was going to be going out at the end of the next decade anyway. So buying those aeroplanes was all about what the business needed, rather than anybody telling.
There's no politics.
No policy. The shareholder of the government of Dubai doesn't get involved in anything like that. They just say, you must do what is best for the airline. Don't worry about anything else.
So you are different to other carriers in this region who appear to have made orders as a result of...
Okay, look, you know, these things ebb and flow. But as far as Emirates is concerned, we're purists. We follow our model. It's an organic model. And we're very, very focused on what we need to do and what the KPIs are telling us about how we're doing, how well we're doing. We don't really get people telling us, do this, go there, buy that.
That was Emirates Airline President Tim Clark and Bloomberg's Guy Johnson there speaking alongside the Dubai Air Show. I do want to bring you some breaking news. We had some unscheduled data released by the BLS, posted on the Department of Labor website about jobless claims for the week of October 18th. Now, this is roughly data that was delayed from a month ago, showing that jobless claims stood at 232K for the week ending October 18th. Now, I want to remind everybody, I've been able to do some digging in this time, and that was roughly in line with economists' estimates off the back of state-level jobless claims. But remember, those state-level jobless claims that we have been getting during the shutdown have been non-seasonally adjusted. So there is a lot of math that goes into them to seasonally adjust them. But it does look like Wall Street has been treating these numbers with the same measure that the BLS does. So broadly in line jobless claims for the week ending October 18th. Kriti, I find this astounding that the Bureau of Labor Statistics is releasing data unscheduled onto its website. Now, we do have quite a large backlog of data. The weekly jobless claims figures, yes, they are important, but perhaps not necessarily giving us a good glimpse when it comes to the BLS's organization. We do want to see a proper schedule from the BLS on how they plan to release this backlog of data. It includes things like retail sales, PCE, import and export prices. These things are really key for the Fed. The market is still waiting for a schedule on how they intend to release this backlog, and hopefully it will get done before that December 10th Fed meeting. We started this morning getting an update on jobless claims, which, as I mentioned, tracks roughly in line with economists' estimates from that week based on the state-level wide data.
It's fascinating, though, that, one, this would come at this timing, to your point, but also on looking at the market reaction, we're not seeing it shake anything, even just the idea that it came during U.S. hours. I will say, though, since the data has come out, it feels like futures have come off their lows in the States, at least. So maybe there is a little bit of a reaction function there. The fact that it is in line with the estimates is a positive.
Yeah, maybe some comfort that the economist's view on the labor market is tying up broadly in line with the BLS official data, but a lot more to come. We are still waiting on a full schedule for them. Hopefully we'll get that sometime soon, and obviously what they intend to do with the October CPI release, which has gone mostly uncollected during the government shutdown.
Yeah, I think it's really fascinating as well. The idea basically that if you are flying blind, which is the major concern here, that the Fed is basically have to go fly blind, that at least some of the decision making is in line with the estimates that they did have. So there is a bit of comfort in that. In the meantime, we should check on these broader markets, though, because the sell-off does continue here in Europe. You are still seeing red on the screen across the board. This is a catch-up trade to what you saw in the United States yesterday. There's also a catch-up trade to what you were seeing in Asia. I want to bring you a couple of movers, though, that have been moving to the upside. ICG is one of them. It is your biggest index contributor to the upside. This, of course, a major firm right here in the UK. It looks like Amundi is going to be taking a stake in ICG as part of its new strategic plan to the tune of 10%. You did see shares rise by 8% after the partnership. It looks like they're also putting out numbers in terms of their first half profit. Those beat estimates as well. So those shares have been rallying off the back of that double upside.
And we also have talked about the defense trade. We've gotten an update from the Rheinmetall. This is the German defense company. Shares are in the green off the back of this update, around 3%, that they're targeting around 50 billion euros in sales by 2030. So maybe a long-term plan from them is giving some comfort to the market. The CEO saying he expects major investments to be done in 2027, and that they also have bought some shares in Auterion, another a defense company as well. So an update from the CEO giving a bit of shine to Rheinmetall shares this morning. I do also want to mention the one stock that is keeping the healthcare sector in the green, the only sector in the green across Europe this morning, and that is Roche. Shares up 6.6%, and this is on the back of a phase 3 trial when it comes to a breast cancer drug that they've been developing. So an early breast cancer drug is showing an edge in a key study in this these phase 3 trial results, that keeping Roche shares higher this morning by nearly to the tune of 7%, and keeping the entire healthcare sector in the green so far this morning.
It's fascinating. Those are some of the upside stocks, but we should mention they are few and far between. I think we hit the 3 big movers there, because broadly you are still seeing pain in this market. It is red across the screen. I just want to get a quick check on some of these moves. Taking a look at 1.2% declines in the CAC 40. I have to say it's not as bad, perhaps, as we had started off the future session with, where we did see the DAX at one point indicated almost 1.5% and higher. So the fact that you are seeing the market come off of its lows is helpful, even just 44 minutes into today's session. That being said, if you look at the futures picture in the States, it's a little bit different. S&P futures only down 0.2%. They have been pairing those losses since that data came out unexpectedly. You look across the board, though, you aren't seeing much cross-asset pickup from there, and I think that is going to be really crucial. When you look at the NASDAQ futures picture as well, that is where a lot of that pain is concentrated. So if you're worried about valuations, if you're worried about Bitcoin, if you're worried about tech jitters, that's really where it's going to show up. To me, I think it's still interesting, though, that you did see some of the Asian markets drop 2-3%, and that level of pain, that margin of pain, hasn't shown up in Europe just yet.
Yeah, at least when it comes to the big catalyst of the week, those NVIDIA earnings, those stock market bulls out there really do want to see the equity market find a firmer footing in case of an upset from NVIDIA. We're not necessarily finding that yet. The S&P 500 index yesterday dipped below its 50-day moving average. I should say dipped back below after just a week and a half above. So again, the equity market momentum does appear to be on a back foot, but let's see if we find some stabilization before those key NVIDIA results on Wednesday after the bell.
There's the NVIDIA story. There's the data print as well. I wonder how much of the jobless claims right now are some sort of harbinger for what we're going to get on Thursday. In the meantime, we've been giving you live coverage of Bloomberg's Africa Business Summit. We continue then with the key theme of unlocking Africa's investment potential. I want to get to an exclusive conversation between Daniel Pinto, JP Morgan Vice Chairman, and our very own Deputy Editor-in-Chief, Reto Gregory. Take a listen.
About Africa. So we have presence in Sub-Saharan Africa in 5 places. Including now a new office in Kenya and Ivory Coast. We are upgrading our license in Nigeria. We have President Johannesburg and Cape Town here. We cover around 350 clients, both sovereign enterprises and private sector. So I think that this may be the time. I like what we are seeing in this country and in other countries in the region. I think that the redirection of the supply chain may be beneficial for this continent. So we will continue prudently, but invest. These are economies that South Africa is turning around, but also other economies are growing faster. So I think that there is a role for a company like us gradually and prudently increase our presence and our coverage in the region.
As you mentioned, I mean, Standard & Poor's just upgraded South Africa. Do you see further upgrades coming?
Well, it all will depend. I think that this government have done very good things in terms of the reforms on the energy and power sector, the opening of the transportation system and reform on that, the water reform that is coming. So hopefully all these turn the dynamics of growth and move South Africa to a level of growth that is more in line with the potential of 3%, 4%, 5% rather than a 1%. And I know that tariffs have been a bit of a headwind, but overall, after 10 years of the economy really stagnate, really having even having negative productivity. So the country looks to have turned the corner, and the potential is there.
some complaints in parts of the market that Africa still pays a prejudice premium when the countries issue sovereign bonds. I mean, I think Africa Finance Corp, the Development Bank, estimates that the continent spends as much as $75 billion a year on extra borrowing costs. Where do you stand in that debate?
Well, so markets are markets, and markets are relatively efficient at pricing the risk. So if, unfortunately, when you look at the dynamics in the continent, that it may improve, but at the moment, so that spread may be justified. So I think that over time, as the region improves, if the governance improves, the corruption hopefully goes down, there are structural reforms, all these things take place, so probably spreads will tighten, and that will be in line with better growth and better future for the region. But at the moment, it is what it is.
In terms of sectors, I mean, which sectors look interesting to you? Is it energy? Is it infrastructure, fintech, consumer? Where would you put your money?
Well, all of the above. Clearly, energy is transforming and requires a lot of capital to continue to do so. Infrastructure, transport is another, ports, airports, all those areas need investment, and it will create opportunity. Clearly, this continent has roughly 1.5 billion people, growing very, very fast. So the consumer industry should be a thriving industry for the continent. So all across, hopefully all this potential gets gradually materialized, and the size of the business that we do goes more in line with the size of the continent, because at the moment is relatively small, but growing.
We put out a story the other day highlighting that Africa needs to create 1 billion jobs by the end of the century to fulfill its potential. What do governments have to do, and what are they not doing at the moment? What are companies doing or not doing to actually deliver on that?
Well, it's about what we have talked about. So this country, 40+% unemployment, big informal economy, 60% youth unemployment. So therefore, that is kind of the base for higher level of crimes and all that. So as you continue reforming these countries, so then the creation of jobs will be necessary, and they will happen. The size of the informal economy will be smaller as labor laws and other reforms take place. So likewise, you do all that, so everything improves. But they have to really do it in order for that to happen. You cannot continue with these numbers, 60s and 40s in unemployment and things like that. So I think that the government is doing all the right things in this country, and hopefully that continues and get deeper, so then you have a better situation for the people in the country.
Relations between Washington and Africa aren't at the best at the moment. You have accusations of genocide here. You have the Trump administration complaining about Nigeria not doing enough for Christians. Do you think this is sort of a short-term blip that's going to normalize at some point, or is there something fundamentally at risk in the current sort of frosty environment?
I think that all the situation with tariffs and relation between the U.S. and many countries or regions around the world, at some point is going to stabilize. Tariffs will be set at a certain level, trade agreements will be in place, so therefore it's likely to improve rather than deteriorate, in my view.
You've followed, obviously, and run businesses in emerging markets for a very long time. I'd like to zoom out a little bit and look beyond Africa. What's the state of emerging markets overall?
Well, I think that the fundamentals are good. These countries are growing, lower interest rates are helpful, the weaker dollar some way or the other helps too. Clearly, when you look at markets, emerging markets underperform for many, many years. This year is probably the best performing, including this country, that the equity market has gone up 40% and in dollar terms around 50 or more. So I think that they are doing fine, and including hopefully my country.
You took my next question.
Okay.
You grew up in Argentina. Obviously, there was a little bit of a wobble in the markets the other day. But generally, do you think Milei is on the right track?
So when he came to power, so the country was heading to a really meltdown, hyperinflation, all these type of bad things. And Argentina, from being probably the fifth or sixth biggest nation in the world after the Second World War, it's been deteriorating for the good part of 80 to 100 years. So he, on the economic front, he did all the right things. So cut the deficit, lower inflation, with a lot of pain from the population, but hopefully creating the base for growth. Now, they have done very well in the midterm election, but he doesn't have majority. So the challenge from here is more than the economic front, is the political front. Can he create the right alliances to do the structural reforms that they are needed for the country to grow faster, which is essentially labor reform, tax reform. If that happens, I think that there is a lot of potential, a lot of investment wanted to come to Argentina, particularly in mining and energy, agricultural sector, so agro-industry. So I think that the potential is there. And if this model is successful, then you could see the possibilities of the rest of the region moving in a different place, in a better place. Clearly, he has aligned himself with the United States and hopefully the rest of the region, and does it too. Because if you think about the tension between China and the United States, so it should be very beneficial for Latin America, for Mexico and the rest of the country. So hopefully that happens.
When you look beyond 25 and into 2026, you seem to be quite optimistic. I mean, Jamie Dimon mentioned cockroaches the other day, which was sort of a quote that went viral. Do you see cockroaches around here?
I think that the comment was taken a bit out of context, in my view. So it may be other cases of fraud, maybe. We don't know. Possible. Clearly, in the auto financing sector, subprime financing, with used car prices after the COVID crisis being so high, if you are lending to low incomes, you're going to have some issues. And in these cases, they are some related to fraud. What we are not seeing is a deterioration between what we were expecting.
That was Daniel Pinto, the JP Morgan Vice Chairman, and Rito Grigori, Bloomberg's Deputy Editor-in-Chief there, speaking on the sidelines of the Bloomberg Africa Summit. We'll be keeping you up to date with coverage from that summit throughout the morning. You can catch all of the conversations on your terminal using the function LIVE Go. Ready?
Yeah, fascinating day to have those conversations. We're also seeing a market sell-off on the books this morning, but some that have pared back. There's some geopolitical news out there as well. We should mention that Donald Trump is looking to host Crown Prince Mohammed bin Salman from Saudi Arabia at the White House today. Coming up in the next hour, and we'll be speaking with former U.S. Vice President Mike Pence. That conversation coming up on The Pulse. We'll talk about international policy. We'll talk about domestic policy, maybe a little bit about how he views the future of the United States on the global stage. That conversation at 9:30 a.m. UK. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Fear spreads across global markets on uncertainty around Fed policy, frothy AI valuations, and a sharp sell-off in Bitcoin. Tokyo is working to diffuse tensions with Beijing after the prime minister comments on Taiwan triggered a fierce backlash from China. And President Trump welcomed Saudi Crown Prince Mohammed bin Salman to the White House today for talks expected to focus on energy ties, defense cooperation, and AI technology. Now, later this hour, don't miss our conversation with the former Vice President Mike Pence. We, of course, get his thoughts on the U.S. economy, geopolitics, and the current White House. Now, first thing is first, as always, let's check what the markets are doing. Now, there is a retreat going on in the markets. Look, it's gathering some pace across global markets. Now, a lot of stocks are deeper into decline. Bitcoin actually towards the $90,000 mark. Bonds, the biggest beneficiaries as investors seem to be seeking havens. The yield on the 10-year U.S. Treasury, for example, falling 3 basis points. And then if you look at these gross asset moves, look, it's unclear exactly what's underpinning or underscoring them, but there does seem to be a lot of unease over interest rates and tech earnings. Remember, it's Wednesday that NVIDIA reports poised to test investor nerves, and then the focus will turn to the delayed September jobs report due on Thursday. That's, of course, a key gauge for the outlook of the Fed. Now, I'm here in Singapore, which is set to host the latest edition of Bloomberg's New Economy Forum, the event established in 2018 to embrace a historic shift in economic power from west to east and from north to south by bringing together the best of government and private enterprise from across the globe. Well, first, the retreat from risky assets seem to be gathering pace across global markets. We're looking, once again, at Bitcoin reaching that critical trigger point, with investors pulling back from riskier concerns of riskier corners of the market. Joining us now is Mark Cudmore, Bloomberg MLive executive editor. Mark, thank you for joining us. I mean, what a day. It's starting, to feel ugly out there. And now the global sell-off seems to be surpassing some of the technical milestones.
Yeah, definitely this morning in Asia, I think you're getting that first kind of hint of panic of this sell-off. This is really the continuation of a pullback that started at the end of October. And I think it was driven by a little bit of a worry in the frothiness in the AI bubble and a concern about the amount of CapEx spending and the debt in the space. And so we've seen kind of people take profit on winners. And what's happened there, the sector that's really suffered is the digital asset space. So we've seen digital asset treasury companies suffer. That's feeding into crypto in a negative spiral. And that's the space where there's still a lot more downside. Because of that damage there, retail investors are getting hurt, and therefore you're seeing some of the favored retail names suffer most. I actually think that because earlier this morning we've seen that first hint of like Bill going, oh, this is getting a bit scary, we're probably getting near the end. The last couple of weeks I've argued with more downside. Now I think we're probably starting to get towards the end of this pullback. I think what's really important is the structural backdrop here is we have an AI bubble. We have a massive AI bubble. It's going to burst horrendously. This is not the bursting. We're going to get good NVIDIA earnings this week. That's normally a sell the fact event, but it'll emphasize that we're still in the inflation period of this bubble. And so is this pullback over? It's probably a bit punchy to say that when almost everything's down right now, but I'd say we're probably pretty close to the end of this bubble. Sorry, this pullback. And we've still got another leg higher in the bubble, definitely.
But Mark, what's happening with Bitcoin? It seems to be extending its slide.
Yeah, I think so. So I think crypto is the really vulnerable part here, and I think probably particularly Bitcoin, only because the altcoins have already suffered off so much. But I think the digital asset treasury companies are really kind of getting blown up, and people are realizing that while they help the bull market on the way up, they also help the spiral on the way down. The only incentive now for those digital asset treasury companies, as their net asset value falls, as their stock price falls, in fact, the logical trade is to start selling down their crypto holdings and buy back stock. That's the logical thing to do. Now, they might hold on, but that's just going to increase the pressure even more. So suddenly you've got this overhang of crypto that needs to be sold. So I think Bitcoin we know is constructed for a boom and bust cycle. This may not be the last boom. There may be another big boom ahead. There may be much higher prices, but it's constructed to have kind of 70% corrections, and we're probably in another one right now.
Mark, thank you so much. Mark, a busy man, of course, with everything that's going on in the markets, the Live blog. Bloomberg's MLive executive editor, Mark Cudmore. Now let's also bring in Grace Peters, co-head of global investment strategy at JP Morgan Private Bank. Grace, thank you for joining us. What a day to have you on to look at what the markets are doing. Where do you think they're headed next?
Well, what a day to publish our outlook. We've just put out our 2026 outlook called Promise and Pressure, and I think that really encapsulates much of what's going on and what the market's trying to digest. Pressure from AI, the question that you were talking about with Mark there, are we in a bubble? Questions still around the meanings of global fragmentation and inflation as well. But, as the title suggests, we do think promise is going to win out. So our forecasts are that for global equities, we're going to actually see another fourth year of double-digit growth, which is pretty unheard of in more recent times. But it doesn't stop there. Stocks and bonds, we think that there's still promise, but you really need to be expanding into private markets, both to enhance returns and seek out elements of the AI value chain, but also really for diversifiers to really protect the portfolio against some of the pressures that we do see building, because the outlook certainly isn't all rosy.
Grace, I love the name of the outlook because in 3 words you encapsulate everything that's going on in the markets. So your 2026 outlook is investing at the crossroads of AI fragmentation and inflation. Is there too much riding on NVIDIA at the moment?
Look, I think that the AI story has certainly, you've seen the value accrue to large cap tech players who have consistently exceeded market expectations when it comes to raising capex, raising earnings, and the market's getting to the point where it's saying, look, this has been so far so good, but there are some signs of a bubble creeping in, particularly when it comes to leverage, some cross-financing deals that have been done. But our view is that AI is going to be utterly transformative. We're still in the earlier innings of that. And yes, there are some amber lights flashing, but I still think there's plenty of investment opportunities. That, to me, does start with the hyperscalers, with large cap technology. But what we say in the outlook is that there are other sectors as part of the AI value chain that tap into the power needs, which are really at an inflection point globally, but particularly in the US, that tap into, at this inflection point of adoption of AI, the winners and losers across various sectors, and as I say, in private markets as well. So we do think that there's a multi-pronged way of investing, and if we're thinking just about public equities, we would be broadening exposures beyond just technology. That is one of our 5 preferred sectors, but also linked to AI, utilities, industrials, and then outside of AI, financials and healthcare, we think are areas of interest. So all that speaks to earnings driving the market to get to that 7,300 price target. We're assuming 11% earnings growth for the S&P over the next 12 months. But that broadening out of earnings growth, so not all the heavy lifting is being done by technology, although that's obviously going to be a significant component of it.
Grace, when you look at AI, how much would it actually change the labor market just in a time when inflation is extremely unpredictable? Inflation is also one of the things that you're really focusing on for your outlook of next year.
Yes, I mean, I think AI is going to transform the labour market. I think there's not significant evidence yet coming through in the numbers to say that it's resulting in more layoffs and that it's, really one of the causes of the current labour market weakness. But it's certainly something that we need to watch for going forward. And that could have, obviously, crossroads when it comes to our piece on global fragmentation and how this is really all about security and companies turning inward. So there is a little bit of a trade-off when it comes to some of the immigration policies versus some of the other dynamics in the labour market, including demographics, as well as how AI will impact the labour market. But overall, we think that US growth is going to continue at around 1.5 to 2% in the year ahead. That's going to support a healthy backdrop for investing. A Fed that can cut a couple of times more, which again will support risk assets, and therefore, as I say, the promise, coming through overall. But I'd also mention, just back to some of my opening comments, gold we still think has significant upside when you look to the alternative space. Our price target there, 5,300. So a good amount still to go for, despite what's obviously been a very, very strong 2025 for gold. And the diversifiers, infrastructure, specifically to inflation, Francine. I'm often surprised when I meet clients who are concerned about inflation, but don't have enough infrastructure assets. And I think that's a great place to go for income with inflation protection. So adding gold, adding infrastructure, and also macro and relative value hedge funds, I think really just increases portfolio diversification in an uncorrelated way at a point in time where I think global markets are increasingly correlated because of some of these structural themes and the interdependencies that exist around the world.
Grace, when you look at fragmentation and the fact that the world is splitting into different blocks, what does it mean for investors and the deployment of capital?
Yes, I mean, this is really linked to countries looking inward and therefore fiscal activism being very present around the world, no more so than here in Europe with Germany's fiscal package. And so what it means, I think, is that firstly, you will see new avenues of growth come through. Using Germany as an example, I think German GDP could accelerate, probably not in the next 6 months, but looking more to 2026, 2027. And that is going to be a boon, we think, for defence company earnings. And we've heard from some of them this morning talking about positive order books. But when we look at the earnings trajectory of European defence, you could be moving from an era where you've seen over the last 5 years more like 7% compound annual growth rate to more like 15% plus. So certainly opportunity amid fragmentation. But I do think it means that investors therefore need to be much more globally aware. And it speaks to that diversification point, not just by geography, but also by asset class.
Grace, how delicate is going to be this week, going back to a shorter-term outlook, because we have that employment data that actually we didn't get for quite some time because of the shutdown, and NVIDIA earnings?
Look, I think that there's a couple of very well-watched data points that are coming up this week that will be pivotal for the short-term direction of markets. And I think this all really started, to me, at the beginning of third quarter earnings season, rather than the end that we're going to see soon, where you saw strong earnings beats. This has been one of the strongest earnings seasons that we've seen in the last few quarters, and yet share prices were not following through. And so that was the early indication that investors were getting nervous. You were getting a bit of travel versus arrive. And a bit of profit-taking come through. So I think that could continue. A 5 to 8% consolidation in markets at any point in time I see is more healthy. But I think as we move through the balance of this year, the fundamentals will play out. I think once people have got over concerns about the labour market and the Fed, that the environment ahead does look more constructive. And so we still see an awful lot of cash on the sidelines, and a lot of our focus with clients is really ensuring that they get invested, stay invested, but in this way that we've discussed this morning, that we think can really lead to resilient, long-lasting, compounding portfolios.
Grace, is gold a hedge against everything that could go wrong? It's no longer inflation; it could be fragmentation. It's maybe also, a diversion or diverting some of the U.S. assets away from treasuries and even dollar. And if so, do you have a new target?
We do, and I think to say that one asset is going to solve everything is maybe a stretch, Francine, but I think that we have high conviction in gold moving up through the course of the year. 5,300 is our target, which gives plenty of upside from current levels around 4,000. And there's a few different drivers for that, and many of the more thematic drivers are the ones that you mentioned that are in the outlook around fragmentation, mistrust in institutions, whether that be central banks or indeed policymakers at large. And also capital flows in a world where investors are still very overweight dollars and many feel less comfortable being in that situation. So I'm talking about large sovereign investors as well as the central banks themselves. So emerging market central banks have been increasing their holdings of gold, but we still think many of them are below 10%, and that would compare maybe to a 15 to 20% allocation that a European central bank would have. So that buying behavior we think is a longer term theme. It's going to continue to underpin prices of gold, and in the meantime also I think retail investors are displaying more interest as evidenced by ETF buying activity.
Grace, thank you so much. As always, Grace Peters, there, co-head of Global Investment Strategy at JP Morgan Private Bank. Now, geopolitics, of course, will be a top issue at the New Economy Forum here. Japan mounting a broad diplomatic effort to ease tensions with China after the Prime Minister linked the Taiwan Strait crisis with the possible deployment of Japanese troops. Well, joining us now is Rosalind Matheson, our Chief Asia Correspondent. Rosalind, thank you so much. And it's so fun to be actually in the studio with you here in Singapore. I mean, will the Japanese Prime Minister retract her comments following China's retaliation?
Well, for now, it doesn't seem so. Japan is saying they have diplomats out to explain and clarify what she was saying, but there's a big difference between explaining and clarifying and retracting. And also, she has an interest as a very new prime minister in staking her ground, including with people in Japan and with China. So does she want to retract this? What she's saying is she was talking about a whole lot of different hypothetical situations. And in that, she talked about this issue of what becomes an issue of survival for Japan around Taiwan, which would possibly, mean Japan intervening militarily. But she says it was in the realm of a whole lot of other issues that are theoretical, at least for now. So what they're saying is they're trying to clarify the situation. Her comments with China doesn't indicate that she's willing to retract them or apologize. Again, she's got a lot of interest at home in staking her own ground and in showing China also that she's going to be a leader to be reckoned with. And so there's a lot of issues around image and perception that are going on here, at least. But they don't want this spiraling as well. They don't want this turning into a major incident that runs, that starts to really impact business, tourism, and so on. For now, it doesn't seem to be getting there. At some point, could it become that? But obviously, she doesn't want it escalating.
Rosa, in other geopolitical news, so the Crown Prince of Saudi Arabia will meet Donald Trump, and then President Trump has approved the sale of F-35s to Saudi Arabia, which is not uncontroversial. So what's the impact of that?
Well, that's right. And of course, remembering F-35s, he promised those in his first administration to the UAE, and the UAE is still waiting for those to come. And there's a long way to go before Saudi Arabia would be possibly getting F-35s. A lot of negotiations, issues around technology transfer and then delivery. So we are talking about something that's possibly many years down the track, if at all. But it allows him to put this in the ether, at least, with this meeting that's going to be happening with the Crown Prince. It's also perhaps more emblematic of his broader desire to bring this region in the Middle East back to a focus that he would prefer, which is basically trade and doing business and getting things normalized on that front. At some point, can you get Saudi Arabia to focus back on the idea of normalizing an economic relationship, potentially even with Israel? And so the F-35s are probably a bit of a carrot on that front. Realistically, if at all, we're talking many, many years away, not only because Israel, does prize its own access to the F-35. It'd be quite reluctant to see a country like Saudi Arabia get their hands on it. There's all kind of questions if Saudi Arabia has F-35s, does technology leak from that to another country like China? So very complicated and probably many, many years away.
Ros, thank you so much. Rosalind Matheson there, Bloomberg's Chief Asia Correspondent, with me here in the Singapore studio. Now, coming up, Deutsche Bank continues to fall after revealing new targets, which could prove a high bar to achieve. That's next, and this is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. November 26th, Chancellor of the Exchequer, Rachel Reeves, delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg. Context changes everything.
For the conversations that matter, the insights you need, this is The Pulse, and I'm Francine Lacqua here in Singapore. Now, the Dubai Air Show is in full swing, and Emirates President Tim Clark says he'll refrain from an order of Airbus A350,000 aircraft for now in a blow to the French aerospace giant. Emirates had previously announced that they were placing an order for 65 Boeing aircraft valued at $38 billion. Let's hear from what Tim Clark, the Emirates President, had to say to Guy Johnson.
We're moving at pace. We've ordered more aircraft here. We've got more aircraft coming in. The 350-900 is coming in. We've now got about 65 of those still to come in.
Yep.
The business is expanding. We're very high seat factors. And Dubai is really moving at pace anyway, so that's underpinning a lot of what's going on at the moment.
Front end of the plane, the premium traffic has been the big kind of underpinning of the market over the last few years.
Yeah.
How closely correlated do you think it is, though, to what's happening in the stock market, which is having a little wobble right now? Crypto, which is having a little wobble right now?
It's very difficult. All this, the increasing demand of the premium cabins predated all of this. Okay, you could say that with quantitative easing going on at the pace it was, a lot of money was printed. Banks are pretty flush. People are making decisions because inflation is kicking in. They want to get the value for the money now. It could be something like that. Frankly, I'm not altogether sure. There are so many things going on in the global economy at the moment, both economically, politically, geopolitically. You can never be certain what is happening. What we do know, people are getting on our aeroplanes, not just ours, in the premium cabins. You see a lot of the US carriers now attending to premium products because they seem to have been behind the curve anyway, realizing that something has to be done there. So at the moment, it's very good. I can never say, Guy, that this is going to go on forever. The cyclical nature of the global economy, the kind of upheaval that we get for all sorts of strange reasons, whether it be natural, geopolitical, or whatever, you just have to deal with it. But at the moment, the going is strong for our part of the world. I'm not going to say that it's going to be the same for the US. I know there's a bit of weakness on the North Atlantic at the moment, but we're not seeing that here.
Okay. You've ordered, you were just mentioning what you've ordered at the air show. You've ordered some Boeings. You haven't ordered some Airbus. Is there any Trump effect in there? Absolutely. Is he having an impact here?
No, none whatsoever. It didn't. It hasn't entered the thinking at all.
Right.
This is all about a plan that's been mapped for the next 15 or 16 years.
Yeah.
And looking at the assets that are available to us and the ones, obviously the 777-9 is an aircraft that we got really involved in its initial design We like what we see, and we want more of them. Now, the hiatus that Boeing's been going through for the last few years, I see a light at the end of the tunnel. Green shoots, all the usual cliches that go with this. Actually looks as though it's going to be. And we never had any doubt about what the aeroplane could do for us, particularly as the 380 was going to be going out at the end of the next decade anyway. So buying those aeroplanes was all about what the business needed, rather than anybody telling.
There's no politics.
No policy. The shareholder of the government of Dubai doesn't get involved in anything like that. They just say, you must do what is best for the airline. Don't worry about anything else.
So you are different to other carriers in this region who appear to have made orders as a result of it.
Okay, look, you know, these things ebb and flow. But as far as Emirates is concerned, we're purists. We follow our model. It's an organic model. And we're very, very focused on what we need to do and what the KPIs are telling us about how we're doing, how well we're doing. We don't really get people telling us, do this, go there, buy that.
Well, the Emirates airline president, Tim Clark, with our very own Guy Johnson. Now, Deutsche Bank is trading lower, was the worst performer on the Stock 600 Banks Index yesterday. Now, this after the German lender unveiled new targets, which may prove a high bar to achieve. Let's bring in Paul Davies, our global banking columnist at Bloomberg Opinion. Paul, I also want to talk about UBS. That's another matter, but let's start with Deutsche Bank. What did we learn?
Well, yeah, the targets are quite ambitious. I mean, particularly on the revenue side. I mean, I think all the bank stocks were down yesterday, and German banks in particular, Commerzbank was down quite heavily as well. But I think the concern around Deutsche Bank is that a lot of the gains they need to make are revenue gains rather than cost saves in order to hit their return targets. And to my mind, the second difficulty they have is that a lot of what they're doing is going to rely on some really big, technology upgrades and a lot of deployment of AI as well. And some of that remains, really uncertain as to whether it will really work or not. And these big technology upgrades for banks are often very, very difficult too.
Paul, I mean, they also basically, vowed some higher returns and payouts. Do they just need to align themselves with what the rest of the banks are doing?
I mean, the return targets ultimately are pretty decent, and they're not really, they're not that extravagant. It's 13% return on tangible equity at the group level, 14% within the investment bank. That would put them ahead of expectations for BNP and Barclays at the group level, which would be great. A real statement of recovery of Deutsche Bank after the years of trouble that it had. And in the investment bank, it would put it ahead of Barclays and Citi, and almost in line with Bank of America. So, the return targets are pretty decent, even if they don't sound that extravagant. But it's how they get there is the real question.
And Paul, then, I mean, this UBS, I was on the plane yesterday. It was a long flight. It was 12 hours. And I kept on thinking, would UBS really move to the U.S.? And this is after the FT also reported that Colm Kelleher, the chairman of UBS, actually spoke to the U.S. Treasury about it.
Yeah, I mean, so there's a big game of political regulatory chicken going on here, really. I mean, I think the story that emerged yesterday is as much about UBS finding a way to signal to politicians in Switzerland that the US would accept them as a bank. I mean, there's still a huge question of how they would actually get there. Moving, under your own steam would be potentially costly and take some time and be quite uncertain what the bank would look like. And otherwise, you have to either be bought or buy something, and both of those are quite difficult potentially as well.
Paul, thank you so much, as ever. Paul Davies, our global banking columnist at Bloomberg Opinion. Coming up, we'll ask the former U.S. Vice President Mike Pence what he makes of the current administration.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as it used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the
Absolutely.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Singapore, and these are your top stories. Fear spreads across global markets on uncertainty around Fed policy, frothy AI valuations, and a sharp sell-off in Bitcoin. Tokyo is working to diffuse tensions with Beijing after the Prime Minister Sanai Takashi's comments on Taiwan triggered a fierce backlash from China. And President Trump welcomes the Saudi Crown Prince Mohammed bin Salman to the White House today for talks expected to focus on energy ties, defense cooperation, and AI technology. Now, staying with that story, the meeting with MBS comes after President Trump's trip to Riyadh in May and a promise to sell Saudi Arabia American defense. It marks deepening ties between the United States and countries in the Middle East. Let's go straight to London, where Opening Trade co-anchor Kriti Gupta is with the former U.S. Vice President Mike Pence. Hi, Kriti.
Hi, Francine. It's a pleasure, as you said, to talk about these geopolitical issues. You said I was joined on set here on The Pulse with former Vice President Mike Pence. We thank you so much for your time. Welcome to London.
Thank you. Thanks for having me on.
It's a thrill to have you. Well, as my colleague Francine just said, it's a big day in Washington today. We have Crown Prince Mohammed bin Salman coming and visiting President Donald Trump as well. This is a relationship that's really deepened over the last couple of years, and certainly since his trip to Riyadh in May as well. What do you make of that deepening alliance between the United States and the Middle East? You would think that these are two places that would be in competition when it comes to the oil markets, when it comes to defense. We're seeing the opposite. What do you think?
Well, I think it's important to remember the very first days of our administration. Back in 2017, President Trump's first international trip was to a conference of Arab nations in Riyadh. From very early on, we sensed that it was important to begin not just with Saudi Arabia, but to reach out to Arab countries, even while we stood without apology for our most cherished ally, Israel. I mean, we moved the American embassy to Jerusalem. We recognized the Golan Heights. Many said that would be inconsistent with peace in the region, but what they forgot was that President Trump, in our 4 years together, aggressively reached out to Arab nations at the same time. We isolated Iran, which is a leading state sponsor of terrorism in the region, and at the end of our 4 years, signed the Abraham Accords. And my hope is, as MBS comes to the White House today, that in addition to the other issues that I'm sure will be discussed from the standpoint of AI and energy and others, is I am hopeful the president will engage the Crown Prince very directly on the need for Saudi Arabia to lead other nations into an expansion of the Abraham Accords.
Well, to your point, that's a key pillar of one of the successes in the first administration under Donald Trump. You mentioned that key piece of the kind of withstanding support for Israel. Donald Trump talking earlier this week about actually selling F-35 fighter jets to Saudi Arabia. As you know, this has been a contentious issue, especially among several of the Middle Eastern allies there. Do you think this is going to have ripple effects? If you sell F-35 jets to Saudi Arabia, are more other nations going to be knocking at America's door? And is that a good thing?
Well, the F-35 is our most advanced aircraft, stealth technology, and I'm very confident that as the president gives consideration to the sale of F-35s to Saudi Arabia or any other country that'll put the interest of America first. It's extremely important in any sale that we ensure that that technology does not make its way into China's hands or into the hands of other adversarial nations. And so I have concerns about the sale of F-35s to Saudi Arabia or any nation that could not assure the United States that technology and the great advancements that we've made with the F-35 don't fall into the hands of nations that are hostile to our interests.
You're not alone in those concerns. Have you seen this before in your time as vice president, the sale of this high technology, one of America's finest, to countries that maybe don't rise to the ranks of some of the other closer allies?
Well, I think one of the things that our administration did in our 4 years was recognize that China is the greatest economic and strategic threat facing the United States. And we imposed historic tariffs on China. We brought China to the table for the Phase 1 trade deal, which you may remember from January of 2020. But I have concerns that with the administration allowing TikTok to continue to operate, despite the fact that Congress and the previous administration passed a law saying it must be sold or banned within a set period of time. And the recent arrangement to allow NVIDIA to sell significant chip technology to China just simply in exchange for a revenue sharing agreement with the United States. I think it's absolutely essential that we continue to put the security of the United States and our ability to defend our interests and our treaty allies across the region as China continues its military provocations and its extraordinary investments in its own military technology. And that would be my concern with any weapons sale to any country around the world.
Well, Vice President, let's continue our tour around the world and talk there about China and the relationship, the deepening relationship, it seems, with not only Russia, but India as well. Earlier this year, we had images of Vladimir Putin, Narendra Modi, and Xi Jinping arm in arm at the Shanghai Cooperation Organization. I was in Washington at the time, and they really caused shockwaves in terms of this axis that you are seeing on the other side of the ocean, on the other side of the Pacific. Do you feel like those images, as they were interpreted at the time, showed that the United States is losing its dominance on the world stage?
Well, I think there's no question that nature abhors a vacuum, and that's equally true on the world stage. The previous administration, in so many ways, projected weakness on the world stage. The disastrous withdrawal from Afghanistan. The Biden administration actually, after inflation, actually cut military spending in the United States. And particularly after Afghanistan, we saw Russia launch its brutal and unprovoked invasion into Ukraine. We saw Hamas surge across the borders of Gaza with the most brutal assault on the Jewish people since the Holocaust. And we've seen China continue its military provocations across the Asia-Pacific. When we were in office, we spoke about what the new Trump administration speaks about, and that is peace through strength. And I think the relationship between the United States and our allies across the free world has never been more important. And trade is a part of that. I would hasten to add that I believe in free trade with free nations. And the president's unilateral tariffs imposed on friend and foe alike, I think have been contrary to the long-term interests and prosperity of the West. We ought to be working always to lower trade barriers and lower non-tariff barriers and subsidies. That's what we did during our 4 years. We used tariffs and the threat of tariffs to negotiate, to open markets. But what we're seeing in this new Trump administration is the use of broad-based tariffs that I think ultimately harm U.S. consumers, harm growth, but also more profoundly, they really threaten to fray long-standing relationships in the free world at just the time that we need them stronger than ever before.
Well, Vice President, they're also being used as a mechanism not only to encourage free trade, but also to add pressure on countries like India, like Brazil, that are perhaps helping and fueling some of the goals in China and Russia as well, especially when it comes to the United States' relationship in defending or at least helping support the fight for or the war, the Ukrainians' efforts in against the war from Russia. Talk to us a little bit about that relationship and that dynamic when it comes to the European Union and the UK as well. Historically, Europe and the United States have been arm in arm, but when it has come to this conflict, at least in the second Trump administration, we do seem to be seeing wobbles in that steadfast defense. Donald Trump has, on the campaign trail, and of course in this year, promised and assured the global community there would not only be a ceasefire, but a lasting agreement based on his friendship with Vladimir Putin. Why has that not come to fruition in your minds?
Well, well, first off, I've been a steadfast supporter of U.S. military assistance to Ukraine. I mean, Russia's unprovoked invasion has cost hundreds of thousands of lives. And America's the leader of the free world. And it's absolutely essential that we continue to uphold the principle that we will not allow authoritarian regimes to redraw international lines by force. A century ago, we looked the other way as authoritarian regimes marched across Europe and the world inherited the whirlwind and the tragedy of World War II. And so I think it's important the United States continue to stay firm. I'm pleased that the Trump administration has gotten to a better place after, as you said, stops and starts on support for Ukraine. But I do think the time has come for the United States Senate to put strong secondary sanctions on President Trump's desk, sanctions on countries that are purchasing energy from Russia, that are literally, through those purchases, they're fueling the Russian war machine. I called on that this summer. And frankly, I was encouraged that just a few days ago, President Trump said that he was okay with the secondary sanctions bill Senator Lindsey Graham authored. I think Vladimir Putin will not stop until he is stopped.
Yeah.
The Ukrainian military has fought bravely. The European community, with strong leadership from the UK and America, have provided support, but at the end of the day, I think isolating Russia economically with those secondary sanctions could well be the key to moving us toward a peaceful settlement.
Yeah.
And a just and lasting peace.
Vice President, you talk about these secondary sanctions. Europe, the EU, has only recently put sanctions on Russia. There's still parts of the EU that are importing that kind of energy. Does America need Europe to hold Russia accountable? Can America go at it alone? That's the narrative that Donald Trump has taken when it comes to his negotiations at the Munich Security Conference, at NATO. Can America do it alone?
Well, you know, in my first trip to Europe in 2017 as vice president, I said America first does not mean America alone. It simply means America embracing our first obligations at home, and secondly, embracing our role as leader of the free world. And I believe during our 4 years, we actually strengthened our alliances across NATO. Before we left office at the end of 4 years, our NATO allies were investing $140 billion in our common defense that had not been invested before.
Yeah.
More than two-thirds were now living up to the commitment we've made to our common defense. I think the ability the European community has had to support Ukraine against this Russian invasion was greatly enhanced by those years that we strengthened NATO. But look, at a time that we see authoritarian regimes rising and increasing their provocations, whether it be Russia or whether it be China or Iran, as they languish quietly after after America taking down their nuclear program and Israel taking the fight directly to them. I think now more than ever, we need to bring together the free world, say that we're going to stand for our principles, defend our interests, and we'll continue to call for that.
All right. Vice President Mike Pence, we thank you so much for your time, a true tour around the world. That, of course, Francine, was the former Vice President of the United States, Mike Pence, joining me right here in London.
What a great conversation between the Vice President and Kriti. Now, coming up at 91 is, of course, stepping up its push into China and the Gulf. We'll speak to the asset management firm's chief executive live from Joburg. That's next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua in Singapore. Now, South Africa asset management firm 91 is accelerating its expansion into China and the Gulf as it chases a rebound in emerging market inflows. Now, the move highlights 91's aim to grow beyond its South African base and compete more aggressively on the global stage. For more, let's get straight to Jennifer Zabazaja, who's at the Bloomberg Business Summit in Johannesburg with the company's chief executive. Hi, Jen.
Hi, Fran. Thanks so much. I am sitting next to Hendrik Dutoit. Hendrik, thank you so much for being here at the inaugural Bloomberg Africa Business Summit. Fran was just speaking to some of the expansion plans that 91 has outside of the African continent. But I wonder if you can give us some insight into the strategy. What markets are you targeting, and how are you thinking about investment plans in this uncertain environment?
Good morning, Jennifer. It's great to be in Johannesburg when G20 is here, even though all the heads of state aren't. What's really important for us right now is we sense a readjustment, a recalibration of risks, and we're seeing international capital, particularly from the developed markets, showing a renewed interest in the rest of the globe, particularly the emerging markets. And 91 is positioning itself to continue to be a leader in that space. And hopefully we are in a far better position than we were the last 3 or 4 years when the U.S. sucked in most capital.
What does that look like over the next few months, though? Do you continue to see more tailwinds potentially for increased investment into EM and outflows potentially out of the U.S.?
I mean, the last few days, the markets have been risk off. We don't think in days. We think in terms of years. And what we see is we're reaching a point where the dollar or where dollar owners are looking for some diversification, where US investors have started looking internationally, and we know more than half the world's capital, in fact 60 or so % of financial capital is in North America, is starting to look outward, and where we've seen some upgrades like this recent South African and Nigerian credit upgrade of emerging market risk, and therefore we'll see some flows going to the rest of the world, which and look at market performances year to date. Emerging markets have basically done better than developed markets. South Africa has been a star performer. China has done pretty well, and we think that momentum can continue.
What is needed, though, to accelerate some of the growth in some of these economies? Because there still seems to be a bit of hesitation in terms of the growth prospects for some of these economies, South Africa included. What would you say?
I think it's a number of things, starting with the tariffs. Tariffs created massive uncertainty. I think we're getting towards the end of that, where we will settle down, and therefore corporates and investors can calibrate properly. Then we have had pretty solid macro-prudential performance from many of the emerging markets. That will be recognized. The question is, can the actual bottlenecks and the industrial policies come through properly? And the governance, there are many governance questions around the emerging markets, particularly around, South Africa, for example, until recently has been on the grey list for FATF. They have recommended it to come off, but the proof of the pudding is in the eating, and investors are cynical.
When do we start to see it reflected then in some of these markets? You were mentioning the JSE has done quite well. We've seen other currencies across the continent stabilize a bit. Are you expecting potentially the markets to react a bit more once things settle, as you were just referring to there?
I think those who behave appropriately will be rewarded. If you look at what happened in the Gulf, a country like the UAE has completely transformed itself way beyond the oil wealth it has in terms of just creating a sophisticated services economy, attracting wealth owners from around the world, attracting businesses, and embracing the technology opportunity that AI gives. And I think, other emerging markets have to follow suit, and, there's opportunity, but in the end, we are bottom-up investors. We look at how individual companies do in specific countries and regions rather than making big macro calls, which often leads to disappointment.
Are you seeing an AI potential that looks attractive to you right now?
I see a huge potential in terms of leapfrogging, as we've done in Africa with mobile phones. Mobile telephony has leapfrogged. It's created financial access. If the exciting Mission 300 of the World Bank and African Development Bank works, and you bring 300 people more onto the grid, you could change education through AI in an entirely different, you could change medical provision, and that will lead to productivity. And ultimately, this is a young continent which has enormous potential and which will attract investment capital if it creates the conditions.
So what are some of those companies? Where in the AI trade are you looking at right now? What's interesting you?
I clearly have been for a while. I don't believe in the AI bubble, but I believe in the power that the AI bubble can unleash in the world economy. So it's the derivative of AI that's interesting. It's the companies that use technology well. I mean, in the last year, Africa has created 4 or 5 unicorns. Time Bank is one of the first truly digital banks in the world. It's growing like wildfire in Asia, but it's going to grow here. So I see the educational opportunity in AI as absolutely game-changing. So, and there are a number of these businesses, and right around us listed in this market, firms like Capitec, which are fully digitized, will continue to do exceptionally well.
Hendrik du Toit, it's always a pleasure to speak with you. Thank you so much. 91 CEO joining us here at the Africa Business Summit. Fran?
Jen, thank you so much. Jennifer Zabazaja speaking to Hendrik du Toit. Now, we, of course, have plenty more from the Bloomberg Africa Business Summit today, including an exclusive interview with the South Africa Finance Minister. That's at 11 a.m. UK time. Then NVIDIA earnings tomorrow will test investor nerves ahead of the delayed U.S. jobs report due on Thursday. The Fed Governor Chris Waller says current data supports a rate cut next month.
This reading of the data leads me at this moment to support a cut in the FOMC's policy rate at our next meeting on December 9 and 10 as a matter of risk management.
Let's bring in Tom Orlik, chief economist at Bloomberg Economics, who's here with me in Singapore for the New Economy Forum. So shorter term, Tom, thank you so much for being here. But shorter term, could we really have some surprises because we just didn't get data for weeks because of the U.S. government shutdown?
So I think there's a couple of things, Francine. So the first is the view on the US labour market has really shifted with the BLS revisions. A few months ago, it looked like a US labour market which was creating a healthy 100,000 plus jobs a month. Post-revisions, it really looks like a labour market that's stalled out. And that's why Waller and other doves on the FOMC are making a case for a December cut. The other factor which you flag is, well, we've just been through a government shutdown. That has a direct negative impact on growth in the current quarter, government workers not getting paid. But it also introduces this uncertainty. What is going on with jobs? What is going on with inflation? We've been flying blind. It's entirely possible that in some of those delayed releases, there's some information which is going to tip the balance of what looks like a bit of a nail-biter decision with both the hawks and the doves pretty vociferous.
I know we're close to that time of year where you put out your outlook for 2026. I mean, given all of what we've lived through, you know, it's fragmentation, inflation, AI, bubble bursting or not, what will you focus on?
So I think these are some of the big themes that are going to be coming up at the New Economy Forum here in Singapore, Wednesday, Thursday, Friday of this week. For me, the twin themes of 2025 have been tariffs and AI. Tariffs, if you remember back on April the 2nd, Liberation Day, it felt like the world was ending, right? The free trade order crashing down around our ears, markets falling. Well, a few months on from that, it feels like maybe that reaction on April the 2nd was overdone. Certainly the US economy isn't collapsing, inflation isn't spiraling higher. AI, on the other hand, well, AI both on the technology but even more on the market side has been really a story of enormous optimism this year. 2026, I think we could see both of those narratives starting to shift. I think there's a delayed impact from tariffs which is still to come. Companies haven't started passing on tariff costs to consumers much yet. If that starts happening in 2026, that could be a trigger for consumers to pull back, for a step down in US growth. As for AI, well, I think we're already seeing some pretty significant nervousness in the market about stretched valuations. So it could be that we see a transition from a really bullish 2025, where tariffs were the dog that didn't bark, and AI was a market champion, to a 2026, where we see the delayed impact of tariffs starting to hit the US economy, pulling down growth, pushing up inflation, and some of that irrational exuberance on AI starting to fade away.
Tom, thank you so much. As ever, Tom Orlik there, chief economist at Bloomberg Economics. Now, of course, our coverage from the New Economy Forum begins tomorrow. Top guests, including George Elahedri, the HSBC chief executive, and Mark Rowan, the Apollo chief executive. Up next, it's Bloomberg Brief. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we
you know, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. It's 5 a.m. in New York City. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A global stock sell-off. U.S. futures rebounding from the lows, but the S&P 500 still at risk at posting its longest losing streak since August. That as crypto fears linger, Bitcoin retracing some declines, but after dipping below $90,000 for the first time in 7 months. And President Trump is set to meet with Saudi Crown Prince Mohammed bin Salman later today. MBS wants F-35s. Take a look at what's going on here in markets. As I said, we're looking at futures off of their session lows, still down across the board. But this as European indexes dropped more than 1%, and we saw a drop of more than 3% on the Nikkei in Japan. So S&P futures and NASDAQ futures both down a little bit less than 0.2%. Let's take a look at what's going on in treasuries. This morning, investors buying government debt, and that pushes the 2-year yield down below 3.57, the 10-year yield back down to 4.10, and the 30-year at 4.71.70. In terms of Bitcoin, crypto is something everyone's watching right now because of the risk reversal that we saw. Trading currently at 91,315, but it has fallen below 90,000, as I said, and at one point getting down to 89. For some of the individual stocks to watch, let's get over to London. Valerie Teitel is standing by. Valerie?
Good morning, Matt. Let's start with some good news in the tech sector. We are seeing shares of Apple outperform the NASDAQ futures so far this morning, up 0.4%. And this is on the back of some positive news about iPhone sales in China. This coming from Counterpoint Research, showing that Apple in the month of October notched a 40% increase in iPhone sales, making it, giving it a 25% market share when it comes to smartphones in China. That is a statistic that Apple has not seen since 2022. So Apple shares up, but just slightly on the back of that positive news. Moving on to M&A, this time in the paint sector. Akzo Nobel, this is the Dutch paint conglomerate, has agreed to acquire Axalta Coating Systems, which is listed here in the U.S. This American paint company, a smaller rival. The shares are up some 10% after this all-cash deal. Now, Akzo Nobel will be moving its primary listing from Europe to the New York Stock Exchange after this acquisition. Lastly, let's talk about an activist investor. Elliott Management is said to take a large stake in the gold miner Barrick Mining. This is according to the FT, that Elliott has been encouraged about possibly separating Barrick Mining up into two different companies. We're seeing this gold miner rise near 2.5% so far in pre-market trade. Now, this comes off the back of obviously the outperformance of gold this year, which has seen a steady outperformance even above the yellow metal for the likes of the gold miners and the gold mining sector. Matt?
All right, Valerie, thanks very much. Now, coming up this hour, we'll be live from the Bloomberg Africa Business Summit in Johannesburg with Masai Ohiri of Giants of Africa, and we speak to Sitara Sundar a little bit later on of JP Morgan Private Bank on this market sell-off, especially when we're looking at issues for some of the alts as Blue Owl hits a low. Stock futures are off their lows, but let's take a closer look at this market sell-off with Morwenna Kaniam, co-editor of Bloomberg Markets Today blog. So Morwenna, what tripped us off yesterday? You know, 24 hours ago, futures were higher, then we started to move lower. We got a small debt sale from Amazon, but it's a gigantic company. So what's the problem?
Well, I think really what we're seeing is a lot of that sort of frothy enthusiasm for AI that had been, I suppose, sustaining the rally, especially in the absence of all of that US data that we were waiting for so long. You know, that is now coming off, essentially. You know, the lockdown is over, and therefore we are seeing some of that data coming through. We're highly anticipating the labor report tomorrow. And we're also expecting earnings from NVIDIA this week as well. And I think there's just a lot of uncertainty there as to whether this can really be sustained. And once things start to slip, we're starting to see some of those other factors which had perhaps been underlying the market all year, like tariffs. You know, we're actually seeing a lot of the levels, you know, the biggest drop in Japan since April, as well as, you know, the S&P 500 closing below its 50-day moving average yesterday for the first time, you know, since April. So I think what we're really seeing is a bit of that shift back and some of those underlying factors really coming into play again.
Yeah, it's pretty amazing to see a bigger than 3% drop on the Nikkei. The ASX 200 down more than 3 standard deviations away from its whatever, it's 30-day Z-score, whatever that means. Morwenna, this has been pretty violent in Asia, much worse than in Europe. What's the Sell Japan story?
Yeah, so there's obviously a little bit more going on there as well, because there's some concern over a diplomatic spat between Tokyo and Beijing, and concerns about Japan's economy, where the spending plans are actually going to make it really difficult going forward. But there is also that AI story there too. You know, we have seen the topics falling, and so it's a global story as well as a domestic one there. And I think essentially that's what's similar to what's happening in the US. You know, you've got domestic economic concerns, concerns about what central banks are going to have to do, as well as this global AI story that's sort of playing out and shifting.
All right, Morwenna, thanks so much for joining us. Bloomberg's Morwenna Kaniam there talking to us about the global stock sell-off. Meanwhile, over in Washington, D.C., President Trump prepares for Saudi Crown Prince Mohammed bin Salman to visit the White House.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia? I mean, and also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning on doing that. Yeah.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, you know, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
Joining us now from Dubai is Bloomberg's Stuart Livingston Wallace, who covers the Middle East for us. So, Stuart, how close is this to being a done deal? Because I'm sure that others in the region might have some concerns about Saudi Arabia with F-35s.
Yeah, good morning, Matt. So, I mean, the short answer to that is it's likely to be years away if indeed it ever happens. And so the precedent I'm thinking about for that is that Trump, at the end of his first term, agreed to sell a bunch of F-35s to the UAE. 5 years later, we're still waiting for that to be done. Now, it's a normal process that is going to take several years of back and forth in any case. There's going to be some chief concerns here. Number one, is that technology in those stealth fighter jets safe? In other words, is there a possibility that it will leak out to nations that the US may not consider particularly friendly? Number two, what does it mean for the balance of power in the region? So one key part here is Israel's stance on this, and broadly speaking, it's not going to be hugely in favor because it needs that military advantage over its neighboring countries. So there's a lot to be worked out here, but I think particularly for the Crown Prince arriving in Washington this morning, it's a huge positive.
I wonder, you know, we heard Donald Trump there triple down on the fact that we completely obliterated Iran's nuclear capabilities. Is that universally accepted?
No, I don't think so. I mean, I think there is universal acceptance that it certainly set things back. I don't think there's any doubt about that, and it's not just what the US did, it's also basically this 12-day war, effectively, where Israel was repeatedly bombing Iran. And it goes much further than the nuclear capability. It goes into the air defenses, it goes into a whole series of things that has no doubt constrained Iran, and I think you've seen that over the last several months. But going forward, the serious question here is what exactly, or where exactly, is the stockpile of enriched uranium, and what are Iran's intentions going forward?
Is it safe to say that we've moved on, or at least the Trump administration has moved on from the murder and dismemberment of Jamal Khashoggi that the CIA says was ordered by MBS?
I think so. And I mean, you saw the beginnings of that with that famous scene where you had the fist bump between Joe Biden and MBS. And there are a few factors to consider here. You know, Saudi Arabia is one of the world's biggest energy suppliers, if not the biggest. And US presidents, if nothing else, care a great deal about energy prices. So that's one aspect. Number two, there is an overarching strategic purpose here about the balance of power in the region and creating an alliance between the Arab states and Israel, that is a normalization of the diplomatic ties, to act in some part as a counterweight to Iran going forward so that the US doesn't have to expend quite as much time and quite as many resources in the region.
All right, Stuart, great talking to you this morning. Thanks so much for joining us here in New York. For us early, not so much for you. Bloomberg Stuart Livingston Wallace there on the Washington Saudi summit. Now, on to the other top stories trending on the terminal this morning. Initial jobless claims totaled 232,000 in the week ended October 18th. That's according to the U.S. Labor Department, showing historical data for claims. Weekly data for initial claims for the previous 3 weeks weren't made available. The BLS has also announced it will release the September jobs report on Thursday, November 20th, after being delayed by the government shutdown. Blue Owl shares have fallen to their lowest level since December of 2023. This comes after it restricted investors from redeeming capital in one of its oldest private credit funds. The firm announced earlier this month that it would merge its non-traded business development company, BDC, with its publicly listed vehicle, and investors in the BDC won't be able to redeem their capital until that merger closes. And Japan is working to ease tensions with China after Prime Minister Sanae Takaichi's comments on Taiwan sparked a backlash from Beijing. Tokyo on Monday dispatched a top diplomat to Beijing to try and calm concerns. China's foreign ministry said it had no information on that visit. Takaichi this month became the first sitting Japanese leader in decades to publicly link a Taiwan Strait crisis with the possible deployment of Japanese troops. Coming up, we speak with Giants of Africa co-founder Masai Ohiri at the Bloomberg Africa Business Summit in Johannesburg. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's head over to Johannesburg now, where the Bloomberg Africa Business Summit is underway ahead of the G20 leaders meeting. Bloomberg's chief Africa correspondent, Jennifer Zabasaja, standing by for an exclusive conversation with Masai Ohiri, sports executive and co-founder of Giants of Africa. Jennifer?
Yeah, thanks so much, Matt. I am standing by with Masai Ohiri. Masai, thanks so much for being here at the summit. Listen, you've done so much on the continent as far as not just sports, but the sports ecosystem and the infrastructure build. Can you speak to where we're at right now and some of that progress?
You know, we started with a template in Kigali and building a sports city out, and luckily we have a great partner with President Kagame and RDB there and building up. But you start with the arena, you start with the stadium and the whole ecosystem around it, and Zaria Group came in to build Zaria Court, which consists of restaurants, the hotel, all that fans and people embody in to go actually like watch sports and build on culture and entertainment, so concerts and all that stuff. And this is a huge sports city that we have to actually kind of replicate in other cities to create a tour and the ecosystem of sports. So great beginning for us.
Well, and we should mention you're the former president of the Toronto Raptors in the U.S., of course. What about some of the models that we see in the U.S. with some of the NBA teams and the ecosystem you think can be applicable on the continent? Or is it different the way you're trying to build these out?
It's actually we're trying to replicate that ecosystem. So if you think about these cities, New York, Toronto, Los Angeles, Chicago, they all have arenas and they have that ecosystem built around them. So my Scotiabank Arena, or where we played with the Raptors, everything around that, hotels, restaurants, the fans come in, there's sports bars, all those things equate and work together in these districts. And then we have our cities in Africa. You think about Nairobi, you think about Joburg here, you think about Lagos, you think of Abidjan, Accra, no arenas. Yeah, no arenas. Imagine those put in the middle of the city, somewhere in the cities, with all the hubs, the districts around them, and all the things that fans, people want to engage in these kind of places. And that's what we're trying to really replicate here with the population, the consumer class, growing economies. You know, like there's no way we should not be taking sports, entertainment, and culture and creatives like a little bit more. We should really be paying attention to it on the continent.
What's the convincing factor, though, for investors, especially when you talk about investing into these ecosystems on the continent? Do you still have to do a bit of convincing, or do they see maybe the ROI long term?
I think the talent is the most important thing when you look at the continent, the youth. Yeah, so I think what's the median age? 20 years old, the median age on the continent. So it's really growing. People are looking at these things. But when you actually think about the talent of athletes, soccer players, football players, basketball players, all of that. Then you go to artists, then you go to chefs, you go to commercials, you go to all those things, creatives, comedians, they all perform in these arenas, right? And this brings big time business. And that's going to create a lot of these economies, right? We have so many artists and they cannot actually play in their own countries. We can't develop tours. So imagine Tyler or Davido or Burna Boy or all these guys going on a tour from Joburg to Cape Town to Nairobi to Kigali to Lagos. We don't have that route because we don't have facilities, like to occupy this. And this is what we're trying to build. That's what builds this entertainment business and sports. So the NBA plays in all these arenas. The PFL, all these guys, UFC, they all perform in these arenas. We have to have them to attract these kind of people on the continent.
What's the role of some of these international leagues? Because you do a lot of work for Giants of Africa across the continent. Of course, we know the BAL, Basketball Africa League is here, NBA plays here. Do you see some of the players in the U.S. and elsewhere potentially playing a role in growing out the sports ecosystem on the continent?
Yes, and that's what I talk about with the talent. We do have the young talent, so you can actually build these leagues from bottom up and then from up down too. Meaning, young players in academies can actually grow to play for club sides, which the NBA is doing an incredible job. They've invested in having a league in Africa. There's nothing like that. We should be incredibly lucky to have that. This is the first time they're actually going into Europe now, but we are kind of the guinea pigs of what they want to do outside of the United States. We're incredibly lucky to have that, for them to invest. There will be 12 cities or so that they will have these leagues. You can have young players come from these clubs. You can have star players come to play here. You can have players that retired from the NBA or players that want to play on the continent, want to play in their countries. You grow a league that pays, that has venues. Yeah. It's going to be incredible.
And a quick yes or no, are you going back to the NBA in any shape or form?
We'll see a year from now.
Okay. Masai Ujiri, thank you so much for joining us, co-founder of Giants of Africa and also former Toronto Raptors president. Thanks, Masai, for joining us. Matt?
Jennifer, thanks very much. Jennifer Zabasaja there, Chief Africa Correspondent. Coming up, Google's boss warns on the impact of an AI bubble bursting. That and a look at what else is making headlines in your front page news next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Matt Miller in New York. U.S. Ambassador to NATO Matthew Whitaker calls on the EU to take a more aggressive stance opposing Moscow in the war with Ukraine. He spoke in an exclusive interview with Bloomberg's Oliver Crook.
Obviously, seizing the Russian assets are a significant step. It would not only fund Ukraine for several years, both economically and militarily, but I think it would also point to a new step, a more aggressive Europe. You know, one of the criticisms that Europe often hears is that they're just not aggressive enough. And I think what I communicate all the time with, you know, in allied capitals, that we're strongest when we all move together, not just the United States, because I think for so long in the history of the NATO alliance, folks have looked for the United States to move and to do things, because again, we're the biggest economy, biggest military, and what we do matters. But when we can all move together as all 32 allies within NATO, I think that is always stronger. And it's the same thing when it comes to military capabilities.
There's sort of a paradox here for the European side. Do you think that Europe is too afraid or not afraid enough of Russia? Because you speak to the one hand not having been sort of negligent on the spending long term, and yet on the other, there's a real fear of escalating things. They say no for a very long time. They eventually get to yes, and in the meantime, a year and a half has been lost.
Yeah, one of the conversations I've heard several times from our allies is that what was impossible in February is considered in June and is ultimately like, why didn't we do it sooner in September? I mean, and that's kind of been the history of all of these moves by Europe.
Same with the Russian assets.
Yeah, and I think the time for them to act boldly is now.
And that was U.S. Ambassador to NATO Matthew Whitaker speaking with our own Oliver Crook. Now time for your front page news on the Washington Post. Larry Summers is stepping back from public commitments over the Jeffrey Epstein emails. The former U.S. Treasury Secretary said he is deeply ashamed of his years-long communication with Jeffrey Epstein after Summers' statement. A growing number of boards and think tanks said they no longer had relationships with him. Summers is a paid contributor to Bloomberg Television. On Bloomberg, a federal judge rejected the Trump administration's request to strike down a New York law prohibiting immigration agents from making arrests at or near state courthouses. The judge also dismissed the administration's move to force state law enforcement agencies to share information with federal agents in their pursuit of undocumented immigrants. And on the BBC, Google CEO Sundar Pichai warns no company is going to be immune if the AI bubble bursts. More on that when we come back. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A global stock sell-off. Futures here in the U.S. rebounding from lows, but the S&P 500 still at risk of posting its longest losing streak since August. That as crypto fears linger. Bitcoin is retracing declines, but it earlier dipped below $90,000 for the first time in 7 months. And President Trump is set to meet with Saudi Prince Mohammed bin Salman later today, and he is looking forward to selling him F-35 fighter jets. Let's take a look at what's going on in terms of futures right now. Off our session lows, but still in the red with S&P futures as well as NASDAQ futures down 0.33%, continuing the sell-off we had yesterday. Drops in Europe were more than 1%, drops in Japan more than 3% on the Nikkei. Here you can see investors are buying Treasury debt, the U.S. 2-year yield at 3.57, the 10-year back to 4.10, and the 30-year yield at 4.71. For some of the stocks, wait, Bitcoin. I almost forgot Bitcoin. By the way, this drop is interesting in that it coincides with the sell-off in stocks, and it's down from $125,000, but still, to me, someone who's covered Bitcoin for over a decade, it is still shocking that people will pay $91,000 for this line of code. All right, let's get to the stocks now. Valerie Teitel is standing by in London. Valerie, what are you seeing?
Good morning, Matt. Let's start with some good news, and that is Apple is outperforming the broader market this morning, but just slightly up by 0.4%. This is on the back of some research from Counterpoint that Apple has reached a 25% market share when it comes to the smartphone market in China. That is it's a statistic that Apple has not seen since 2022. This good news on their iPhone sales in China, boosting the shares higher this morning, but maybe perhaps a lot of that excitement had already been priced in with Apple just muted up 0.5%. Let's move on to some M&A activity that's in the paint sector. Akzo Nobel, that's the owner of Dulux Paint, has agreed to acquire Axalta Coating Systems. This is a American rival, a smaller American rival, for a deal worth around $9 billion. We're seeing Axalta shares up over 8% after this deal. Very interesting to see that Akzo Nobel, a Dutch company, will be moving their primary listing to the New York Stock Exchange after this acquisition. Lastly, let's end with news about Elliott Capital Management. They are taking a stake in the gold miner Barrick. The FT quoting this, saying that they have around a $700 million stake in Barrick. We're seeing shares of Barrick mining up 2.5%, with the FT saying that Elliott is encouraged about potentially breaking up this miner into two separate parts. And this comes amid a broad rally this year in gold that has seen gold miners outperform. Matt?
Yeah, gold's still trading over $4,000 a troy ounce. Valerie, thanks very much. Valerie Titel there with a look at some of your stock movers out of London in the pre-market. Stock futures are off session lows, as I pointed out, but we're still looking at drops after a sell-off in yesterday's cash trade. Let's get more with Bloomberg macro strategist Simon White. And Simon, we see a sell-off in Europe. We saw the Nikkei drop more than 3%. What's going on?
I don't think there's actually any one thing. You know, I was looking at this before it came on. Look, markets have been going up pretty relentlessly, and you know, certainly in the case of the Nikkei, it was very overbought. So you're going to get some risk just coming off the table. We've got a lot of uncertainty as well, so there's a lot of excuses, if you like, to take some risk off the table. So in the US, you've got uncertainty around the rate outlook. You know, we're now down to roughly 40–50% for a cut in December. You know, that came down from 100%. And we also have uncertainty over the data. When we start to get more data coming out after the shutdown has ended. And there's obviously a huge kind of discussion and furor over AI valuations and whether they're justified or not. And obviously when it comes to Japan, you have obviously the diplomatic issues with China that are kind of simmering now. So there's a whole bunch of reasons why, you know, if you looked at markets, they're up a lot, they're overbought, and this is a good time to maybe take some risk off the table.
In Japan, though, it seems to be idiosyncratic issues, specifically China relations, that are driving the Nikkei down to much bigger losses than we see elsewhere.
Yeah, I think so. I mean, look, the Japanese market is it's gone up a lot as well, and it's often more volatile. So I think you're going to see bigger swings in the Nikkei anyway. And you know, it was very overbought. You've got this diplomatic spat. Obviously, Japan's now trying to soothe it with China, right? So we'll see if this is something that's more fundamental. But you know, if you're sitting there, you've made like very good returns on your Japanese stocks, international investor or as a domestic investor, and you see this happening, you're like, but you know what? Maybe I'm going to sweep a little bit of risk off the table. So I don't think there's necessarily any reason to kind of like throw the baby out with the bathwater quite yet. It's just a natural part of bull markets that you're going to have these moments of concern.
Simon, thanks very much. Bloomberg's Simon White writes for the MLive blog. You can get his work and the work of his team by typing MLIV Go on your Bloomberg terminal. Joining us now is Sitara Sundar, head of alternative investment strategy at JP Morgan Private Bank. Sitara, welcome. Thanks for joining us on set this early. Let me first ask about what's going on in private credit. Since you specialize in alts, and we had these comments from Jeff Gundlach on the Odd Lots podcast yesterday about how he thinks private credit is the new subprime. Today we see Blue Owl gating redemptions on one of its BDCs because of a merger, and as a result, that stock is tanking. Are you concerned?
Yeah, look, it's the number one question that we're honestly getting in the alternative investment space, and I tend to bifurcate it into two things. One, whether or not the growth that we've seen in private credit is going to be indicative or a cause or a signal for systemic risk. And then two, what the outlook for returns are moving forward. And those can be two separate things. On the first part, we have seen meaningful growth within private credit. It's far outgrown other sub-asset classes when you think about the debt spectrum. But private credit is still only 9% of corporate borrowing. And even when you look at indirect exposure to banks lending to private equity and private credit firms are still only 5 to 15% of their lending to non-bank financial institutions. So whether you look at direct exposure or indirect exposure, the linkages are still modest, meaningful, but not detrimental when we think about systemic risk. On the flip side, I do think that we need to remember that private credit is still credit. And the average credit rating within private credit is single B. You are still taking extended credit risk within these markets. So we're not underwriting to 0% default rates. Right. We're actually underwriting to about 2 and 2.5% default rates moving forward. But the biggest question to us is whether or not it's isolated froth and microcycles, or whether we're going to be moving towards a macro credit stress cycle, and we're just not seeing signs of the macro side. We expect some cracks in credit, but there are actually opportunities that you can lean into within that through opportunistic and distressed managers. So still like private credit, we expect yields to normalize as base rates come down and defaults tick up a bit, but you're still looking at anywhere from 150 basis point to 200 basis point premium over what you're getting in public markets. So the risk is justified.
Understandable that, you know, sometimes companies go bankrupt. There are idiosyncratic issues. It doesn't look like, I guess from your perspective, a widespread credit problem. But the issue I would have as an investor is the marks, right? BlackRock still marking Renovo at 100 cents on the dollar weeks before it went bankrupt, even though BlackRock knew about the restructuring in April. Doesn't that merit a markdown?
Look, I think that in general, when we're trying to think about the private credit space and private markets in general, the issue and the question about marks and transparency is always something that is going to come up. And in this way, that's why we think that manager selection and who you're investing with is extremely important. As we start to see a continuation of capital flood into this space, and some of that is warranted given the opportunities that we're seeing, a lot of the conversations that we have with our clients is to ensure that you're investing with the right manager, that has the multiple decades of underwriting expertise, and in an environment and in an asset class where manager dispersion has historically been pretty tight, we actually expect that to widen moving forward.
What do you think about, let's move on to the AI bubble, because I thought it was interesting that Sundar Pichai even really addressed this with the BBC, saying that if there were a bubble burst, it would affect everybody. I guess that's not a surprise, but we're starting to hear more and more concerns about an AI bubble. Michael Burry, famous investors like Michael Burry shorting NVIDIA and Palantir, Peter Thiel selling all of his NVIDIA stake, as did SoftBank. Are you worried at all?
Yeah, look, we actually just released our 2026 outlook, and this was about 33% of the piece was addressing this question about whether or not AI is within a bubble. I think the way that we think about it is, are there signs of isolated froth building? Yes, given where we are in the AI cycle, we're about a few years in. AI has delivered a lot of returns for investors, especially within the semiconductor and hyperscaler space. Can that continue moving forward? At this point in time, we're not yet seeing signs of a bubble. Usually the way that you think about it is, are we seeing signs of excess leverage? No, there are some players that we're expecting to see more debt financing when you think about CapEx expenditures, but no signs of excess leverage yet. And the other big sign that we tend to think about is where valuations are and whether or not the fundamentals justify where valuations are at this point in time. And what we've actually seen, and this honestly surprised me, but over the past couple of years, since the launch of ChatGPT, we've actually seen valuations for the large hyperscalers and the big semiconductor players derate and come lower because the earnings growth has multiplied by 2x over that same period of time. So valuations have actually come in because the fundamentals have proven out. And then finally, the biggest question is capacity and whether or not we're in an risk of overbuild, similar to what we saw in the 90s with overbuilding of fiber optic cables, and we're just not seeing that yet. Data center vacancy rates are at multi-year lows, and when we're even thinking it's the right question and the right level of skepticism, which I expect from you, but the other thing is that 75% of data centers are pre-leased.
Right.
And it's very different than what we saw in the late 90s and early 2000s, where less than 1% of fiber optic cables were being utilized, and we're still in a compute-constrained and capacity-constrained economy right now.
By the way, I'm not skeptical of everything, or rather, I'm skeptical of a theory I heard today that Alphabet's debt sale kicked off yesterday's sell-off. Like, does it really matter if a $3.5 trillion company borrows $15 billion? That's a pittance.
I think that we need to expect, we've been in a period of time where a lot of the capital expenditures were financed through excess cash flows. We're now entering a period of time, given the amount of CapEx that's needed to fuel artificial intelligence penetration and expansion, that we're expecting to see debt financing. It's a normal part of how investment cycles tend to play out. You use your balance sheet if you have the strength of the balance sheet, and then leveraging debt markets, whether it's public or private, is a natural part of the cycle.
Sitara, never enough time with you. Hopefully you come back and join us on my show at some point. Again, at the 9 o'clock hour. Sitara Sundar there of JP Morgan Private Bank. Let's get to the other top stories trending on the terminal this morning. Another warning on valuations in the AI industry coming from JP Morgan Vice Chairman Daniel Pinto. Joining a chorus of Wall Street executives worried about a bubble. He spoke at the Bloomberg Africa Business Summit in Johannesburg.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
Blue Owl shares have fallen to their lowest level since December of 2023. This comes after it restricted investors from redeeming capital in one of its oldest private credit funds. The firm announced earlier this month it would merge that BDC with its publicly listed vehicle, and investors in the Business Development Corporation won't be able to redeem their capital until the merger closes. And President Trump argued his administration was making progress on lowering prices as he faces new political headwinds. Speaking at a gathering of McDonald's franchise owners in Washington, he hailed McDonald's extra value meals.
And I want to give a very special thanks to McDonald's for slashing prices for your most popular items, bringing back extra value meals, and I hear you're recommitting to the affordable options of Americans that we really know and love, all of the items that we love. And I hear that McDonald's is playing a very big role in that. We're getting prices down for this country.
Coming up, President Trump gears up for a visit from the Saudi Crown Prince with a possible sale of fighter jets. More on that next. This is Bloomberg.
Coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia? I mean, and also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning to do that.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
President Trump preparing for his meeting with Saudi Crown Prince Mohammed bin Salman, expecting to sell him F-35s. Former U.S. Vice President Mike Pence has voiced concern.
I have concerns about the sale of F-35s to Saudi Arabia or any nation that could not assure the United States that technology and the great advancements that we've made with the F-35 don't fall into the hands of nations that are hostile to our interests.
Let's bring in Bloomberg's Owner Ant in Dubai for more. Owner, it looks like the president is determined to push this sale through. What obstacles stand in his way?
Well, this deal or this approval by Trump to sell F-35s to Saudi Arabia is only a small step in what is likely to be a years-long negotiations between the two countries. As we have seen earlier with Mike Pence's comments, it is a factor in the U.S. administration's consideration of such sales, whether or not the technology falls into wrong hands. Then there is another factor that the U.S. will be taking into account, and that's the Israel factor. Under the U.S. law, Israel is guaranteed weapons to maintain its qualitative military edge over Arab nations. Right now, Israel is the only country in the region that has F-35s, and if Saudi Arabia gets these weapons, it will be the second Middle East nation and the only Arab nation that gets these jets. Now, the talks will be difficult, and we can say that just by judging by what happened with the UAE. The United Arab Emirates signed a similar deal, a $23 billion deal with the U.S. during Trump's first term about 6 years ago. But those talks over the purchase of F-35s by the UAE have gone nowhere. They stalled over disagreements over the operability of the jets, as well as a shift in the UAE's consideration of cost and benefit analysis. So yes, it is a major concession by Trump, and it's a big win for MBS, but still there's a long way between that first approval and Saudi Arabia finally getting F-35 jets down the road.
All right, Owner, thanks very much for joining us. Bloomberg's Owner Ant there in Dubai talking about what we can expect not only today, but over the next few years, because this could take many, many years of negotiation. Now, Bitcoin bouncing back after plunging below $90,000 during Asia trading, deepening a sell-off that's erased all of its gains for the year. Joining us now is Bloomberg's Anna Idera. Anna, what's driving these moves in crypto? I mean, to what is Bitcoin correlated that it goes on this roller coaster ride?
So in theory, it wasn't supposed to be correlated with other major assets, right? That was part of the attraction, but it seems like it is following sort of the risk-off sentiment. And to the contrary of normal sort of volatility we've seen in crypto, this is certainly not the first time that we've seen a huge drop. There really doesn't seem to be anything particularly tied to crypto. You know, you will remember in other years we had big exchange crashes, we had all sorts of drama, people sort of going to jail, whereas in this environment, we're actually seeing people being pardoned. There's much more acceptance and regulatory acceptance and Wall Street acceptance of crypto. So it's caught everybody sort of by surprise, this big drop in Bitcoin.
You know, the phrase winter is coming echoes in my head, not just because of Game of Thrones, but because I've been following crypto for so long, and you do have these crashes that inevitably rebound into higher highs. Is anyone expecting that sort of scenario right now?
Yes, we're sort of entering a territory where it keeps falling. You know, there was a big flash crash on October 10th that caused a lot of pain, and sentiment has not really totally recovered since. And obviously the biggest thing that happened now was that now for the first time we saw a lot of interest in Bitcoin ETFs, which helped drive the latest rally. And for the first time, because of the crash overnight, we saw the investors that came in on ETFs be underwater. So that's a big sort of sign of how sentiment has shifted and what's ahead perhaps.
Anna, thanks so much for joining us. Anna Iadera there covers crypto for us out of London. Coming up, we're going to get you set up for your trading day with President Trump, meeting Mohammed bin Salman, and more earnings to come out, but crucially, not NVIDIA yet. That's tomorrow after the bell. This is Bloomberg Brief. I'm Matt Miller in New York.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead today. First up, Home Depot reports its earnings before the bell. Then more Fed speak with Barr, Barkin, and Logan throughout the day. And President Trump welcomes Saudi Crown Prince Mohammed bin Salman at the White House. That starts at 11 a.m. Eastern. In terms of what's going on in stocks, Blue Owl has plunged to 2023 low. Its 2023 low after blocking an exit from an early fund. Exalta Coating Systems, AkzoNobel is going to buy that firm in an all-stock deal, and Barrick Mining has been rated a new buy at William O'Neill. Taking a look at what's going on in European stocks, the plunge continues. More than 1% drops on the FTSE, the CAC, and the DAX. And here in the U.S., futures are also trading lower. That's it for the Bloomberg Brief. Bloomberg Surveillance is up next. This is Bloomberg.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling, but when we started to work for David, one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Don't chase this market. Let it come to you.
The question isn't, will the market be healthy, but will it remain bifurcated?
There are legitimate questions about valuations.
I do think that the market is too negative on the economic outlook.
If you get any more downdraft in technology, it's going to be hard to rally through the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, the sell-off deepens. Equity futures pointing to the longest losing streak since August. As a shakeout in Japan sends the Nikkei to its worst day since April. A breakdown in sentiment leading to Bitcoin briefly breaking below 90K. The risk aversion continues to simmer.
And it's changed its tone. It's not just locked up in the high flyers and non-profitable tech stocks, some of the more speculative bets. This has broadened out to travel stocks. Yesterday, Hertz, Avis, Expedia, all down 10% or more in the past 3 trading sessions. CarMax down almost 7%. You're seeing across the board this weakness that's pervading the American economy beyond just a big tech story, and it raises a question about what's going on. Does this have to do with the Fed? Does it have to do with big tech? Or does it have to do with momentum?
The consumer at Home Depot not coming to the rescue. Their stock is down in a pre-market buy. 2% is a downside surprise on earnings from Home Depot on sales. And this line stands out, Bramo. An expected increase in demand in the third quarter did not materialize.
Yeah, talking about how the full year earnings per share growth is probably going to be down about 6%. They saw previously down only about 3%. This highlights the conundrum for the White House and, frankly, more broadly for economists. Can this economy recover without the housing sector? Can this economy recover without all of the spending that comes with either having a new home or renovating? And Home Depot is the poster child of exactly how much that pain is transpiring. Is this a consumer issue? Is this a housing issue? Are these one and the same?
The stock is down by 2%. A downside surprise. Home Depot coming out this morning. Target tomorrow. Walmart after that. Let's talk about spending, some serious spending, and a lot of debt coming to the debt market. We've had $18 billion from Oracle, Meta delivering $30 billion of debt, Alphabet about 25. In the last 24 hours, $15 billion of debt coming from Amazon.
The numbers are racking up, and you're seeing the concerns start to lift a little bit of the spreads, at least in investment-grade corporate debt world, as well as in high yield. There is a feeling that the spending initially was coming from the cash coffers of some of the big tech giants, and now it's changing. Now suddenly it's coming from the debt markets. It's raising concerns not because the hyperscalers can't pay it back, but where else is the leverage building? And I would just like to note that yesterday, private equity stocks and private debt stocks
hammered,
absolutely hammered, led by Blue Owl, which saw their shares down 5.6%. Blue Owl has heavily invested in the Meta deals and all sorts of other infrastructure and data center deals, and has been having issues with this one fund where they're not going to necessarily have quick redemptions. Real questions here about whether we're just seeing the tip of the iceberg or whether this is the blow-off top that allows a healthier kind of move forward.
We're going to spend some time on this throughout this morning, but this just dropped, the Global Fund Manager Survey from Bank of America. Check out this title: Cash Poor, CapEx Rich, Rate Cut Needy. Are we going to get those rate cuts? Based on the commentary we've heard so far, maybe not.
This is the real issue to me, and this is part of what's driving the risk-off sentiment right now. You've gotten pushback, although yesterday we did get a little bit more dovish speak from Vice Chair Jefferson as well as Chris Waller. There is a feeling that there is a lot of pushback on the Federal Reserve in a sense that we could get non-farm payrolls on Thursday for some reason that will edify the sense that there is strength in the economy and might push some of the Fed officials not to cut. Does that send markets into a tailspin that have been expecting those lower rates?
You're not excited for payrolls Thursday?
You know...
No? Doesn't do it for you?
I gotta say, I am excited. I think it's fabulous. Very excited to get some data. It's backward looking, and we've already heard people muddy the waters by saying if it's a high number, it's because it's payback from previous months, and if it's a low number, it really is just an adjustment because of the birth-death model and the fact that we've gotten lower immigration. So I don't even know what I'm looking at. That's
if you don't like September, I can't wait to show you the noise in October.
What October?
October is going to be a very messy jobs report. Payrolls, the estimate in our survey, 55K. That's the median. The estimates keep pouring in ahead of Thursday. Coming up this hour, Peter Chia of Academy Securities with stocks adding to a 3-day slide. Republican Congressman French Hill on the future of deposit insurance, and Sharon Miller of Bank of America on the key findings from the annual Business Owner Report. We begin this hour with stocks sliding as investor angst rises over valuations and interest rates. Peter Chia of Academy writing, expect the equity rotation to continue. The NASDAQ 100 weaker from here. Not doom and gloom, just a healthy dose of profit-taking and repositioning of risk. Rotation, yes. Pain ahead, likely. Smooth sailing, unlikely. Pete joins us now for more. Pete, good morning. Good to see you.
Hey, good to see you too.
What do you make of those issues that we've seen coming from the likes of Alphabet, Meta, Amazon, Oracle? Why are they coming to the debt market when some of those companies have got so much cash?
You know, I think they're going to use some of that cash themselves. They are doing some of the financing through what's almost like a project finance type structure, and some of it's going to come out of their own balance sheet. So I think there's this realization that the data center and AI build out is going to be extremely expensive, and some of it's going to come from private credit, some of it's going to come from public credit, some of it's going to come from bank lending. And it's not just the data centers and AI, it's going to be the energy build out that's required for that as well. So I think that's starting to weigh on the market a little bit. Not much, but there's some pressure there.
What is this ecosystem built on? The balance sheets of the Amazons and Metas and Alphabets of this world, or the shaky, flaky promises of OpenAIs and others?
You know, I think it's still built on, everyone says we need to be an AI. The CEOs say we need to be an AI, we're spending AI. And you're starting to hear some positive stories where people saying, here's what we've got, here's the benefits, but you're also hearing a little bit rumbling underneath, like, we're spending this, what are we getting? So I think that's going to be the shakeout. Do we really see this benefit? And to be honest, at this stage, right, if it's really working for everyone, I think that should flow to higher multiples for the rest of the market. So even if AI turns out to be, as good as people hope, as quick as people want it to be, I think it should benefit the broad market, not just the AI producers and hyperscalers right now.
How much is this people trying to take chips off the table before tomorrow's NVIDIA report? Because NVIDIA shares have lost $500 billion since October 29th. On what? What exactly has driven that?
You know what drove it up either. I think we've got a lot of market structures issues. You've got zero data expiration options, and then you've got, the ETFs. And I do think it's been a change in the past year and a half that you have Bitcoin ETFs, right? People used to be able to hold their cryptocurrency holdings separate. It was in their own wallets, or maybe it was at Coinbase or something. They saw it there. Now it's in your portfolio, potentially at your Schwab or Fidelity, and it moves with everything else. And I think a lot of the people who are very heavily invested in disruption, they own that. They own ARKK, which is down, 20 some odd %. They own the hyperscalers. So they own the same set of trades, thinking they were different. And every time we kind of get these hiccups, correlation seems to go to 1. So I think that's putting the pressure.
Is this partly spurred to John's point earlier about speculation that maybe the Fed won't cut rates in December, and that's taking some of the froth out of the system, leading this to sort of a very healthy kind of correction phase that could have more legs, but actually will lead to a better ecosystem?
Right. I think people got a little bit carried away with the Fed and how much beneficial the Fed would be for this So as that kind of backs off, we're down to we're not even pricing in one full cut by the end of January right now. So that's kind of interesting to me. So yeah, I think it's a healthy thought about where do these things go, and it was a lot of money chasing. And again, momentum has been such a strong strategy, so people pile into momentum. The problem is when momentum turns, it turns very quickly because no one understood the valuations necessarily, so you don't have any sort of depth of value buying. So you're going to get this volatility. I think it continues for a little while. And again, I think a lot of people, including myself, you're looking at Bitcoin. There's been nothing but positive news out of this administration, out of the regulatory environment. Everything seems positive for crypto. Companies and countries are talking about owning it, and yet it's down. I think that's kind of a bit eye-opening.
What's the relationship between developments in crypto and what's happening in the equity market? How does one inform the other?
You know, I think people are looking at anything that was kind of momentum. And again, I think there was a class of investors, particularly the day trader types, who really bought into momentum across all things. So whether it was the, hyperscalers, whether it was Bitcoin, whether it's, these leveraged plays, it's all one pile of money. And as that kind of gets hurt, they have to take some chips off the table.
Do you think equities are leading crypto, or is crypto leading equities?
I think crypto started this turn down. I think now maybe it's a little bit more balanced, but there were a few days you're like, why does crypto keep going down? Why is crypto going down? And then all of a sudden it kind of rolled over. And I go back to, I believe it was last Monday, right? We had this ripping day in stocks, up 700 on the NASDAQ. Crypto didn't do quite as well. And all of a sudden everything reversed starting on Tuesday. And since then, it's been pretty much one way down for crypto and stocks.
So far, we've been talking about this like it's a gambling parlor. The idea of everyone's trying to chase this chip and then kind of get blown out of this position, et cetera. There has been this sort of divergence between the underlying economy and the market pretty significantly throughout this year. I'm wondering if this feels different based on the action that we've seen in some travel stocks, in the sense from this morning's Home Depot reports that there really is this softness that's taking hold. Do you think that the sell-off in stocks could exacerbate that?
It could exacerbate that, but I think it could also be just, as you're saying, finally paying attention to some of this, right? There has been this weakness in the lower, income, consumer, right? We've seen parts of that. You're seeing a little bit of pressure in the credit markets. And one thing, we'll come back to this in a second on the credit markets, but I do think the data that we have, and we've been short on data anyways, doesn't capture what goes on in small businesses very well. I think our data is designed to capture big and medium businesses very quickly and timely. It takes a while for small businesses. Everything we see and hear anecdotally, and in some of the numbers you can get, is small business has been hurt the most by the uncertainty, right? They didn't have the deep capital, the working capital to get ahead on tariffs. They're uncertain about this. They run, maybe not month to month, but they do not have the same sort of, wherewithal to suffer through months and months of uncertainty. So I think as the small business data starts to hit the economy, that's where we're going to realize, wow, this is where the jobs are. And that would probably fit very well with Home Depot type of thing, right? That's the small contractors, right? Those are the ones who are struggling right now, who would do your home fixes and things like that. So I think the economy is worse than we realize. I do think the Fed should cut, because I think that's data is going to show up weaker and weaker.
So if the Fed does not cut in December, one thing that we've talked about is how no corporate executive is talking about the potential for a recession. We just got forecasts from Wall Street. All the strategists seem incredibly bullish on equities and talk about a reacceleration. Are you saying that that's wrong?
I think there is a chance of recession, right? First, it's never been off the table, but we've been arguing even before the government shutdown, they were overstating the birth-death model. They assigned way too many jobs to EIN, or Employment Identification Number applications. I think they missed the boat there, where people apply for EINs because they buy an Airbnb and they're going to set up an LLC to run that, or they're going to do Uber Eats or something. And I keep looking at what's going on in the quits rate, really low. Law school applications continue to go higher. All those things to me are indicators that everyone sees the economy is not that strong. So I think we have that possibility, and everyone has to be very careful right now, because there is a huge incentive to say things are good, because there's a lot of pressure coming from the administration, everyone. So you don't want to be questioning it, but I think maybe now it's time to question it so we can direct right policy. And some of that worked really well. Trump just backed off on tariffs and things that we don't grow here. I think that's smart. I don't think we should have ever put them on, but it's a good move.
Do you think there's a slow realization in Washington, D.C., in the White House, that the acceleration, the pickup in the economy is not developing?
Yeah, I think they are going back to maybe fine-tune or retune what they did. I think they went very big, very bold, whether that was the right thing to do or not, but now I think they're trying to figure out where are the pockets that this isn't working. I expect, again, we'll probably see a bit more cooperation with places like Canada on things like potash, on things like the tar sands oils, where we need this, right? We tried to do a lot very quickly. That was the whole plan. We know that he wants the economy humming along by November, so I think you're going to see some of these things revisited where they make a true attempt to fix things.
Peter Chair of Academy is going to be sticking with us. The latest numbers from Home Depot not speaking to a pickup in the economy or any kind of reacceleration. This quote from the CFO: "We had expected demand to begin accelerating gradually in the back half of the year as interest and mortgage rates eased, But, and it's a big but, what we are seeing is ongoing consumer uncertainty and continued pressure in housing disproportionately impacting home improvement demand.
And frankly, we've seen this in the mortgage application numbers. We've seen this in just the average home sales. Turnover has fallen to a really low level. Transaction levels have fallen to recessionary types of levels. And it's interesting to me because it raises questions for the inflation backdrop. And Citigroup's Andrew Hollenhorst yesterday said that new rents are rising significantly below where they had 2 to 3%. So it sort of speaks to this idea that maybe it's not so inflationary, but are we overestimating some of the strength that people are saying that can take us to some sort of soft land?
The Home Depot results are in the Governor Waller camp, that's for sure.
Yes.
Home Depot this morning down by close to 2% in the pre-market. With an update on stories worldwide with your Bloomberg Brief, here's Yahara with more. Hey, Yahara.
Hi, John. Just recapping those earnings. Home Depot has cut its full-year guidance, warning consumers aren't making big-ticket home purchases. The company reported comparable third-quarter sales that missed estimates, saying the lack of storms also hampered demand in roofing, generators, and other categories. Meanwhile, initial jobless claims coming in at 232,000 for the week ending October 18th. The U.S. Labor Department posting the latest data to its website overnight. Continuing claims came in at 1.957 million, up slightly from 1.947 million in the prior week. The delayed September payrolls report is due out on Thursday at 8:30 a.m. Eastern. And J.P. Morgan Vice Chair Daniel Pinto is warning a possible correction may be due because of high AI valuations. Pinto becomes the latest Wall Street executive to show concern over a possible bubble forming in artificial intelligence. The J.P. Morgan Vice Chair made the comments at the Bloomberg Business Summit in Johannesburg earlier today. Bloomberg Terminal subscribers can watch the event and more with the function Live Go. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. More from Yahara in about 30 minutes' time. Up next on the program, a Saudi arms deal.
Are you planning to sell F-35s to Saudi Arabia?
Yeah, they've been a great ally. They've got to like us very much. I will say that we will be doing that. We'll be selling F-35s.
That conversation up next with Anne-Marie down in Washington, D.C. Live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Three-day slide on the S&P 500 could become day 4. We're down across the board. We're negative by 1/3 of 1% on the S&P, down by 1/3 of 1% on the Nasdaq. The Nasdaq in focus tomorrow after the closing bell. We'll have numbers from Nvidia, numbers from Target tomorrow as well. Walmart on Thursday. This morning, moments ago, Home Depot. Home Depot, a miss, and they cut the outlook too, and the commentary does not inspire confidence into year-end.
They were expecting the reacceleration, as so many people are, and they did not see it. The idea that the full-year earnings per share growth, they now see as being down 6% versus previously seeing it only down 3%, highlights just how much people are not coming back, and it speaks to the pain that we keep seeing in the housing market. Yes, Neil Dutta, I have been reading your emails.
Is that what Neil said to you just moments ago?
Well, he just has been talking extensively about the fact that you cannot have a real recovery without the housing market. That is one of the key drivers of a lot of jobs and economic activity. Think about how expensive it is to buy a home, to furnish it, all of those kinds of things. Many of us have been there, and there is a feeling that without that, it's hard to see that robust, broad-based growth, and this really speaks to that.
You said Neil, and my Bloomberg terminal lit up. I've had to mute it. I'm not sure if it's Neil or not. I'm going to check in a moment. Under surveillance this morning, we'll head down to Washington and look for a Saudi arms deal.
Are you planning to sell F-35s to Saudi Arabia?
Yeah, they've been a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
It's the latest this morning. The Saudi Crown Prince Mohammed bin Salman set to meet President Trump at the White House later this morning, with the two leaders expected to continue deepening ties. Anne-Marie's down in the nation's capital for more. AMH, selling F-35s. How is that being taken down in Washington?
Well, Jonathan, when it comes to the F-35s, this has been a long-standing request of Saudi Arabia, really for years. I think some mixed results when it comes to how it's being taken by a lot of members in Congress, especially given the fact that Israel might be a little on edge by the fact that they want to maintain that edge in military capability in the region. But the administration says they're going forward with this in selling the most advanced jet available for export to the kingdom. It is a massive step and a big win for the kingdom. But we should remember, this is going to take several years when it comes to selling these jets. One, Congress can hold up export license on these jets. Two, there's mass amounts of security concerns and some restrictions that go along with selling F-35s, which only go to really the closest of U.S. military allies. That is what happened when the UAE several years ago wanted to buy F-35s. In the end, they got bogged down and said no thank you. And then third, of course, potentially some pressure on Israel, but really I think this would come down to some difficulties in the details when it comes to the security arrangement. So it's a big first step, but it's going to be years in the making.
AMH down in Washington. More from Anne-Marie in just a moment. Peter Cheer of Academy Security still with us around the table. Pete, the Saudis get F-35s. What does the US get in return?
I think we get the money, right? We get the trade deficit reduced with them. And then I think this sets the stage for us to be able to sell NVIDIA chips to them. I think that Saudi's goal is all along to become the data center capital of the world. They believe they're well positioned to do that, and they've wanted our best chips. So maybe this is part of the outreach program. Hey, we'll spend billions and billions and billions of dollars on your fighter jets, but we'd also really like to spend billions and billions of dollars on your chips.
What's their relationship with China?
You know, I think they probably play both sides a little bit, right? China's very happy to sell their top quality chips. Our top quality chips are much better than China's top quality chips. And I think the president has a very transactional nature, right? I think under Biden, we called them a pariah state, and we kind of lost some ground there with what we were doing with Saudis. So I think Saudis will play both to maximize what they want. And I think the president's quite happy to reduce our trade deficit with them. It's been one of his key focuses. And if we sell F-35, so be it. Maybe that gives us so we can build the 6th generation fighters, right? And maybe that's what his goal is. Well, that's fine. We'll sell you these so we can build our own better fighters and ultimately maybe sell those to Israel. So I think this is all a matter of trade deficits, and chips somewhere behind the scenes are a driving force.
It's interesting how much Saudi Arabia has become a power broker internationally when it comes to the political sphere. When it comes to the banking sphere, it also has become the new node of trade in many ways. From the West, from the East, it sort of is the intermediary. How much have you observed that as this really does become the new power broker, both in finance as well as in politics?
You know, I would say less I've noticed in finance, though. Having said that, Dubai comes up in almost every conversation. You got to get to Dubai. The hedge funds are in Dubai. Everything's setting up in Dubai. So you are seeing that region really grow and expand well away from just being this energy production or, energy source of, oil and natural gas, right? They really are, as a region, trying to move beyond that. Data centers is a very natural extension, given their ability to generate power, how expensive it is to ship oil versus shipping zeros and ones. So I think they're taking a lot of the right steps. That region is growing in that respect.
How much is this fueled, and no pun intended, I apologize, by this idea that Saudi Arabia and, frankly, the whole Middle East has a key part to driving oil prices lower? And right now, when cost of living is that much more important in the United States, lower oil prices has allowed an offset to some of the higher electricity prices in terms of affecting cost of living. How much is that part of this whole equation to a bigger degree than we're really understanding?
My general assumption, my working assumption, completely made up, but I think it's a probably safe working assumption, is the Saudis and Trump agreed if oil gets to 70, Saudis will keep it below 70. I think they'll support it at 50, because below 50, it gets hard for American companies to make money and to continue our production. So I think oil is going to be, it's a pretty wide range, 50 to 70, and Saudi is going to be a big part of moving that, and that's part of their maybe quid pro quo with this administration. We will do the things that we can to help you with your inflation and your energy issues, and that's why I think 50 to 70 is about the right range on oil, and you do things like to help us become the data center, which again fits us, fits our agenda. Jensen Huang was over there when he went to visit Saudi. I don't know that he's going to be at the White House with these particular meetings, but he's been very influential. He's been very good, I think, at working this administration.
Hey.
How does Venezuela fit in to all of this?
So, I think one of the things that we're trying to do, I think, as a nation or this administration, is trying to reshape our rules of engagement. So we have picked on Venezuela because it is a source of drugs. I think we've picked on Venezuela because it's far enough away that no one really cares that much what we do in and around Venezuela. And so I think we are setting precedent on what sort of ships we're able to attack, where we're able to attack those ships. It looks like we're taking steps towards Maduro. I think a lot of this is going to be a practice session for coming to Mexico at some point in the next year and saying to Scheinbaum, listen, we just dealt with the Venezuelan drug problem. We are happy to help you with your cartel problem. We would really like to help you with your cartel problem. And if you don't want our help and aren't going to do anything about it, we might do it on our own, because we've now established these new rules of engagement. So I think this is a precursor to what's going to happen ultimately with the cartels.
So it's not an energy story. There isn't an energy dimension to any of this.
There is some element of an energy dimension, but again, the Venezuelan crude, it's going to take years to get back into production. It's very, very heavy crude. China and India are also very involved there. So I think there's an element of that, but I think this is reestablishing. Again, this administration, I think, really wants to focus on homeland security, and again, more broadly defined, which would include the trafficking of drugs into this. So I think they picked a relatively easy and soft target.
Yeah.
There's a huge statement that we've got the carrier there. The carrier does not need to be, as with Spider Marks the other day, and he explained it, it's a little bit like cooking an egg with a blowtorch. It's not necessary, but it's sending a statement.
Pete, it's good to see you, sir.
Great to see you,
Thanks
too.
for being here. Thank you very much. Peter Chair of Academy. On the energy story, crude is in the 50s, just about 59.94 on WTI. Brent crude so far this morning, 64.19.
Yeah, and it really has been in that range, and it's been a huge pain trade, and it's been a frustration for some oil companies that have announced a lot of job cuts because they cannot necessarily reduce their production. They don't want to lose shares, so they're making it more efficient for them to operate. It just does raise a question, right? Some of these competing goals. Yes, national security on one hand, but on the other hand, cost of living issues in the U.S., and if you could conveniently put those together, well, I pat your back, you pat mine, everybody wins.
Win-win. Governor Waller made the point in a speech yesterday afternoon, making the point that there's no reason to worry about inflation. Focus on the labor market, and I'm worried about a stall-speed labor market, cut rates.
Yeah, and honestly, it sounds like McDonald's Happy Meals and Extra Value Meals are contributing to that whole plan.
Futures this morning, down by 0.3% on the S&P. A big affordability push in Washington. Up next, Congressman French Hill.
issue right now for us in the diamond space is the declared divestment of Anglo from GPS. And as you know, Anglo holds 85% stake in GPS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GPS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
3-day slide on the S&P 500, down across the board again this morning. We're looking at day 4. If we get day 4, the longest daily losing streak going back to August. On the Nasdaq, we're down a third. On the S&P, we're down a quarter. Not much of an offset in the bond market. Yields look like this: 2s, 10s, and 30s. Bond yields down by about 3 basis points. 357 at the front end of the curve on 10s, down 3 to 410.76. Check out Japan. The Nikkei 225 down by more than 3%. In Asian trading, the biggest one-day loss going back to April. Yields up at the long end. 40-year bond yields, highest on record. 30 years, not too far behind. We're up 7 basis points on a session over in Japan. Been a pretty brutal 24 hours for Japanese markets.
Yeah, and it comes after Sanai Takaichi, the new prime minister, came out and talked about the potential for deploying Japanese troops to the Taiwan Strait, and this invoked the ire of Beijing. A lot of blowback there, and a real question about how that could affect some of its economy now in the sort of about phase, but it highlights the geopolitics in the markets really coinciding, and the fact that ultimately where the Japanese market goes, so goes the rest of the world, particularly on the long end of the yield curve.
The Japanese finance minister's in a tough spot. Finance Minister Katayama's come out and said essentially she's worried about the currency, but also the economic package they might deliver. Perhaps it's going to be bigger than people expected, so you've got to weigh one up against the other.
And this really ultimately delivers the issue for Sanai Takaichi and the concern when she came into power, this idea that she would be much more stimulative in some of her offers, at the same time that you don't necessarily have a Bank of Japan that's as willing to hike rates as aggressively as some people have hoped. This is the doom loop, right? You want to cater to some of the sentiment in the population. This is what people want. And at the same time, given the debt load that a lot of national and a lot of nations have, there is a limited scope to do so without roiling the currency markets as well as the bond markets.
And just a sprinkle of a diplomatic splat between Japan and China
makes it very difficult.
Not exactly helping the mood music around Japanese assets over the last few days. Equity futures then negative by a third. Let's lift the lid on the US side of things and get you some movers, some morning movers with Yahira. Hey, Yahira.
Hi, John. Home Depot is kicking off retail earnings with a warning. Those shares are down 2.25%. The home improvement chain is cutting its full-year guidance, saying that consumers just aren't spending enough on those big-ticket home improvement projects. Instead, they're spending on smaller projects, so that hits sales and profit in the last quarter, and that is not boding well for its competitor Lowe's. Those shares are also down nearly 1.6%, falling in sympathy. We will get Lowe's earnings later this morning. Meanwhile, moving on to big tech, we are seeing Amazon and Microsoft shares also in the red after they got a rare downgrade over by analysts at Rothschild and Co. Redburn. They're downgraded both to neutral, saying that the underlying economics around generative AI are far weaker than assumed. This, of course, comes amid broader concerns around an AI bubble, and the analyst notes that he now sees a higher risk that Microsoft and Amazon are overbuilding on the AI front. And moving on to another AI skeptic, Michael Burry, out with a new post on X, and it has to do with Molina Healthcare shares. Those are rising 3.8%. The famous investor says that he is long the stock while also being long Palantir puts, a combo he says goes together like peanut butter and bananas. John?
There we go. I'll trust him on the peanut butter and bananas. You
No,
like that mix?
You know, I was just going to say, normally you'd think peanut butter and jelly.
Yeah.
Peanut butter and jam. But peanut butter and bananas.
I've seen people do that for breakfast.
Peanut butter and bananas?
I've seen that around the office, yeah.
It's the same thing. You just mash it up and then it's jam.
I know a couple of people in the control room that dabbles.
Are you shaming? Are you peanut butter and banana shaming them?
No, but I know our director, John, does something similar. Just peanut butter on top.
Okay, there you go.
No bananas, okay.
Honestly, I'm game for it.
Let's get you some news. On our radar this morning, the Saudi Crown Prince Mohammed bin Salman said to meet President Trump at the White House later on today. In his first U.S. visit since 2018, the leader is expected to discuss deepening ties on defense, trade, energy, and technology. Elsewhere, economic data from the period during the 6-week government shutdown slowly pouring in. Initial claims from the week ending October 18th totaling 232K. The figure was posted overnight to an online government database. And finally, Home Depot shares falling after the company cut its full-year guidance. The CFO warning consumers are hitting the pause button on big-ticket purchases, saying expectations for an end-of-year demand boost have failed to materialize. Their stock is down by 2.3%.
Yeah, and citing the continued pressure in housing disproportionately affecting their demand and their clientele, and it raises this issue. How much is this a Home Depot story and a housing story, and how much is this a broader story that will be reflected in Walmart later this week, as well as some of the other retailers that we are going to be hearing from? Lowe's shares are falling in sympathy. There's a feeling right now going forward that the housing market has been in a world of pain, and it's been isolated. It's been an idiosyncratic story. Is that starting to change with some of the investments and the sentiment that come around it?
And is some of the stress starting to go and migrate beyond low-income groups in this country? That would be a big change. Low-income groups have been struggling for a long time coming out of the pandemic. There was a moment where things were hot in the labour market. It was only a moment. Is it going beyond just that group now?
Yeah, and how much is this not just necessarily a pessimism or an inability to pay, but as Restoration Hardware CEO talked about a couple of weeks ago,
dropping F-bombs
about the ability to pass along price increases and saying, if you think that you can pass along these price increases on furniture, you are whatever, blank, 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 because ultimately that is what you're seeing. You're seeing margin compression also across the board, which highlights the pushback to some of these pricing. You might say, disinflation, oh my God, cut rates, but then it raises another bunch of questions, which is, why have other data points been so strong, especially given the fact that we just haven't seen a material breakdown in sentiment of corporate executives or, frankly, consumers either in terms of their actual spending?
I'm going to say the I word, so forgive me, sort of breaking my own rules. There is one idiosyncratic piece of the Home Depot story, and Yahara mentioned it. Storm season wasn't tremendous for them. It wasn't bad for everybody else, and ultimately it led to people not rebuilding their homes in quite the same way. That's the one idiosyncratic piece of the story coming from Home Depot for the third quarter.
Let's see the other earnings. We've heard similar things. I do think it is interesting, and I do wonder if this is really just about the fact that our homes weren't blown down, so we were not forced to rebuild. But there is a feeling that there is a broader sense, and that's why you saw travel stocks in particular take a real hit over the past couple of days. That's the reason why some of the rhetoric coming out of some of the retailers, I'm thinking of Deckers, if you don't have the premium product, and you
Deckers has been crap all year.
Okay, but part of this is if you don't have a competitive advantage in running, say, if you aren't Hoka or you're not On Holdings, then what can you do to pass along price increases that are pervading your items? And right now the answer is not much. And that is, I think you're seeing more and more.
Home Depot down by about 2.5% so far this morning. Let's turn to Capitol Hill. Affordability, top of mind in Washington. The Treasury Secretary Scott Bessent telling media that President Trump's plans for $2,000 tariff dividend checks will require an act of Congress. Anne-Marie is down in Washington, D.C. and stands by with a special guest. Morning, Anne-Marie.
Good morning, John. That's right. A man that potentially could be running hearings about this or will definitely get a vote on it. The chairman of Financial Services Committee, Congressman French Hill of Arkansas. Good morning, Congressman. Thank you so much for joining me.
Great to be with you. Thanks for having me.
So as Jonathan was saying, the Treasury Secretary over the weekend was talking about how Congress would have to act for these $2,000 tariff dividend checks the president has floated. Do you think that's something Congress would get on board with?
I think Congress would certainly consider it. I mean, my judgment has been that I think the tariff revenue that's sustainable, that people believe is sustainable in the years ahead, ought to be used to reduce the deficit. I think that would be a much better macro use of it. We are concerned about affordability in Congress. In fact, in our committee, we're going to have a hearing on housing affordability. How does federal policy, how could that encourage housing construction, development, and also improve affordability when we know the biggest barrier to housing affordability has been, first, unprecedented inflation. commenced by the Biden administration and the Fed's mistakes in and during and after the pandemic. But what can we do at the margin in federal policy to increase housing construction affordability?
Well, I remember when the second round of checks went out to the Americans during COVID, the Republicans really made it part of their criticism of the Biden administration was that they were goosing inflation. Could $2,000 checks do the same next year under a Trump administration?
Look, I think inflation is caused by too many dollars chasing too few goods, and I think the origin of this inflation, a 40-year high of inflation that we had after the pandemic, was due to fiscal mistakes by the Biden administration, approving and spending another $6 trillion in federal spending that we borrowed, and secondly, by keeping rates too low and the balance sheet too big coming out of the pandemic. We're now healing from that. Inflation is down. Oil prices are down. I think the consumers are going to feel better off in their pocketbook from that. But we have to be wary that one of the biggest concerns that families have is the affordability of housing, and that's where I think we should tackle that at the federal level by removing barriers to more affordable housing and access to credit for housing.
Jonathan and Lisa were just talking about Home Depot earnings. They said that ongoing consumer sentiment has been a little bit weak. There's uncertainty there. Of course, Walmart's going to be reporting towards the end of the week. That's your constituent. Have you been hearing from Walmart and other either small businesses or big retailers about tariffs and how it has been difficult to pass on some of these costs?
Well, I haven't heard so much about, I've heard both about passing on costs for some small manufacturers. You know, American small manufacturers, our country is filled with that. And about 50% of manufacturing inputs for small business come from abroad, and 50% are sourced domestically. And there are some American manufacturers and small businesses that don't have another supply source. So they are hit in the short run by across-the-board tariffs, which is why generally I've not supported across-the-board tariffs. I think you want to target countries for bad behavior, mercantilistic behavior, non-tariff barriers, negative tariffs towards the U.S. market, or target particular industries you think should come back in the supply chains, whether it's steel, aluminum, and then target that over a long period of time. So, yes, I've heard from my constituents about this, and this is why I think the biggest challenge is not so much the tariff rate as it is in the uncertainty about planning around tariffs. And I hope the administration can come to the decision that they've made tremendous trade successes with many of our partners around the world. Let's embrace those changes and get those implemented, and that will give certainty to people planning for 2026.
You're having your first hearing today since the government has been reopened, and it's about deposit insurance. So when I think of deposit insurance, I'm always reminded of the sign at the bank that says you are FDIC secured up to $250,000. What kind of changes could we see to that minimum?
Well, over the last couple of years, Congress has had some hearings on deposit insurance about a couple of things. One, should the $250,000 level be raised? But due to inflation, it was last increased as a result of the 2008 crisis. Secondly, should we reauthorize the TAG program, which is an emergency program to guarantee transaction deposits in the face of a systemic problem with the U.S. banking system? That has been expired over the years, and so I think Congress should reconsider that and look at it. And then should we have a deposit insurance study at large about how deposit insurance is working for the American people? This is important. It's a priority for the committee, and it's a priority for the Senate Banking Committee, so we look forward to the discussion today.
How long would something like that take to actually do?
And what specifically?
Raising the $250,000.
Well, I think it could be raised according with inflation, but I think this is where I think a study and being data dependent is important. So many people make emotional decisions about finance. I think we ought to study, make sure we have the numbers, make sure we know the unintended consequences of any aspect of change of the deposit insurance system. You don't want to increase moral hazard. You want to maintain bank competitiveness for banks of all sizes. And that's important, and that's why I think we should take it in a deliberate way.
We talked about the kitchen table issues facing American families, what's going on in the banking sector. The headlines today, though, in Congress are going to be about this Jeffrey Epstein discharge position. How are you expecting to vote, and how do you think other Republicans will vote today?
I think people want transparency, and that's why Mike Johnson's done a good job, contrary to a lot of the mainstream media. Mike Johnson asked Jamie Comer, our Oversight Committee chair, to study this intensely, investigate it with subpoena authority, and he's released everything that's a DOJ or FBI-related document and the Epstein estate that can be legally released, meaning that's not covered by a court order not to release grand jury investigative material. The Massey proposal on the House floor that I think most Republicans and Democrats will support at the end of the day calls for releasing everything irrespective of those court orders. So I think you'll see litigation. If this were to be passed by the Senate and it became a law, I think you'd see litigation about protecting the confidentiality in grand jury investigations, which is why I believe that the Comer approach and Speaker Johnson's approach was more deliberative and appropriate. But all, I think, Republicans and Democrats want transparency around the Epstein matter.
Congressman, thank you so much for your time this morning.
Great to be with you.
Great to see you in Washington. Great to see Congress back at work. Jonathan, Congressman French Hill, of course, also chairman of Financial Services. When it comes to a $2,000 check, sounds like everything is on the table. But his main concern is using those tariff dollars to bring down the deficit.
Anne-Marie, appreciate the update down in Washington. Always good to hear from Congressman Hill. A very prominent Republican on Capitol Hill, diplomatically, carefully, just exposing some of the flaws in the tariff strategy of the last 7 months.
Saying he would have supported a narrower, more targeted package of tariffs, not the sort of broad-based approach. Is this pushback going to continue? We've seen it with coffee. We've seen it with bananas. We've seen the president become more aware of this. Does the Supreme Court case and potential any overturn give political cover to backtrack on some of this?
What's the date for finding out the result of that? Turn of the year? Year end?
I mean, honestly, it's sort of a moving target. There isn't sort of a schedule of releases that's sort of announced, but the expectation is the turn of the year, probably the beginning of January.
What to look for going into year end? To look for this morning, look out for the market. Look out below. We're down by about 1/4%. Call it a third on the S&P 500 with an update on stories worldwide with your Bloomberg Brief. Here's Yahara Arnold. Hey, Yahara.
Hi, John. Rio Tinto is adding new surcharges on aluminum headed to the U.S. as tariffs tighten supplies and inventories drop. The U.S. relies heavily on foreign aluminum as it doesn't have the capacity to produce enough to meet demand. The fees stack on top of the already high Midwest premium, pushing costs to more than 70% above the raw metal price. Meanwhile, Larry Summers said he plans to step back from his public commitments after his correspondence with the late disgraced sex offender Jeffrey Epstein was made public by U.S. lawmakers. Summers, a Harvard professor and paid contributor to Bloomberg TV, said he will continue to fulfill his teaching obligations. And another high-profile departure at Apple, sources telling us here at Bloomberg that Abidor Chowdhury, an industrial designer who helped develop the iPhone Air, has left the company for an AI startup. Chowdhury spent more than 6 years at Apple, joining around the same time famous design chief Jony Ive left the company. Back to Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, listening to Main Street.
This dour view expressed by consumers, which may have been affected by the shutdown, lines up with what I'm hearing from U.S. businesses.
A conversation up next with Sharon Miller of Bank of America, live from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
New fund manager survey from Bank of America. Number one most crowded trade, Long Mag 7, not a surprise. Number one tail risk, AI bubble. Again, not a surprise. But for the first time in 20 years, investors say companies are over-investing. After complaining they weren't investing enough for 10 years, now they're over-investing.
Yeah, and you can see this fear, although you could argue maybe these investors are also over-investing because their cash holdings fell to a low that is often seen as an incredible sell signal. 3.7% of their allocations currently in cash. So maybe the over-investing is percolating beyond just corporate America.
Equities pulling back. We're down a third on the S&P, down 0.4 on the NASDAQ 100 so far this morning. Under surveillance this morning, listening to Main Street.
This dour view expressed by consumers, which may have been affected by the shutdown, lines up with what I'm hearing from U.S. businesses. Slowing labor demand is also being echoed in surveys of employers and workers. Many businesses may be cutting jobs or allowing levels to fall by attrition in connection with actual or anticipated productivity gains from AI.
So here's the latest this morning. Wall Street bracing for a wave of economic data leading up to Thursday's payrolls report, with questions mounting on the health of the labor market. Bank of America publishing its annual business owner report with an optimistic view, finding over half of business owners expect to maintain staff levels over the next 12 months, with only 1%, yes, just 1% of business owners planning to lay off employees. Sharon joins us now for more. Sharon, an optimistic take. What else did you find? Talk to me about revenue expectations, plans to expand. Does it look good going into 26?
Well, it's great to be here with you all today. And yes, the view is really cautious optimism as we look ahead at the next 12 months. So 74% do expect their revenues to increase over the next 12 months. And over half believe the national, local, and global economy will improve. And 60% plan to hire. So as you think about what's happening in small and mid-sized businesses, I would say that it's very cautiously optimistic outlook would be how I would characterize this.
Sharon, one aspect of this is their ability to pass along prices, because a lot of them were affected and have been affected by inflation. You saw that in a significant way. 88% say they're currently being impacted by inflation, which is consistent with last year. How easy has it been for them to pass along those price increases?
Well, you're right. Inflation has been an issue. Nearly 88% said they have been impacted by inflation. And then the other item is supply chain and making sure that they have the right sourcing for their materials. So, they are passing along some of those price increases, and some are, taking it. It just depends on what type of industry you're in and how flexible the ability is to pass on those to consumers. So we hear both. But I will tell you that inflation is starting to cool and the supply chains are starting to stabilize as we move forward into 2026.
Sharon, there's a good degree of nervousness this morning in some of the consumer-facing stocks and some of the retailers. Home Depot came out, a real concern there about how much it's a housing-specific story and how much it's a broader consumer pullback. I'm just wondering, can you pull together what you're hearing from businesses with their hiring plans, with their sense of the economy? Does it jibe with the sense that things might be slowing a lot more than the overall data might suggest?
Well, in our data, and we do not only survey clients, but we use our data that we have available through the bank. We are the #1 lender to small businesses in the U.S., and that's been for the last 17 consecutive quarters. So as you think about what's happening with our client base, we are seeing profits still rising. And as you look at what's happened over the past 5 years, most businesses, their revenues have increased, their profitability have increased, at least what we are seeing in our numbers and in the conversations we're having across the desk from clients. So, as you think about different industries, different sectors, you will see different outcomes. But at the end of the day, we are seeing still strength in the consumer spending, and that is fueling business on Main Street.
Sharon, have you seen any softening in the relationship between expectations for revenue and expectations for hiring? I think this is really important. I'm encouraged by the numbers I see in your survey, but is that number lower than it traditionally is? That 43% that expect to carry on hiring, would it typically be higher alongside that higher, more robust expectation for revenue?
I think we've seen, it ebbs and flows through the years, but I would say, 41% expecting to hire over the next 12 months. That is a strong number as you think about what you might hear in the NFIB surveys or with even planned layoffs. We are not seeing that within the small and mid-sized space. We are seeing, as you noted in the beginning of this segment, only 1% do plan to lay off any workers. So we are seeing more efficiencies gained through AI. There's a lot of investment happening in AI, and that's being used more for marketing and driving new customers. So the spirit of the American business owner, both small and mid-size, as we go into 2026, there is a recognition that it will continue to grow. And really, because they are smaller, we do have the opportunity to be more nimble and pivot based on what's happening with the economy and their local markets.
Well, thank you for sharing some of that data with us this morning. We appreciate it. Sharon Miller there, the president and co-head of business banking at Bank of America. I'm encouraged by that because that would be my #1 question into next year. Great, you're making loads of money. You're looking to expand, fantastic. What are your hiring intentions for 26? Because things haven't been looking great in 25.
I thought your question was a great one because ultimately it goes to the question of, are we seeing people hire but less than they otherwise would based on their revenue increase? Is there any evidence that people are doing more with less? And when I say less, I don't mean less money because that investment's happening. I mean fewer people. And that, I think, is a good question to keep asking.
Up next on the program, we'll catch up with Liz Ann Saunders of Charles Schwab, the University of Virginia professor, Jennifer Lawless, ECB Supervisory Board Chair, Claudia Buck, and Kay Herr of JP Morgan Asset Management. The second hour of Bloomberg Surveillance up next.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now
than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There's a lot of anxiety about the consumer right now.
You are seeing this bifurcation in the U.S. consumer.
We haven't seen the majority of price increases I think that we might see happen.
Inflation is likely to be more volatile.
The economy has been remarkably resilient for the last 8 months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. 3-day slide, it looks like day 4. We're down 1/3% on the S&P. On the NASDAQ, we're down by 0.3. On the Russell, we're down by 1/3% also. In focus, Home Depot in a pre-market negative by 2.8%. Out with numbers an hour ago. A miss, a cut to the outlook, and a not-so-ringing endorsement of a pickup in economic activity into year-end.
They had expected that acceleration into year-end, particularly with big-ticket items. They did not see it, and it seemed like that was going to continue based on their expectation for full-year earnings per share growth coming in at a negative 6% versus the expectation of negative 3%. There is a question with the sell-off that we've seen over the past few days. Is this something different? It's not just a momentum-driven downdraft. It's not just a question, a blow-off top of some of the high-tech valuations. There's a question about the consumer and whether it's ready to fall out of bed, especially if the Fed doesn't deliver a rate cut next month.
The consumer is telling you things aren't great. The companies that pick up on consumer activity are telling you that things into year-end aren't great. Sharon Miller of Bank of America on the program just moments ago talking about a better 2026. So if you're a policymaker right now, you're stuck between the reality of a 25 that's soft, the promise of a better 26, what do you do? Risk management. Governor Chris Waller's making the point that you still cut interest rates at the December meeting. Do not take any of this for granted. Don't believe things are just going to pick up when things are still so soft.
You know, Fed Vice Chair Jefferson came out yesterday in a speech and said something similar, talking about how they have seen risks to the labor market grow. And they do point to a number of the data points that other people have, in particular, some of the quits rates, the idea that people don't feel free enough to quit their jobs. You are seeing lackluster hiring across the board, even with earnings, which is the reason why I think it's important to keep pointing out, yes, a lot of these companies are feeling pretty good, but are they hiring commensurate with the optimism that they feel for the economy? You made that point just earlier. And there's a question here about whether the parts of the economy that are most interest rate sensitive are in recession. And that's, I think, the question that Home Depot is really pointing to. How much housing represents a broader swath of the rate-sensitive economy?
The weight of this market on the shoulders of NVIDIA going into the close tomorrow, when we get earnings after the closing bout, that earnings report is massive. for this week, given how shaky sentiment seems to be around this story now?
There is a feeling that what was once a cash-based investment is increasingly a leveraged one. NVIDIA shares have lost $500 billion since October 29th. That's just a couple of weeks that they've seen a massive decline, 10% drawdown. And it raises this issue of what is the ultimate goal? Are these companies at some point going to stop spending so much and start reaping the profitability of all of this data center build out? Or are people trying to build to the moon and compete with one another, and it's the arms race to where that ends up creating a lot of leverage and a very different structure for big tech? These are some of the existential worries baked into markets right now. How much further they have to go is really the question that a lot of people keep asking.
Equities this morning pulling back by just 0.4% on the S&P, adding to recent losses. Coming up this hour, we'll catch up with Lizanne Saunders of Charles Schwab as the tech sell-off extends. Jennifer Lawless of the University of Virginia as President Trump brings his affordability pitch to McDonald's, and Kay Herr of JP Morgan as Amazon raises billions in its first U.S. bond sale in about 3 years. We begin this out with stocks edging lower. Lizanne Saunders of Charles Schwab writing the following: the AI trade has been struggling recently, but there is some interesting churn under the surface. Lizanne joins us now for more. Lizanne, welcome back. 4-day move, potentially a 4-day slide on the S&P 500. Talk to us about that churn beneath the surface. Is there something concerning, maybe something encouraging into year end?
Maybe a little bit of both, John. And this churn story is not a new story. If you go back to the April 8th closing low and just look at index level performance, in the case of the S&P at the index level, the maximum drawdown is only about 5%. And that was actually back in April when we had a little bit of that retest after the pretty ugly first week in April. Since then, the market's obviously been up significantly. However, the average member within the S&P 500, just since the April 8th closing low, has had a 17% average drawdown. And in the NASDAQ, over that same period of time, the average member has had a 39% drawdown. So there's already been a lot of churn under the surface. It's just been masked when you've had these mega cap driven components of the rally. You don't see the churn under the surface. That could continue. That said, that also provides opportunity, and maybe one of the reasons why, as you see a bit of a pullback in some of the prior high flyers, there's money finding its way into areas that had been less loved. You know, healthcare and energy is two examples of that.
Lizanne, where does the consumer fit in? We were just talking about the Home Depot numbers, not great. Target tomorrow, Walmart Thursday. Where does the consumer fit into that broader trade?
I think the consumer is under a bit of pressure. You know, wage growth in nominal terms has been coming down, certainly at the low end. You know, a couple of years ago, the interesting story was that on the lower income end of the spectrum, the lower wage end of the spectrum, the wage increases were actually greater relative to the upper end. That phenomenon has reversed, and the fact that you've got within inflation, there's so much focus on goods inflation versus services inflation, or tariffed impacted goods versus non-tariffed impacted goods. But the discretionary, non-discretionary divide within inflation, I think, is the real tell in terms of why you're seeing this pressure on the consumer, because you've got the discretionary components now down with a one handle on it in terms of those categories within CPI. Those would be the wants categories. Yet it's the non-discretionary categories, the needs categories, where you still have, you know, sort of a 4-ish% inflation rate. So given that the low-end consumer spends disproportionately on those non-discretionary goods, that's why I think the pain pressure is so much higher, and why you're seeing it manifested in so many companies that don't just cater to that lower end, but that's where they're seeing the weakness.
Yeah, CarMax yesterday down just almost 7% just in one day, and you're seeing a lot of the travel stocks, in particular Hertz, Avis, and Expedia, also taking a real hit. And it goes to this question, Lizanne, at what point are there pockets of the economy, pockets of credit that are exposed to this particular consumer weakness that are just getting sussed out now?
Yeah, so the whole cockroach theory, everybody loves to cite Jamie Dimon for that, and I think there's validity to that. I think maybe a differential relative to periods in the past, and I'll use another bug analogy, you know, cockroaches and termites are different things. And it's not surprising that you're starting to see more fissures here, but I'm not sure it's something that suggests the overall foundation of the financial system is threatened here. I'm not going to say the I word. I'm like John, I don't like that word. I think it gets overused.
But
I also don't like the word uncertainty. I think unstable is probably the better descriptor here. But I think it continues to mean we get a lot of churn, and that some of that money that had been pure momentum chasing without regard for what was going on from a macro perspective or into areas like fissures in the credit markets, I think there's maybe a little bit more discernment happening here right now, and an attempt to bring some sort of quality and value back into portfolios.
How much more of a decline or drawdown, particularly in the high-flying stocks this year, Lizanne, would you have to see before you got more constructive and you felt like it was truly a buying opportunity rather than something that might be endemic of some other issues?
Probably a bit more to go. You've got the valuation excess concern, although I'm always one to point out that valuation is a terrible market timing tool. It doesn't, if you have, say, a one-year time horizon, valuations at any point are not a good descriptor of what's going to happen in the next year. I think the rub right now is that if you look at, let's pick on the Mag 7 cohort as a proxy for the high flyers. Earnings growth rates have been descending for that cohort from more than 50% a year and a half ago or so down into the high teens. At the same time, the other 493 are actually seeing accelerating pace of growth. Now, in level terms, the growth rate for the Mag 7 is still higher than the growth rate for the other 493, but as I'm fond of saying, and for a long time, is better or worse often matters more than good or bad. So there is an expectation that we'll start to see a leveling out in that deceleration in Mag 7 earnings growth rates before you maybe start to slightly accelerate. But I think it's that differential and the direction of travel up for the other 493, down for the Mag 7. So it's not just a valuation issue, it's a concern about the direction of travel for the underlying denominator of the equation.
Lizanne, you've seen it all. We're down 3% from all-time highs. Lizanne, I just wonder how spoiled we've been. A 3% move on the S&P 500, and some of the commentary around this market, it just sounds dreadful. Is this the most painful 3% move you've ever seen?
You know what's really amazing about this backdrop is how quickly attitudinal measures of sentiment swing. I've been a sentiment follower for my nearly 40 years doing this, and there in the past has been a little bit more commonality between the behavioral measures of sentiment and the attitudinal measures of sentiment. Now we see something completely different, where you see the behavioral measures of sentiment, fund flows, put-call ratio. You don't see that swiftly moving to sort of react to a little bit of concern. To your point, only a 3% drop in the market. Some of those attitudinal measures of sentiment swing wildly toward pessimism. It just doesn't tend to get corroborated by the behavioral measures of sentiment. I think that unique backdrop is likely to persist.
Well framed. Lizanne, thank you. As always, good to see you. Lizanne Saunders there of Charles Schwab. It's like 3 is the new 10. Sentiment just gets absolutely whipsawed on a 3% move at the index level.
Maybe we're all just hyper-focused on the idea that social media is trying to make our emotions rise and fall at a much higher intervals and troughs. Maybe that's the issue.
It's a more emotional market.
Emotional society.
Futures down by 0.5% on the S&P 500. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahara Anand with more. Hey, Yahara.
Hi, John. Federal Reserve Governor Christopher Waller standing by his view that the central bank should lower interest rates when policymakers meet next month. Waller citing a weak labor market and saying monetary policy that is hurting low and middle income consumers. Waller says another rate cut would represent good risk management. Meanwhile, Roblox is rolling out a new age verification tool. Starting today, the gaming platform will ask users to verify their ages with photos or videos to increase safety. Roblox saying the update should ultimately boost long-term value for shareholders as it faces lawsuits over its child safety practices. Tune in to BTech at 11 a.m. Eastern for an interview with the Roblox CEO. And the U.S. is expediting visas for foreign visitors with tickets to the World Cup. President Donald Trump said government agencies are working to ensure that soccer fans from around the world are properly vetted and able to come to the U.S. next summer easily. World Cup matches will take place next year in 11 U.S. cities from July 11th to July 19th. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next, President Trump's affordability pitch.
The word is affordable, and affordable should be our word, not theirs. Now we have normal inflation. We're going to get it a little bit lower, frankly. We want perfection. You know, you always want 1%.
That conversation up next with Jennifer Lawless of the University of Virginia, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
%3 move on the S&P 500. Feels like the world is ending. 3-day slide on the S&P. Could become day 4. We're down by 0.5% on the S&P 500.
Hold on a second. Okay, yes, it's 3% on the headline, but Liz Ann Saunders framed it really well.
Yes,
You've
I know.
actually seen a broadening out. NVIDIA has lost $500 billion.
I've got it.
In just a couple trading sessions.
Isn't
that a little bit?
I
feel the pain. I'm feeling the emotion. We're an emotional society, John.
It's been a relentless move up and to the right for 7 months.
I know, it's hard to deal with the losses.
3% move at the index level, and it feels brutal. It feels bad. It feels painful because we've seen moves like that in widely held names like NVIDIA.
And there is this existential concern that this is the beginning, the tip of a spear, and that there is a lot more to go, although we have seen emotions that fly a lot higher than sometimes the representative moves in the equity markets.
Consumer numbers haven't been great, haven't had much data, so we're leaning on the retail earnings. The Home Depots of this world. Home Depot, not fantastic. Later on this week, you'll hear from Target and you will hear from Walmart, and we'll get some jobs data too. So by the end of the week, we should have a decent snapshot. I'm not going to overemphasize the word decent, but fairly decent snapshot of where this consumer is going into year end.
Is this just about home renovations and people maybe prolonging some of the decisions to renovate their kitchens or bathrooms, or is this something that goes to a deeper fear of the future, of inflation, of job stability for a lot of different consumers? Do we get that sense from Walmart and Target, or is this going to be a tale of two halves where Target continues to struggle and Walmart continues to get market share? Because ultimately, I don't want to use the I word either, but there are a lot of corporate stories here that are also riding in tandem with the consumer cycle.
Affordability very much in focus in Washington. Under surveillance this morning, President Trump's affordability pitch.
We are doing better than we've ever done as a country. Prices are coming down. The word is affordable, and affordable should be our word, not theirs, because the Democrats got up and talked affordability, and they don't say that they had the worst inflation in history, the highest energy prices in history. Now we have normal inflation. We're going to get it a little bit lower, frankly. We have it down to a low level, but we're going to get it a little bit lower. We want perfection. You know, you always want 1%.
So here's the latest this morning. President Donald Trump touting his administration's economic policies as he takes steps to ease price pressures. The president also praising McDonald's for lowering costs. Anne-Marie joins us now from Washington with a special guest. Hey, Anne-Marie.
Hey, John, good morning. That's right. We're now joined by Jennifer Lawless from the University of Virginia to discuss this. Jennifer, thank you so much for joining us. I just want to start with, who is winning the airwaves when it comes to tackling the affordability crisis in America?
If we look at the election results from a couple of weeks ago, the Democrats are definitely winning in terms of messaging, largely because affordability strikes at the heart of what Americans are grappling with right now. And their successes in Virginia, New Jersey, across the board, New York City, suggest that people don't like what's going on with the economy, regardless of the actual numbers, which is what Donald Trump actually benefited from in 2024.
How much of this is in response to the elections we just had in Virginia, where you're sitting, in New Jersey, Prop 50, of course, in California, as well as the New York City mayoral race?
Well, I think those elections tell us two things. The first is that the affordability pitch put out by candidates like Abigail Spanberger and Mikey Sherrill resonated. And it didn't resonate only among Democrats. The messaging also resonated among independents who split heavily for Democratic candidates. So that suggests that people are concerned about the economy. They're concerned about rising prices. They're concerned about the money in their pockets. And this was exacerbated by the government shutdown. The second thing that the elections tell us is that the Republicans, and Donald Trump in particular, listened, because it's only been after the elections that we've seen the Republicans and this White House pivot toward issues of affordability. Now, the messaging is different, and he's trying to convince people that the economy is better than it feels. But it's certainly, he's trying to address people's concerns about kitchen table issues.
Isn't that what the Biden administration, though, did as well? The Biden administration, I remember former President Joe Biden said at one point to reporters, the economy's doing well, you should be writing about it. But it wasn't what Americans are feeling. So how do they walk that very fine line?
It's a very difficult needle to thread. The Biden administration was unable to do it. As the numbers were trending in the right direction, people didn't feel it, and Biden and the Democrats were held accountable in 2024. We see that same thing happening to the Republicans in 2025, because people are not going to vote based on what things used to be. They're going to vote based on what things are right now. So even if prices are coming down, if prices are higher than they want them to be, the party in power is going to pay the price for that. And we saw that on Election Day. Heading into the midterms, whichever party is better able not only to bring down prices and to make things more affordable for Americans, but also to convince them that they've done so, will win.
Well, we know on the convincing part, they are definitely trying to spend a lot more time talking about this with the president yesterday, talking about how inflation is normalizing. When it comes to actually policy proposals, do you see an appetite in Congress for this $2,000 tariff dividend check President Trump has proposed?
No. It's unclear that there's any appetite. It's incredibly expensive. And as the Secretary of the Treasury made clear, Congress actually does have to pass it. And so the promises that Donald Trump is making on this front could ultimately come back to be a problem for him, because it's not clear that he has Republican support behind him. Moreover, even though this is affordability week and he's trying to focus on prices, he's very easily distracted. And we see that many other issues have risen to the forefront. So we're on Tuesday. He still has a few more days this week to focus on affordability, but it's unclear that that's what the headlines are going to be, or that that's what Americans are going to be focused on as the news progresses over the course of the next 4 days.
Right. Sometimes it is hard for any administration to really try to control the headlines. When it comes to affordability, though, and his tariff plans, the president has brought down some tariff levels for key agricultural and food products like bananas and things like coffee and beef. Do you think this is the administration moving in the right direction on affordability, or is it them almost admitting that tariffs do cause price increases?
I think it's a little bit of both. The fact that they're bringing down those prices and that they're modifying the tariffs that they themselves implemented suggests a change of course, which indicates that they think they might have gone too far or made a mistake. By the same token, people, again, don't necessarily remember who was responsible for who got them into a particular position. They care about who gets them out of it. And a year out from the election, it's possible that the Republicans will be able to make up some ground on this front. But at this point, when it comes to affordability, I'd rather be a Democrat than a Republican if you're trying to convince voters that you're who can fix the problem.
When it comes to voter psychology ahead of the midterm elections, at what point does this really start to get into the psyche of talking about inflation, affordability, and linking that with the current administration?
It's funny because for political scientists and pundits and journalists, we're already thinking about 2026. The average American is not. And so both parties have several months, at least until the initial primaries in competitive congressional districts, to figure out what their messaging is and to figure out what the economy actually looks like. And most importantly, to figure out the disconnect between the objective measures and consumer sentiment and what people actually think about the economy. We've seen that people's perceptions are much better predictors of how they're going to vote and who they think is responsible than actual economic indicators. And that's frustrating often for incumbents in office who have seen an uptick in economic indicators in their favor when those indicators just haven't resonated with potential voters.
And let's just end on the midterms. You and I obviously already focused on it. If you had to tell our viewers one race to watch, what would it be?
Oh, that's a really tough question. I'm actually not sure. I think we're too far out. What I would say is that any of the districts that that Kamala Harris or Donald Trump won by less than 2 or 3 points last time around are fair play this time.
Right, so the margin's potentially going to be incredibly tight. Professor Lawless, thank you so much for your time. That was Jennifer Lawless, professor of politics and public policy at the University of Virginia. And Jonathan, she said it's a very hard needle to thread when you talk about affordability. The Trump administration is trying to blame it on the policies of the Biden administration. But at the same time, Americans are feeling it right now, especially when you have beef prices approaching $10 a pound.
Anne-Marie, with the latest down in Washington. Anne-Marie, thank you. Do you know, I really underestimated just how much the politics of New York, New Jersey and Virginia would change the conversation in this White House around affordability going into the midterms next year.
Yeah, well, they got the message. And the idea that Mamdani is now going to be welcome to the White House highlights just how much that message has changed. I just wonder how they transmit a message that is more complicated economically. And the idea that President Trump was at this McDonald's conference and said, I want to give a very special thanks to McDonald's for slashing prices for your most popular items, bringing back extra value meals. I wonder from a corporate standpoint whether this is welcome or not. And I say this because it's not just McDonald's, it's also Walmart, right? This is a president that's going to certain companies and saying, look at Walmart's Thanksgiving, looks at McDonald's Happy Meals. You know, this sort of idea of cherry picking examples, but then also putting certain companies up on a pedestal. How much is it an incentive to certain companies to make certain deals to sort of, you know, cater to that desire?
I think those companies too have shaped policy in this country. I'd go back to April when they went into the White House. They had a major impact, I think. An influential take on what developed for policy around trade from this White House.
I wonder if it's a tit for tat. You can go tout the extra value meals. You lower tariffs on beef, make our fries great again. Thank you.
It's good marketing. Spotlight's on them, right? We wouldn't be talking about it. They did this ages ago.
I know, and they had this conference that I never knew about.
There you go. Now you do.
Now I do.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equities down by 0.5% on the S&P, and the Nasdaq down by 0.6. 3-day slide developing into a 4-day fall on the S&P 500. We're down by about 35 points on the S&P. For the technical strategists out there tracking the 50-day moving average, 138 sessions of holding above that level, the second longest run so far this century. Thank you very much for the team at Bloomberg News for breaking down that stat. We snapped it in yesterday's session. This is the kind of thing that makes people nervous. A 3% move off the index level. I know, I've been saying the same thing. It's not that painful, but ultimately, things have been so one way for so long that breaking that kind of trend gets your attention.
Yeah, and it's the worst 3-day run going back to, guess when? April. So this is the first time that we've seen this type of shift away from that 50-day moving average and just in general, going back to Liberation Day. So it raises the question, is this the beginning of something greater? Or is this just the sort of blow-off top that gives everybody a really good feeling heading into Christmas, the Santa Claus rally? And this ultimately is going to be what everybody talks about. Right now, the fact that credit is participating and that you are seeing the sort of more consumer-facing aspects raising some concerns.
Soft the tone again this morning, at least so far. We'll see if this changes as we count you down to the opening bout. 2 hours to go. Let's get you some morning movers with Yahira. Hey, Yahira.
Hi, John. Home Depot is sounding the alarm as it kicks off retail earnings. Shares are falling 3.4% after it lowered its guidance, citing a host of issues, but mainly a consumer not willing to spend on those pricier home improvement projects. Plus, they cited a weak storm season that hurt sales for things like generators. Lowe's also falling in sympathy, and a correction for me that reports tomorrow, not later today. Meanwhile, we are also seeing Microsoft and Amazon underperforming the Mag 7. Both are down nearly 2% after Rothschild & Co. Redburn downgraded the stocks to neutral, with the analysts saying that the underlying economics around generative AI are far weaker than assumed. And at a time when the hyperscalers are spending hundreds of billions of dollars on the AI infrastructure build-out, the analyst there sees a higher risk that Microsoft and Amazon are overbuilding. And we end on Cloudflare. Those shares are also falling 3.75% in the pre-market on a technical issue at the internet security firm. Nearly 5,000 Cloudflare outages have been reported according to Down Detector, and that is affecting sites like X. Earlier this morning, it showed about 10,000 reports of issues at the social media platform. ChatGPT is also being affected. Cloudflare says that it is working on the issue. John?
Yahira, thank you. Appreciate it. Just getting some extra headlines from Cloudflare. Continuing remediation efforts. Customers may still see higher error rates, so clearly the problems continue.
Yeah, the fact that you're seeing such a huge drawdown in the shares, not huge, I guess, a 4% significant decline in futures, highlights how central some of these systems are to everyday life and to business models. And it raises this question going forward, if there is some sort of systemic importance to these tech companies, What happens if one of them goes down? Remember, we saw that with Amazon Web Services.
Yeah.
What happens with Azure? What happens with some of the others? You just start to wonder, okay, well, what's the backstop to this and how are companies preparing for that?
When things like this happen, you're reminded of just how fragile the system actually is.
Totally.
That stock is down by close to 4% so far this morning. On our radar this morning, Bitcoin briefly dropping below 90K, the month-long slider raising the cryptocurrency's gains for the year. The decline coming as concerns grow over interest rate policy and stretched valuations. Elsewhere, another shake-up at Apple. The designer behind the iPhone Air is leaving the company for an AI startup. Abhidor Chowdhury's exit is making waves, given his rising profile and his appearance in a video introducing the iPhone Air. And finally, Amazon raising $15 billion in its first US dollar bond offering in 3 years to help fund its AI build-out. The bond sale is the latest in a series of massive tech debt deals, pushing global issuance to a record of more than $6 trillion this year.
Yeah, and the $6 trillion is for all corporate issuance. That said, you're seeing a massively increasing proportion of issuance over the past couple of months coming from the tech sphere. I keep reading Robert Schiffman's notes from Bloomberg Intelligence. He's really doing some great work, and he talks about how the AI debt supercycle isn't nearing the end, likely just the beginning, because ultimately these are the hyperscalers that are most cash intensive, cash heavy. They have the ability to do this. Yesterday, the sale coming out was completely oversubscribed. The 40-year piece, we talked about how the premium above the treasury rate was something like 1.1%, that percentage points. That came down to less than half a percentage point. So it raises this issue, what will cause the end of this? And isn't the debt market essentially opening the books and saying, please go for this, because ultimately we are willing to fund it?
$94 billion cash balance. I was reading the note that came from Robert yesterday, and a potential to generate $200 billion of free cash flow before shareholder returns over the next 3 years or so. Not everyone is Amazon. Not everyone is Alphabet. And that's the question I keep going back to, really. Are we building these hopes and dreams on the balance sheets of these guys, or on the promise of OpenAI, with a revenue profile at the moment that doesn't really fit its spending expectations over the next 5 or so years?
It's an important question. Are we building the hopes and dreams of AI on the idea of efficiencies in culling data from your balance sheet, as well as just having back office support that isn't generated entirely by humans? Or is it the idea of some sort of accelerated humanity and augmented intelligence and this sort of generative AI that supersedes anything we can even imagine? Is it the hopes and dreams of something that is sort of in the realm of science fiction, or is it in the realm of back office processes and spreadsheets that are made more efficient?
It's such a weird moment, Bramo, when you really think about it. What OpenAI has done is basically pushed Alphabet, Meta, and other companies to believe they're confronting an existential moment, which is forcing them to spend even more. They've got the money to do it. Arguably, OpenAI doesn't, based on its balance sheet. And the longer OpenAI continues doing exactly this, pushing the others to spend more and more and more, you just have this massive commitment. They're like locking horns right now, committed to overcapacity and overspending, and we're trying to work out when the music stops. Do you keep on dancing in financial markets?
Yeah, do we get to that moment of efficiency where suddenly we can justify all of these spend commitments that we see out there? Or are we kind of just all climbing and building something to infinity? And ultimately, that's the question that a lot of people are grappling with.
Another big debt sale, this time from Amazon, $15 billion in the last 24 hours. Let's turn to the continent. Over in Europe, the ECB lowering the amount of capital that it requires banks to hold after sailing through a stress test earlier this year. The move allowing banks to continue making shareholder payouts. Joining us now, the individual behind the report, the ECB Supervisory Board Chair, Claudia Buck. Claudia, welcome back to the program. It's good to hear from you, as always. How would you describe, how would you characterize the state of the financial system at the moment?
Well, thank you very much. First of all, good morning, good afternoon from Frankfurt. So I would say that the euro area banking sector is in a very robust position. So capital ratios have increased. They're now at 16%, a bit higher than last year. We actually kept capital requirements broadly stable. Yes, the stress test told us that the capital depletion, which is informing our Pillar 2 guidance, would be a bit lower than it was in the last cycle, but losses were also higher and profits were higher. So this is the combined effect that we are seeing here. Broadly, capital requirements stay stable because there's a small increase in the Pillar 2 requirements. So a robust situation, good capitalization, good profitability, good liquidity positions of the banks. Non-performing loans are also at a very low level right now. But of course, we're seeing pockets of vulnerabilities, and the European banks operate in a challenging geopolitical risk environment. So this is why we always need to stay vigilant.
Claudia, do you think these banks are in a position to maintain or perhaps even increase the level of shareholder payouts? Are they telling you that they'll do that?
Well, I mean, of course, we look at this over a 3-year horizon. So this is pretty much business as usual. That we also discuss with the banks, of course, their payout strategies. So what we've seen, I mentioned the higher profits that we have now in the system, and of course, also this leads to higher payouts compared to what we've seen in the previous years. But we're also telling the banks, well, look at your long-term business strategy. So what is needed to maintain resilient, to have a good long-term sustainable business model in the future? That also requires investment into IT infrastructures and so forth. So it's a balancing act, and we're seeing that roughly the banks are planning payouts of 50% by and large. But this is, of course, also differs across banks, and there's a little bit of a variation over time in there.
Claudia, yesterday Bloomberg reported that UBS was in talks to potentially move their headquarters to the United States from Switzerland if some of the capital requirements weren't lowered, as they thought that they were punitive and they were going to be raised. And I'm just wondering how much of the effort to right-size some of the capital requirements is to try to have a better competition, a better backdrop with the United States and some of the banks over there.
Well, I think you understand that I never comment on individual banks. I need to say this because you started with the case of a specific bank. So all I'm saying is just general about the capital requirements we have in the system right now. I think they're very well justified. As I said, the euro area banks are in a good position right now, but we also have risks and uncertainties that lie ahead. So that always needs to be balanced. I think generally, globally, we have with the Basel Agreement, we have very good global guardrails when it comes to capital requirements and a good framework that also internationally active banks need. And I think it's very important, in particular in these often difficult times, that we also keep these global guardrails.
How much are you keeping a focus on private credit? We know that that's been an increasing concern for a lot of banks. And you talked about how you are looking for more transparency in terms of lending to private credit investors and beyond in the Euro region. How much progress are you making? What do you see there?
Yeah. Well, we have seen definitely since the global financial crisis, we've seen a shift of activity away from the banks towards the non-bank financial intermediation sector. So we have a better resilience in the banking sector, which is good. We also have credit activity in other parts of the financial system, and we need to see how risky this is and whether vulnerabilities are building up. So we've worked very closely with banks that are also linked to the private credit markets to see what risk management they have in place. And we have also given them advice on how to improve the risk management. One of the things we are seeing is that it's often not very transparent where the risks are with regard to private markets, non-bank financial intermediation. So I think there's also a role for policymakers to improve the transparency of parts of this market. Not all of this market is intransparent, but part of it is, and that needs to be addressed.
Claudia, didn't we push the activity away from the banks? Weren't the rules that came in after GFC, isn't this the consequence of that we push this activity to places where we have less transparency? Claudia, is that a failure of the rules that we implemented after the GFC? How would you think about that dynamic?
No. I think the evidence is very clear that the rules that were put into place after the global financial crisis have really benefited the system. So as I said earlier, the banks are more resilient, they're better capitalized, it's better quality of capital. This has not come at the expense of their ability to lend to the real economy. So this has been proven over and over again by many studies. And I think we are in a much better place, both in terms of resilience and also the competitiveness of the banks. I don't think it's a contradiction. So I think the banks that are more resilient, that have a broader resilience against all the uncertainties out there, I think they're also more competitive in the long run.
There's a word that you used in this interview a few times, vulnerabilities. Can we just finish on vulnerabilities? Could you be specific about the kind of vulnerability that you're particularly concerned about, that you and the team on the supervisory board are very focused on going into the new year?
So I can be very concrete. So one of the vulnerabilities is one of our priorities for the next 3-year cycle is to make sure that banks are resilient against geopolitical risks and macro financial uncertainties. And so this is, if you take one geopolitical risk, we have, for example, seen an increase in tariffs, uncertainty about tariff policies, and not all of these higher tariffs have made their full effect onto corporate balance sheets and thereby also potential credit losses for the banks. So this is one of the issues we are looking into, and it's very clear that banks need to have good underwriting standards in the future. They also need to maintain their resilience and capitalization. So this is one of the areas we are focusing on for the next 3-year cycle.
Could I extend that also beyond just US policy and US tariffs? Are you focused on maybe an overexposure to the Chinese economy in the European banking system at a time when you've talked about geopolitical risk? That would be my number one. Not US policy. I'd be thinking more about the future of the relationship between the Europeans and China and what might happen with a place like Taiwan. How are you considering those kind of developments in the future if they potentially do materialize?
Mm-hmm. Well, my point about geopolitical uncertainties was a very general one. No, I didn't mention the US. So it's just generally, I mean, we're just in a very different environment than we used to be years ago, and this needs to be acknowledged. Look, we don't know what is the most relevant risk scenario, adverse geopolitical risk scenario for the individual bank. And this is why we will next year ask the banks to do a reverse stress test, which is asking the banks, what is the most relevant geopolitical risk scenario given your business model, given your exposures, and what could be a scenario that could be detrimental for your financial soundness? So that's the kind of question we will ask the banks, and we look forward to that information we will get from the banks. They will use their own internal capital planning tools to give us that answer. But it's not that we know what is the relevant scenario for the individual bank.
We look forward to seeing what they've got to say. Claudia, we appreciate your time. I look forward to catching up with you again soon. Claudia Bock there, the ECB Supervisory Board Chair on the financial system in Europe.
I like that, the reverse stress test. Tell us what you're most focused on, because ultimately, geopolitically, it's changing at any given moment. And when you talk to banks, they might have a very different view than the supervisory boards that often have been looking at past crises and where that comes out.
Nothing to see here. Everything's okay. I imagine is going to be the response now.
You think so? I think that they might raise some issues in terms of banks, in terms of some of the security that they'd like to see.
The phrase geopolitics drives me nuts when it comes to financial executives. Be specific about what we're talking about here. What are we talking about? Geopolitics. What does that even mean? I think that's just a term that we throw around now. Let's be really hyper-specific. For the European banks, I'd want to know what would happen in the same way we had to sever the relationship with Russia. What would happen to the Europeans if we had to sever the relationship with China? Isn't that like the number one dominant geopolitical risk out there?
I love that you're giving your reverse stress test.
Like
this is it. I think that's
we should enforce that on the banks.
Well,
you know,
I think
what would
maybe
you do?
You're gonna bring that up to the fore. But I think
into the Russia situation. We're going to sleepwalk into the same situation with China.
How do they deal with the same type of situation? Where do they provide credit? What are their sort of know your customer types of protocol when it comes to these places?
Totally. I mean, you think about the policies coming from the US right now. Maybe the secondary sanctions from the US on the likes of India and China. These are all things you've got to think about. Anyway, save it for another day. Let's give you an update on stories worldwide with your Bloomberg Brief. Here's Yahira with more. Hey, Yahira.
Hi, John. Bank of America's monthly fund managers survey found that investors' cash positions have dropped below a key threshold, triggering a so-called sell signal for equities. Average cash held by fund managers fell to 3.7%, something that's happened just 20 times since 2002. The survey ranked a potential AI bubble as the biggest tail risk, while investors also said that companies were over-investing. Meanwhile, Federal Reserve Governor Lisa Cook making her case against allegations of mortgage fraud, calling the claims, quote, baseless, and saying the contradictions were incomplete snippets of full documents. The U.S. Supreme Court is set to hear arguments in January on President Trump's move to fire her. And speaking of President Trump, he touted his economic policies last night, saying they have drawn trillions in new investments to fuel private sector job growth and ease inflation. Speaking at the McDonald's Impact Summit, the president thanked the fast food chain for slashing prices for its most popular items and bringing back extra value meals. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks very much. Up next on the program, funding AI ambitions.
The scale of spending is so massive that the market is effectively putting a 100% probability that this is going to be truly transformational.
Kate Herr of JP Morgan Asset Management joins us next.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, funding AI ambitions.
Nobody knows, which is a fact, as to what the true profitability will be. And that is important not in itself, because the scale of spending is so massive that the market is effectively putting a 100% probability that this is going to be truly transformational. Going forward, given the scale of spending, increasing the credit markets are going to be tapped.
So here's the latest this morning. Amazon joining Meta, Alphabet, Oracle, all with multi-billion-dollar bond sales to help fund AI build-outs. Kay Herr, the U.S. Global Fixed Income Currency and Commodities CIO at JP Morgan Asset Management, joins us now for more. Kay, good morning. Good to see you.
Good morning, John. Glad to be here.
50-year debt from Alphabet, 40-year debt from Amazon. What are these guys up to, and why do investors want a piece of it?
So I think the first thing to remember is these are highly rated companies with a lot of free cash flow. If you think about the 5 hyperscalers, most of them have enough cash on the balance sheet to pay for this debt. It's the opportunity, though, to put debt in the markets. You know, yesterday, the investment-grade credit market had $26 billion of new issuance, all of which absorbed very easily. You know, initial price talk on the Amazon deal yesterday was, 25, 30 wider of a concession. It ended up pricing pretty much on the screws and traded there. So there's a lot of demand for fixed income here at these levels.
Even for 40-year tranches? I mean, what do you make of the 40 and the 50-year pieces of some of this debt?
Look, I think when you think about this, you're going out a long time, and the question about the returns that companies are going to generate for this, the AI investment, it's awfully uncertain. But I think these companies have a lot of cash flow. They can repay the debt. I think I would be more focused on the multiples that are paid in the equity markets than on their ability to repay when they've got cash on the balance sheets, Lisa.
The best way to say check your own house before accusing the debt markets of being prolific.
I think maybe so.
Yeah, you think that that's what's going on?
That's right.
I just wonder if there's a better story to tell, maybe in either speculative grade credit or outside of the U.S., where you are more insulated from some of the tech story, because even if these are highly capitalized companies, the whipsaw in sentiment around AI seems to have driven a lot of the movement recently.
So I think if you look at the bond market's holding up okay. Look at yesterday or the last few days, you've had a sell-off. Bonds are actually doing what they're supposed to be doing, right? Think about it. The ag's up almost 7% this year. Bonds are delivering stability, diversification, liquidity. I know it's boring and old-fashioned, but that's kind of where we are.
Is that just a US bond story, or do you see that across sovereigns?
No, I think that is true more broadly. I'm obviously much more focused on the U.S., but I think broadly that is true. Bonds are doing what they're supposed to be doing here.
We've had a 40 basis point plus move on the year. I think on the US 10-year, we're down another 4 basis points this morning to about 4.1%. Some convulsions, I've used that word a few times in the last 24 hours with regards to fixed income. Some convulsions in JGBs. What's happening at the long end of the JGB curve, and what's the potential spillover into global markets?
So I think you've had some geopolitical uncertainty in the JGB. You've got a new prime minister out there, I'm on TV. You got to be careful what you say, because if you're going to use the word convulsions, people can make a lot of interpretations.
I use the word convulsion. You don't have to. Is there a potential, though, to re-anchor global bond yields higher, given what's developing in the Japanese bond market?
There's always a potential for higher. There's an equal potential for lower. I mean, every day there's a market made in this. I mean, look at the Fed, or look at pricing on the Fed. I think the last time I was here, it was almost 100% certainty that the Fed was going to cut another 25 basis points. Here we are. That's now below 50%. And so there's always a market to be made in these, in buyers and sellers.
Do you think the risk is balanced into that Fed decision?
I think the market is pricing it pretty much balanced. I think the probability is now below 50% today, but we actually think the Fed's going to continue. We think the Fed cuts again in December.
What's going to deliver that move? Another weak jobs report?
So it's funny. Yesterday, one of my trustees was in and reminded me that they always call us bond ghouls. We're bond ghouls. So bond ghouls, we can complain about anything. So we spent the 60-something days of the federal government shutdown complaining that there's no data, and now we're obsessing because there's data starting. We get ADP at 8:30. We get non-farm payrolls on Thursday. So I think if you look, I mean, the data is going to be anything you want it to be, right? We're going to get a September number on Thursday. Consensus is 57,000 or whatever it is. But you all know that the margin of error for economists on those non-farm payrolls is plus or minus 100,000 jobs. So it's going to be interesting to see what the Fed does here.
I'd forgotten about ADP. We get the weekly number later this morning, right?
8:30 this morning,
there we go.
Get ADP.
That's your promo from Kay Hurt of JP Morgan Asset Management.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies. which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Don't chase this market. Let it come to you.
The question isn't, will the market be healthy, but will it remain bifurcated?
There are legitimate questions about valuations.
I do think that the market is too negative on the economic outlook.
If you get any more downdraft in technology, it's going to be hard to rally through the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. We're pulling back again near session lows, down by 0.6% on the S&P, down by 0.7 on the Nasdaq, down by 0.75% on the Russell this morning. The earnings so far from Home Depot, not great. The outlook, not great either. Teeing us up for Walmart and Target later in the week.
Yeah, and it really highlights, is this just a housing-specific or housing-related issue? Big-ticket items usually associated with renovations that might plague Lowe's tomorrow and certainly did seem to hamper some of the Home Depot earnings. Or is this a broader consumer issue that you're starting to see percolate out into the shares of certain travel stocks? And you are hearing in some of the commentary. That's the reason why Target and Walmart are going to be so important. How much could they pass along price increases? And how much do they see the acceleration, the re-acceleration in the underlying economy early next year that so many people are banking?
They don't see it going into year-end based on what we've heard from Home Depot so far. Are we going to see it in some of the data? September payrolls, the estimates keep pouring in. We've got about 19 economists putting out estimates right now, and the median estimate is 65K. 65K based on what we've heard on Wall Street. is a pretty decent number these days. You get 65, it's going to feed that belief that things are starting to pick up again.
This is really the crux of the issue. 65 wouldn't have been good 2 years ago. Right now, it sounds really good because some people are saying that the total number of jobs needed to break even based on the immigration is significantly lower. You will get other people saying, no, this is a shell game. This is actually a very poor economy. And take a look at the overall hiring of new graduates, and you can see the pain. You can paint the own story that you want. We will get ADP data, as we just found out from Kate, later this morning, that could potentially, later this hour, that potentially will give a color heading into some of those numbers.
8:30 Eastern time for the weekly ADP. TD Securities looking for 125 this week for September payrolls. For whatever that's worth, 125 is the high estimate.
So if it is high, how much are people going to explain that out by catch-up from over the summer? And how much does that really point to forward-looking strength? I mean, really, you can paint whatever narrative you want, especially given the fact this is September data, and we're going to get very messy October data that everyone will obsess over, and at the same time will be considered irrelevant because we're not getting an unemployment rate. So, I mean, ultimately, it just gets messier and messier.
Super noisy October, maybe even a noisy November, and a Federal Reserve that sits there with no clear data. So what do? Governor Waller making a case yesterday afternoon that you cut interest rates and essentially communicating there is nothing that can happen between now and December 10th that's going to stop him from voting for a 25 basis point reduction.
Yeah, and this, to me, is really a question. How entrenched are Fed opinions across the lines, right? There are sort of the centrists who are undecided and say it's going to be up to the data. We hear that from Mary Daly. We also heard that from Neil Kashkari to some degree. And then you have people like Chris Waller who are going to cut rates. You also, of course, have Stephen Myron who will cut rates. And then you have others who have come out and really seem to not want to do that. Lori Logan, for example, or Beth Hammack. So you can see the lines shifting. It's sort of like a Supreme Court, right? It's sort of like one flank here, then the centrist that potentially could be skewed either way.
Fallen off the radar a little bit. Should find out who the new Fed chair is before year end as well.
Yeah, that's
kind of fallen off the radar into year end, but that could change the debate about what you might expect to happen in 2026. This morning, in 2025, equity futures a little bit softer. Bond yields lower by 5 basis points through the belly of the curve. On 10s at the moment, we're down about 4 to 4.1%. Coming up this hour, we'll catch up with Lisa Shallett of Morgan Stanley Wealth Management as the tech rally retreats, Stephanie Roth of Wolfe Research as labor data trickles in, and Jason Tyler of Northern Trust not yet seeing an AI bubble. We begin this hour with stock sliding on valuation concerns. Lisa Shallett, CIO of Morgan Stanley Wealth Management, saying the following: while the 26 bull case remains intact, there are some headwinds from the affordability crisis and growing pessimism in the labour market. Lisa joins us now for more. Lisa, good morning.
Good morning.
It's good to see you. Not just about AI, not just about big tech.
It is not. It's about the K-shaped economy. It's about that consumer, the lower end of the K, and this idea that consumer sentiment, it's not even their behavior at the minute, it's this sentiment is so negative. You add to the question in the University of Michigan, what do you think job prospects are in a year, right? We're at the worst reading since 1980. Folks are really depressed about the potential for the job market, and it's not just cyclical. I think it is this hand-wringing about the secular story of Gen AI.
I think we've got to stay on that. 45 years of events. Just think about everything that's happened, GFC, the pandemic, and you, Mitch, is telling us, the consumers are telling us that this is the worst they've felt about the labour market across all those things that have happened.
Yes.
That's bonkers.
It is.
What do you think is behind that?
I think it really is this existential fear. I think it starts with what they're observing, as Lisa noted, with new graduates not being absorbed into the labor force at the normal rate, but what they're seeing at the workplace and all the visions of how I'm going to be automated away, whether it's from, the robotics end of it, right? If you're, a physical laborer or if you're a knowledge worker from, an agentic entity or an agentic bot.
Do we have to have that kind of future where, in some ways, robots take over humans in order to justify valuations where they are?
I don't think so. Our take has been, here we are, there's 153 Americans working in the United States labor force. The U.S. Stock markets are the envy of the world. We're, within 2 to 3% of all-time highs. Our profit margins and our returns on equity are at historic highs. This is, as we were talking about before we got on air, some of this is the technology is here, and is this, a solution in search of the problem? I don't find a lot of people saying that America has a profitability problem.
Well, so Dan Pinto of JP Morgan, Daniel Pinto, came out earlier this morning and was talking about this and said that there probably is a correction that has more to go, particularly with respect to AI, and said that in order to justify these valuations, you're considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing in now. Is that how you see it as well, that there needs to be some sort of retracement, that potentially these are the stocks that could trade sideways for months, if not a year, before the use cases grow into some of the valuations?
I'm in that camp. I know some of my compatriots at Morgan Stanley are not, but what's built into the 2026 earnings forecast already is about another 130 basis points of margin expansion and productivity gains. That is a lot of productivity gains in 1 year across an economy. And so our best guess is that next year the earnings will be decent, and decent to me is up 5 to 10%. But things that border on 15 to 20% is a push, because it's a level of productivity that I just don't think the American workforce is ready to deliver, let alone embrace.
Can U.S. stocks outperform if you don't have the AI names leading the charge?
I actually think that they can, and the reason is that I think that there have been huge portions of our market that have been squeezed out or forgotten, right, over the last 15 years by, this huge tech leadership. In fact, our best guess is that next year we're going to see some nice return in leadership to financial services as, we get deregulation and animal spirits returning to markets, healthcare, energy. So we do think that there are places to make money in this market, that new leadership can emerge, or at least challenge some of these tech leaders. And that to me is a very healthy stock market.
Lisa, could you describe what's happening and what the starting point is going into 26? So we've seen a 3% decline at the index level on the S&P. How much damage is there beneath the surface away from big tech?
So there has been damage. Obviously, we've seen it, in some of the more macro sectors. We're seeing it in cryptocurrencies. Obviously, there's some pain. So we do think that there are opportunities. Like I said, we'd be picking through, some of the financial services stocks, some of these consumer stocks, some of the healthcare stocks have started to recover here. So there are lots of things to do.
What needs to go right with consumer discretionary into next year?
So I think the fundamental thing that needs to go right is that, some of our worries and the fears about both the job market and inflation need to kind of tamp down, and we need to see decent income growth for the bottom half of the K to quote unquote hang in there.
How much do we need rate cuts, significant rate cuts?
So it's an interesting question. I think, the small to mid-sized business sector, parts of private credit, I think need close to 200 basis points of rate cuts. The key thing is we're probably not going to get it. And that's why there's a little bit of this current dance that we're doing with the Fed, I think, which is kind of moot. It's like, what's the difference? Another 50 basis points? Who is that helping and who is it hurting? If anything, it's just kind of steepening the long end of the curve, which doesn't help your housing market.
Lisa Shallett, it's good to see you. As always, thank you. Lisa Shallett there, CIO of Morgan Stanley Wealth Management. 50 could do more harm than good.
Yeah, the idea that it steepens the curve and it leaves the mortgage market in even more pain. The idea that private credit needs 200 to perform highlights the gap right now in perception versus reality. And is part of what's fueling some of the angst that you're seeing reflected in equity shares.
You want to drop the front end aggressively. The balance sheet needs to do some work to cap the long end of the yield curve. With inflation closer to 3, then than 2.
You mean yield curve control is sort of the inevitability? That's what people think.
Maybe. I would love to get some insight on the interview questions.
We're monetizing the debt. Here we go, baby.
Is that what the dollar story? Is that what the dollar story was picking up on at the start of the year?
100%. I mean, you know, Scott Bessent knows what he's doing. He's just going to jam it. He's going to buy it.
You expect another round of that next year? Another round of dollar weakness?
Yes, I do. I do. Again, I know my compatriots at Morgan Stanley have moderated their view and said, you know, they think the dollar's flat next year. But I do think we're going to have another bout of it, especially, you know, no one's talking about this, but, you know, Trump's throwing out there that, hey, I'm giving everyone the tariff bonus check. Well, weren't the tariffs over 10 years supposed to pay for your tax bill? Like, wasn't that the whole point? So let's see, you had a regressive tax, it's called tariffs, and now I'm giving you the rebate of the money I took from you?
I'm keeping track. I'm trying to keep track. Lisa, you keep bringing me back. I'm trying to go. It's good to see you. Thank you. Lisa Shallard of Morgan Stanley, everyone. Equity futures on the S&P down by 0.4%. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahara with more. Hey, Yahara.
Hi, John. AI cloud startup Lambda said it raised over $1.5 billion in its latest funding round. The company, which rents out access to advanced AI chips, plans to use the capital to buy additional NVIDIA GPUs and build its own data centers. Its sights are set on moving from being a data center tenant to an owner, having raised $2.3 billion so far in total funding, with plans to hire engineers and operators. And Bitcoin has wiped out all of its gains this year as investors' risk appetite sours. The currency fell below $90,000 for the first time in 7 months, so we are trading above that now. The drop comes as interest rate policy uncertainty and stretched valuations weigh on broader markets. And President Trump doubling down on his call to send checks to Americans to cover healthcare costs. Trump posted on Truth Social earlier, the only healthcare I will support or approve is sending the money directly back to the people, with nothing going to the big, fat, rich insurance companies who have made trillions and ripped off America long enough. That's your Bloomberg brief. John?
Yahara, thank you. Thank you very much. Up next, the Morning Calls Plus, John Lovelo of UBS, as the housing market faces significant headwinds. That conversation just around the corner. Live from New York City, you're watching Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
as the small business data starts to hit the economy, that's where we're going to realize, wow, this is where the jobs are. And that would probably fit very well with Home Depot type of thing, right? That's the small contractors, right? Those are the ones who are struggling right now. I think the economy is worse than we realize. I do think the Fed should cut because I think that's data is going to show up weaker and weaker.
That's an argument we've heard from Governor Waller of the Federal Reserve, an argument we heard earlier on this morning from Peter Cheer of Academy Securities. If you're checking in for the price action, here it is. Equity futures on the S&P 500 down another 0.4% on the NASDAQ, down by 0.5. That's the price action. Here are your morning calls. First up, Redburn downgrading Microsoft to neutral for the first time, calling the industry's Gen AI narrative increasingly misplaced. The stock is down by 1.7%. Your second call from Loop Capital, upgrading Alphabet to buy, saying a wall of worry has been obliterated under AI enthusiasm. That stock is up by another 1.1%. And finally, Stifel raising its price target on NVIDIA to $250 ahead of earnings tomorrow, viewing NVIDIA as best positioned to benefit from AI compute demand. The stock is down again this morning by 0.9%. Let's stick with earnings. Home Depot cutting its full-year guidance in another warning about the strength of U.S. consumers. The company also reporting comparable third-quarter sales that missed estimates. Drew Redding is tracking the story, and Drew joins us now for more. Drew, not a great outlook from this company, not great commentary either. What was your take?
So, I think the challenges facing Home Depot are pretty well documented. You have heightened consumer caution. You have a weak housing market. This quarter, they're lapping some storm-related activity from last year. So certainly a lot of challenges. I don't necessarily think the results today reflect a sharp reversal in the business. I still think the core underlying trends are probably pretty stable. I think the problem is that things aren't getting better. I think people are looking for that inflection in home improvement retail, and we just haven't got it. And as you mentioned, the commentary going forward is certainly much more subdued. So I think that's really the issue, is that things aren't getting better yet.
They aren't getting better even with an easing of mortgage market conditions. And Drew, that's what stands out for me. And to read the line verbatim from the CFO, we'd expected demand to begin accelerating gradually in the back half of the year as interest and mortgage rates eased. But that hasn't happened. Drew, why do you think that hasn't developed? What's happened to the relationship between mortgage rates and what happens with a company like this one?
Yeah, that's a great question. And, we've been saying for a while mortgage rates get all the attention, they're obviously a key component of affordability. They're not the only thing that's impacting the housing market. If it were, we'd have seen the builders do a lot better. We got some data on the new home market yesterday, which showed applications to purchase new homes down from last quarter, down 3% from last year, and well below seasonal norms. If you think about what the builders have been doing, they've been getting their buyers rates in the low 4%, 5% range, so much better than what we're seeing, at the headline. So I think what that tells us is that it's not just rates, but it's really consumer caution. You have consumers who are more concerned about the direction of the economy, more concerned about the labor market, and when you have those type of concerns out there, there's certainly more hesitation in terms of spending, particularly as it relates to Home Depot and big ticket discretionary categories like kitchen and bath remodels and flooring projects.
Stock is down in the pre-market by close to 4%. Drew, appreciate your time this morning. Thank you, sir. Drew Redding there of Bloomberg on Home Depot. John Navarro saying home builders and building products over at UBS, saying he's still bullish on the setup for the home builders heading into 26. However, we're definitely concerned about consumer confidence and employment. John joins us now for more. John, good morning. Good to see you.
Hey, John, good to see you.
Thanks for dropping by. What's the relationship between, say, a Home Depot and the companies that you cover?
I think it comes down to what Drew was saying. It's consumer confidence. I mean, we still believe heading into 2026 that it will be a better year for housing than 2025. But consumer confidence and unemployment are big headwinds. Now, on a positive front, if we want to think about the other side of the coin, you have inventory levels that are a lot better across markets. Intent to buy is still very high. Valuations are compelling at 10 times earnings. And really, I mean, the building blocks sort of underlying a recovery feel like they're coming together. But it is going to take that consumer confidence to improve.
So a lot of people say that to solve the issue of home affordability, you have to build more. But we see right now, as you said, the inventory problem seems to be getting better. And a lot of house builders have actually struggled to sell the homes that they've been building in certain parts of the country at the prices that they want. How much is this everyone hoping that people can just get the ammunition to meet the prices where people actually want to sell right now?
It's a good question. So I think that, look, I think that, again, intent is very strong. People want to buy. 37% of respondents to our survey said, hey, look, we want to buy over the next 12 months. That compares to the 30% average. It is the ability to pull the trigger. And I think that the folks that are out in the market today are well-financed and able to actually transact. It's just, is this the right time to do it? I feel like the purchase decision is sort of being put off, if anything else.
So I guess that what I'm trying to get at is how much is this trying to solve the problem without housing prices going down? Because ultimately there are a lot of people who have a stake in the ground who don't want housing prices to go down, but they would have to ultimately go down to make this this housing market more fluid, or mortgage rates would have to go down so much that people can get money more or less, not for free, but for much more cheaply so they can lever up.
So I'm not sure you're going to see either. I don't think we're going to see mortgage rates come down significantly. I'm not making a call on rates, and that's above my pay grade. I also don't think that you're going to see home prices fall. There's just not enough inventory in the market. What I think the government really should focus on is kind of improving the cost equation for the builders, the ability to get more sort of supply at a lower cost. If you think about it, the housing industry is the only industry that I can think of in the country that has had negative productivity since 1987, right? So we need to actually invest in technology and infrastructure in order to make the process more fluid.
Can you give us an example of that?
Yeah, we actually did a 3-year study, believe it or not, on just wall panels alone. And wall panels, so building wall panels within a manufacturing facility and bringing them out to the job site, cut the actual framing days by 30%.
So closer to prefab homes?
Closer to prefab.
I've seen some of that develop in Europe. I've been seeing some of those houses put together. They're very attractive as well, but it's quite niche, and they're quite expensive too, because I don't think they're doing sort of mass market homes. I've seen some come out of Germany. They cost a fair amount of money. What kind of technology are you seeing developed that can do things on a bigger level, a greater scale?
So I think there's two different ways. You can do complete off-site construction is what I'm getting at, is doing more than the wall panel. So it's the roof trusses, the floor joists, and et cetera, bringing them out to the job site and actually constructing. I saw a home that was fully framed from, basically up to plate level in 3.5 hours. It was just remarkable. The other way you could go is just manufactured housing. So, homes that are built completely in the factory and brought out. This Road to Housing Act that's just recently been passed by the Senate is trying to kind of move that along. There's a couple different things in there that could help these homes get better financing and better acceptance by consumers. So there are some things in the works that can help.
Isn't the goal to bring down the price of some of these housing, yes, for the home builders, but also for the end consumer? I mean, I guess that I'm wondering how this all gets down to the idea that prices don't have to go down and won't go down in housing. But these are all measures to create more supply more cheaply that can be sold at a much lower price point, no?
Well, I think it's a function of helping on the supply side, yes, so helping the builders to reduce the cost so they can put more affordable housing into the market. So yeah, you can mix down, but not necessarily, deteriorate the equity that's built up in people's homes.
It's funny, isn't it, John? Because these ideas have been around for a long time. Yeah. What's taking so long to get it off the ground?
It's an industry that's been reluctant to change, not that dissimilar to the auto industry before the 80s when the Japanese came in and revolutionized things. And so I think we need that catalyst, and you know what? This may be the catalyst. We're just in a crunch right now for housing.
Do we have enough time? And by do we have enough time, I mean, does Washington have enough time? Because they operate on 4-year political cycles, and some of them shorter cycles than that. Do they have enough time? Are these the kind of things you can implement and see results in a year, in 2 years?
No. So I think what they need to do on a near-term basis, there's a couple things they could do. One is the GSEs, which are under conservatorship, they could buy MBS for their own portfolios. They could do more of that. That could help reduce the spread. Also, tariffs. There's about $9,300 on housing, a house alone in tariffs. I mean, those are the things that could help, in the immediate term. Longer term, the things that we've been talking about could help. Also some of the ideas that the government has thrown out in terms of reducing restrictions across, municipalities in terms of building. That's all longer term, type stuff. So, that's going to take time.
It's a lot of work to be done. John, appreciate your time. Thank you, sir. John Navarro there of UBS. on the housing market?
Yeah, it's going to be a very much political discussion because ultimately this goes to the economic question that we're seeing raised by Home Depot, which is, can you have a re-accelerating economy with the housing market not participating?
Coming up on the program, we'll catch up with Stephanie Roth of Wolf Research as the labour market data continues to drip out. Plus, Yahara with your morning movers. Ama Sports surging as athleisure demand bounces back.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The opening bell about 60 minutes away. Equities pulling back by 0.5 on the S&P 500, down by close to 0.7% on the Nasdaq. So the weakness continues into day 4 on the S&P 500 with some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. We start with a big mover to the upside, and that is Ama Sports. Shares are rising 11% after it lifted its full-year guidance. People are touching grass and experiencing the great outdoors, and that is helping lift demand for its hiking shoes and its brand Wilson, which of course makes tennis gear. And given there has been so much negative sentiment around the consumers, the results really did come as a surprise, helping lift shares strongly this morning. Meanwhile, we are seeing Home Depot shares falling 4% now in the pre-market. They lowered their full-year guidance, blaming a host of issues, but mainly a consumer that is wary to take on those big, pricey home improvement projects. They also said that a weak storm season hurt sales for things like generators. We'll see if Lowe's, which is reporting tomorrow, confirms this weakness. And we end on the chip makers also seeing some weakness this morning. NVIDIA, Micron, and AMD all in the red. The names really at the center of the AI build-out as concerns continue to mount over an AI bubble. While there is no single catalyst today, we have just seen this continued nervousness. We saw that yesterday with the announcement that Peter Thiel sold his entire NVIDIA stake, all leading up to the make-or-break moment this Wednesday when it reports earnings. John?
Yahara, thank you. Appreciate it. Appreciate touching grass as well. You touch enough grass? Get in touch with nature.
Wasn't that the mayor? No, it was the governor of Utah telling us to touch grass. I touch grass. Do you touch grass?
Not enough of it.
I think I'm a better person as a result.
Much calmer, more relaxed.
I take off my shoes.
More in tune with nature, apparently. Huh. Okay, let's get back to this market, please. Let's get you some ADP numbers. Why are they always late? Enda Curran has more. Enda, good morning. What have we got?
So they fell an average of 2,500 a week into 4 weeks to November 1. John, that's the headline coming from ADP right now. On the one hand, that's a soft number, but it perhaps maybe suggests that the pace of those losses is slowing a little bit. Remember, it's a new data series. We're trying to get our heads around this. But the bigger picture is it builds into what's expected to be important week for giving us more broader detail on the jobs market. ADP detail today. We're going to get non-farm payrolls on Friday. Expectation there for maybe around 50,000 odd jobs gained in the month. Unemployment rate staying stable. But both indicators, ADP today and payrolls on Friday, are all expected to lean into what's expected to be an ongoing soft labour market for the time being at least.
Massive range on estimates that I'm seeing, and these estimates keep changing. So Citigroup's at 105, so that's Andrew Honhorst. This is for payrolls on Thursday. And at the lows, Scotiabank at -20. And if you're at the central bank, the Federal Reserve, going into the December meeting, you've been told you're not getting an unemployment rate for the month of October. I don't know what the November jobs report's going to look like. How useful is September and September alone, together with a high-frequency read from ADP and some jobless claims that seem to be okay?
Yeah, it's an interesting time, John. So the September data should be somewhat clean, as you know, but again, that's so far in the rearview mirror now. The October data will be much choppier, as you just explained, obviously complicating the picture for any central banker or policymaker in this. The partial indicators are all interesting too. You know, we've had an indicator this week of advanced notices on layoffs surging over the month of October, combined with the anecdotal headlines from companies letting go of staff. It's all, while it's a mixed picture, it all seems to be leaning towards, at the very least, a softening labour market. And by the way, last night we had a very interesting speech from Fed Governor Chris Waller, who really dismissed the idea that they're flying blind or going through fog. He said the data is clear, the anecdotal evidence is clear from private sector and everywhere else, is that the jobs market is softening, it is weakening. He's hearing that companies are moving from this phase of no hiring, no firing to moving into the firing phase, and that's why he wants a rate cut in December. So yes, complications around the data, but some people are very clear-eyed on this, including Governor Waller, for example.
And thank you. Enda Curran there of Bloomberg. That speech from Governor Waller yesterday afternoon suggesting he's going to vote again for another interest rate reduction on December 10th. This came from Neela Richardson of ADP. Let me share this with you. New hires are a larger share of employment. I'll read some of what Neela had to say this morning. Hiring has slowed from earlier in the year, so one would think that new hires, which we define as workers added to an employer payroll in the last 3 months, would be a shrinking share of the workforce. Instead, they're on the upswing. So what gives? Neela says in October, new hires accounted for 4.4% of all employees. ADP payroll data shows up from 3.9% a year ago. This growing share of new hires would seem to run counter to the slowed pace of hiring. That contradiction tells us a lot about today's jobs market, and the conclusion is that new hires typically fluctuate with the business cycle, but the aging US workforce means that demographics have begun playing a bigger role in hiring decisions.
Yeah, that's her takeaway, exactly that employers are taking on a bigger share of new hires, even with the slowdown in the jobs market. But that suggests more workers are heading for the exits, meaning retiring, et cetera, because of the aging demographic, which highlights just how complicated this labor market is. This looks like a negative number, and at the same time, under the hood, you could see see this churn with people maybe leaving, other new people coming in. The one caveat to that is that pay isn't exactly accelerating for some of these new hires. So it's not as though it's an incredibly asymmetric market with a lot of new hires getting a lot of amazing offers. Nonetheless, not exactly dead in the water the way that some people might describe it.
We need some more data, and we'll get that data on Thursday. Stephanie Roth of Wolf Research looking for a solid 60,000 payrolls on Thursday's jobs report, writing the hawkish Fed narrative may persist through the report, but the narrative may change a bit with subsequent data that's likely to be more mixed. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
Let's start with September. Why the bounce back? What are you looking for?
So we should see a bit of a bounce back in the sense that the trend over the summer was probably not the real trend. So we think not only will September be decent, but you also will probably get some upward revisions to August. So the 29,000 three-month average could easily look like something in the 60s. So that would be a much different trajectory because there was seasonality problems over the summer. There was significant tariff uncertainty. That has started to fade. The comment that you made about perhaps we're starting to see a bit of a pickup in terms of the job market in the month of October seems like a trend that we expect to persist in the next couple months, where you might start to see cyclical industries start to hire again.
So pair that with consumer confidence that's dead in the water, with people feeling really bad about their job opportunities, with the slow pace of hiring and wage growth, with the Chipotles of the world and the Sweet Greens, and this morning the Home Depot. How do you square a story of accelerating growth with what we're hearing from companies and what we're hearing from consumers?
Well, this is growth turning at the margin. It's not as if growth is picking up to a very high pace. For 2026, we put out our outlook. We're looking for 2.1% growth, which is just above trend. And then at the margin, you're probably like to see the low-end consumer get a bit better. It's a price level problem, though. A lot of people feel bad about the level of prices in the economy, and that is a hard problem to solve because prices don't fall in the economy unless you have a large recession. So the administration is trying to put together policies that will bring down the level of prices, but that's just not realistic in this environment.
So this goes to a paper that you wrote recently about how Washington can't do this overnight in terms of the cost of living. What do you think then is going to be the solution? Do you think that it only can be driven by a recession, or that there are other marginal kind of efforts that could happen to bring down at least some of the inflation, if not the price level?
You're probably not going to bring down the price level. And certainly we shouldn't be hoping for a recession. So the best case scenario is that you grow into the price levels, in that you have a couple of years where wage growth is a little bit elevated. You start to see a bit of a pickup, call it a little above 4%, and then prices remain largely steady. So you don't really see a big pickup in prices and you kind of grow into the economy. At the same time, people then might forget about the prices as they were before the pandemic. I think that's part of the problem. People remember what prices were before the pandemic, and they don't necessarily take into account the fact that their incomes have grown about 29% since the pandemic as well, but they do see that prices have gone up pretty significantly since then.
Do you think that the risk then for the Federal Reserve is cutting rates could actually reaccelerate inflation in a way that goes counter to this?
Yeah, I think that is a risk, especially when we're talking about house prices is probably one of the areas that's the most unaffordable today. If you see a big reduction in rates, and if the government tries to put in place policies like the GSEs buying more MBS, and that lowers mortgage spreads, you might see prices start to pick up as a result, and that's a challenge. By the way, $2,000 stimulus checks, that would have the same result.
What is a big reduction in rates? Because some might argue we've had one, 150 basis points in September of last year, and housing and shelter costs aren't on the rise in a way that some people might anticipate. So what is a big cut to interest rates?
Well, I would say it's more a reduction in rates at the same time the economy is starting to pick up. The fall in rates that we've seen recently has been because the economy has slowed down. So
Important distinction.
Exactly.
The jobs growth that you'd anticipate alongside with that growth, just describe 2026 for us. Because 2025 has actually been, people talk down growth for 2025. Growth hasn't been that bad in 2025. What's been bad is the employment growth. Why is 26 going to be different?
So it should be a little bit better. We're talking, our forecast is for 80,000 payrolls growth for next year. It's not as if it's anything compared to what we've seen in the last couple of years. But relative to break-even, or the break-even pace, our estimate for 26 is about 70,000. For 25, it was closer to 50,000. And the reason is because immigration was a lot stricter in 2025 than we expect for 26. Still should be strict, but less so at the margin. So we're talking about a payrolls number that's not that strong historically speaking, but better than it's been.
If you do see some sort of reduction in the tariffs, and we've seen some marginal types of moves around bananas and coffee and things of that nature, if there is a more significant rollback of certain tariffs, do you think that that would reaccelerate the economy in a more meaningful way?
Yeah, it certainly could. The challenge with that is also then you might start to see rates rise at the same time, because then you'll have an environment where people might be a little bit more concerned about the deficit, And at the same time, you're just having natural growth acceleration. Fed cuts would have to get priced out. So that does pose some challenges, but I think there's the possibility that we'll see an environment where tariffs get rolled back marginally. But what we've seen recently is it was on some ag products. So I think what we'll see is the occasional tariff relief, but not enough to be needle moving in terms of the economy.
Can I ask you if your view changes with the incoming Fed chair? When you find out who the new Fed chair is, how much does that move the dial for you?
So our expectation is Hassett, even though we prefer Waller. If we end up getting someone like Hassett, I don't expect that the committee will change so much. It's a committee of people that are very divided at the moment, and that's likely to even grow if we have a chair that's seen as much more dovish than the rest of the committee.
We prefer Waller. It's interesting. I don't usually hear language like that from economists on Wall Street. Why would you prefer Waller, Governor Waller?
He's a much more independent thinker. He is very data-driven. He's just somebody that the market very much respects, and I think that would be a good candidate given the sort of the list of
kind of
people
implies
out there.
that Kevin Hassett is not the NEC director. Is that fair?
That's fair.
What gives you that impression?
He, Myron, their comments have been suggesting that rates are a lot more should be a lot less restrictive than they currently are. Their commentary is just much more in line with what the president wants to hear. And Waller is somebody that's been long respected by the market. He's had views that are very much data-driven. Yes, he's been more dovish recently, but it is backed by conversations around the labor market having slowed down, concerns around layoffs picking up, which is all very fair and solid arguments. I'm a little less concerned, but the market, I think, would very much cheer having him as the next chair.
You're not alone on this point. Talk to a lot of people around the Federal Reserve who have made the same point. In fact, they go one step further. If the president wants lower interest rates, he'd be better off by getting Governor Waller because he'd have more chance to influence the rest of the committee to come along with him and deliver lower interest rates.
Chris Waller is considered more credible in markets as an independent thinker, as Stephanie just said. There also is a feeling that he isn't necessarily going to take orders from President Trump, and so people will view it more credibly on the committee as well. He has a longstanding history there. I wonder how much that's going to be taken into account when choosing the Fed chair.
Stephanie, good to see you. Thanks for sharing your thoughts. Stephanie Roth there of Wolf Research with an update on news worldwide with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. ADP's weekly jobless claims report shows that U.S. private payrolls fell an average of 2,500 per week over the 4-week period ending November 1st. It's a shallower drop from last week's figures, which showed a decline of over 11,000. ADP indicated that despite hiring having slowed from earlier this year, new hires are actually on the upswing. Meanwhile, the U.S. is expediting visas for foreign visitors with tickets to the World Cup. President Donald Trump said government agencies are working to ensure that soccer fans from around the world are properly vetted and able to come to the U.S. next summer easily. World Cup matches will take place in 11 U.S. cities. And Toyota is investing over $900 million to boost hybrid vehicle production in the U.S. The project will center on hybrid vehicles and component production across 5 states. The move underscores Toyota's bet that hybrids will dominate U.S. sales as consumers resist high EV prices following the end of tax credits. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Jason Tyler of Northern Trust on why tech isn't in a bubble just yet.
key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There have been huge portions of our market that have been squeezed out or forgotten by, this huge tech leadership. In fact, our best guess is that next year we're going to see some nice return in leadership to financial services as, we get deregulation. New leadership can emerge or at least challenge some of these tech leaders. And that, to me, is a very healthy stock market.
That was Lisa Shallett, the CIO of Morgan Stanley Wealth Management, weighing in on this stock market. This stock market this morning pulling back by 0.5% on the S&P, down by 0.6% on the NASDAQ. A big week still to come. Your trading diary is shaping up as follows. This morning at 10 a.m. Eastern Time, durable goods. At 11 a.m. Eastern Time, President Trump hosting the Saudi Crown Prince at the White House on Wednesday. Fed meeting minutes just around the corner, plus results from Target and the big one, NVIDIA. Thursday, a delayed jobs report, plus earnings from Walmart. Earnings from Walmart getting a little bit more interesting following what we heard from Home Depot earlier this morning.
They traditionally have been a bellwether for consumer activity and just appetite, and it might be the cleanest read on just how much consumers are willing to absorb higher prices, how much they have to pass along higher prices, and how much affordability still is at the front and center for so many people out there, as it does seem to be at least part of the dialogue this morning.
Another soft session this morning. We're down by 0.5% so far. Resilience of the AI narrative in question as valuation concerns grip Wall Street. Jason Tyler, the wealth management president at Northern Trust, writing, while there has been a lot of talk about bubbles, we do not think the technology sector is there yet. Jason joins us now for more. Jason, welcome. Thanks for making some time for us this morning. Let's just set the table for this conversation. What is a bubble? How would you define one?
Well, first of all, it's good to at least hear you, Jonathan, and so thanks for having me on. Bubbles are fundamentally when asset prices get way above their fundamental value, and it's ironic you were talking about the possible bubble here in this sector. We just literally last night had our leadership team together, and we're talking about this very dynamic, and we tend to be very fundamentally driven, and so we're always looking for ways to identify what's the intrinsic value of an asset as opposed to looking at just what the market might be looking at and anticipating in terms of momentum.
And Jason, what are you seeing?
Well, I think 6-12 months ago, the fundamentals looked better. And so now we're more on bubble watch than bubble call. That's the way we talked about it just last week. Every week we put out 5 themes to our clients, to investors, and ironically, one of those 5 themes just this past week was that to be more on bubble watch. We're certainly not calling it yet, but doing a lot more analysis to make sure that the asset prices of some of these securities, some of these stocks aren't getting too far in front of what we think their intrinsic value is. And you've got to go out pretty far in the future to think about the earnings that they're going to be developed and discount those back to today to get comfortable with where the valuations are, but so far we're not seeing a big disconnect between those.
I feel like the word bubble sometimes distracts from what a lot of people are talking about, including you just now, Jason, which is that people are pricing in a lot of gains they're going to take a lot longer to take. And I'm looking at this morning the fact that Cloudflare outages are causing ChatGPT to go down and things of that nature. And Cloudflare is the company that you've never heard of that controls a lot of websites across the internet. I just wonder how much the real world is not keeping pace with the hopes and dreams of artificial intelligence.
Yeah, we separate it in terms of two different dynamics. One is what are the implications going to be for us as consumers, for us as just going about our everyday life? And then secondly, what are the value of these underlying companies? And in the first, there's no doubt that these dynamics are going to have huge implications for the way we come to work, for the way we do things. But in the second, we've got to be cautious not to get too far, too optimistic about what these values could actually create in these companies. That said, you look at the infrastructure that has to be developed to support the technology that we're talking about. And
Jason, does this really affect where you think the potential profits are from your own investor portfolio? Is the idea of, is it utilities? Is it the energy structures? Is it something other than maybe the traditional AI plays that have gotten the most attention?
You know, the thing that comes to mind for me a lot, I grew up trained more in the Buffett school of thought and looking for moats and looking for barriers to entry. And frankly, they're hard to find in this sector. And, you know, so scale may be one of them, but that's got to be proven out. And so otherwise, you're trying to look for what are some of the longer term advantages these companies have to be able to drive earnings to justify, obviously, the big multiples that we're looking at today.
Jason, just before you go, what's the big call from you and the team as you sit around the table and start thinking about 2026 and beyond? What are you actually excited about right now?
You know, John, what I'm excited about, we didn't get a chance to dive into it today, but the number of companies that are publicly traded is declining. The number of privately held companies that are investable, that have more than $100 million of revenue, it's increasing dramatically. And so what I'm excited about is our ability to help clients find those companies more in the private markets and find ways to create shareholder value for looking at things that might not be on our screens every day, but our team is doing research looking for those types of companies.
Jason, because of the high-profile blow-ups, at least over the last few months, there haven't been many, but they've been high-profile. Has it tempered some enthusiasm to go into those markets of the investors that you cover?
Yeah, I have to acknowledge that's a great thing to bring up, John, and I think the first derivative on, or even the second derivative, is it's harder to raise money in those spaces right now. And so it's giving you an indication that you've got to be more cautious. And we're always back to looking for fundamental value, not looking to just pile money and steer investors in one direction all the time. This is about giving investors access to a broader array of investment opportunities and giving them a chance to diversify and make sure they're not missing on where some shareholder value is being created.
Jason, this was great. It's good to see you. Hopefully in person next time. Thank you, sir. Jason Tyler there of Northern Trust on the AI situation and whether it's a bubble or not.
Yeah, the idea of what is a bubble is a good way to begin the conversation, since everyone seems to define it a little bit differently. It does seem like maybe the word bubble has gotten us away from actually looking at what are the appropriate valuations for some of these companies and how far do we need to see visibility, because certainly there is really profound change and positive efficiencies that can come from some of this technology. It just is harder to extrapolate out in a clean line, and I think that that's really what you're hearing from a lot of investors.
A lot is built on NVIDIA. A lot is built on Alphabet, on Microsoft, and there's real money there, real profit, real revenue growth. We can see that, and we'll see that in the numbers when they deliver them tomorrow. It's about whether this whole story is built on other parts of the ecosystem, the weaker parts, the more leveraged balance sheets, the promises that aren't backed up by revenue right now. They're the hopes and dreams. Is that where things are out of sync at the moment?
Which is the reason why people are looking at things like OpenAI and CoreWeave and some of the others, Applied Digital, that backs up CoreWeave. Just to take a step back, it does seem like things are accelerating in a world that relies on the physical infrastructure. And that's the reason why I thought Cloudflare was so interesting. It's the company you haven't heard of that gets a lot of websites to the internet, and it raises this issue of where are the fragilities right now in the ecosystem that will get exposed and be roadblocks for this chain into progression that could potentially delay things and potentially delay the promise of some of the profits.
We all just wanted an easy, smooth glide path into year-end, a nice little mount up, a Santa rally, call it a year and walk away. And this market's just not letting us right now, is it?
Some people are really excited. You know, the Bears, the Bulls, people who are trying to draw back. Yeah, they had 5 minutes to come out, and now they're being scared back.
Coming up on the programme, Julian Emmanuel of Evercore, Alicia Levine of BNY, Libby Cantrell of PIMCO, Francis Donald of RBC. They'll join us tomorrow morning from New York City this morning. Good morning to you all. Thank you for choosing Bloomberg TV. Have a wonderful day, and we'll see you tomorrow morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Dip buyers, where have you gone? On track for a 4th consecutive day of losses. 30 minutes ago into the start of cash equity trading, I'm Danny Berger. Matt Miller is off the show today. Bloomberg Open Interest starts right now. Coming up, JP Morgan's Daniel Pinto warns AI valuations are due for a correction, while a potential AI bubble was ranked the biggest tail risk in a Bank of America survey. Meanwhile, earnings from Home Depot point to a weak consumer as the retailer faces mounting headwinds, and a widespread worldwide outage at Cloudflare blocks access to websites including ChatGPT, X, and the New Jersey Transit. I think this is like the second day that you're facing a delay if you're on the New Jersey Transit, so good luck to you. At least this time it's because of tech and not because of weather or rail derailment. Anyway, some of the stocks we're watching this morning, it's the big tech players. Microsoft and Amazon, both of them were downgraded at Redburn. The analysts calling their generative AI returns misplaced. Home Depot, they also cut guidance as shoppers stop buying those big ticket items. Those shares down 3.5%. Let's start on Home Depot. Let's get more on it. We're joined now by Bloomberg Intelligence Senior Analyst Drew Redding. Drew, your initial take on what we heard from Home Depot.
Yeah, so Home Depot is facing a lot of challenges, not altogether new, but the most important being a weak housing market. U.S. housing is really stagnant. Volumes are down about 25% from normalized levels. And what we're seeing, and I think what the difference here is heightened consumer caution. You have consumers who have grown increasingly cautious about the outlook for the economy, the outlook for their employment situation. So I don't necessarily think the underlying trends in Home Depot's business have gotten significantly worse from last quarter. They actually called things out as being relatively stable. The difference is their guidance last quarter had assumed an acceleration in activity in the back half of the year, and that has not materialized.
What changed? What changed that would have made them think that that won't materialize as they did in their last earnings?
So I think the hope for Home Depot and for the broader housing market was that we would get lower mortgage rates, and that would spur increased housing turnover. You'd get more big ticket purchases as people would become more willing to finance that. But as we've said in the past, rates are certainly a big component of affordability and crucial to what happens in housing. But they're not the only thing at play here. We've heard across the housing space, whether it's the home builders, building product manufacturers, and now Home Depot, is that there's just increasingly cautious consumer. And when you have, a poor sentiment in regards to the outlook for employment, you're less willing to take on those big ticket discretionary purchases. So think of things like kitchen remodels, bathroom remodels, flooring projects. And that's, one of the areas where we're seeing particular weakness.
Hey, Drew, thank you for that. Home Depot shares again down this morning. Drew Redding of Bloomberg Intelligence. Now, elsewhere on shares that are moving to the downside, Redburn has cut Microsoft and Amazon to neutral from a buy, breaking rank with peers. Analyst Alexander Hassel says that underlying economics of generative AI are far weaker than assumed, with high capital intensity and weak pricing power. Bloomberg Tech co-host Caroline Hyde joins me at the desk. Caroline, how rare is it to get a downgrade on some of these names that everyone, I guess, was loving and maybe not this morning?
Well, let's put it into perspective. Microsoft has 2 neutral ratings, 0 sells, the rest of them are buys. So Alexander's going out on a limb here more broadly, and you're seeing this similar with Amazon. Amazon has 0 sell ratings, a few neutrals, but most consensus, more than 90%, is these stocks are buys. In fact, we've seen the price target go below where Microsoft is currently trading at. $500 is below its 507 current levels. So clearly, this particular analyst and Rothschild more broadly feeling that too much is baked in here, too much optimism around the return, the margins in particular, because this rollout is going to take an awful lot of money, and the margins are not like they are in cloud more broadly, and he felt that really some of the innovation had more broadly been baked in with cloud. We'd seen actually the economies of scale make sense before the huge rollout and infrastructure build-out came. And now we're sort of building it and hoping they will come. And at the moment, people are still wondering how we're going to charge for all of this use case, particularly if you can't get on your ChatGPT today, like if you're impacted by Cloudflare.
Okay, can we just talk about that? Because I feel like if anything, it just does underscore how much of this new future is being driven by infrastructure that is not even seen to us. I mean, how many people think about Cloudflare on a day-to-day basis? And because of that, the most popular AI app can't be used.
Yeah, how much do you think about Akamai? How much do you think about Cloudflare? How much do you think about your content distribution? If you use TikTok, you're using Akamai. If you're using seemingly ChatGPT, if you're trying to get the New Jersey Transit, if you're making out, it seems more broadly that you do need content distribution. You need these cyber companies to be fit and working. Now, we have heard from the company, we put in a statement. Matthew Prince joins the show often, and he's someone who's really worldly wise about the way in which we're adopting AI as well. They're thinking about AI agents, and particularly they want to be the guardrails and the protocol of our future of AI. Well, they need to be up online if we're going to be able to do that. They're talking about an unusual traffic spike that they've currently seen at Cloudflare. It began at 11:20 UTC.
They saw the traffic therefore being an issue for them, and they are all hands on deck, they're saying, to make sure the traffic is served without errors, but at the moment still errors occur.
It feels like the worst time to get downgrade to some of the hyperscalers who have concerns that ChatGPT won't work, because it does feel like a piling on recently of some real skepticism, and all that piling on coming ahead of NVIDIA earnings. Can they do anything? Can Jensen Huang at this point say anything to soothe markets?
I mean, his numbers could deliver, and the numbers are going to be good. $55 billion is what the market price is in. That's a 57% increase in revenue. Extraordinary for an almost $5 trillion company. Bloomberg Intelligence have been saying we think they're going to beat, because remember, just back in October when we were hearing from Jensen Huang over in DC, he articulated that over the next year, he's got line of sight on $500 billion worth of demand for his Rubin and for his Blackwell infrastructure. If he can continue to show that level of demand, and that he's not seeing any falling away in capital expenditure, he sees AI really reaping rewards in terms of actual productivity, well, then we could steady the ship some. But at the moment, we need that fundamental base case, because the hopes and prayers about AI are starting to get a little bit quieter.
Yeah, Daniel Pinto not helping either.
Yes.
Maybe Jensen Huang needs a word with him. Caroline, thank you so much for joining this morning. Tune into Bloomberg Tech. It's going to be a big one today at 11 a.m. Now, the crypto market also adding angst in overall risk assets. Bitcoin fell below $90,000 for the first time in 7 months. It's just back above that level, but it did erase gains for the year. Crypto-linked stocks, those are sliding as well this morning. Scarlett Fu co-hosts the Bloomberg Crypto Show every Tuesday at noon and joins us this morning. Scarlett, I mean, it's been a tough run with these things. I guess it's hard to say what exactly is behind it, but what are some of the people you're talking to saying about this fall?
Well, definitely investors are repricing the early stage innovation, frontier tech parts of the market, and crypto really embodies that, right? We know crypto trades as a risk asset, especially with stocks, and in the near term, you mentioned NVIDIA, there's anticipation before NVIDIA's results, and then of course there's a lot of macro data at the end of the week, but overall, you've got a lot of concerns over the shifting macro environment. Is the Fed going to cut rates in December? Is the Fed going to cut rates in 2026? We don't know. Stretch valuations in stocks, especially that AI story getting a little bit wobbly, is just concerning for anyone in risk assets overall.
And I hear you brought this cool chart with you. What are we looking at, Scarlett?
So I think what this chart really shows, it's very busy, is that Bitcoin has repeatedly come back from massive drawdowns. So that big spike up in 2021, 2022, money supply is a purple line. And of course, during the pandemic, people were stuck at home. They got a lot of money. There's money sloshing around. So it went into unprofitable tech stocks, like the white line, meme stocks, which is the yellow line, and Bitcoin, which is the blue line. The difference is, you could see in 2022, 2023, Bitcoin made a comeback, and even though the bubble deflated everywhere else, Bitcoin has repeatedly come back from these massive drawdowns, down 55% in 2021, down 77% in late 2021 to late 2022. So this idea that, you know, perhaps there's another drawdown isn't so much super concerning. It's not an existential crisis for Bitcoin. It's like, okay, this happens and we come back from it.
I guess the question, though, is it a concern for other markets if people have been using leverage, if they're getting margin calls and they need to liquidate other assets in order to fund those margin calls?
Absolutely. So there's an element of forced selling, or at least questions being raised about whether there's forced selling, right? We know that a lot of traders borrow money to enhance their positions. So when the prices come down, they get exposed. And we're now looking at this $100,000 level. It was previously support. It's now resistance. And it's definitely this key line here. Options traders are also betting on further declines. We've seen a demand for downside protection at $85,000, $80,000 strikes. Those are dominating flows. And we've seen 12-spot Bitcoin ETFs see net outflows over the last 2 weeks of $2.8 billion in November alone.
All right. Well, Alisa, like, maybe you can call today a bounce because we're back over 90,000. So
we'll see, though. I mean, there's Bitcoin trades 7 days a week, so there's a lot of room for.
Well, again, it is the day to tune in to Bloomberg Crypto. Scarlett, thank you so much. And again, that's at noon. And the guests today include former Hut 8 CEO Jamie Leverton and OpenSea CEO Devin Finzer. A check on futures this morning after 3 consecutive days of declines. We're headed for a fourth. The S&P and NASDAQ are down 4.5% respectively. It has been the worst run for the Russell 2000 in equal weight since August. For the S&P 500, the worst 3-day run since April, and it's been NVIDIA leading that drop again. It's accounted for a quarter of the losses from the highs of this market. Some of the individual movers on our radar this morning. Klarna, they've agreed to sell as much as $6.5 billion of longer-term loans to funds controlled by Elliott Management. Elsewhere for Elliott Management, a busy day for them. They've built a large stake in Barrick Mining. That's according to the FT. The investment could be as large as $700 million. Intuit, they have struck a deal with OpenAI that will be putting applications like TurboTax and QuickBooks on ChatGPT. Those shares up 2%. You just got to hope Cloudflare works while you try to do your taxes. That would be unfortunate. Speaking of which, coming up, we're going to talk about that. What we know about the Cloudflare outage impacting AI chatbots, social media, tri-state transportation, all of that coming up next on Bloomberg Open Interest.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. And we start with U.S. companies shedding 2,500 jobs per week on average in October. That's the latest from ADP Research. A number of large companies, that includes Amazon, Target. We heard they announced job cuts during the month. So that ADP snapshot of the labor market has helped bridge the gap. Official employment data was delayed by the longest government shutdown in history. The September jobs report that is set to be released on Thursday. Elsewhere, Saudi Crown Prince Mohammed bin Salman is meeting President Trump at the White House today. It's a rare visit for the Saudi leader, who's bringing a massive delegation to Washington. The two will sign deals on defense, nuclear energy, artificial intelligence. But analysts do warn that the partnership hinges on MBS's personal ties with Trump. So there are no guarantees that the agreements will survive future administrations. Finally, Blue Owl Capital shares tumbling to their lowest in 2 years after the firm froze redemptions from one of its private credit funds. The $1.8 billion vehicle will merge with Blue Owl's $17 billion listed arm early next year, but that leaves investors unable to cash out in the unlisted one and facing paper losses up to 20%. In a statement, Blue Owl says the deal strengthens returns and liquidity. ChatGPT, X, and the New Jersey Transit are among the companies impacted by a widespread outage that Cloudflare is working to fix. Let's discuss with Bloomberg cybersecurity reporter Jordan Robertson. Jordan, just at this point, for people trying to get into X, ChatGPT probably having a hard time. What do we know as to what's behind it?
Yeah, so the technology that's behind this outage is called Cloudflare. It's one of the world's biggest cybersecurity companies. Effectively what they do is they act as a buffer between your website and the outside world, and most importantly, criminal cyber attackers. And what that means is that if Cloudflare has a problem, so does your website. We've seen this before. Cloudflare is a very, very large company. They're essential to kind of modern cybersecurity on the internet, but it's had problems before, and it's had glitches. It's a constant target of cyber attacks. And what's happened today is, the Cloudflare service itself has been experiencing outages for a number of hours today. And the company itself has issued a statement that implies but doesn't confirm that there may have been some sort of cyber attack. The company has indicated that there was an unusual, what it calls an unusual spike in traffic to one of its services that may have contributed to this outage. So there's a lot we don't know at this point, but we do know this is a pretty prolonged outage that also illustrates how important this company has become to modern cybersecurity.
And it feels as though it has echoes, Jordan, to July of 2024 when CrowdStrike went down and it meant that airlines were delayed, a lot of Microsoft Windows run things couldn't operate. And after the aftermath of that, it was CrowdStrike faced a lot of issues, a lot of scrutiny that it took a while to work through, and maybe is still working through some of it now. What does it mean for a company like Cloudflare, for their reputation and for customers willing to use their software?
Yeah, Cloudflare, again, is one of the biggest and most important cybersecurity companies, in the world. Its market penetration and just the scope of its services, is really unmatched. And you're exactly right. What the CrowdStrike incident, showed was that these security technologies are deeply embedded inside digital infrastructure, whether that's websites or payment services or what have you. And, in order to implement these security technologies, organizations have to allow the security technologies to do things at a very deep level inside their IT infrastructure. What that means is if there's an outage, whether that's caused by a cyber attack or just a technical error or a glitch or a bad update, what that means is that there can be really widespread ramifications. And what these incidents kind of highlight is the degree to which these security technologies, they work mostly fine. They mostly work okay. But when they go wrong, it can have really lasting ripple effects.
Well, Jordan, I'm really excited because in just over an hour's time, we're going to be speaking to Martin Schroeder, who's the Kyndryl CEO, a spin-out from IBM. They run a lot of these consulting for IT tech and infrastructure for companies. And he's going to talk about the immense amount of spending on AI that companies are doing. Is there a real risk that companies have been siphoning their spend and investment into AI at the sake of IT infrastructure, at the sake of things that would lead to issues like this in the future, just because of the way that investments are being made in mostly and predominantly and more often in AI?
Yeah, we don't know enough yet at this point to kind of articulate what happened at Cloudflare, but I can, comment at generally what I've seen in covering cybersecurity for, a pretty long time, is that, companies are, of course, investing a lot in AI. They're spending a lot of money on, developing internal tools, trying to improve their cybersecurity, trying to improve their defenses against hackers. But I talked to a lot of cybersecurity professionals, and what they've told me is that outside of kind of some fringe cases where hackers are starting to experiment with AI-enabled technologies, that they're just not seeing a lot of actual use cases of AI being used by hackers. So at this point, a lot of this is kind of like preemptive posturing, if you will, and trying to preemptively plan for potential future attacks using AI. But just generally, we haven't seen a lot of it. And it could come to pass that, perhaps this Cloudflare incident was informed, or maybe there was AI involved in some way. It just, at this point, we don't have enough information.
Hey, Jordan, thank you very much for this. As Bloomberg cybersecurity reporter Jordan Robertson, a conversation I'm going to watch back as well as I wait for my ChatGPT to load. All right, a check on futures ahead of the opening bell. We continue to push deeper into the red, down by more than 0.5% for NASDAQ 100 futures. Your S&P down by just about 0.5% for a fourth consecutive daily loss after the worst three-day run since April. The VIX at a 4-week high. A lot of broad weakness. We'll see if turnaround Tuesday can take hold. So far, though, the dip buyers nowhere to be seen. Coming up, BlackRock's Gargi Chaudhry says that the market outlook is turning neutral with fewer bulls and bears. She joins after the break. That's coming up next. You're watching Bloomberg Open Interest.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
JP Morgan Vice Chair Daniel Pinto at the Bloomberg Africa Business Summit. Bank of America this morning also flagging concerns in its monthly fund manager survey, where it says 53% of respondents say AI is already increasing productivity, but companies are overinvesting. That was the response for the first time in 20 years. Let's bring in Gargi Chaudhry. She is BlackRock's Chief Investment and Portfolio Strategist for the Americas. Gargi, man, there's a lot of kind of bearish sentiment out there starting to swirl around AI. It feels like these have always been in the background, but it's finally starting to impact markets. A real sell-off, especially driven by NVIDIA, occurring right now. Would you agree with the Daniel Pintos, the respondents of Bank of America surveys of the world, that there is some overhype going on right now?
Good morning. It's great to be here. Thank you for having me. So, I was obviously looking at the Bank of America survey, and we actually, and I shared some of these results with you guys, we do a survey of our own when we do client calls, where what we're seeing actually is quite the opposite. We're seeing about 66% of respondents are quite bullish AI, but unfortunately, or maybe fortunately, given the last couple of days, they don't actually reflect that in their portfolio. So they haven't quite had that overweight to AI and tech yet, but they want to have it. So that is what we're seeing from our clients.
That sounds like a good thing, by the way.
It is a good thing for now, and more importantly, it's good because historically, and especially in 2025, the other thing that we found is that buying the dip behavior has been quite strong, which has worked out for so far. So every time we have more than a 1% dip in the S&P, we've looked at ETF flows coming in that following week, and they've been about 20 to 30% higher than the non-negative weeks, or the positive weeks.
Right.
So there is that going on as well, and I think that healthy backups, cleansing, if you will, are good for the market.
What's the difference, though, between a backup and healthy cleansing versus just like a narrative shift that takes us down longer? Because there's a real fear that, okay, tech sells off, Oracle spreads widen on their CDS, that maybe this is more of a narrative that has longer legs. How do you kind of distinguish between
Absolutely.
the two?
Great question, and I'll say a couple of things. Number one, let's think about what has led to this more recent narrative shift. First, I would say it's the hawkishness, or the perceived hawkishness, from some of the central bank speakers that we heard from over the course of the last 2 weeks. That's number one. we'll have to see what happens with the data once we start getting it, right? So the second one, which has been somewhat surprising to me, has been the negative reaction despite strong earnings that we got over the course of Q3. I think it's surprising how strongly so many companies have beat, and given where the expectations are, looking at about 14% earnings growth, that's been a very strong sort of relative to expectations, a very strong market reaction, but we haven't seen that follow through. So maybe there's more there. And then the third thing I would say is just the absence of data. Once we begin to get that deluge of data on again, which will hopefully happen starting this week, I think there's going to be a little bit more clarity. So that's what we're looking at. And I'll say, if you think about, what sustains us, it's just fundamentals.
Okay, well, let's talk more about those fundamentals. After the market open, Gargi will be staying with us. That's coming up next on Bloomberg.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling. But when we started to work for David, his one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. We are just moments away, seconds, from the start of U.S. equity trading. You are watching Bloomberg Open Interest. I'm Danny Berger. Not exactly how you want to start your Tuesday, is it? Especially after a Monday that declined, a Friday that declined, a Thursday that declined, a three-day run that rivals the worst from April. S&P futures down 0.5%, NASDAQ down 0.6%, the Russell 2000 futures session also doing poorly. All right, here at the opening bell over at the New York Stock Exchange, we got MP Materials. What a great year it's been for them, up 265%. The rare earth minerals producer, they got some investment, some help from the U.S. government, so that's not too bad. On the other hand, over here, we have Chaggy Modern Tea House. It is a U.S. listed ADR of a Chinese tea company. They IPO'd back in April. Not as great for them. They're down about 13%. I think whoever was at the front of the podium there was just throwing leaves, maybe tea leaves, so that's pretty cool. But again, down 13%. All right, let's look at some of the stocks to watch this morning. And it's been a lot of the tech players that are feeling the pain. Microsoft and Amazon, both those shares are down roughly around 1.5%. They both got downgraded at Redburn. It's not too often you get downgrades on these companies. The analysts calling their generative AI returns, the hopes around them, as misplaced. Home Depot, those shares down 4.2% after cutting guidance as shoppers stop buying big ticket items. I want to, though, let's go back over to the desk because Gargi Chaudhry is still there. She's, of course, BlackRock's Chief Investment and Portfolio Strategist of the Americas. So, Gargi, before the market opened, we were just talking about the ability for earnings to underpin things and the fundamentals. Torsten Slok has talked about a K-shape, not in the consumer, but in companies. Maybe Home Depot kind of underscores that this morning. How are you looking at fundamentals when you can have strength from many companies, but a Home Depot can say consumer strength is just not there for us?
So recognizing that there is very much a K-shaped recovery that's going on, and that will obviously have impact on equity markets and bond markets alike. So making sure that when you are thinking about your investments, investing to those quality areas which are likely to have that profitability, that ROI, that earnings growth, which is what we've been telling investors to do. So use this pullback, and maybe as we go into the year end, recognizing there might be further illiquidity concerns, but being cognizant of that and using that pullback to go into AI, which we still think is a very resilient part and earnings-led part of the market. And in particular, we're telling investors to go in with an active lens in mind. So BAI is the ticker that we're telling investors to allocate to for that high-quality AI exposure. And then you ask about fundamentals. I'll just point to maybe two other things quickly. In addition to earnings growth, really focusing on coming into Q1 of 2026, we will see that reacceleration of economic growth. We might see some slowdown given the impacts of shutdown in the near future, but after that, we see that reacceleration. And then secondly, even if the Fed rate cuts do get pushed out in December, just listening to some of the Fed speakers, we will continue to have a rate cutting cycle back towards that 3% neutral rate in 2026, perhaps even in 2025. I think both of those are very positive for the
So a couple of things I want to ask about there. So you mentioned one of the tickers, I'm guessing that's one of the BlackRock ETFs to capture AI. Why do that and not just like an overall S&P 500 fund? Because aren't you essentially getting the same thing? I mean, NVIDIA is such a huge weight, so why go into an AI-specific fund versus just market cap weighted S&P?
Yeah, no, it's a great question. And listen, there are certainly a lot of investors, given their risk tolerance and given their budgets, that are focusing on funds like IVV, which is exactly that. You get the S&P 500, and that is what you need, and you're still getting a large component of AI within that and everything else. But then again, as I said before, 66% of clients are looking for that AI exposure. They have an underweight to it. So in your portfolio, if you have discovered that underweight and you want that AI-specific theme only, you've got the industrials, you've got the financials, you've got everything else, but you're really underweight AI. That's where we think that very specific AI exposure makes sense. So it's really a portfolio decision.
Got it. Okay, so the other thing you mentioned is the fact that cuts are on their way. But we've had a lot of division among Fed speakers. We had more recently one of the first Fed speakers to really come out and say, yeah, we're going to get a December cut. It feels like a lot of the Fed governors have been actively avoiding that conversation when we've had Williams more recently being more dovish. Is that enough, you think, to turn around this market? And the negative sentiment, getting cuts priced back into December, is that going to be the thing that saves equities from this downfall we're on?
I think that some of the reason that the downfall happened was this divisiveness. Because think about it, we haven't had any data at all. What have we had? Yes, we've had earnings, but those haven't been bad. What else had we had? We've had the divisiveness. So I do think if we get some more clarity, and frankly, some of that clarity will come from many of the payroll prints that we're going to get, the 3 of them that we're going to get between now and call it end of December. And within that, if we see that, the economy is not slowing down massively, but there is still a slowdown in the labor market, I think that allows the Fed to be able to cut. And especially with inflation, if we continue to see services inflation decelerating as we did in the last October 24th print, I think that allows them more sort of firepower, if you will. Is it enough? No, but that in combination with the growth dynamic that has always been positive and will probably accelerate in the beginning of next year, as well as earnings growth dynamics that, again, has been extremely powerful and positive and higher than expectation, I think all of that does allow for us to have a smoother year-end process.
If divisiveness, though, is the issue, Evercore brought up this really interesting point last week, and their idea is essentially that what's happening now is you're getting Fed speakers who are being more hawkish because they're anticipating a Trump pick coming in to run the Fed. And they want to get out ahead of it and show that they're not just going to roll over and listen to whoever is in at the Fed. Does that show, or are you concerned that the divisiveness is going to continue into 2026, that this is just the new posture of the Fed? And if it is, does that mean the rough patch that we're seeing now might be more common?
If that is the case, I think that'll introduce more volatility for sure. Because markets, more than anything, like certainty. They like certainty of data, certainty of policy. And I think some of this wobble has been certainly illiquidity, but uncertainty as well. So if what you're postulating is correct, then yes, I think that'll inject more volatility. But at the same time, isn't that a great opportunity to choose and pick and prepare your basket for those areas of the market that you really want in your portfolio? So fixed income, we think, sort of clipping that coupon in fixed income markets is a great way. And again, if we have these spread widening periods, great way to allocate more to fixed income. Similarly, with high quality parts of the equity market, this is a great time to do that. And then add some hedges. We've been talking about that from the beginning of this year. We've seen this massive 50% rally from the April lows in tech. A pullback is normal, healthy. Add some hedges, add some gold, add some front-end bonds, add some non-US market, emerging market comes to mind. And I think that diversify your portfolio, and that's another way in which you can weather the storm, if you will.
Gargi, I'd love to end kind of where we started on this idea that a lot of your clients still are underinvested to AI. When you talk about them and investing in AI, is it hard to convince them to go all in, especially sort of the headline risk that we keep seeing every day, that companies are overinvested, that maybe there's a bubble? Has that kind of dissuaded some people from really getting into the trade?
I think that's sort of come up a lot more over the last month or so with respect to, is AI in a bubble? That really wasn't a narrative at all. I think it's come through now with the fears of circular financing, which is why, in fact, it offers us more of an opportunity, you and I, to sort of help clients to understand where you should be thinking about picking stocks and what are some areas of the market, frankly, like small caps, which might not ever get their shine back.
All right, Gargi, this has been so fantastic. Please come join again soon. That is BlackRock's Gargi Chaudhry. All right, about 8 minutes into your trading day, let's see where stocks stand right now. They are lower and, not as bad as we were in the future session. We're down by a third. Looking at the upside, Apple, one of the biggest gainers in terms of points, it's only up 0.7%, but there was a report that maybe some of their sales in China are doing better than expected. Alphabet, Broadcom. By the way, Alphabet, kind of the thing that saved the market yesterday or made it not as bad after that Berkshire Hathaway investment. To the downside, it is NVIDIA. This continues to be the thorn in the side of the market just because of the weighting of it. It's dragging the S&P down 8.5 points. It's down 1.6%. It's going to have earnings after the bell tomorrow. But shout out to Dan Curtis pointing out that it's contributed to a quarter of the S&P's fall from the top. Microsoft close by, Amazon, Meta, Amazon and Microsoft getting that downgrade from Redburn this morning. Let's look at some of the sectors. Might not surprise you that tech is one of the worst ones, down 0.7%. Consumer discretionary, a lot of that's going to be Home Depot. Home Depot with those disappointing earnings dragging down lows. We're also going to hear from Walmart this week, from TJX, from Target, so we'll get some other consumer names too. At the top, we have staples, utilities, materials. It's that little bit of a flight to safety kind of flavor this morning as we are down by at least 1/3%. Coming up, we're going to hear those comments again and get more into them from JP Morgan's Daniel Pinto, joining the growing choir of those warning about a potential AI bubble. That's coming up next. This is Bloomberg.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the
Absolutely.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
You are watching Bloomberg Open Interest about 15 minutes into your trading day, and we're on track for the fourth consecutive day of losses. S&P, the NASDAQ down. NASDAQ underperforms, down almost 1%, but not that much is being spared. The Russell 2000 down 1/3%, so not as bad. Where do you go for hedges? We're just speaking to Gargi Chaudhry of BlackRock, saying that gold is something you certainly want in your portfolio. We've seen how popular that's been. That's up 0.8%. Looking at some of the individual movers this morning, Cloudflare down 2.5%. An outage there, we don't know why yet, but it's shut. Things like ChatGPT's, OpenAI's ChatGPT. X is having problems. The New Jersey Transit is having problems. So I am so sorry if you're in your morning commute this morning. Bitcoin, that also continues to fall, was under 90,000 at one point. Home Depot, some poor earnings from them. Those shares fall 3.3%. But here's the weird thing about this environment. They say the consumer is weak. But look at Amer Sports. Those shares up 7.33%. They've boosted their full year earnings forecast. They're seeing sales accelerate. Their brands like Wilson, as well as Solomon, because everyone owns those shoes right now. It's like the Adidas ones, what those used to be, but now everyone's wearing the Solomon ones and looking like they're about to go on a hike, but like in the middle of West Village. I don't know. I don't get it. NVIDIA, those shares are down 2.3%. It's the big cap tech, the fear of an AI bubble. Also, the darling children like Palantir Technologies that are so richly valued, having a bad day on that. Now, on that front, JP Morgan's Daniel Pinto, they are warning of a possible correction in AI valuations. Pinto sat down with Bloomberg's Rado Grigori at the Bloomberg Africa Business Summit in Johannesburg. They discussed the AI bubble debate as well as other risks facing investors.
What we are not seeing is a deterioration between what we were expecting in the credit cycle in any of the portfolios. So I think that credit remains solid from credit cards in the US all the way to big corporates. But we will see how it plays and continues once the economy. I don't think that the economy will go into recession. It's likely to slow down. And the credit cycle will continue to normalize. But I don't think that in the credit cycle, we see a deterioration beyond what we were expecting.
If the economy slows down, where do you stand on the interest rate debate in America at the moment? Do you think the Fed is going to cut again in December or hold off?
I think that it may be some inflation is being quite resilient. Low growth is slowing down, but it's still, this quarter, I think that we should discount the numbers wherever they can because of the shutdown, that it will recover, whatever it is, it will recover in the next quarter, in the first quarter of next year. So we do see some deceleration. We do see some reduction in consumption, but it's still for healthy levels. So I think that the economy may grow less next year, but most likely it will avoid recession. Tariffs, they haven't had the full impact, but some will have a further impact next year, but also some will be compensated by the fiscal expansion. So I am relatively positive on what we are seeing. Having said that, markets are pricing a very, very benign scenario and quite a bit more. So that I don't know. There may be issues or not, but the S&P at 6,700 or so, 23 times is quite healthy, to say the least.
You're not giving us a new S&P target.
Well, whoever was giving target missed it all, so no. But I think that from here, you would have saw that the upside is relatively limited.
Obviously, no on-stage interview these days can't include AI, so here's the AI question. Where do you stand on the continuum of hype, bubble, and it's going to solve everything?
Well, the technology is real, and we are, even though we've been dealing with traditional AI for the last 10 years, we are now working in large language models, and we deploy that to almost every employee that we have. We are using different forms of this to improve productivity across operations, technology, detecting fraud, surveillance, credit decisioning, improving client experience. It's all over the place, but it's still at a very early stage. So large language models that is still not having the impact that they should have, and we're still very, very early in the agentic journey. Clearly, this will have an impact in the labor market. Some jobs will be created and some jobs will be eliminated. But I think that one thing that ones want to keep an eye on is how much capacity is being created, and how all these companies, how much revenues they are going to get to compensate, to pay for that capacity. Is likely, I don't know the probabilities, but it's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
JP Morgan Vice Chairman Daniel Pinto speaking with Bloomberg's Rudder Gorey at the Bloomberg Africa Business Summit. Now let's check back in on Cloudflare, which says that its outage should be over. Shares are still falling this morning. They're down 1.33%, but they were down as much as 2.5%. They say that they have implemented a fix. We're going to have more on that story coming up, as well as a downgrade for Microsoft and Amazon. That comes just ahead of a market-moving report from NVIDIA tomorrow. That's coming up next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Let's get you some top calls this morning. The analyst action that we are watching. First up, Honeywell. That gets its first sell recommendation on the street. It comes from Bank of America. They expect shares to lag as elements of its spin-off strategy disappoint investors. Analysts there also say that the company likely will not deliver earnings growth next year. Those shares down 1.6%. Next up, Wells Fargo initiates coverage of Flutter Entertainment with a buy rating. Those shares up 2.2%. They see a compelling valuation following a recent sell-off. The analyst is positive on management and says that the stock provides exposure to high-growth digital markets. And finally, the bull case for generative AI may be losing steam. Analyst Alexander Hasel at Redburn is cutting his rating on Microsoft and Amazon to neutral, saying the Gen AI boom is not the next cloud. He says weak economics, costly infrastructure, fast depreciation hardware raise the risk of an industry overbuild. Let's dig into some of this and some of the recent outages in tech that we've seen this morning that have been weighing on the AI players. Joining us now is Bloomberg Tech co-host Caroline Hyde. Caroline, we can get to those downgrades in a moment, but we just heard from Cloudflare very recently saying that they have fixed some of the outages. Just what's been going on this morning? It feels like a particularly chaotic one.
It was, and actually they haven't said why. There was a surge in traffic. They now need to understand what that surge in traffic was and why did it so destabilize their offering. But this is a content distribution network. This is what makes your apps work, your websites work, and ultimately many didn't today. Whether you're on X, whether you're trying to do ChatGPT and get all your productivity done, or food jokes for your kids, as I tend to use this morning, or whether it's just trying to commute, a lot of it suddenly went offline. Immediately they said they were trying to tackle this. They were all hands on deck. Now it seems as though it's fixed. We're back up and running. But really the question is going to be how, why, and this is a company that was trading at a record high just at the end of October because it had started to win more big enterprises. They serve a lot of medium, small-sized enterprises on content distribution and on security, but they're also trying to put themselves as the new AI agent protocol and guardrail as you build out your AI offerings and Gen AI. They can help you get there. This is going to make people question just a little bit how effective that can be and what Matthew Prince is going to have to say to steady the nerves of many.
It doesn't sound great if you're billing yourself as the guardrail, but you're literally the reason and the biggest AI agent goes down, but also feels very old world meets new world. The fact that you have a train system go down at the same time you can't get into OpenAI's ChatGPT. I mean, does that show us kind of where this world is headed? That we're becoming so reliant on AI and it could have the same problems as the New Jersey Transit does.
Or indeed, we're so reliant on very few players to help our world work when it comes to infrastructure. Look, CrowdStrike, how many of our flights were delayed, how much of our world was upended when they had a particular incident, and we couldn't get onto Microsoft, we also couldn't board a plane. We are at this moment questioning that there are too many big players with too fewer roles. Not only are they all helping finance one another, but they're also just helping with the build out more broadly, not just in the United States, but worldwide. Europe is totally dependent on a few key big American players as well. The anxiety continues to build. I mean, we're all about one key stock really at the moment. NVIDIA is in large part to blame for the 1.8 trillion that's been wiped off the NASDAQ since the end of October. It's contributed $500 billion of that erosion, and now we want to get some fundamentals. Are we baking too much on a few big companies that are going to be our future of production, productivity, and commuting?
I was say, lucky us, we hear from them on Wednesday.
I know.
Just quickly, Caroline, I mean, how are expectations set with the recent sell-off?
Well, sometimes it doesn't always matter. Jensen Huang has, for 12 straight quarters, beaten on revenue. We're expecting 57% increase in revenue. That's a great number for a company that's worth more than $4 trillion. But what can he signal about the future adoption? He's already told us a lot. What more can he say than I've got $500 billion worth of demand that I can see for my Rubin, for my Blackwell architecture? He's going to have to steady nerves, maybe tell us a little bit about China. But also, I think going back to that 2 fewer players and 2 bigger pies, he has still got a lot of concentration risk. 2 key cloud companies are basically 39% of his entire revenue. How is that spreading out? How is he seeing sovereign AI get outside the United States and outside of a few key players? How are enterprises adopting it?
Yeah, it feels like a make or break earnings report, just given what's happened this week. Caroline, thank you so much for joining us. Bloomberg's Caroline Hyde. Coming up in the next hour, conversations from public to private markets. Stay with us on Bloomberg Open Interest.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Eggland's Best.
I'm Jennifer Kuiper. A vote is set in the House for this afternoon on the full release of the Jeffrey Epstein files. Survivors of the convicted sex offender, including Haley Robeson, spoke outside the Capitol last hour.
This is a human issue. This is about children. There is no place in society for exploitation, sexual crimes, or exploitation of women.
Kentucky Republican Congressman Thomas Massie is co-sponsor of the transparency bill to be voted on today.
We fought the president, the attorney general,
the FBI director, the Speaker of the House, and the Vice President to get this win.
President Trump, who was against releasing the files...
They're on our side today, though.
The president who was against releasing the files is now telling Republicans that they should support it. President Trump is scheduled to host Saudi Crown Prince Mohammed bin Salman at the White House today. This is the Crown Prince's first visit to the U.S. since the killing of Washington Post journalist Jamal Khashoggi by Saudi agents in 2018. CBS's Ed O'Keefe.
One thing not expected is any announcement of plans to normalize relations between Saudi Arabia and Israel. The Saudis have said they won't do so until plans for a Palestinian state are backed by the Israeli government, but that's something that Benjamin Netanyahu opposes.
Trying to play League of Legends this morning? You may find you can't access the video game or the social media site X. Cloudflare says customers are experiencing widespread error messages and tells CBS News that it does not yet know the cause of the spike in unusual traffic. The popular online gaming platform Roblox is strengthening protection for minors. CBS's Michael Wallace.
Dozens of families and 3 state attorneys general are suing Roblox for allegedly failing to keep kids safe from sexual predators on the platform. CEO Dave Basuki told CBS Mornings users will have to submit their photos to verify their age.
We're really not storing these images. They're deleted soon after we process them.
The age verification will help Roblox limit interactions between kids and adults.
We really all want the same thing, and that is to keep kids safe. It's why we're so focused on these innovations.
Michael Wallace, CBS News.
Home Depot's third quarter was mixed, and the company has lowered its fiscal 2025 adjusted earnings forecast. CBS News business analyst Jill Schlesinger explains why.
The stagnant housing market has really limited the number of projects that people are taking on. And also, for those who want to do home improvements, they may be worried about the cost of those home improvements, so they're delaying them.
However, Home Depot has raised its sales growth outlook. On Wall Street, it slips again as Nvidia and other stars keep fading. The Dow is down 481 points. NASDAQ is down 376. This is CBS News. The Cambridge Dictionary is out with its word of the year. CBS's Steve Kathan with more.
This word relates to the connection that someone feels between themselves and someone famous they don't actually know. Think Taylor Swift.
The only stressful weddings are the ones where you have a small amount and people are on the bubble.
Fans felt a connection when she announced her engagement to Travis Kelce. The word is parasocial. It's an academic term that's been around for 70 years. The Cambridge Dictionary says now it's mainstream with spikes for internet searches for the word. Steve Kathan, CBS News.
Britain's Royal Mint is celebrating Freddie Mercury with a new coin design. The coin marks 40 years since his iconic Live Aid performance and features an image of the Queen frontman mid-performance with a musical stave representing his vocal range. The Royal Mint's Rebecca Morgan says fans have been calling for this tribute. Jennifer Kuiper, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so check us out there. It is Scarlet Fu, Paul Sweeney, the Bloomberg Intelligence Radio program. I'm seeing a lot of headlines crossing the tape right now, a lot of technology headlines crossing the tape here. Anthropic committed to buy $30 billion of Azure compute capacity. Okay. Microsoft committing to invest up to $5 billion in Anthropic. Okay. NVIDIA committing to invest up to $10 billion in Anthropic. You know who we need to talk to?
Mandeep Singh. Yeah,
Mandeep
this
Singh.
is that circular investing we've been talking about.
No idea what's going on out there. These are just monster numbers. Mandeep Singh, he covers all the tech stuff, so we're going to put him on the spot there. Carol Pepper, she's a founder and CEO of Pepper International. Get her thoughts on these markets. Mike McGlowan, Miami. Mike, Bloomberg Intelligence Senior Commodity Strategist. I don't know. I got Bitcoin at $91,000 per token. It feels like a correction there in Bitcoin. What do we make of that? And Ira Jersey is going to join us here, Bloomberg Intelligence Chief Interest Rate Strategist here. We're starting to get a lot of economic data starting to pour out this week, and we've got the Fed meeting December 10th. So we'll check in with Mike Ira Jersey to see what the Fed's going to do with all this data here. So we got a lot coming up in the next couple hours. We have a market that is selling off more than 1%. Let's check in with Lisa Mateo for a Bloomberg Business Flash.
You got it. And this Bloomberg Business Flash brought to you by IBKR. Will the U.S. Fed funds target rate be set above 3.625% at the FOMC meeting ending December 10th? 2025. Well, at IBKR forecast trader, the yes recently at 23%. Start predicting today at ibkr.com/forecast. The last trading day for this contract, December 10th. Yeah, we do have stocks extending that sell-off. It comes after Home Depot highlighted signs of consumer strain, pulling back on big-ticket items. Its shares are down nearly 3%. Tomorrow, we're going to hear from Target, Lowe's, Williams-Sonoma, TJX, and yes, NVIDIA. Speaking of which, check in with the NVIDIA shares. They're down nearly 3%. To the markets we go. We have the NASDAQ down about 1.5%, 337 points. The S&P 500 down just over 1%, 67 points. And the Dow down more than 1%, 523 points. In the yield space, we have the 2-year 3.55%. That's down 5 basis points. The yield on the 10-year 4.09%, and that's down about 4 basis points. Bitcoin, it briefly dropped below 90,000 for the first time in 7 months. Right now, it's just above 91,000. Some eco data to get to. Yes, ADP says U.S. companies, they shed 2,500 jobs per week on average in the 4 weeks that ended November 1st. And initial jobless claims, they totaled 232,000 the week that ended October 18th. That's according to the U.S. Labor Department's website. The delayed September jobs report due out on Thursday. And if you're having trouble logging on to ChatGPT, maybe X or New Jersey Transit, web security firm Cloudflare working to address that widespread worldwide networking outage. Cloudflare shares, they're down about 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. As Lisa was just reporting, pretty broad sell-off across the board, 1 to 1.5% declines in the equity indexes. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Denitza Sukova. Denitza, what are you looking at today?
Let's start with Microsoft and Amazon. We just have headlines of Microsoft investing up to $5 billion in Anthropic. But then what we're looking at is a big downgrade, a rare downgrade. So Redburn is cutting their ratings for both Amazon and Microsoft to neutral previously and this is the first time it happened since they initiated coverage in 2022. This is very rare. Like, those companies have pretty much 90% positive rating. There are no sales, no sale ratings, and very rare to get even neutral. The issue is the bull case for generative AI is no longer clear, and hyperscale should be approached. This is what Redburn says. The criticism is pretty harsh. They say industry Gen AI narrative looks increasingly misplaced. In 2022, they initiated the coverage for Amazon and Microsoft. They had a buy rating. The same analyst recently had a sell rating on Oracle, and obviously that was correct. The company is down about 25%. Since that, we see the sell-off today. Obviously, tech stocks are dragging the indices down. The Nasdaq has raised around 1.8 trillion of value since October peak, and obviously those fears are continuing to rise. And for the last few weeks, we've seen a lot of pressure on those AI darlings and favorites that brought indices up for 3 years.
Okay, let's steer away from technology and go towards Home Depot.
Yeah, everyone's worried about consumer, and Home Depot is giving a pretty bleak forecast there. The ticker, of course, is HD. The stock is down more than 3%. The company cut its full-year earnings guidance. They're warning that unsteady consumers are hitting the pause on big home purchases. The retailer said it expected adjusted earnings per share to decline 5% from a year ago. The company said its profit and comparable sales came in lower than expected. The stock is already down year-to-date 11%. It's been really hard. Obviously, the housing market has been frozen. Add to that tariffs and additional charges for Home Depot. They have seen some of the metrics doing well. They've been trying to grow operation, boosting online offering, trying to attract all those do-it-yourself consumers that have been all over TikTok and Instagram. But still, that's not enough, and the earnings report was far from received well.
All right, one more. What do you got for us?
And we have aerospace and automation technology provider Honeywell. Shares are down about 2%. It's coming off another downgrade, but this is a double downgrade. So the company was previously buy, and now it's sell. The downgrade is coming from Bank of America. It's the only sell rating in Bloomberg data. The ticker is HON. The stock is splitting up in two companies. That's been going on for some time. One is dedicated to aerospace and the other to automation. But Bank of America is not excited about that. The bank says shares are going to lag as elements of its spin-off strategy disappoint investors. The company has only one sell rating. It's not common to get this. It's already down 10% year to date. But clearly the spin-off and the new CEO they have, which is actually an internal one, Bank of America is not bullish about this.
All right, very good. Denitza Sokova, thank you so much. We appreciate that. Denitza, she covers all the equity markets for us. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. There's a lot of commitments going on out there in the technology world, Scarlett. NVIDIA is committed to investing up to $10 billion in Anthropic. Microsoft is also committed to invest up to $5 billion in Anthropic. And Anthropic, for its side, it's committed to buy $30 billion of Azure compute capacity.
And
so
we're just throwing out these tens of billions of dollars like it's nothing.
Right. I don't get it. It's just the circular stuff we see, but people tell me not to worry. Coming up right here, the best-dressed man on Wall Street. His turban matches his tie every day.
No accident.
I mean, nice job. Mandeep Singh, he's a senior tech dude at Bloomberg Intelligence. Mandeep, a lot of big companies making some big commitments in Anthropic. What is Anthropic again?
Well, Anthropic is one of the 5 frontier LLMs that are remaining. I mean, and they are leading the charge when it comes to generative AI. So it's one of the 5. The other one are Google, OpenAI, Meta, and XAI. And so, look, when it comes to these commitments, it's pretty obvious that OpenAI has raised the bar by announcing they're going to spend $1.4 trillion. So the question is, what are the other LLM companies going to do? And Anthropic is also a pure play LLM. And in their case, they don't have the funding. I mean, they don't have the balance sheet like Google or Meta have. So they have to raise the money either in the private markets or from someone like NVIDIA, or get into an agreement with Microsoft, which also has an agreement with OpenAI. So that's where, you know, LLMs need compute. That's how you serve billion-plus users. And that's where, you know, the numbers get bigger and bigger when it comes to the tie-ups with cloud providers.
This is like the popular clique in high school where everyone knows each other and everyone's messing around with each other. Just give us a little bit of background here on Anthropic, because my understanding is that it was founded by folks who used to work at OpenAI, and some of the early investors, like big stakeholders, include Alphabet and include Amazon, and now you've got Microsoft in there. I mean, is there anyone who's not part of Anthropic and not committed to investing in this company?
Well, you could say Meta, they're doing things.
They're doing their own thing.
They're doing their own thing in terms of, you know, using the compute internally, and they don't have a cloud business.
Is that a problem for them that Meta's out there on its own? I know it doesn't have its own cloud business, but it's not buying stakes or committed to invest up to $5 billion or $10 billion in any of these AI companies?
I mean, so far, just to go to Meta, it feels like, investors were okay with them using the GPU compute for their own family of apps. But the fact that they're talking about 100 billion plus in CapEx for next year without having a substantial ROI, and what I mean by ROI is in the case of Microsoft, yes, they are raising their CapEx to 120 billion, but they're winning deals like the one with Anthropic, $30 billion in commitment from Anthropic. So somebody is paying for that compute in the case of Microsoft. You don't have that with a Meta. How are you generating ROI outside of your family of apps? And over there, you have to show a really substantial increase in engagement to convince investors it's worth 100 billion plus in CapEx.
Any of these OpenAIs, Anthropics, are they going to ever come public, do you think?
I mean, in the case of Anthropic, look, I know the numbers are getting big, but their gross margins at this point are probably better than OpenAI, which is doing too many things. I mean, the biggest risk I see for OpenAI is they feel they can get into any business, whether it's chip business, whether it's, obviously LLM is their turf, any type of applications. And that's where there's a possibility of a misstep. You can end up wasting time because you just don't have, the capability. Yeah, the focus. Whereas Anthropic is more focused.
Dumb question of the day. Yeah. Are these U.S. companies, Anthropic, OpenAI, are they based? Where are they?
Oh, good question.
Where are Silicon Valley.
They're in? Yeah. Okay, so I'm going to go out there, visit my son at Santa Clara.
Yeah.
They're in the backyard right there. I can go knock on the door of ChatGPT.
They're not incorporated in Dublin or, some island, the Cayman Islands?
Look, it's a nonprofit looking to have a profitable PBC, and so all that could happen. But look, at the end of the day, these LLMs are showing constant improvement, which is what's driving, companies like Microsoft to partner with Anthropic. They had that exclusive partnership with OpenAI, but now they are diversifying.
All right, Andy, I'm taking your word for it, dude. I'm riding on your
popular crowd in high school.
Yes,
all messing around with one another. That's what it comes down to.
Andy saying Bloomberg Intelligence. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got stocks slumping. This kind of renewed bout of volatility hitting Wall Street. Some tech weakness too. Amazon, Microsoft shares falling after a ratings downgrade. We have Amazon down more than 3%, Microsoft down more than 2.5%. And speaking of Microsoft, you've heard it. NVIDIA, Microsoft committing to invest. They're committing to invest up to a combined $15 billion in Anthropic. We look at NVIDIA shares, they're down nearly 2.5%. So we have the NASDAQ down about 1.5%, almost 313 points. The Dow down more than 1%, 514 points. And the S&P 500, that's falling nearly 1%. The two-year yield, 3.56%. That's down 4 basis points. The yield on the 10-year, 4.09%, and that's down 4 basis points. Over to company news. Apple's iPhone 17 series, it drove a 37% rise in monthly smartphone sales in China. That's according to Counterpoint Research. And the Financial Times reporting Elliott Management, it's built a stake in Barrick Mining worth at least $700 million. And in other news, Deputy White House Chief of Staff James Blair said the administration looking into ways to give millions of Americans $2,000 dividend checks from tariff revenue without congressional approval. An income threshold on who would receive them, though, hasn't been set yet. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, Lisa Mateo, with our Bloomberg Business Flash. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, and we're looking at a fourth day of losses, Paul, for the S&P 500. Longest slide since August, if it holds.
Okay, we got the S&P off about 0.9%, and once again, NASDAQ down 1.3%, leading the way.
It feels like the warning signs perhaps are starting to pile up a little bit here. It's been a couple weeks since we had the CEOs of Morgan Stanley and Goldman Sachs talk about this 10 to 15% pullback and how that was kind of in the cards. And now you're getting analysts downgrading Microsoft and Amazon to neutral, granted, but still downgrades are downgrades. So let's get a sense of what's going on here and bring in Carol Pepper. Carol is founder and CEO of Pepper International. Carol, how do you think about the turn, the shift in sentiment? It happened pretty quickly.
Yes, good morning. Well, I think it's inevitable. You know, you can't go up forever without a pause or a pullback. It just never happens. You have to look at your trend line over the long term, however, which will continue to be an upward trajectory, but there have to be pullbacks. It's just physics, you know, nothing goes up, only up all the time forever, not even rockets. They do come back down. I manage money for family offices and people generally with over $100 million in assets. And if you're an investor, you're just going to close your eyes and maybe go put your Christmas lights up rather than trying to time when to trade in and out of this. If you want to have fun day trading, there will be people buying the dip because, again, nothing fundamentally has changed on these big names. It's just the price has gotten perhaps a little ahead of the earnings reality, and that's where we are right now.
And Carol, I'm just looking at the VIX index. It's 24.8, up a couple of points here today. So suggesting that there is some anxiety, some volatility in the equity markets. But again, for your clients, just kind of keep focused on the long term.
Yes, I mean, again, if you think about if you had bought Amazon a few years ago and just closed your eyes, how much money you would have been making, a tremendous amount. It's going to be the same with NVIDIA. It's going to be the same with these AI stocks. Of course, they have to have some pullback. You also have the technical factor of rebalancing for year-end portfolios. So people that are institutional money managers are required to rebalance at least once a year. And around now, they're looking at their portfolios. There have been a lot of gains, and so they have to rebalance some of these positions. They have to sell. That's going to put a little bit of selling pressure on the market. We also don't have as much information on the jobs market yet as we would like because of, you know, the shutdown and the dearth of data, frankly. But that will resolve itself. I do think long term we have to keep an eye on jobs and, you know, AI replacing humans in terms of jobs, especially for entry-level workers, especially for middle-class workers. But we're not really there yet. I think that this AI run will have a lot longer to go. So it's not a time to panic and just think you should sell everything.
It's not a time to panic, but we're going to get a lot of data in a short amount of time. We got jobless claims at 3:10 a.m. today, 232,000 people filing for unemployment benefits for the week ended October 18th. I mean, that number is without any kind of context because there were no survey estimates. And we're going to continue to get data points coming out. At what point, Carol, do you start to trust the data and believe that this is something the Fed is paying attention to as well? Because we know that for a while, at least, the data is going to be kind of low quality. There weren't government workers around to collect the data and to sift through it. And so the thinking is, you know, it might be a while before we can look at it and really gauge what's going on within the economy.
That's correct. I mean, I think it could be months, actually, until we get back on our feet. And people in Washington realize we actually do need those data collectors. Those are not jobs to be cutting with with any kind of sledgehammer or anything like that. So yes, I believe that people will be sort of flying blind for a couple of months, but common sense tells us that we've seen a lot of job losses. Everybody's nervous. The whole tariff situation makes companies hesitant to hire. There's been a pullback of international companies coming into the U.S. International family offices have pulled back and are looking at other markets, not at the U.S., because the sentiment right now is that this is not a very business-friendly place for international companies. So that's affecting things as well. So I do think we're in for a bumpy period, but once we start signaling the rest of the world, hopefully we will, that we are open for business and we are friendly. We're not just trying to, extort money out of you to work in the United States, then we'll be in much better shape going forward. But the fundamentals of the companies are as strong as they were a month ago. Nothing has changed. It's just really, I believe, technical factors and the price is getting a little bit ahead of the valuation of these big companies because there's nowhere else to invest. People look at other types of companies and they're saying there's no real growth there, and it's true. The broader economy has been relatively stagnant. It's just a small number of these big high-tech names that are charging ahead because that's where the future is going to be.
How about international? It had its kind of renewed focus earlier in the year with all the concerns about the domestic market here with the tariffs. How do you think about some of these European markets which are selling off today as well?
Yeah, I mean, look, the U.S. Bitcoin is selling off. Anything related to risk sells off when people are fearful. Risk goes well when people are more confident and more excited, and right now they're fearful for good reasons. But I do think that, having some hedged European exposure is a good idea. The currency is something that's very hard to gauge right now. It depends on how people value what we've been doing. So I do think Europe is a great place. Tech defense stocks are a great place to hide. Defense stocks are doing extremely well. So there are sectors of the market in addition to tech where you can hide. Defense and aerospace being one of them. Those sectors are doing very well. But unfortunately for the stock side of life right now, it's pretty blah in the middle in the broader markets, and they're just these smaller sectors that are doing extremely well. So you have to kind of pick your spots, and that's hard for big institutional managers because they have to have the broader exposure. So they're not seeing the overwhelming returns that we're seeing in some of these very, very hot sectors. Their overall returns are sort of lackluster.
Good points. Carol, thank you so much. Carol Pepper is founder and CEO of Pepper International. And to Carol's points, just looking at the best performers in the S&P 500 today, all your defensive sectors, consumer staples, healthcare, but only up by a quarter to 0.5%. All right, let's bring in Mike McGlone. What do you call him? Miami Mike?
Miami Mike, sure.
Okay, because he's based in Florida, South Florida.
Miami.
And he looks at Bitcoin, and boy, there's a lot to look at today when you look at Bitcoin, because at one point it did dip below $90,000. And there's this concern that we are not in a spiral, but the excitement that drove all the cryptocurrencies higher has faded for now. And is this the beginning of another big, big dramatic pullback? Those drawdowns that in the past have gone, to 50% or 70%. Mike McGlone is here now with us. Mike, of course, is our senior commodity strategist of Bloomberg Intelligence. Mike, we saw a drawdown in Bitcoin of 55% in 2021, 77% in late 21 to late 2022. What does the pullback today look like to you?
Well, I appreciate you going there, Scarlett, because in 2018, I pointed out when Bitcoin was about 10,000, it was going to drop a zero. I was 70% right, 30% wrong because it went down to 3,000. I'm saying the same thing now. I think it can go back to 10,000. I mean, that includes everything going lower, unfortunately, means the stock market. That's just normal. The key difference is from back then, there was only a few thousand cryptocurrencies. Now there's multi-millions, and we've had that pile in from ETFs, the Trump administration kicking in and accelerating it, and it's classic peak bull market stuff I remember seeing in 1999. So in the previous segment, Paul mentioned the VIX at 25. You look at that VIX 200-day moving average, it's a bull flag. Right now it's averaging about 19.5, and the key fact is 120-day realized volatility in S&P 500 is around 10%. If we end the year there, not only is it half the VIX, but it'll be the lowest since 2017. So I'm expecting this Bitcoin plunge to trickle down to the stock market, volatility to pick up, maybe just get to its average around 16%, and the whole thing tilts lower into the year end. I don't know what stops it at this point.
Wow. Okay, interesting. Is there a technical support level in Bitcoin that we should keep our eye on? I mean, that $100,000 level kind of held there for a while, but we've obviously down here at 92,000 have blown past that.
Well, that's now key resistance, 100,000. It was my key inflection point starting in 2020 when I was calling for it. Yeah, I was early and I was wrong for a little while, but the key support was right now is around 90. It's stuck between 90 and 100,000. I think eventually it breaks down and heads towards 50. On an annual chart, 50 is normal. The key thing is you get the sharpest rallies in bear markets. The 200-day moving average has rolled over. MicroStrategy's 200-day moving average rolled over in August. And so maybe we'll get a little bounce, maybe get to 100,000, but I think it's all about responsive sellers. And the key thing to point out is the Bloomberg Galaxy Crypto Index, as of yesterday, was down 14% on the year after rallying about a third. If the stock market just follows that, which I think it might, all the dominoes trickle lower. And the key indication for me for all this is gold grabbing alpha this year. And when gold's alpha, something's wrong.
I'm glad you bring up the Bloomberg Galaxy Crypto Index because Bitcoin, we know, gave up its gain for 2025, but it hasn't really dipped into the red. Mike, how much does leverage play into all of this? We know that some traders borrowed money to boost the size of their positions. And so, you know, when they need to meet margin calls, there might be a lot of forced selling. There's massive unwinds.
Actually, you nailed it, Scarlett. You don't really see the leverage until the tide goes out, as Mr. Buffett said. And October 10th marked the first day we saw the leverage in the market. We also noted that one of the biggest holders of cryptocurrencies and the dependent is the Trump administration officials. A lot of traditional crypto people did not like that. So what we're finding out right now, this is a very much leverage-driven market, a lot of algo, but it's normal that happens in a market that goes up a lot, and now we're getting the purge. The key thing is it's the time of year you usually hit stops if you've had profits, and certainly if you get losses, and now I'm afraid it's going to accelerate into year end. We don't have a lot of days left. Volatility is just starting to pick up, and the stock market might be just starting to roll over. So happy Thanksgiving. I hope it does better, but I'm afraid things are going to be more like, yeah, may as well preserve whatever profits you got left.
Looking at the relative strength index for Bitcoin, it's sitting right at 30.7. Historically, it's oversold at 30. It's overbought at 70. Just throwing it out there, folks. RSI function, very good. Mike McGlone covers all the commodity stuff, including Bitcoin, for Bloomberg Intelligence. We'll talk pork bellies next time with Mike. He's down there in Miami
It's the
Beach.
eternal promise.
Yes,
pork bellies.
Exactly. Pork bellies.
Next
Mr.
time.
Valentine has set the price here. So for Bitcoin, it is down yet again. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, a sell-off in the world's largest tech companies driving stocks toward their longest slide since August. NASDAQ leading the losses, down more than 1.5%, 393 points. The S&P 500 down more than 1%, 80 points. And the Dow falling more than 1%, 603 points. What I want to do is go to the IMAP features or a terminal. I'm going to click through this and see if it happens in real time. It's dangerous, but we're going for it. 11 major indices groups right now. Consumer discretionary, biggest drag. Then we click through, it goes to broadline retail, and at the top, yeah, it's Amazon. It's down nearly 3.5%. Over to the yield space, we have the 2-year, 3.55%. That's down 5 basis points. The yield on the 10-year, 4.09%. That's down about 4 basis points. The Bloomberg Dollar Spot Index weakening by about 0.1%. In company news, Pfizer, they have kicked off a U.S. dollar corporate bond offering. It's going to help fund its acquisition of Metsera. Sources saying it plans to sell debt in as many as 7 parts. And Kroger said it's going to close some delivery fulfillment centers, expand partnerships with delivery companies. And that effort, well, it's going to result in an impairment and related charges of about $2.6 billion in its fiscal third quarter. And one stock on the move, it's Amer Sports. Paul knows them for ski wear. I know them for running shoes. The Louisville Slugger, my daughter's favorite bat. Arc'teryx Apparel, also Wilson tennis rackets. So their shares up about 7.5%, raised its full year guidance for the 3rd time this year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. Home Depot, stock's down about 4% today. They reported some numbers. Came in a little bit disappointing. They cut their forecast on weak remodeling demand. So I'll have to check in with John Tucker to see if that is in fact the case, because he is like the do-it-yourself kind of guy.
Really? What has he done in his house?
It does everything, and like big jobs that take a long time. Like he does the remodel in the bathroom, and he does plumbing. He does all this stuff.
Oh, so
he
he's
complains
like Home
about
Depot's
lumber, that he can't get good quality lumber. He's got to go to. He's got a guy that he
It's
goes
like their
to.
model customer.
Yes, exactly right. He's the guy. So let's check in with that. Drew Redding, he covers all the home builders. He covers all the stores that cater to the home builders, like Home Depot. Drew, thanks so much for joining us here. What did Home Depot say about their customers?
So they came in with the same store sales growth of about 0.2%, which missed consensus. This quarter, that was largely due to weather. Last year, they had pretty significant gains from storms. This year, that wasn't replicated. So that had about an 80 basis point impact on the comp. And that's important because if you back that out, the underlying business has been relatively stable with about a 1% comp. So underlying trends still pretty stable. I think the bigger problem is that last quarter they said that they had expected to see an acceleration in demand in the second half, and that hasn't materialized. We have gotten the pullback in rates, but that hasn't translated into better housing activity.
Yeah, and the problem there is that customers are deferring their large purchases. Demand has remained steady, but it's definitely not picking up at the same time. So when people are undertaking some kind of home renovation projects, they're just doing it at a smaller scale. Does Home Depot still benefit from those customers?
Sure, and that's what's driving a lot of the demand for the home improvement retailers. It's smaller ticket projects, maintenance-oriented type stuff, which is a huge part of their business. But to your point, to really see, I guess, the turn in growth, what you want to see is a resurgence in those big ticket categories. Now, big ticket spending was up 2.3% in the quarter, but that's more reflective of single item purchases. So think about things like appliances, power tools, gypsum. They also are taking share in the larger pro market, which is aiding the mix a little bit, but it really doesn't reflect an increase, as you mentioned, in big ticket projects such as kitchen and bath remodels or flooring projects. And that's really what we want to see turn, and will likely drive the next leg of growth next year.
So I ask about that big ticket items versus smaller projects because I wonder what this means for competitor Lowe's. Lowe's shares are down today, but only by about 1.3% versus Home Depot's 4%. And I wonder how much you can extrapolate from Home Depot to Lowe's, which will be reporting on the 19th before the market opens. So that is tomorrow morning.
Yeah, so for Lowe's, we're expecting to hear pretty similar commentary that we heard from Home Depot today. They're operating in the same environment with a weak housing backdrop, more cautious consumers. The main difference between the two businesses would be Home Depot's greater exposure to the professional contractor, which is 50% or more of sales, compared to Lowe's at about 30%. So we have seen on a relative basis more weakness among the DIY category, with particular strength in pro. So really that would be the only difference. But I think by and large, the sentiment is going to be that consumers are taking on more caution because they're increasingly worried about the outlook for the economy, the outlook for their job, and that's causing them to defer spending on discretionary categories.
How about tariffs? What are the companies saying about tariffs at Lowe's and Home Depot, like tariffs on wood, hammers, I guess? I don't know.
Sure. So not a whole lot of discussion this quarter. I think, given Home Depot and Lowe's scale, I think they're relatively well positioned to kind of navigate this environment with their suppliers. That being said, they're certainly not entirely immune. They kind of shifted their stance on their pricing strategy earlier in the year. They said that they wouldn't be raising prices, but as the situation in the landscape continued to evolve, they said they would be raising prices selectively. We did see that, I think, a little bit in the average ticket this quarter, the growth in that. But we don't really know at this point what the demand impact has been. There was a lot of noise in the quarter, as I mentioned, with the weather. So tariffs will certainly be something to watch, particularly since we just heard some new tariffs being introduced on lumber imports and as well as kitchen and bath cabinets, which increase significantly as we get into next year. So not a huge impact at this point, but certainly something to keep an eye on.
Okay, definitely. I'm curious, how much does Home Depot and Lowe's mirror what's happening in the housing market? Because when it comes to housing, of course, the affordability crisis is, the big thing that's keeping it frozen. Mortgage rates have come down, but they're still really elevated compared to where they were during the pandemic. Inflation is capping spending on big projects, and overall home prices remain really, really high. So people just can't move, and they're stuck in place, and they don't necessarily want to spend more than they can afford.
No, it's a great point. And housing is extremely important to Home Depot and Lowe's, as you would expect. The housing market has been stagnant. We're running about a 4 million annualized sales pace. That's about 25% below normalized levels. We know that when people list a home for sale or when they purchase a new home, there tends to be increased spending. Movers tend to spend a lot more than people who are already in their house. So they're certainly losing that piece of the business. I think one of the interesting things to keep an eye on looking forward is home prices. Home Depot and Lowe's have historically told us that that's probably the most important aspect of the housing market to them. And, as we well know, since 2020, home prices are up 50% or more, depending on the market. So owners have built up a lot of equity. But what we're starting to see now is prices rise at a much slower pace. And in a lot of key housing markets across the country, we're actually seeing year-over-year declines in home prices. So when you start to get declining home prices, that hits at that confidence aspect. If you think the value of your property is falling, you're less inclined to invest. So it's something they called out. It's not necessarily something we've seen at the national level, but if you look at particular markets around the country, it's something that's starting to happen.
All right, Drew Redding, thanks so much. Appreciate that. Drew Redding covers all the home builders and home building companies like Lowe's and Home Depot. Home Depot, a little bit weaker numbers today, a little bit weaker guidance, stock taking it on. And Chin, a little bit here today, off about 3 to 4%. We just redid our bathrooms. And I didn't feel like it was crazy. I don't know.
Did you go to Home Depot or Lowe's and get the stuff yourself, or
no? We
outsourced it.
We had a guy.
Okay. Yeah.
And I just pointed, or just pointed to things. I'll take that, and come over in a couple of days and
right. I get decision paralysis with any kind of home renovation project.
Yes.
There's too many choices. There's too many colors. There's too many options, and I just want someone to narrow it down to 2 things.
Exactly. So back in the day, we built a house. And
God bless you.
Yeah, that's
a lot of work, a lot of decision making.
Yeah, my wife did everything, 110% of everything.
So you came home and you're like, oh, okay,
there
great.
There it is, exactly. I mean, but that's for some serious people. But you go into Home Depot, people are buying some serious stuff, coming up with like lumber, like tons of lumber, all kinds of equipment. I think John Tucker, when I see these people, I say, what are
and
they
then
doing?
I'm also surprised when they have things like candy bars at the checkout counter.
Exactly. Yeah, I need a 2x4 and a candy bar. So there you go. Looking at the markets here, we got a little bit of people concerned out there in this market here. Got the S&P off 1.1% and the NASDAQ off 1.7%. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here on our Bloomberg Interactive Broker, streaming live on YouTube as well. Here we got a sell-off in the markets. I'll look at the 10-year Treasury. It's off 4 basis points. We're back let's call it 4.1%. We're kind of in that trading range we've been in for quite some time. And I blame all of that on Ira Jersey, Chief U.S. Interest Rate Strategist. He's in charge of the U.S. Treasury market, in my mind. He is a Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, we're starting to get some economic data here. I'm not sure how good the data is. I'm not sure how much we should pay attention to it. How is your market going to be processing this data we're going to get over the next several days?
Yeah, I mean, the market, I think, is going to be a little bit confused. It's going to discount some of the data, particularly if it's older, right? So when we start to get September numbers, like Thursday, we get the payroll report for September. That data was collected, right? That's why it's one of the quickest big reports that's going to be out, because they already had it. They just had to collate it, tabulate it, and release it, right? So, you know, when we start getting October data, I think people are going to be a little bit more skeptical about the data collection and whether or not it's relevant. So we're going to continue to use some of this alternative data that comes out, things like the ISM surveys and some of the, you know, the ADP reports, for example, that will wind up probably driving some of the narrative a little bit more than the official reports, at least for now.
So when we do get random reports like jobless claims coming out at 3:10 a.m., this is something that the market will just kind of look past. What does the alternative sources of data show right now? What kind of picture is it painting of the labor market?
Yeah, so we published another report actually just this morning looking at some of an alternative job indicator that I've been using for the last couple of months since we haven't gotten the official numbers, and that's showing that continued weakness in the labor market. You even heard Fed Governor Waller mention that in a speech yesterday, just talking about or maybe that was this morning, I don't know. Time is a flat circle these days with everything going on. But but even he mentioned that, look, the labor market's relatively weak. So that's been moving the bond market reasonably quickly, where we went from only pricing in about a 1/3 chance of a cut in December to now a 50-50 odds again. And that was in part on Chris Waller and, you know, in part because of the relatively weak equity market, which is the reason you're seeing this curve steepening where you have 2-year yields lower than 10-year yields on the day.
Ira, what's the market discounting here as to kind of the I don't know, the cadence of rate cuts going forward here from this Federal Reserve?
Yeah, so the market's saying that the Fed's going to cut in either December or January, but not both, at least not at the moment, and then another 2 cuts after that by the middle of next year. You know, I think the question becomes, you know, does some of those cuts get pulled forward because the data is ultimately weak? Which again, until we start to get the November data, I don't think anyone's really going to believe the numbers that come out the next 2 weeks. So tactically, I think it's very difficult to take a strong position one way or the other. But you know, over time, we're going to get a little bit more clarity as to the data trends, and that's going to ultimately drive, you know, the expectations for Fed cuts, and importantly, you know, where 10-year yields might go. Now, we do think that 10-year yields will break down below 4% again at some point over the next couple of months. Probably won't stay there, though, because I do think that we're going to price ultimately for a V-shaped recovery where the Federal Reserve cuts a little bit more than is currently priced, and then the market and economy wind up doing better in, say, 2027.
What does this mean for the FOMC meeting on December 10th when they normally release their summary of economic projections? This is something that everyone pays a lot of attention to, but you know, they were also flying blind just as investors were. So how much value can that SEP really offer at this point?
Yeah, you'll see incremental changes because, you know, while we might not get the third quarter GDP data, we'll have some of the other inputs to that. So we're likely to get things like retail sales and industrial production. We'll certainly have all of the September numbers out of the way, right? And I think that that's one of the more important things. So we're basically going to be a month-ish behind for a few more weeks. I think from the Fed's perspective, as long as they have an idea about what the kind of the medium-term trends are, they'll be happy with making forecasts around that with the data that they have. And again, I do suspect that there'll be some members, right, and we kind of know who they are, right, the Stephen Mirans, the Chris Wallers, who are going to probably maybe discount and say that we're expecting a little bit more weakness in the labor market and growth next year, and that's one of the reasons why they think we should be cutting interest rates.
All right, Ira, thank you so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us live there from Princeton, New Jersey. Kind of a controlled sell-off in the marketplace, I would say, here today.
It's orderly.
I'm not going to go crazy.
Yeah, no, it's orderly, even though you have some pretty steep losses, at least in the tech space. The NASDAQ off 1.8%. And for the S&P 500, if you're keeping track, this is the fourth day of losses, the longest slide since August.
Yep, looking at the volume being traded so far today. In the S&P 500, it's about 3% more than the 30-day average. But in NASDAQ, it's about 30% less than the trailing 30-day average. So not a lot of, I guess, conviction out there as it relates to this.
We do have a big catalyst coming up tomorrow after the market closes.
We sure do, with NVIDIA reporting numbers. Although some people have been pointing out to me it's less of an issue than it has been in the past. Okay, that the NVIDIA effect is not as big as it had been in the past.
Not as pronounced?
Yes, so we kind of know what the story is now as it relates to AI.
I could see that being the case unless some terrible news comes out, and then you'll see it right back in the spotlight.
That's a good point. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments. Again, sell off with the S&P down 84 points. That's 1.25%. Dow off 630 points. NASDAQ off 405 points. It's 1.7%. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
It is 11 a.m. here on Wall Street, and this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are live at our Bloomberg Interactive Broker Studio in Midtown Manhattan. We have a jam-packed second hour of Bloomberg Intelligence for you, with the president set to host Saudi Arabia's Crown Prince, with an eye towards signing some deals when it comes to defense and tech. So we'll bring in Nick Wadhams, Bloomberg News National Security Team Leader, to set the scene for us. Matt Hendrickson of Bloomberg Intelligence, Senior MedTech Analyst, will be joining us to discuss Medtronic's latest results. It's a solid second quarter and what that means for the path going forward. And Carol Schleif, the Chief Market Strategist at BMO Private Wealth, will give us her take on the declines we're seeing in the market today, the S&P lower for a fourth straight day. Lindsay Dutch, Bloomberg Intelligence Consumer Hardline Senior Analyst, talking about toy makers as we enter this holiday shopping season, what tariffs mean for the lineups of toys that these companies have put together for consumers. But first, let's bring in Charlie Pellet for our Bloomberg Business Flash.
Thank you very much. Just about the lows of the session on this Tuesday morning, and this Bloomberg Business Flash is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn more about their consultative support and technology. We got to get right to the numbers. Another day of steep losses on Wall Street. S&P on track for its longest slide since August. A 6-month rally showing signs of cracking. S&P right now down 95, drop there of 1.4%. The industrials, Dow Industrials, also down 1.4%, now down by 655 points at 45,934 on the Dow. NASDAQ down 2% right now. The NASDAQ 100 index down 1.9%, and the Russell 2000 index lower by 0.6%. The Bloomberg Mag 7 index ahead of NVIDIA earnings. We've got the Mag 7 index down by 2.6%. 10-year 4.10%, with the 2-year currently yielding 3.55%. Gold little changed on the day, up $2 the ounce to $4,046. West Texas Intermediate crude down 0.1%, 59.84 a barrel, and Bitcoin now at 92,649 on Bitcoin. Bottom line, it is a down day for the Dow, the S&P, and NASDAQ. As for the market backdrop, Carol Pepper is the CEO of Pepper International. She was a guest last hour right here on Bloomberg Intelligence.
I think it's inevitable. You know, you can't go up forever without a pause or a pullback. It just never happens. You have to look at your trend line over the long term, however, which will continue to be an upward trajectory, but there have to be pullbacks. It's just physics, you know, nothing goes up, only up all the time forever, not even rockets. They do come back down.
Carol Pepper of Pepper International, interviewed right here on Bloomberg Intelligence. A worldwide outage at the network of cybersecurity firm Cloudflare appears to be resolving after several hours of disruption this morning. Cloudflare shares today, they are down now by 3.4%. They use the ticker NET. Microsoft and NVIDIA committing to invest up to a combined $15 billion in Anthropic. Microsoft shares down 3.9%. NVIDIA down by 3.2%. So again, recapping steep losses for the U.S. equity market. The Dow, the S&P, NASDAQ all declining. S&P down 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, let's take a look at some of the tech stocks. I mean, of course, we know information technology is the worst performing sector in the S&P 500. We're really seeing a broad-based sell-off in that space particularly. But I'm looking at shares of Microsoft, that's MSFT, and Amazon, AMZN, both underperforming the Mag 7 group. And this is after Rothschild & Co., an analyst over there, downgraded both of these names for the first time since initiating coverage back in June of 2022. They're essentially talking about the fact that the industry is like, trust us, Gen AI is just like early cloud 1.0, but it seems that this is just really echoing those sentiments about a potential AI bubble and whether or not a lot of these companies are overstating what expectations should be versus what they will actually be able to deliver. So you are seeing some pressure on those two stocks, in particular shares of Microsoft earlier hitting their lowest level since July.
And of course, retail earnings are now front and center, and you're looking at Home Depot.
Also looking at Home Depot, we do see shares of Home Depot lower, down by about 3.6%. That's ticker HD, but it was earlier down as much as 5%. That's the most and the lowest level since April here. This is after the company cut its full year earnings guidance. We really are seeing, of course, some data that does support the fact that the labor market is doing okay, but it does seem as though in this particular space, when we think about home improvement, the consumer is pressured here. We're not seeing as many people buying those big ticket items that they were before at Home Depot. Tariff concerns still, of course, in focus. And just generally, we're seeing a housing market that still remains frozen. So you are seeing all these things and more weighing on results out of Home Depot.
Cloudflare.
Yes, Cloudflare, this is ticker NET. We're seeing shares lower by about 2.9%, earlier dropping for their biggest drop since July. And of course, we know that this global outage that we did see on the network is now resolving. That's according to reports here. But this was, of course, weighing on shares of Cloudflare. Of course, we did see this affecting sites like ChatGPT, X. I mean, I was on Twitter. It wasn't loading anything. So it seems as though we were seeing some weakness in the stock based off of the fact that there was some unclarity as to what this actually was due from.
All right, Norma Linda, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Way back in the day at the Chase Manhattan Bank credit training program, exhaustive program. Mm-hmm. At the end of it, you had to do like a big project, pick a company and do like a detailed credit report on it. My company was Medtronic.
The device maker, the medical device maker.
Exactly right. So I knocked him dead, by the way. It was a killer. Anywho, the stock's up 4% today. Some good numbers, 52-week high. It's good to be in the medical device business, I guess. I don't know. So we'll check it out. Matt Henriksen joins us here. He's senior medtech analyst. He's based in Jersey, but you're in the big town today.
Yeah, commute in every day.
You come in every day?
Yeah.
Nice. Good for you. That's what I'm talking about.
Too.
What?
Oh, yeah.
You drive to where?
Parking lot right out there.
Dude, and you do the congestion pricing?
I have to. Yeah.
Where do you drive from?
Well, Ridgewood. So
we have trains, dude.
I know, but the Secaucus Junction is always a mess.
Oh my God, what a knucklehead. All right. Matt, thanks
You
for
got
joining us
props
here.
from Paul
I have some
eventually.
serious problems with your commuting strategy. Talk to us about Medtronic. What's going on there?
Well, let's take a step back 12 months ago. They had a lot of promising products in the pipeline.
Yep.
The question was execution. And what we're seeing the last few quarters is you're starting to see some of that execution. So when they raised their organic revenue growth guidance by 50 basis points today to 5.5%, that was driven a lot by what they call as their cardiac ablation segment. This is new technology that's being used to treat atrial fibrillation. That segment alone grew 71% year over year. So having that as off a $1 billion revenue run rate is what's driving that kind of growth and is what is expecting to accelerate that growth going into fiscal 2027.
Wait, 71% is going to get bigger?
Yes, they actually said that, and we actually, in our follow-up questions with them, we asked, just to confirm, are you going to accelerate that 71% growth in their fiscal third quarter, which is the one coming up? And they said yes, and it's basically the adoption of, without getting too technical, it's called pulse field ablation, and it's a new way of ablating the heart to treat atrial fibrillation.
Does it have a main competitor in this space?
Yeah, so it's kind of turned into a duopoly right now between Medtronic and Boston Scientific. The ticker is BSX. And what you saw this quarter is Boston Scientific was in first, and their growth in the quarter was 60%. So Medtronic is highlighting that it was actually growing faster in the quarter than Boston, its main competitor, was.
How's these medical device companies like Medtronic, and how are they dealing with this administration and, I don't know, tariffs, regulations? What's the backdrop for this sector of the healthcare space?
Yeah, so if you look at broadly, it should be more insulated than some of the other kind of import-export type of businesses. Procedure volumes remain steady. Devices that are used in the U.S. are mostly built in the U.S. There's some caveats here and there. So it's overall relative to the broader market minimal. Medtronic highlighted that the worst quarter is going to be coming up their fiscal third quarter, which ends in January. A little bit worse in the fourth quarter that ends in April, and then they haven't gotten too much into fiscal 2027, but they said it should be incremental. Overall, it should be about $180 million to the overall net income. But that's talking about a company that's making $30 billion plus in revenue per year.
What I noticed as well is that Medtronic has, as one of its biggest investors, Elliott Investment Management, the activist investors. And yeah, they've become one of the biggest shareholders earlier this year. And they've made some changes, adding some folks to its board as independent directors, presumably ones that Elliott finds favorable. What does this mean for that relationship? Is this an antagonistic relationship, or is it something that's a little bit friendlier?
I would say more it's a friendlier type of relationship. And I think it goes back to what I was talking about 12 months ago when we were looking at a company that had all these promising developments in the pipeline, and they just couldn't get that revenue growth from the 4 to 5% up to that 5 to 6% where we're seeing now. Now, the question is how much of that is behind the scenes Elliott is making a push, or just the fact that the management team just needed that extra time to get that initial acceleration of the growth just internally. But yeah, they came in, I mean, honestly, at the right time with kind of when it was down, more than 20%.
Yeah, I'm not used to seeing a potentially friendly relationship between Elliott and the target companies it targets.
Yeah, exactly. Good point. But maybe it's working in this particular case. Matt, thanks so much for joining us. Appreciate it. Matt Henriksen, he's a senior medtech analyst, Bloomberg Intelligence. He of the questionable commuting strategy. We'll discuss that at a little later.
What would you do if you were him?
Oh, train, dude. I mean, I live in New Jersey for that reason only.
Is that New Jersey Transit, or is that another one?
Yeah, but he lives in Ridgewood, which is beat for no rail service. Good. You got to You got to go to Secaucus.
You're kind of almost supporting my thesis there.
Yeah, but you don't come into the city. I mean, there's a river
Paul's
there for a
problem
reason.
is with the driving into Midtown.
Yes, you go to Secaucus, you hop on a train, you're in, and then you're done.
Drive to Secaucus.
Yeah.
No, but
Or I do my 5:30 commute too.
Yes, he does. He comes in early, so it doesn't matter. Matt, thanks so much for joining us. Appreciate that. Let's get back down to Washington, D.C. Apparently, President Trump is hosting Saudi leader here today with an eye towards defense deals, tech deals, that kind of stuff. Nick Wadhams joins us. He's Bloomberg News national team leader. Nick, what are you expecting from President Trump and the Saudi leader today?
Well, there are two things we're really on the lookout for. One is a top-line figure. So when President Trump visited Saudi Arabia shortly after he took office for the second time, he came away touting $600 billion in deals with Saudi Arabia. So we're going to be looking for whether they're adding to that number, but also more crucially, whether they're actually going to put real meat on the bone. So a lot of promises that came out of that, not a lot of indication that there have actually been a great deal of deliveries. So, successive administrations, many administrations like to go into meetings like this and tout all the success, the agreements, the deals, and the real question really is around follow-up. You see that very specifically with Trump's announcement yesterday that he would approve the sale of F-35 fighter jets to Saudi Arabia. That would be a multi-billion-dollar contract if it goes ahead, but, would be really years in the making and something that could get tangled up in congressional and regulatory and all sorts of other conversations. So a real challenge there. So I would say, this is a meeting where they want to boost ties, show the strength of U.S.-Saudi ties, but what we'll really be looking for is follow-up and how many of those promises actually become reality.
You mentioned some of the areas in which it might get bogged down. Mike Pence was on Bloomberg Television in London, and he spoke with Arkriti Gupta, saying that he was concerned about the sale of these F-35 jets without concrete guarantees that the technology embedded in this aircraft would be kept secure. Is he giving voice to something that members of Congress are likely to push back on?
Well, yes. I mean, this is a very big issue. So you had a similar problem with the United Arab Emirates. Late in his first term, President Trump approved the sale of what was expected to be about a $10 billion contract with the UAE to sell them F-35s. They overcame objections from Israel. But one of the key issues was that a lot of UAE's network infrastructure is made by Huawei. So the fear was if you have the F-35 operating in that space, I mean, these things are basically flying computers. And, there's all sorts of technology in them that's extremely sensitive. And the fear was that if you have a Huawei network and you have these flying computers operating around those networks and potentially linking up to those networks, that China could exfiltrate a lot of that technology. So China also has a partnership with Saudi Arabia, so there is a concern that that technology could go the same way. Now, it should be said, UAE did rip out some of its Huawei network, specifically in response to U.S. concerns, but that deal still foundered because the U.S. wanted to put limits on how the UAE used those jets and basically wanted them to seek permission every time they used them. So a big question is whether Saudi Arabia is going to face the same questions and demand for restrictions from the Trump administration.
If they need F-35s and other stuff from us, what do we need from the Saudis anymore? I mean, we're a net exporter of oil these days, so what do we need them for?
Well, that's a great question, and a question that a lot of us have been asking. I mean, yes, there is the oil issue, regardless of the fact that the U.S. is a net exporter, obviously, given Saudi Arabia's massive sway over the global oil market. I mean, we're talking affordability a lot now, so President Trump really wants to make sure there are no spikes, no unforeseen spikes. They would love to have that cushion in the market, as much supply as they can get from Saudi Arabia. There's also the issue of normalization with Israel. President Trump has billed himself as the peace president. He's touted the ceasefire between Israel and Hamas, and a key step as part of his vision for broader peace in the Middle East would be normalized ties between Saudi Arabia and Israel. Before the October 7th attack, there was some movement in that direction, but right now we are not expecting out of this meeting for Saudi Arabia to give any indication that it's willing to normalize ties or recognize Israel's right to exist. That's considered a long way off because they really want guarantees for a Palestinian state. So Trump is still going to press for that. That is something he sees as crucial, and he believes Saudi Arabia is key to keeping that peace momentum alive for the region.
Nick, really appreciate your joining us. Nick Wadhams is Bloomberg News national security team leader on the president meeting with Saudi Arabia's crown prince. Getting ready to sign some deals today. And we're looking at a live shot here outside the White House, and you can see there's a red carpet laid out. There's going to be a lot of pomp and circumstance in this arrival from Mohammed bin Salman, MBS, as we often call him. There's going to be a state dinner on Tuesday night.
Yep.
Elon Musk is on the invite list. Yeah, Tiger Woods is on the list as well. Yeah.
Excellent.
And an investment forum tomorrow featuring senior executives from the tech industry, the energy industry.
Okay, awesome.
So a lot of high-level guests will be in Washington in the coming days here as the Washington, D.C. group plays host to MBS of Saudi Arabia.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. Down day for the Dow, the S&P, and NASDAQ. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your cloud bill in half if you move to Oracle Cloud Infrastructure. for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. We are off session highs, still on track, though, for another losing day for the U.S. equity market. S&P, by the way, on track for its longest slide since August. Right now, we got the S&P, again, off session lows, but still down 59, still down 0.9%. Dow Industrials down 1.1% right now, with the NASDAQ Composite Index down by 1.3%, and the NASDAQ 100 Index also down 1.3%. The Mag 7 Index ahead of NVIDIA earnings. Right now, we've got that index down 1.6%. NVIDIA shares, by the way, down 2.3%. 10-year, 4.11%, with the 2-year, 3.57%. Gold up 0.3% right now, 4,056. West Texas Intermediate crude up 0.3, 60.09 a barrel. And Bitcoin right now surging by 1.7%, 93,428 on Bitcoin. Recapping, S&P down 0.9%. I'm Charlie Pellet. That is our Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, for our YouTube audience, we're looking at some images of the White House. President Trump is welcoming the Saudi Crown Prince to the White House. So President Trump is in front of the White House there, standing on a red carpet. We've got some horses walking by with the American flag, and soon the Crown Prince of Saudi Arabia will join, and they'll have meetings today.
There's a lot of pomp and circumstance, which is, really stands in contrast to some of the other leaders who do arrive at the White House. Usually it's a wave and then they go inside.
Yeah, but this is, I think, a special relationship for President Trump. And so pulling out all the stops. So we'll give you some reporting there. The car pulls up right now with the Saudi Crown Prince. We could have a U.S. Marine opening the door there. That's pretty cool to have them.
Yeah, and they're going to have a state dinner this evening with a pretty high-profile guest list.
Yep.
Elon Musk, Tiger Woods, an investment forum tomorrow featuring senior executives from the tech world, from the energy world. The two are greeting each other.
Yep. At the White House, very good. We
taking some pictures.
We do some good stuff when people come to town. In
we don't
Washington.
roll out the red carpet literally, do we?
Yeah, I don't know. We did this case. All right, let's get back to these markets here because we do have a sell-off. Although we are off the lows of the day. Carol Schleif joins us. She's the Chief Investment Officer from BMO Family Office there. Carol, we see kind of, as Charlie Pellet was just reporting, one of the longest sell-offs since the summer here. What do you make of periods like this here? What's the discussion you're having with your clients?
I think the discussion is it's all pretty normal in the context of everything we wrote last week. We pulled out a lot of those classic long-term charts, talking to people about the fact that pullbacks are normal, and especially in uptrending markets. And let's not forget that we came out of the spooky season at all-time highs on all three indexes, having marched up pretty steadily from the April lows on through. And so pullback's pretty normal. I know a lot of people, you end up, when you open that worry closet, a lot of things that have been sort of floating around in there, they all get piled on the floor at the same time, and everyone's sorting through those, whether it's AI or employment or government statistics, all this stuff coming off. And so it's important just to take a collective deep breath and view this as normal in an overall, still a solidly underpinned economic environment.
How does this set us up for the rest of the year? We still have, I feel like, 5-6 weeks left in 2025. Did I get my math right? At least 5 weeks. We've seen double-digit gains for the S&P 500 and the NASDAQ. And given that there's going to be a lot of noise coming out in the next couple of weeks with the release of long-delayed economic data, the uncertainty over whether the Federal Reserve will cut rates in December or in January. I mean, are a lot of people just kind of content to sit back and say, I'm out until the new year?
Yeah, I think there's some cash that's on the sideline, especially as people move into year-end and the beginning of next year, having some of that cash around. There's some people that took some gains. We've talked to people all through the year about strategic rebalancing through the year as it goes through. So I think a piece depends on that, but it's always important to revert to the fundamentals. And we just came off a really solid earnings season with 10 of 11 sectors showing earnings growth and very solid double-digit growth for a lot of them, and you had solid top-line growth. One of the things that people aren't paying attention to is that in aggregate, you had 8% top-line growth, 12% bottom-line growth, which means those companies are really cranking down on margins and paying attention to that. if we get even a bit stronger than expected revenue growth coming out of this fourth quarter and into the first part of next year, that drops in a magnified fashion to that bottom line. And so you've got a lot of the economy positioning for that. So you've got people who have cash on the sidelines are looking for opportunities to put it back in. They may not rush into this year and sort of pull back, trying to see where it levels out. But we're teed up for a pretty decent 2026, even whether the Fed cuts in December, which we do think they will, whether they cut in December or January, it's still directionally towards a cut. We're watching employment because you do have some mounting squishiness at the sides in employment. But overall, economically, things are still in pretty reasonable shape.
Earnings, Carol, came in, I think, very strong for the third quarter, as they did for the second quarter here. Are the earnings power in this market enough to support this market here?
Well, we need to see the market broaden out. We need to see the market broaden out. That's one of the things. You saw some fits and starts of that, and then everyone jumped back on the AI bandwagon, and we narrowed it up again. But you need to see that broadening. But there are interesting things going on in a whole variety of segments. Plus, you've also got market activity going on in terms of M&A. We'll have IPOs, which were sidelined during the government shutdown. We'll have IPOs start coming through, whether or not they hit year end or they all get teed up for the first quarter of next year. So you've got a lot of support underneath and a lot of interesting things going on in other industries, because it's not just the data center build, it's also the energy to power those data centers. It's innovation going on and M&A going on in healthcare, in entertainment, and a lot of other places.
All right, good stuff. Carol, really appreciate your joining us today. Carol Schleif, she is the CIO, Chief Investment Officer of BMO Family Office, joining us live from Minneapolis. Let's shift gears a little bit and talk about how the toy industry is getting ready for this holiday shopping season. We know that a lot of the companies brought in goods before the tariffs took effect to avoid having to pay up on those tariffs. So where does that leave the toy industry for consumers? Let's bring in Lindsay Dutch. Lindsay is Bloomberg Intelligence's consumer hardline senior analyst and has a recent report out on how there's no playtime for toy makers. Tariffs, tired lineups, cloud holidays. And Lindsay, what's really interesting in your report is you make this distinction between kids' toys and adult toys, and kids' toys being kind of a not so great environment, but adult toys being kind of a driver.
Adult toys?
I know. Please clarify what you mean by adult toys.
Yes. So the kidult trend, which adults, 18 plus playing with toys, and the big areas there are sort of collectibles. That can be anything from a Hot Wheels car, a Barbie. Trading cards are also really big with adults, and building sets, those black box,
very innocent toys.
18 plus Legos. So that the demand for those types of products has really been driving growth for the toy industry this year. Toy sales are up 7% through the third quarter, and that's actually a 3-year best for the industry. But when we look at sort of innovation and what's coming out for kids, which is really what everyone is thinking about heading into the holiday season, those holiday toy lists, they looked kind of lackluster. There wasn't a lot of newness there. And a lot of that, I think, is driven, by two things. One, is these big manufacturers sort of leaning into that kidult trend, which had been a budding growth area for some time now, and also sort of a weaker entertainment slate. So there's less to build off of excitement for kids.
So how about tariffs? How is that all playing out here? Presumably the Mattels of the world and the Hasbros, they have a strategy for dealing with tariffs. What is that strategy?
Yeah, so Scarlett sort of mentioned that some retailers chose to, pull forward, some of their imports, with the tariff announcements. The toy makers sort of saw, the retailers that they work with do the opposite. So what happened is normally they are, shipping from their warehouses, overseas, to retailers like a Walmart or a Target in the second quarter, very early third quarter, when you're thinking about that holiday inventory. Instead, this year, there was a drastic pullback. It basically fell into the fourth quarter, so significantly later than usual. And retailers like a Walmart and Target decided to import domestically. So the toy makers had to do the importing themselves and sort of house it here in the U.S. to be ready to ship. and then those shipments really didn't go out into the retailers until early fourth quarter. So there's a huge delay as to when those toy makers are recognizing the revenue. And it just leaves a lot of uncertainty because now there's less opportunity for reordering during the holiday season. They're stocking the shelves late and they're trying to sell through inventory. So I think the opportunity for reorders is going to be a lot lower, and that just limits the opportunity in the fourth quarter for those makers.
So in other words, if you are going toy shopping and you don't see what you want on the shelves because it's sold out, it's unlikely that it's going to be replenished before the holidays begin. You also point out in your report that hot items like the K-pop Demon Hunters dolls and action figures and playsets will not be available for release until the new year. What does that mean for, you can't give a kid an IOU coupon in their stocking or anything. Will those be able to move in 2026?
Yeah, so what I was sort of referencing there is, the entertainment slate is weak for 2025. So though these toy makers, sign deals for K-pop Demon Hunters, those products, they're not coming out until next year. So they're not really going to be under the Christmas tree
it's
or
not even
on
an
holiday
option.
List. Exactly. Yeah, I think that you can pre-order them, but I agree with you. You can't really leave a note.
So, Lindsay, net holiday season, are we going to see positive sales growth in the toy space?
I think there will be positive sales growth. I think, again, it can be driven by that kidult theme. So growth accelerated in the third quarter, and I think momentum can extend to the fourth quarter, but that kidult group is really a niche group, and growth in that area can't sustain the industry forever. So we do really need to lean back into kids. We need to see more innovation in kids' toys in 2026 to see that growth extend longer term.
Yeah, maybe the kidults need to spend, their money on something else.
Yes.
Not toys, not collectibles, not trading cards.
I don't know. K-pop Demon Hunters. That's the thing. But apparently, they're not ready for release until the new year. So go figure.
All right. Well, thank you so much. Lindsay Dutch, of course, covers the consumer hardlines for us. She's a senior analyst here at Bloomberg Intelligence. Paul, we're looking at the stock indexes come off their lows and, in fact, have pared their losses quite a bit. The Nasdaq only down 0.9%. It was earlier down more than 1.5%. The S&P 500 also coming back a bit. The buy the dippers are out in force, perhaps.
Yeah, absolutely. We've seen it in the past here. I think about all the money that's flowing into ETFs. It's got to go somewhere. Eric Balchunas says most of it's going into the index ETFs.
The passive funds.
Yeah. So I don't know. Maybe people are buying on the dip here. We'll see.
All right. We also have yields lower across the curve. Actually, I stand corrected. Lower in the 2 and the 10-year, but on the 30-year, it's actually higher at 4.74%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. We're off session lows. S&P 500 index, though, on track for its longest slide since August. 6-month rally is showing signs of cracking. Right now, we have got the S&P down 43 at 66.28. Drop right now of 0.7%. Dow Industrials down 0.9%, while NASDAQ lower by 1%. The Bloomberg Mag 7 index lower by 1.4%. All of this ahead of NVIDIA earnings after the bell tomorrow. 10-year at 4.12%, with the 2-year currently yielding 3.58%. Gold up $16 the ounce at $4,061, up 0.4%. West Texas Intermediate crude below 60 a barrel, holding there at $59.90, flat on the day. Bitcoin up 1.7%, 93,419 on Bitcoin. So it is a down day for the Dow, the S&P, and NASDAQ. Carol Schleif is Chief Market Strategist at BMO Private Wealth. Moments ago, right here on Bloomberg Intelligence, she told us her clients are taking it all in stride.
Pullback's pretty normal. I know a lot of people, you end up, when you open that worry closet, a lot of things that have been sort of floating around in there, they all get piled on the floor at the same time, and everyone's sorting through those, whether it's AI or employment or government statistics, all this stuff coming off. And so it's important just to take a collective deep breath and view this as normal.
Carol Schleif of BMO Private Wealth, interviewed right here on Bloomberg Intelligence. Briefly, Elliott Management has built a large stake in Barrick Mining. This, according to the FT, citing sources. B on the ticker, up now by 1.5%. And Topgolf, Callaway Brands has agreed to sell a 60% stake in its Topgolf and Top Tracer business to private equity firm Leonard Green and Partners in a deal that values the business at about $1.1 billion. Recapping, stocks lower, but the key takeaway at this update, we're off session lows, S&P down 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Amer Sports, that's Solomon. They got the Solomon best bindings. The ski company, right? The best bindings in the world, I think. I've been skied on Solomon bindings for like 40 years. But they have lots of other stuff, Wilson Sports and all that kind of stuff. They had some pretty good numbers today. I mean, you know, they're raising their guidance for the 3rd time this year. So, I don't know, the consumer seems,
I think in the K-shaped economy, they serve the upper leg.
Upper part of the K?
Yeah.
All right, that's the place to be. Abigail Gilmartin joins us here. She is the footwear and athleisure analyst. I don't know what athleisure is for Bloomberg Intelligence. She's a proud Spider. University of Richmond Spider.
Oh, there you go. I didn't know that was the mascot.
Yes, it is. Wow. It's very unique, isn't it?
I can't wait to see what that T-shirt looks like.
Oh, yes.
It's a big spider.
Yeah, we'll get you we'll get one for you. Yeah. I got my 40th anniversary at University of Richmond coming up this year. This spring.
Are you going to go?
Damn right, I am going. I might actually join the committee to force me to kind of go. So I'm on the committee. I'm in charge. I'll be dialing for dollars, getting people to come in. And Abigail, so she's a spider. Talk to us about AMER Sports here. I don't think a lot of people know them too well.
Yeah, no, because the brands underneath it is Arc'teryx, which is their outdoor performance brand, as well as Solomon and Wilson are their 3 biggest. So I think today was a big day for them. They did really well. Sales up 30%, broad-based strength across regions, across channels, and across brands. I think the key thing people were looking for was China. Arc'teryx recently had some controversy in China with a fireworks display in the Himalayas.
What?
Fireworks display.
Who displayed fireworks in the Himalayas?
Arc'teryx for set off fireworks.
Why?
Exactly. It was definitely a misstep for an outdoor brand that's really focused on sustainability. And there was definitely some concern that there would be a little backlash in China. There's definitely a lot of people upset about it, and they were fined by the Chinese government and working to restore the ecology there. But Greater China was up 47%. Momentum is continuing into 4Q. So I think that was really a big takeaway, just quelling investors' concerns about potential backlash in China, especially because they're the #1 outdoor sports brand in China, Arc'teryx. So it's a big market.
I had no idea that they have such strong brands. I mean, Amer Sports on its own is kind of, it's not memorable, the parent company name, right? But the brands, of course, are Solomon, Arc'teryx, Wilson, as you mentioned. What does the tariff picture look like for this company?
Yeah, I think it's very similar to most of the other companies. I think for them, what benefits them is their premium positioning. They're able to raise prices and they're not seeing any backlash from consumers or pullback. They're still seeing very strong full price sell-through. So they're able to offset some of those tariff costs with that, which I think is really helping. And we're seeing that with a lot of more of the premium brands are able to kind of navigate through the tariffs since their consumers are willing to pay a little more.
Upper K of the K-shaped economy.
Yeah, I guess, I know, that's, I guess, where you want to be there. Talk to us about the footwear market here. I think, Nike, Adidas, all that kind of stuff. What's going on there?
Yeah, I think, we're in store for a very interesting holiday season. I think that we're going to continue to see the premium brands continue to do well. On Holdings recently just reported and did phenomenal, and they also said they're not seeing any backlash on raised prices, and they'll continue to do, limited discounting through the holidays. So we may see some differences between the two companies, but we just had our recent BI survey, and Nike continues to lead. I think there's been concerns over Nike, but they still are the major shareholder and still a favorite brand of millennials, Gen Zs, everyone for the holidays. So they should continue to do well too.
What is Amerisports' distribution strategy? Do they have a DTC offering, or are they going through third-party retailers?
Yeah, that's a great question. So it's a little different for each brand. For Arc'teryx, they're leaning a lot more into DTC. They've changed their distribution strategy from basically 80% wholesale to 80% DTC over the last 3 years. And they're really focusing on growing their store base because I think not a lot of people know about Arc'teryx. It's really going to help the brand awareness. So even in the US, they're looking to double their store count by 2030. So that's that. Through Solomon, continues to be wholesale, especially for footwear. We're seeing this holiday season, consumers strapped for cash. They're wanting to go into the stores and try on their shoes and make sure it's the right fit and buy them versus, buy 5 pairs and return them.
Yeah.
So the wholesale distribution for Solomon is really key, and they're in a lot of key premium partners, I would say, and the running specialty stores as well.
I mean, I'm looking at your report here, research report on the sneaker business. I didn't know there were so many shoe manufacturers. I mean, Nike's the dominant one, as you said, but there's like 14 in your survey here.
Yeah, and
that's a competitive marketplace.
Definitely, it's getting even more competitive as consumers with AI, technology, there's just such more of a breadth of discovery. So that's where product is really coming into play this holiday season, I think, the innovation, product, and style.
Abigail, if there's one thing to be worried about when it comes to Amerisports, what would it be? I mean, what's an area that they're not executing on?
So I think the China thing was the one uncertainty for this quarter that we were definitely, it could have gone either way. So that would be the biggest thing. But honestly, they're executing on most of their things. Their biggest drivers are DTC, women's, and China, and all of those were up double digits and more. And they're really gaining share in women's, which I think is a big new opportunity for them as more women join the outdoor market.
All right. Which have you purchased in the last 12 months, sneaker brands? For baby boomers. Skechers.
Yeah.
What?
Yep. Skechers continues to win.
What is that?
Honestly, they're so comfortable. They're like the price point, the quality. I know, but you'd be surprised.
That is not something that they market out there, that they put out there. Either,
no, and
right?
they're the 3rd largest footwear brand globally.
Really?
Yeah, I think right behind Adidas.
Next, you're going to tell me that the boomers are using the shoes with the little wheel in the back of the.
No, the wheelies. The wheelies.
Yeah, no, they're doing the step-ins. You don't even have to bend down for your shoelace. That's it.
That's what I think it is. Yeah, okay, I think you're right. All right.
I mean, yeah.
There you go. I mean, the kids, the Gen Z, the millennials, they're still in that Nike brand. That Nike brand still, and Adidas.
Or Hoka's.
Yeah,
right?
Hoka and On are gaining, but they're still small, and I think people don't realize that just because there's been such a big boom. They're still very like West Coast, East Coast oriented. They still have a lot more room to grow brand awareness in the U.S., especially in the middle of America. So yeah, Nike continue, and they're higher price points, right?
Yeah.
Not everyone can afford them.
All right.
My go-to sneaker are Onitsuka Tigers.
Oh, yes.
Yeah. Super comfortable.
What?
Onitsuka Tigers. Uma Thurman wore them in Kill Bill.
Oh, there you go.
Yeah,
All
the yellow ones.
Converse, Chuck Taylor's classics.
No. Not
Abigail
good for flat
Gilmartin,
feet.
Bloomberg Industries, Bloomberg Intelligence. Thank you so much. We appreciate that.
Thank you.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Stocks, we got some movement, we got some earnings. Klarna Group, what's this whole buy now, pay later thing? I don't get it. But Klarna Group, they reported some record revenue numbers that beat its estimates for the third quarter. So let's break it down here. I'm not even sure what this company does, but our next guest does know. Anthony Hughes, equity capital markets reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Anthony, I do remember Klarna kind of coming public in a couple of months ago. Buy now, pay later. Tell us what Klarna is, number one, and number two, talk to us about the results.
Yeah, well, Klarna is a company that's actually been around for about 2 decades.
Okay.
It's just that since about 2019, they've really expanded quickly in the US. And buy now, pay later is a lending/payments product, which basically allows people to buy products and obviously pay for them over time. And obviously, this is an alternative to the credit card. Credit card option. So really, a lot of Klarna's growth really reflects the fact that this product's becoming more popular relative to credit cards. And for a lot of consumers, it's a good way to manage your cash flow and, you obviously buy a product and not have to pay for it over time. And that suits a lot of people. And it is a fast-growing part of the fintech or, say, consumer lending space.
Obviously, so as a consumer, how does Klarna make money on my $100 purchase that I put on their system?
Yeah, well,
they charge me interest?
No, well, there's a number of different products. Some of the longer-term lending products do have interest associated with them, but that pay in 4 product they talk about, which is paying in 4 installments over a few months, that is an interest-free product. And really, the source of revenue in that instance is from the merchant, and merchants pay a merchant service fee. It's higher for them. It's higher than they pay on a credit card transaction. But basically, they see the benefit of Klarna bringing in extra customers so they can sell more product. And people will ask themselves, well, who actually pays the merchant service fee? Well, the merchant does pay that to Klarna, but the merchant does incorporate that as a cost of doing business into the products that he sells to you and I. So we, in a sense, we all pay for the fees that are hidden within the payment system, and really merchants pass on to the consumer depending on how you pay the you pay for your product.
Who's a typical Klarna consumer out there? Like what's kind of a typical transaction for a buy now?
Yeah, well, these are mainly small transactions of can be a few $100s or not large transactions, and this obviously suits a younger audience, and that's where a lot of the a lot of their customer bases come from. But they've built a large business which globally has something like 110 billion of what they call gross merchandise volume, and that's it's a fast-growing business in the US. It's been growing pretty fast for them, 40-50% in this recent quarter. And obviously, there's a couple of other companies that are in this area as well. So it's a competitive area as well with Affirm, which is another company that went public perhaps about 5 years ago.
So the company did go public back there in September at $40 a share. The stock's at 32 and change here today. So what's kind of elapsed during that time period that's pulled the stock down?
Yeah, well, it's been interesting because a number of the recent IPOs have traded below their IPO price, and that's been something that's been pretty common of late, which wasn't the case maybe a few months ago. So I think Klarna's timing meant that it got a pretty good valuation, and obviously what we've seen with a lot of IPOs is supply and demand dynamics in those early weeks are sort of often favorable for a pop, but over time we see people pull back, and so that's a bit of a feature of the IPO market. So, in this case, I think that the results that Klarna reported today were actually good in a sense. They beat the expectations, but there was a concern about this metric. It's called the transaction margin, and that missed the analyst forecast. So I think we're just in a bit of a market where they're not too forgiving about any sort of little miss. But the company's also talking about this being a result of an accounting treatment of this fair financing product, which is a longer-term lending product, and they're taking some provisions up front. But they expect to pull that back in the next quarters or two, and this company is not GAAP profitable as we speak. It's not, so it's not profitable from an accounting perspective as we speak, but the company does. Analysts do expect the company to become profitable over the next year or so.
So you cover the equity capital markets business. It seems like it's been a good year in the equity capital markets. What did the numbers show you?
Yeah, well, I think there has been more IPOs and performance has been okay. It's just in the last few months and certainly during the shutdown, I think we've had a loss of momentum. Now that the VIX is trading above 25, there's probably some concern that there won't be too many IPOs to finish off the year. So there is a loss of momentum, and largely because of the shutdown, which complicated the process of going public. It meant that some companies were still able to go public via a workaround, but a number of companies have decided to wait till next year when, you know, maybe market conditions may or may not be better. So there is some risk associated with waiting, but that's been the decision that a lot of companies have been forced to make because of the situation with the shutdown and the fact that the SEC was closed and unavailable to properly review a lot of registration statements.
Is that, that's right. I kind of didn't think about that. So when the government was shut down, that means the SEC was shut down, which means the S1 wasn't getting reviewed by the SEC. So that's going to set you back however many days we were shut down.
Yeah, so companies were in different parts of the process, and if they were well advanced and they had a lot of comments, they could go through this 20-day automatic effectiveness process, which a number of companies did. But the companies that were further back in the process, if they hadn't got enough comments back on their filings from the SEC, then there was a risk in going ahead. So from a legal perspective, a lot of these companies have delayed, and it's unfortunate because now that you see the market coming off a bit, some of these companies you know, the window's open, but it's closing in the sense from a market conditions perspective.
Right. Anthony, thank you so much for joining us. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Coming up right now, we're going to go to Joe Matthew and Balance of Power. This is Bloomberg.
All right, Paul, many thanks, and thank you for being with us here on Balance of Power. Tuesday edition, we're doing things a little bit differently here because we're waiting to hear from President Trump and the Saudi Crown Prince, who is in the White House right now. Indeed, MBS has arrived. The full treatment and full flourish of the welcome ceremony, complete with a flyby that just shook the rafters here at our D.C. bureau. I'm Joe Matthew in Washington. Thank you for being with us on Bloomberg Radio, Satellite Radio, Channel 121. We're streaming live on YouTube. If you want to see what is about to transpire, search Bloomberg Business News Live, and you can, of course, watch us on Bloomberg Originals, whether you're on YouTube TV or anywhere else. They'll be in the White House shortly, and members of the media will be brought in as well. There are a couple of events that we're following, and I'll note that we're running a tad late on some of these. A bilateral meeting that will take place, followed by a White House lunch, all expected here to unfold in the next hour or so. And it is a split-screen day in Washington. On the other end of Pennsylvania Avenue, we're going to have a House of Representatives full of members who are set to vote on the release of the Jeffrey Epstein files in the next couple of hours, knowing now that that discharge petition will hit the floor and that the president himself has urged Republicans to vote for the release. It is expected to have not only passage, but with a remarkable amount of support, if not unanimous support in the House. These are going to be the two compartments that we focus on today, with the president on one end talking to MBS about trade, the economy, the purchase of F-35s, which just happened to fly over a little while ago, and the Epstein files, of course, unfolding in the House of Representatives at the other end of Pennsylvania Avenue. We're going to be joined in a moment here in studio by Ashley Davis, the Republican strategist at S3 Group, to talk about this moment in time for the Republican Party. But we start at the White House, and Bloomberg's Washington correspondent Tyler Kendall, who's on the North Lawn waiting for all of this to transpire. Tyler, give us a sense of what we're about to see.
Yeah, hey, Joe. Well, you outlined the next sort of events. We are waiting for reporters to be let into the Oval Office. Keep in mind, this is the Crown Prince's first visit to Washington in 7 years. There is a lot on the agenda, but of course, President Trump had traveled to the region back in May. Now, I have two sort of buckets that I'm watching really closely here. One is, of course, tech. We are waiting to see whether or not the White House is going to greenlight the export licenses for advanced semiconductor chips. This has been at the top of Saudi Arabia's agenda as they have faced restrictions since 2023. We know that this is going to be something that they are really looking for. And then the second bucket, of course, is defense. President Trump has already indicated that he is looking to greenlight the sale of those F-35 jets. Both of these items pose some similar concerns when it comes to Riyadh's close ties with Beijing and whether or not advanced technology on either end could ultimately get into China's hands. So we'll see if they take questions. There's, of course, a broad array of topics on the agenda today.
That's for sure. How about tonight? Tyler, we've got the full state dinner here, even though this is technically not a state visit. Who's on the guest list? What's going to happen?
Right, so this is going to be, of course, no lack of pomp and circumstance here at the White House. Later tonight, President Trump and the First Lady Melania will be greeting guests here at the White House starting at 7 p.m. Eastern. It's expected to go into the evening, and we are expecting top tech execs, also leaders when it comes to energy and artificial intelligence, to be flocking here to Washington. Of course, this is all ahead of tomorrow's critical U.S.-Saudi investment-led summit that's at the Kennedy Center here in Washington, because again, this really does come down to investment commitments. This has been at the top of President Trump's agenda. We know that he had secured a pledge for $600 billion in investments from Saudi Arabia over the course of 4 years, and we're still waiting to glean what some of those details are going to look like, and perhaps tomorrow's venue is going to be where we ultimately get some of those firmer commitments. Because, Joe, I'll add, when we were talking about the chips earlier, people familiar tell us here at Bloomberg News that part of what has held up the green lighting of those export licenses, like we've seen to some other Gulf nations like the UAE, is one, they have to hammer out what those security conditions are going to look like, but two, the U.S. wants to see some more specifics when it comes to what those reciprocal investments by Saudi Arabia are going to look like in the United States.
We're looking at some video of these two walking into the Oval Office after a brief tour of the colonnade. What is it, the Wall of Fame, he calls it, Tyler, with all the presidents and the auto pen. Bring us behind the scenes here. I know you got an invitation to the dinner tonight. Is Jensen Huang going to be there? Do we have a sense of the names who are going to be in the room? And what's the international media presence like? I bet it's a busy day on Pebble Beach.
Well, it's absolutely packed here. I can tell you that there is no shortage of space. We know that the Saudi delegation is in the numbers of the thousands, according to reporting. I am going to be at that dinner tonight, but only in my professional capacity as a journalist. So I'll have to bring you an update tomorrow when we get perhaps a more secure guest list on exactly who's going to be there. But we know that it's going to be a moment for the U.S. and Saudi Arabia to really reaffirm their strategic ties. It was interesting. I was reading one of our analysis by Bloomberg Economics this morning that regional security and working together in these critical sectors has become really a priority for the Trump administration. In the region, yes, but really this comes back to countering China and the White House's goals more broadly here to collaborate on these critical sectors like artificial intelligence, like data centers, like AI, and that's really going to be the focus of the next 2 days here in Washington. Yes, you're right. We are expecting tech execs. I think we're expecting some pretty high names. Perhaps Elon Musk is going to be in the room tonight because, again, this is all going to be about investment and moving the partnership forward.
That's it. I heard Elon was going to be there. All right, let us know what's on the menu later, Tyler. I want the inside view here. Yes, of course, Tyler's not going, as a friend of the White House. She's in the press pool. That's what she does for a living. Tyler Kendall will have more from Tyler a little bit later on. As we add the voice of Ashley Davis, who, of course, is on every guest list in town. I don't know about this one. S3 Group Republican strategist. It's great to see you. Welcome back, as always.
Nice to see you. I am not on this
You're
one.
not on that?
I'd
Okay,
like
that's
to be,
fine.
but
I would have been looking
got
for
cut
you
off.
on the welcoming camera there, the rope line. So this is a fascinating moment here, and we can get into what's happening at the White House more specifically in terms of the investment and the military trade that is apparently underway, but a moment for the Republican Party compartmentalizing between both ends of Pennsylvania Avenue today. This vote for Jeffrey Epstein on one end, this full flourish of a state visit, even though he's not the leader of a nation, on the other end. The President of the United States has found himself in heady times here. Ashley, how does he balance both?
Well, listen, this has been difficult. And the Saudi visit has been really starting since his first administration. If you think about what they really tried to do with the Abraham Accords, and Saudi's a big presence and the last big piece of that region that we really do. Obviously, there was the human rights issue that happened, and I'm sure that's going to be at the forefront of some of the mind today, which is probably why the Senate meeting got canceled earlier today with him. But
and no one allowed to shout questions on the South Lawn this morning.
Yes, and I mean, but we have to have a relationship with Saudi Arabia. I mean, it's crucial for national security, it's crucial for business, and it's crucial for the region. So I think it's a smart move, and I think, this is where you see Jared Kushner's hands all over this. But moving to the Hill, we have this vote for Epstein finally. I feel like we could have done this 3 months ago because exactly, obviously the speaker came out and said he's voting for it. I didn't see yet if Scalise's, but if you have the speaker voting for it, it's going to be a really big vote.
Scalise said it would be a huge vote today. Could they see a unanimous result after the president weighed in?
Last night I was hearing that they could do this on UC even today, but I think people want to put.
They want names.
They want their names,
yeah.
but
UC is unanimous consent.
Correct.
In that world, though, does John Thune have no choice but to?
Yeah, I think now it's just when does he bring it up? Does he bring it up the first week after we're back after Thanksgiving? So that first week in December. I don't see there's any reason why he won it, and I would think that at this point, that the president, obviously we need to remember the victims of this, but the president and the House and Senate, Republicans at least, want this off their plate. Like, we've been talking about this forever, and let's just get it over with.
You know what the calculation is now, though, that because the DOJ is investigating Democrats at the president's behest, they won't be able to release anything because it's an ongoing investigation. Is that why everyone's so comfortable voting yes all of a sudden?
No, I just don't know. Listen, I am not a believer. Obviously, I don't know, but I'm not a believer that Trump there's any smoking gun in this that has to do with the president, because I think that when the previous administration, when Biden's had it, obviously, I think they would have put it out. Yeah. So I don't think anything more than that's already been out there, that he had a relationship with them, that they had their falling out. I don't think there's anything else there, but I think there's going to be a lot of business people. Obviously, you saw what happened with Larry, but I think there's going to be more of the business community that's going to get maybe their names out there.
Larry Summers, you're referring to, is a Bloomberg contributor. Bring me back to the White House then, because the president's got a job to do here, presumably not consumed with what's happening there. He knows this is this is the worst kept secret in Washington. So what can he get done here that will make this worthwhile? And why did he tell Bloomberg yesterday he had already decided to sell F-35s to Saudi Arabia? That was a remarkable headline.
Yeah, absolutely. And I think, listen, all of this stuff has already been pre-negotiated. Yeah. So they're going to go in, they're going to make, I'm sure that Saudi's going to probably make another huge announcement on investment, I would think. And then I would think that you have, whether it's Elon or Musk or I'm sorry, Elon, or you have Bezos or Jensen, that they'll probably come out with some significant deals tomorrow. They're not going to go to the Kennedy Center, that event tomorrow, and just like hang out. There's probably going to be a bunch of announcements. And the president's speaking at that
big numbers, knowing what happened in Qatar, for instance, and with the UAE. So bigger picture, everybody remembers the fist bump heard around the world, and even this morning, I'll give it to Politico in the playbook, the headline, Prince Bonesaw, is pretty tough stuff. Is this the coming out, the normalization, the mainstreaming of MBS?
Yeah, I think this was more of a risk for him to do this than to come to America when he has half the country, especially on the Democrat side. Republicans have kind of moved on past that. I'm not saying they believe that it's right, but that he's going to, which is why they're kind of controlling the meetings, or controlling the Senate meetings. They're controlling the media. And so, but obviously he's going to be the leader of this country. He's the defaulted leader now. So, he has to deal with the United States, and it's the best way to do it. It's better to deal with Trump than whoever the next president is.
He has to deal with the United States, and he has to deal with the Trump organization, which has some pretty big projects underway there, right?
Yes.
Even after this administration is wrapped up. How much of that has to do with this visit, or vice versa?
Obviously, there's always the questions of should the president's family be doing business in places that were making national security decisions or whatever. But I think that's going to...
So conflict of interest off the table, Khashoggi, fist bump, distant memory, clean slate.
But what's the alternative? How much, in my opinion, if you have to have a relationship with this country for national security reasons and for economic security reasons, how much longer can you hold on to the human rights issue that happened now 12 years ago? How many years ago was it? 10?
I guess so, yeah.
Yeah, I forget. But my point is there has to be a giving point that we have to move on from that and not make political stances on that and move on.
They just don't have the turnover at the head of the country the way we do.
Yes.
So
And by
you
the way, he's
end up coming
40
back
years
around.
old.
Isn't that
I'm
incredible?
10 years older than him.
40 years old.
I feel like I've
That
done
makes-
nothing with my life.
That makes two of us. Yeah, I'm doing something. I thought I was so much more clever than this. Hey, we talked to Mike Pence this morning. Kriti Gupta in London spoke with the former vice president about this idea of selling these F-35 stealth jets to Saudi Arabia. He's not totally on board. Listen to what he said.
I have concerns about the sale of F-35s to Saudi Arabia or any nation that could not assure the United States that technology and the great advancements that we made with the F-35 don't fall into the hands of nations that are hostile to our interests.
Not the only Republican sounding like that today. This gets us right back to the conversation, maybe less direct, but the conversation about selling Blackwell AI chips to China, for instance. And by the way, we're going to be selling some to the Saudis. The national security implications here mean what to us?
Well, we don't, first of all, Pence doesn't say anything. I don't think they agree on anything anymore.
Okay,
but I also think that something, it may not be public. Maybe
Other than cash, you mean?
Oh, yeah. We definitely, I mean, we're not just handing out our F-35s. Obviously, I understand their concerns from a national security perspective of putting something like that in another country that's not considered our extreme ally, like EU, someone in the EU.
Yes.
But I think that there was some sort of negotiation that we got from that, and I don't know if we'll ever know.
Deeply curious. Oh, boy. How about that?
This is how these things work.
What does
Joe.
Israel
Come
say
on.
about this? Well, yeah, exactly.
Well, hopefully we got something for Israel with the F-35.
Is that
and
where
I would
you're-
think Israel knows.
Is that what you're driving toward here, though? Could there be a broader normalization when it comes to their economic ties? Could there be an update to the Abraham Accords?
I think that's what we're trying to get. I mean, I think that would be the president's dream today, and tomorrow is to announce something like that. I would think that the negotiations over the last 6 months that have been happening, getting up to this visit, that's the number one issue on the president's list.
Interesting. The event this evening is going to be a state dinner, obviously. I'm just looking now at producer James just gave me the whole guest list for the Kennedy Center tomorrow. Howard Lutnick's right there in the top row. Michael Wirth, the chairman, CEO, Chevron. I'm just scrolling here. Ron O'Hanley from State Street. We already talked about Jensen Huang as a possibility, Mark Benioff, Salesforce. This is going to be a who's who as we enjoy some of the footage from earlier of the arrival ceremony. This is, forget all of government, Chuck Robbins, Cisco, this is all of corporate America.
Oh, if you're a CEO anywhere in this country, you would want to invite. I mean, that's a pretty important invite for tonight.
Absolutely.
And then obviously you're invited for tomorrow.
So
Yes,
that's
a big
the
deal.
real stuff, though, right? For the Bloomberg audience to understand, we're going to be in the Oval in a minute here, and they're going to have a bunch of reporters screaming around the fireplace. The real stuff is what happens in these sessions. That's the point of this.
Well, absolutely. But if you even look at the data center, which was referenced by Taylor, the amount of money that the Saudis could invest in to give us the ability for the data centers, and also for turbines. I mean, they have access to turbines that we don't have access to in other parts of the data center world. That you want Saudi on your team, and half these people that you just now we're talking about,
they're all in that business.
Correct. Energy. Obviously.
How much of this is becoming your business? You're a Republican strategist, you're a political operative, but you're also a matchmaker, you're a Sherpa in Washington, and more of this is driving your portfolio, is it not?
Oh, absolutely. And the Middle East is a major part of the portfolio, whether it's the UAE, Saudi, or Qatar. I mean, they are major parts of where what our country needs, not only the investment, but also the supply chain that they have is a major part of what the country needs.
So I have even more to learn from Ashley Davis. All right, run back to the House with me.
Okay.
This vote, they say, is going to happen a couple of hours from now, maybe. What will be the Republican posture? If you're part of the rank and file or leadership, you've got to go out in front of the microphones after voting. What are you going to tell all the reporters there, knowing Donald Trump's listening?
We voted today to release the Epstein file. I mean, there's really nothing else to say. We've litigated this.
So this is a sell the news kind of moment. Once the vote happens, Republicans are pretty much done with the communications.
Yeah, the House is going to say, you know what, the Senate needs to do their job now. That's what I would say if I were the Speaker.
It's up to John Thune to talk tonight or tomorrow.
Yes, and I also think to the House Republicans, the vote's not going to be a really big deal in the news cycle because it's going to be about this.
Fascinating.
It was actually an interesting vote. I'm sure that the vote was today on purpose.
Yeah, right. Wow, this is really remarkable. As we sit here, if you can look at us on Google Maps, we're sitting right in the middle of these two ends of Pennsylvania Avenue here at the Bloomberg Bureau. Ashley Davis, I'm so glad you could come by, as always. S3 Group, our Republican strategist and good friend of the program. Ashley, thank you. We're going to carry on with our panel coming up as we wait for this event to get underway live at the White House. President Trump, the Crown Prince of Saudi Arabia together, and we'll have a lot more only here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. S&P 500 index on track for its fourth day of losses. That would be the longest since August. S&P right now down 48 at 66.24. A drop now of 0.7%. We've got the Dow down 492. Drop there of 1.1%, while the NASDAQ Composite Index is down 251 now. A drop there of 1.1%. Key takeaway at this update, we are well off session lows. The Mag 7 index, of which NVIDIA is a big part, down 1.6%. NVIDIA does report earnings tomorrow after the close of trading. NVIDIA right now down 2.1%. 10-year at 4.12%. Gold now up $17 the ounce. That is a gain of 0.4%. West Texas Intermediate crude up 0.2%. And Bitcoin rebounding up 1.7%, now at $93,000. 417 on Bitcoin. Home Depot cut its full-year earnings guidance, warning that some unsteady consumers are hitting the pause button on big-ticket home purchases. Home Depot shares, they're down 3.9%, rival Lowe's down by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back go to Washington as Balance of Power continues. The Tuesday edition, once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Good to see you, Charlie. Thank you. We missed Charlie at the top, and we'll have more from Charlie in about 20 minutes with the latest. On the Tuesday trade, assuming we're not in the Oval Office, we are waiting for an opportunity to get our cameras and microphones in there as President Trump meets with MBS, the Saudi Crown Prince. By the flyover, as my friend Lester Munson said this morning, we started with quite the flyby. It was 3 F-35s, 3 F-15s over the White House as part of the arrival ceremony. And Lockheed stock, despite all the selling that we've seen, continues to rise. Afternoon, when Skylar Woodhouse from Bloomberg asked President Trump in the Oval Office if he was going to sell F-35s, nobody thought he'd actually answer it. He said, yeah. So here we are selling F-35s, and we got them flying over the White House with MBS inside the Oval Office. It's a big day in Washington, and I'm glad you're with us as we welcome and assemble our political panel. The aforementioned Lester Munson is with us, Republican strategist and principal at the International Practice at BGR Group. And there's our friend Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, I don't know what's going on in that building right now. We had an opportunity to see them go inside. They're running quite late now at this point, about a half an hour behind schedule. Are they going through the gift shop in there or having some more important words about our economic or military relationship?
I suspect that the president is showing him around some of the gold plating he has done in the White House and maybe what looks like to be the beginning of this gold-plated ballroom we're going to see. So he's probably getting a good tour. And I suspect maybe we'll see those F-35s flying over Riyadh pretty soon by the sound of it. But you know, it is just a really remarkable moment in a very short period of time how Donald Trump, I think, has remade U.S. foreign policy. We are well beyond the times that probably all three of us remember when we were sort of lecturing the world about human rights and those kinds of things. Now this president, who is very much about making deals, has told Riyadh that we're no longer going to do that. We are open for business. We want to make deals, and that is what I think Donald Trump is setting up to do today as best as he can do it.
As we follow the bouncing ball here, it looks like they are assembling the pool, and I believe they're right outside on the colonnade. So once they go inside the Oval Office, we'll join them, which is a pretty interesting thing to see on a day like this. The optics here are going to be interesting, Lester, and I'm glad that you're with us as an expert on foreign policy. What is your thought of the normalizing or mainstreaming of the Crown Prince of Saudi Arabia? When Joe Biden went over, the fist bump heard around the world. He was jeered by both sides of the aisle in some cases, and every question from reporters that day was about human rights. It's not going to be like that today.
Well, President Biden had originally said, I'm going to put Saudi Arabia in a corner specifically over human rights concerns. That's just not realistic. And frankly, you know, we are Americans. We're concerned about human rights. I think it comes with the citizenship. It comes with where we live. There's no doubt about that. It's the lecturing that has proven to be very ineffective as a foreign policy tool. And so I think President Trump has a much more realistic and therefore better approach to Saudi Arabia than President Biden started off with. President Biden had to move towards a much more pragmatic approach to Saudi Arabia. Saudi Arabia is a hugely important partner of the United States on energy issues, on security issues, on peace issues. You know, this Gaza peace plan, this 20-point plan that Trump has gotten the UN Security Council to back is hugely significant, and Saudi Arabia plays a big role in that. And so I think that's going to be a lot of the conversation today.
Interesting. Jeannie, how much of this has to do with the foreign investment, the foreign direct investment of the U.S. by Saudi Arabia in return for whatever it is getting, that Ashley Davis just told us is going to help to pay for the data center build-out in this country? It's kind of amazing as we consider selling AI chips by NVIDIA, the full-blown Blackwell chips to Saudi Arabia in this case. Yet reporters were not allowed to shout questions on the driveway in the South Lawn this morning when the Crown Prince arrived. How do we rationalize those two?
Yeah, and I'm curious, Joe, when they get into, if they do get into the White House, you know, I don't think I can ever remember a time when MBS has sat and answered questions. This is not something he does, just like President Sisi when Donald Trump was over there. So if that is allowed, which I can't believe it will be allowed, but if it's going to be allowed, that'll be fascinating to watch. Donald Trump's very comfortable in that setting. MBS, we have no idea because I don't think we've ever seen him there. But yeah, I do think on this issue of the foreign investment, critically important. You know, we used to talk about, you know, oil as the big thing that Saudi Arabia had to offer, and Lester just mentioned that. But the U.S.'s use of or reliance on Saudi oil has declined. But what Donald Trump and others say we do need is this direct foreign investment. And so we see that being sort of dangled over the head of the United States, and that is what is getting him this visit today. You know, Joe Biden went there to do the fist bump around the world in 22 over oil. Today it's about this sovereign fund. And I think a big question domestically is, can the administration make the case that foreign policy like this is good domestically? Because so far the polls are not showing that Americans are seeing these big investments he keeps talking about as benefiting them when it comes to a cost of living issue that we're facing and affordability, which he doesn't like to talk about. And so they have to do a better job messaging this is in the interest of the United States and Americans.
All right, Jeannie and Lester, I'm seeing in the Oval now, they're just now letting the cameras in, and we're going to put this up on our feed here. If you're with us on YouTube, I suggest you dial us up. Search Bloomberg Business News Live as we see President Trump and MBS at the fireplace in the Oval Office. Let's listen and watch live on Bloomberg.
And I'm very proud of the job he's done. What he's done is incredible in terms of human rights and everything else. And he's the Crown Prince, the future king. And I just want to pay my greatest respect to your father, King, who is an amazing man. I met him early on. He greeted me at the airport at an age that was pretty high up there. And it was about 117 degrees. And he was standing on the red carpet as I came out of the plane. And he's amazing. And when I met his brilliant son, it was at the Oval Office. Shortly thereafter, you came in representing the country. And I called the father. I said, this guy is fantastic. And I don't know if that helped you or hurt you, but obviously it couldn't have hurt too much because here you are, right? But we had a great meeting, and the office has changed quite a bit. And we inherited a mess. You actually told me you thought the country was in big trouble. I'm not going to use the exact word that you use. I refuse to say that you thought our country was dead a year and a half, 2 years ago. But our country was in trouble, and now we have the hottest country in the world. You said that also. And we do. We have the United States is right now the hottest country in the world. And between the tariffs and the election, November 5th election, we've done things that nobody can believe. $21 trillion will be the amount invested in the United States or committed to invest in 1 year. So I'm here 9 months. We're up to almost $18 trillion. Biden, as an example, the Biden administration, if you call it that, it's not, to me, it was the Biden lack of administration. They were less than $1 trillion for 4 years. We're going to be $21 trillion for 1 year. I think that's hard to believe. The biggest in history was a certain country, $3 trillion. We're going to be $21 trillion. On top of that, prices are coming down. We inherited a mess with high prices, the worst inflation in the history of our country. We had inflation that was a single 4 years, the worst inflation in the history of the United States. Gas prices through the roof, and that's after destroying our petroleum reserve, which was meant for wars and big emergencies, not to try and win an election. They opened up the reserve so that people get $3 less in gasoline, and it didn't work. They got about 3 cents less, because as big as those reserves are, they're peanuts when you're talking about that kind of traffic. And we're rebuilding the reserves. We're doing all of this, and we've done a job. We're also bringing down prices very substantially, and we've already brought them down very, very substantially. Gasoline is way down. I think you'll be seeing $2 gasoline. But we're now at $2.50, $2.45. Some are lower than that. It was $4.50, $5, $6, $3.50, $3.75, under Biden, all different numbers, but way high. And we have energy way down. But the biggest thing to me, because I know what it means in jobs, is the fact that we're at over $17 trillion, Scott, and we expect to be around $21 trillion in 1 year. And that's many times bigger than in history. The highest number was $3 trillion. And we're going to be at 21 trillion. That means new plants, new AI, new auto plants. We have auto plants coming in from Canada, from Mexico, from Germany, from Japan. Toyota just agreed to invest $10 billion on new auto plants, all American workers. We've never been in a position like this. You can go back to the beginning. Our country has never been in a position like this. And it really is because of the fact that we use tariffs to bring all this money in. And you're going to see the results in a year when these plants start to open up. We have more plants under construction now than at any time in the history of our country. And these are big plants. These are the biggest plants anywhere in the world. And I want to thank you because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But it's 600. We can count on 600 billion, but that number could go up a little bit higher, yes, or I don't know, we'll see. But we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. We have a lot of jobs. So I just want to thank you. We've been really good friends for a long period of time. We've always been on the same side of every issue. I think we've done a great job in wiping out the nuclear capacity of Iran. Nobody else could have done that. No other president would have done it. We had the pilots in the Oval Office right here. We were celebrating a very successful attack. So I had them in with that beautiful B-2 bomber that's over there. And they said, sir, for 22 years, we practiced this attack. Our predecessors, these were very young guys, so 22 years, they said our predecessors and us practiced the attack on Iran, but no president ever gave us the go-ahead. 3 times a year they went out and they practiced the attack. Nobody let us do it until you came along, and I let them do it because it was the right thing to do. You can't have a nuclear Iran. And so we put you in a very good position. But I just want to say it's an honor to be your friend, and it's an honor that you're here. And if you'd like to say a few words, but thank you very much.
Well, thank you, Mr. President. This relation has been a relation for about 9 decades, and we've been working together for a long time. But today it's a very important time in our history because there is also a lot of things that we're working on in the future. We believe in the future of the United States of America. We believe in what you're doing, Mr. President. It's really creating a lot of good things and good foundation to create more economic growth, more business in America. And it will also your work for the world peace. I believe, Mr. President, today and tomorrow we're going to announce that we are going to increase that $600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas. And the agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the 600 billion will be 1 trillion.
Definitely, because what we are signing, it will facilitate that.
I like that very much. Go ahead.
You work hard.
No, that's great. I appreciate that. That's great. We're doing numbers that nobody's ever done. And in all fairness, if you didn't see potential in the U.S., you wouldn't be doing that.
Definitely.
You don't want to lose money.
As you said, Mr. President, it's the most hottest country in the planet. But what you're creating is not about opportunity today. It's about also long-term opportunity in the United States of America that will affect American economy positively in the next coming decades, preparing the right foundation of emerging technologies. That's a game changer for America in a good way, and we want to be part of it.
Yeah, we're doing really well. And this, you don't see what we're doing so much because we have, although the construction industry sees it. If you look at Caterpillar, who's been incredible, the tractors, everything else, the numbers that we're doing in construction are unbelievable. Some of the plants that we're building, AI, and they're building their own electric with the plant. I gave them the right to build their own electric with the plant because no country, frankly, will have this. China's working very hard to produce enough electric, but we're beating China substantially at AI, which is a big thing. And we had a great meeting 2 weeks ago with President Xi, but on AI, we're doing well. And I have a man, David Rommel.
Yes, sir.
David, could you say a few words about what you're seeing on the job front and all of the, some of the assets, and also how we've been helped by the Saudis in terms of the kind of investment they've made, please.
Yeah, most certainly. Thank you for the opportunity. I am a facility leader for GE Vernova, and if you look at the landscape for GE Vernova investment, over $750 million in the U.S. focused on true manufacturing jobs here stateside. We're looking at tripling the output of our Greenville, South Carolina facility, where we make the gas turbines that are supporting U.S. needs as well as the Saudi Arabia needs.
Right.
So real jobs, $300 million in gas investment, resulting in over 500 pieces of new equipment being installed in the Greenville, South Carolina facility. That translates into roughly 1,800 jobs across the board for GE Vernova as we try to scale capacity to be able to meet this demand. Along with that, we're partnering with local communities to build the skill set that's required to meet these capacity needs. So that talent pipeline is incredibly important. So it's real jobs in the manufacturing space.
Well, you've been great, and thank you very much. And we love that state. I won that state by record numbers. I won a lot of states by record. Texas, a lot of them by Indiana. Just we're working with Indiana or something right now. We won that. We won a lot of them by records, but that was one of them. I want to thank you very much. Say hello to everybody. Great job. You're doing a great job. Thank you. So just in wrapping up, we'll take a couple of questions, but I want to just tell you what an honor it is to be your friend. And I very much appreciate the investment of now $1 trillion, okay? I'm glad you got that out. I didn't want to be the one to tell them, but that's great news.
We keep increasing, Mr. President.
I know.
Each time the opportunities are just increasing more and more.
Well, the opportunities, we're doing better. Even if you look back 6 months ago, I mean, now all of a sudden you feel even better. So, and I think we're only going to go in one way. Does anybody have any questions?
Mr. President, have you approved the export licenses for advanced chips to Saudi Arabia? The export licenses?
We are working on that. We're negotiating that right now. Marco, do you want to talk about that, or Scott?
Well, I mean, that's part of what we may have announcements on that later today. But that's what we've been working on is the mechanics by which something like that could be achieved. And it's part of the broader process, part of this broader engagement and cooperation between our two countries.
Certain levels of chips. Yeah.
And for the Crown Prince, Your Royal Highness, you're talking about $1 trillion of investment. Could the kingdom continue to do that with oil prices in the mid-60s?
Yeah, we are not creating a fake opportunities to, please America, please President Trump. It's real opportunities. For example, when you ask about the AI and the chips, Saudi Arabia have a huge demand of, a huge need of computing power, and we're gonna spend in the short term around $50 billion by consuming those semiconductors for our needs in Saudi Arabia. And with the agreement that we're gonna have with South America, that will allow us to focus that consuming power in the short term by $50 billion from South America, and long term with hundreds of billions of dollars in the long term. So there's a lot of real opportunities that fit to our need in Saudi Arabia and fit to our investment strategy.
Mr. President, is it appropriate, Mr. President, for your family to be doing business in Saudi Arabia while you're president? Is that a conflict of interest? And Your Royal Highness, the U.S. intelligence concluded that you orchestrated the brutal murder of a journalist. 9/11 families are furious that you are here in the Oval Office. Why should Americans trust you? And the same to you, Mr. President.
Now, who are you with?
I'm with ABC News, sir.
You're with who?
ABC News, sir.
Fake news. ABC fake news. One of the worst in the business. But I'll answer your question. I have nothing to do with the family business. I have left, and when I've devoted 100% of my energy. What my family does is fine. They do business all over. They've done very little with Saudi Arabia, actually. I'm sure they could do a lot. And anything they've done has been very good. That's what we've done. We've built a tremendous business for a long time. I've been very successful. I decided to leave that success behind and make America very successful. And I've made America more successful by far than it ever was and that it ever could have been, no matter who was president. There would be nobody bringing in $21 trillion, that I can tell you right now. As far as this gentleman is concerned, he's done a phenomenal job. You're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman that you're talking about. Whether you like him or didn't like him, things happen, but he knew nothing about it, and we can leave it at that. You don't have to embarrass our guest by asking a question like that.
Just you ask, Mr. President, if you allow me to answer. You know, I feel painful about, you know, the families of 9/11 in America, but, you know, we have to focus on reality. Reality based on CIA documents and based on a lot of documents that Osama bin Laden used Saudi people in that event for one main purpose, is to destroy this relation, to destroy the American-Saudi relation. That's the purpose of 9/11. So whoever buying that means they are helping Osama bin Laden's purpose of destroying this relation. He knows that strong relation between America and Saudi Arabia, it's bad for extremism, it's bad for terrorism. And we have to approve him wrong and to build our relation, to continue developing our relation. It's critical in the safety of the world. It's critical against extremism and terrorism. About the journalists, it's really painful to hear, you know, anyone that been losing his life for, you know, no real purpose or not in a legal way, and it's been painful for us in Saudi Arabia. We've did all the right steps of investigation, etc., in Saudi Arabia, and we've improved our system to be sure that nothing happened like that, and it's painful and it's a huge mistake, and we are doing our best that this doesn't happen again.
Mr. President, thank you, Mr. President. The Crown Prince has been instrumental in helping lifting the sanctions on Syria. Will there be any joint investment between the U.S. and Syria? And will you visit Damascus?
Are you from Syria?
No, but
Where are you from?
I'm from Palestine.
Oh, making a lot of progress, huh? Very good. Well, they like me. The Palestinians like me. The Palestinians are doing very well, actually. I think we're working very closely with a lot of people that make everybody happy, including Israel, the Palestinians, and everybody. That's very interesting. No, I think that I will tell you, the Crown Prince called me, and he specifically asked me if I would lift the sanctions on Syria, because he wants to see Syria make it. As you know, the leader of Syria was just here. We had a great meeting, and he's a strong guy, and I guess you need a strong person to run it. And I think Syria's made tremendous progress. We did lift the sanctions at the request of the Crown Prince. Also, the president of Turkey, Erdogan, called me specifically. He said, you know, if you don't lift the sanctions, Syria doesn't have a chance. If you do, they have a very good chance. And between the two of them and some others, I lifted the sanctions. And the results so far have been pretty good.
Mr. President, can I ask you a question about the F-35s that are being sold to Saudi Arabia? Are these the same ones that are being used by the Israeli military? And if so, how does that allow for the qualitative military edge for Israel? And then I want to ask you, because you brought up the plight of the Palestinians, are you aware of relocation flights to South Africa that are taking place right now?
Which flights?
There are relocation flights that are taking place. Some Palestinians are being charged up to $2,000 a seat.
I'm not going to South Africa for the G20 because I think their policies on the extermination of people are unacceptable. So I'm not going, so I won't refer to anything having to do with South Africa. South Africa has behaved extremely badly. But I will say that when you look at the F-35 and you're asking me, is it the same? I think it's going to be pretty similar, yeah. You know,
how will that
this is a great ally, and Israel's a great ally. And I know they'd like you to get planes of reduced caliber. I don't think that makes you too happy. They've been a great ally. Israel's been a great ally. And we're looking at that exactly right now. But as far as I'm concerned, I think they are both at a level where they should get top of the line. Yes, please.
Can I just ask for the Crown Prince, if I could just ask about the direct talks between U.S.
It's all right. Steve, 1 second. Go ahead.
Have you reached an agreement on a U.S.-Saudi defense treaty today? And are you going to bring up the Abraham Accords in your discussion?
I already brought them up.
What did you say?
I think I got a positive response. Would you like to respond?
Yeah, so definitely we believe having a good relation with all Middle Eastern countries, it's a good thing. and we want to be part of the Ibrahim Accord, but we want also to be sure that we secure a clear path of two-state solution. And today we have a healthy discussion with Mr. President that we're going to work on that to be sure that we can prepare the right situation as soon as possible to have that.
I think we're, I don't want to use the word commitment, but we've had a very good talk on the Abraham Accords. We talked about one state, two state. We talked about a lot of things in a short period of time. We'll be discussing it further, too. But I think you have a very good feeling toward the Abraham Accords.
Yes, definitely, Mr. President. We want peace for the Israelis. We want peace for the Palestinians. We want them to coexist peacefully in the region. And we will do our best to reach that day.
And the defense agreement, have you reached agreement on that?
We pretty much have.
Quick question for the Crown Prince, if I could just finish.
We have reached agreement on that. Okay.
I wanted to ask you about the direct talks between the United States and Iran. Have you been fully briefed on that, and are you concerned at all about how this might impact Saudi security interests?
Well, we are close ally. We'll be working closely together on that issue, and we will do our best to help to reach a deal between the United States of America and Iran. And we believe it's good for Iran's future to have a good deal that will satisfy the region and the world and the United States of America. So we will do our best to see that day happen.
And by the way, Iran does want to make a deal. I can say I think they very badly want to make a deal. I am totally open to it, and we're talking to them, and we start a process. But it would be a nice thing to have a deal with Iran, and we could have done it before the war, but that didn't work out. And something will happen there, I think. But they would very much like, they may say something else, but they would very much like to have a deal.
Mr. President, you announced that you are going to sell 35 F-35 jets. You said you are planning to sell the F-35 jets to Saudi Arabia.
Yeah.
Is it part of the security agreement? And how you assess the defense partnership between Saudi Arabia and the United States? And the question for
Well, I just said it, though. We're going to sell them F-35s. That's the end of the question, I guess.
Is it part of the security agreement or no?
No, we're going to have a deal. They're going to purchase F-35s. They're buying them from Lockheed, and it's a great plane. We make, by the way, the best military equipment. You saw that during the Iran little skirmish. We make the best planes, the best missiles. We make the best offensive missiles. We make the best military equipment in the world.
Nice. For His Royal Highness, I'd like to ask you about how you see the cooperation between the United States and Saudi Arabia in the advanced technological field, especially AI, and how it will support Saudi Arabia to serve its goal to achieve the vision of 2030.
Well, I will try to answer that in short, but definitely there's a lot of interest in many industries between Saudi Arabia and America, and we are signing a lot of agreements in different areas that will really add value to American economy, but also will add value to us in Saudi Arabia. And AI, it's critical for us because one of the long-term problems that we could have is lack of workforce. As you've seen in the past few years, some of them have reached 30% of the global migration to Saudi Arabia. So we know that to assure the Saudi Arabia GDP growing with the lack of workforce that we have, we need to use a lot of computing power to replace job in the long term. So that's huge demand in Saudi Arabia, and we want to link it to American private sectors and getting the supply from America. So there's a lot of opportunities in that area.
And we're also involved in AI in Saudi Arabia. So we're working, and we're leading by a lot on AI. Actually a lot. China would be in second place, but we're leading by a lot. And I have to say this, and our relationship with China has been very good. And as far as buying our farm products, they're pretty much on schedule, Scott. I'd like you to call them, say if they could speed it up, it would be good. Okay, but they're pretty much on schedule.
Sorry, please. If I may, I have a question for both the Crown Prince and President.
Who are you?
Faisal Abbas from Arab News, Saudi Arabia, Your Excellency.
You should be a friendly question.
Your Royal Highness, just picking up on something you've just mentioned about how some people try to destroy the relationship between Saudi Arabia and the United States. Perhaps, since the launch of the vision, we've been used to having the bigger picture and that everything fits into the bigger picture. Might you want to elaborate a little bit about where is the relationship, the bilateral relationship, the strategic partnership between Saudi Arabia and the United States heading, and what's the big picture there?
Well, I don't think it's a relation that we can replace it from the Saudi side or the American side. It's a critical relationship for our political attempt, for our economical attempt, for our security, for our military, for many things. And it has been there for 9 decades. And the opportunities that we have today, it's huge. And it seems that it's going to get deeper in the next few decades. And what we are having today and tomorrow with President Trump, it's really a huge new chapter on this relation that will add value to both of us.
You know, when you think about it, I'm just sitting here. You're with the future king, a man who's respected by everybody, a man that doesn't have to be doing this, really. I don't have to be doing it either. And yet we're sitting here taking questions, we didn't say, oh, you can't talk about this. And there's never been transparency like this, even in his country, but there's never been, in our country, that's been acknowledged. But we didn't put restrictions, and I'm saying it's sort of wonderful to be taking questions from all over the world. Everybody's here. This is just a small group representative of tremendous numbers of media that are outside, that are very jealous that these people were so selected. But they're representing a lot of people that are outside. I think it's terrific that we can be sitting here being this open, and, you know, I think it's really a wonderful thing. Yeah.
If you don't mind, I have a personal question for you.
Okay, here we go. I should have said that.
So apart from everything you mentioned in your opening remarks, you forgot to mention that you've de-escalated 7 wars since you started. At least in our part of the world, you are seen as a peacemaker. And adding that to all the executive orders and everything else you've mentioned, I really have to wonder, in your speech in Saudi Arabia, I was there, you said that His Royal Highness does not sleep at night thinking how he does things better. We wonder in Saudi Arabia, how do you manage your own time? And what's your formula for management?
He does not sleep much, and I don't sleep much. I think we have the same schedule. We're thinking about our countries. And if you sleep a lot and you're president, we just had one that slept more than any president. He broke every record. He sleeps all the time, during the day, during the night, on the beach. The only guy could fall asleep on the beach with the press watching. No, he's not a sleeper. I'm not a sleeper. We don't. We talk at night. We can talk. I can call him almost any time. He goes, hi, how you doing? It's like at craziest times. But now, when you love your job, when you love your country, and when you're in a position like we are, future king, highly respected, crown prince, and in my case, president, you're thinking about your country. You're thinking about making America great again. We're thinking about keeping Saudi Arabia strong and vital, and in a pretty tough part of the world, tricky part, right? Tricky part, a lot of tricky people. But he thinks about his country, and I think about my country. I don't want to sleep.
President Trump, do you expect a formal civil nuclear deal to be reached soon? Can you talk to us about that aspect of today's with Saudi Arabia?
I can see that happening. Yeah.
Do you think that an agreement will happen today?
It's not urgent. It's always when you have civil nuclear, but you have more oil than almost anybody else. We actually have more oil and gas than they do, but I refuse to say that.
And
we have more than we have more than anybody. Can you imagine?
And on the F-35s, are those sales? Israel had reportedly wanted those sales to be conditioned on Saudi Arabia moving to normalized
Israel
relations.
will be happy. Israel is going to be happy.
Condition of the F-35.
Israel's aware, and they're going to be very happy. Okay? Yeah, please. Hello.
Hi, hello. My name is Ahmed Hazani from Sharq al-Awsat newspaper. I'm from Riyadh, of course. I have a question for the Crown Prince and for you, Mr. President. Crown Prince of Saudi Arabia, how much you expected from developing the cooperation with the United States in the field of new energy, AI, supply chain? How much you expected from them?
No limit. We just continue pushing forward. There's no limit. So we just push forward for all the opportunities that we have.
You have to understand, this is really a great ally. Just the fact that they're now doing, I came in here at 6, I did not know that. I was pushing for the 1 trillion, but he didn't tell me that. Now he told me. This is a great ally of ours. You know, when you invest $1 trillion, that's national security for us too, because it creates jobs, it creates a lot of things. And I would say, Scott, right, when you hear one country is putting $1 trillion into the United States, that creates national security. And You know, I think that they don't have to say that, but I think a big part of that is also the fact that tariffs are in play. But even beyond tariffs, that's a real ally that will do that. Creates a lot of power for the United States.
We are also in Saudi Arabia very happy because this much of Saudi money is a function here, and of course it's come back for us for benefits. So it's complementary interest. So this is the I think what's different the friends and ally do.
Well, look, I love the country of Saudi Arabia. I know the people very well. The level of treatment that we go when we go to Saudi Arabia is something that is incredible. And the people like us, and I think they really like America, especially when I'm president. I mean, I don't think they liked America so much maybe for 4 years recently. I think Obama treated Saudi Arabia very, very badly, as you know. And I think Biden didn't have any idea where the hell he was. I don't think Biden knew the difference.
How would you describe the future relationship with Saudi Arabia? I mean, from the strategic aspects. How would you describe that?
Say the relationship is with?
Yeah, a little bit of economic.
I would say
politics
top
and
of the
relationship.
line. It's as good as it can. I don't think it can get much better. We have a country that trusts us, and that's why they make that investment. If they didn't trust us, they couldn't make that investment. And we trust them. They've been very reliable. Now I rebuilt our military in my first term. And we spent trillions of dollars, and we gave away some of it in Afghanistan stupidly because we had stupid people running our country. But we gave away. But that's, as much as it was, it's a tiny fraction of what we put here. And we're bringing our military to a new level, the highest level ever. We have those plants are going out. And again, it's all American jobs and everything, so it's good for a lot of reasons. But as far as Saudi is concerned, no, I don't think our relationship could be better. I don't think they had a great relationship under Biden, and I don't think they had a great relationship under Obama. But they have a great relationship under Trump. When we did the presidential Walk of Fame, you saw that, right? And we're walking, and I asked the Crown Prince, so outside of Trump, because I blow everyone away, who was the best president for Saudi Arabia? And you could, maybe, it's an interesting answer, I don't know.
Roosevelt, who started it, which is a Democrat, and Reagan, he's one of the historical presidents that have close ties with Saudi Arabia. But we've worked with all presidents.
Does Trump blow them all away?
No, it's another league, Mr. President.
Mr. President?
And Trump doesn't give a fist pump. I grabbed that hand. I don't give a hell where that hand's been. I grabbed that hand. Remember Biden? He travels for 20 hours, gets out, and he gives a fist bump. No. When you get out of the plane and you got the future king and the man who's one of the most respected people in the world, you shake his hand. You don't give him a fist bump, right? We don't want to ask you about that, but I can't imagine you were thrilled. You were like a little bit surprised. He's a fantastic guy. You don't do that. Yeah, please.
We're getting closer to the end of the year. Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And frankly, I'd love to get the guy currently in there out right now. But people are holding me back. He's done a terrible job, hurting housing a little bit. The truth is, we've been so successful, we've blown past his interest rate stupidity. He's been wrong. That's why I call him too late. He's too late. Jerome Too Late Powell. He was recommended to me by a guy that made a bad choice. And it's too bad. But despite that, it's having very little impact because we have all of these things happening. But it has an impact on housing to a certain extent. He's a fool. He's a stupid man. But we have some very good people.
Yes, sir. You'll be sitting down with them in the near future. And
we have some surprising names, and we have some standard names that everybody's talking about. And we may go the standard way. You know, it's nice to every once in a while go politically correct. But we have some great names. Steve,
Have you talked to President Maduro of Venezuela yet? Are you still open to that?
He wants to talk.
Yes, sir.
Yeah, I'm open to talk. I talk to everybody. But no, he wants to. They treated us very badly. They sent all of their prison population into the United States, and we're getting them out rapidly. But he sent all of his, and he sends drugs into the United States and other things. No, he treated us badly. He was dealing with a bad president, and he was able to get away. We have now, I think we have the strongest borders anywhere in the world. Nobody's coming in unless they come in legally. You know, we're taking very weak borders where millions of people came in. For the last 6 months, I mean, I don't do these reports. They say 0 people have been able to come in. Is that pretty good?
Mr. President, why wait for Congress to release the Epstein files? Why not just do it now?
You know, it's not the question that I mind, it's your attitude. I think you are a terrible reporter. It's the way you ask these questions. You start off with a man who's highly respected, asking him a horrible, insubordinate, and just a terrible question. And you could even ask that same exact question nicely. You're all psyched up. Somebody psychs you over at ABC. They're going to psych it. You're a terrible person and a terrible reporter. As far as the Epstein files is, I have nothing to do with Jeffrey Epstein. I threw him out of my club many years ago because I thought he was a sick pervert. But I guess I turned out to be right. But you know who does have? Bill Clinton, Larry Summers, who ran Harvard, was with him every single night, every single weekend. They lived together. They went to his island many times. I never did. Andrew Weissman, I hear. All these guys were friends of his. You don't even talk about those people. You just keep going on the Epstein files. And what the Epstein is a Democrat hoax to try and get me not to be able to talk about the $21 trillion that I talked about today. It's a hoax. Now, I just got a little report, and I put it in my pocket, of all the money that he's given to Democrats. He gave me none, 0, no money to me, but he gave money to Democrats. And people are wise to your hoax, and ABC's your company, your crappy company, is one of the perpetrators. And I'll tell you something.
So why not just sign it now?
I think the license should be taken away from ABC because your news is so fake and it's so wrong. And we have a great commissioner, the chairman, who should look at that, because I think when you come in and when you're 97% negative to Trump, and then Trump wins the election in a landslide, that means obviously your news is not credible, and you're not credible as a reporter. So I've answered your question. You should go and look at the Democrats who received money from Epstein, who spent their time. Larry Summers was with him all the time. That creep, the fund guy, was with him all the time. What's his name? Who? Reid Hoffman. I don't know Reid Hoffman, but I know he spends a lot of money on the radical left. Reid Hoffman, in my opinion, should be under investigation. He's a sleazebag. And those are the people, but they don't get any press, they don't get any news, and you're not after the radical left because you're a radical left network. But I think the way you ask a question with the anger and the meanness is terrible. You ought to go back and learn how to be a reporter. No more questions from you. Who else has a question?
Prince, very quickly, I want to ask you, how much money is Saudi Arabia giving for Gaza reconstruction?
We are in discussion about that. Still, there is no amount being
It'll be a lot.
named, but we will definitely help.
Yeah, he's going to, it's very important to him.
And a quick follow-up, the International Security Force, given your pledge there will be no U.S. boots on the ground, what is the U.S. role going to be in that? And how do you sort of ratify the allegations that this could undermine Palestinian sovereignty and even the path to statehood?
I think we're going to get along great with the Palestinians, and we know their leadership. We just had a very, you hate to say war, but it was a war. Very, very successful. And you could say, really, it was on behalf of everybody. We did that on behalf of everybody. And the outcome was extraordinary because we had the best pilots, the best equipment, the best planes, the best everything. And Israel bought the best equipment. They bought it from us. Everything's from us. It all starts here. This office, I was talking to the Crown Prince a little while. You walk into this office, for somebody from the outside, the Oval Office, it's the most powerful place in the world. You're standing right now in the most powerful place in the world. And no matter how big you are, these are the biggest people, the richest people. They walk into this office. It's special, isn't it? Look at him. He's so happy to be here. But you walk into this office. It's the Oval Office. And we've done a lot of good with this office. I've stopped actually 8 wars. I appreciated your question before. But I've actually stopped 8 wars. I have another one to go with Putin. I'm a little surprised at Putin. It's taken longer than I thought. But we stopped India and Pakistan. I could go through the list. You know the list better than I do. I'm very proud. And I stopped one that was almost ready to start again. You know, there was one that was ready to start. And they're doing very well. So, and it all took place right here in the Oval Office, whether by telephone or whether by they came in. Many of these leaders have come in, and you know they signed their peace deals right here in the Oval Office. So no matter if it's the biggest business people in the world or the greatest leaders in the world, the biggest leaders in the world, like the gentleman on my right, everybody walks into the Oval Office and they say, wow. And now, by the way, the Oval Office is in the kind of condition that it should be in. Whether you look at the walk or the marble floors or anything down the road, we're fixing the White House. We're building one of the greatest ballrooms ever to be built. You know, we have an event tonight, and we're going to have about 118 people because we have a very small room. For 150 years, they've wanted a ballroom, and now you're going to get a great ballroom. And I have to say, I probably made a lot of enemies because in your honor, we're having a dinner tonight, a beautiful dinner tonight, and we have a very small room, right? It's called the East Room, and it's beautiful, it's lovely, but it's like for a little cocktail before you go into a ballroom. It's a very small room. They've wanted a new ballroom for 150 years. We could have sold the big ballroom out 3 times in honor of this gentleman. So I made a lot of enemies because I have a lot of people that are invited tonight or are unable to come because of the size constraint. But you know what we'll do? Before I leave office, we'll have another dinner because we'll have it ready long before I leave office, and it's going to be beautiful. It's you know, it's a very popular thing what we're doing. And by the way, no government funds. It's all put up private money, all private money. And in the case, I think it's there's a restriction on foreigners. Otherwise, I could have asked you just for a check, okay? But there's a restriction. These are all private individuals that put up a lot of money to build the ballroom. Not one penny is being used from the federal government. So it's really a nice thing. But I look forward to it. I just pointed it out. If this would be a perfect night to have that ballroom open, Susie. If we had that open, we'd have a lot of people very happy. Right now, we have a lot of unhappy people because they all want to be with us tonight to honor this great man. Thank you all very much. Thank you. Thank you.
All right, there you have it, live from the Oval Office on Bloomberg TV and radio, an extended conversation between President Trump, the Saudi Crown Prince, MBS, in the room, and scores of reporters who assembled there, including Bloomberg's Anne-Marie Hordern, making some news, as you might have just heard, on potential interviews and an eventual pick for the next Fed chair. The president pointing to Scott Bessent saying, I wanted this guy, alluding to potentially some more creative names as well. I'm Joe Matthew in Washington alongside Michelle Jamrisco. This is Balance of Power, and we're glad you're with us here on the Tuesday edition. Michelle, the president made an enormous amount of news there, and we can start with what is important to our audience for real takeaways. The level of investment that the Saudis are making in the U.S. is what headlined this conversation that veered into any number of political and cultural corners. The president saying, and it was in fact MBS who detailed this, that they're increasing the investment from $600 billion to $1 trillion. I don't know exactly what all that money is going to go to, but the president was suggesting he didn't know that news was coming.
It is important to frame that too, Joe, because in their meeting earlier this year, there was that commitment of $1 trillion, which was the kind of headline commitment that Trump was going after.
Yep.
That eventually came down to $600 billion that was referenced today, and now Trump is now jawboning that back up to $1 trillion, which MBS did confirm in the meeting.
So there could be a little bit of fuzzy math here, and announcing monies that have already been allocated has been a recurring factor for this president. On the idea of advanced chips, we're going to talk to Mike Shepard about this in a moment. With regard to export licenses, And Michelle, they were talking about actual Blackwell chips from NVIDIA, at least in reports leading up to this meeting. They're negotiating that right now. We're working on that. Marco Rubio, the Secretary of State, said we may have announcements on that later today. Things got a little chippy with the ABC News reporter, Mary Brewster. We heard from there a couple of times, first asking about the killing of Jamal Khashoggi, the anger that 9/11 families shared over this, and actually generated a response from MBS, which was quite remarkable.
Yeah, it was really a remarkable exchange there where the ABC reporter did bring up, as you mentioned, the case that was before everyone in thinking about how to receive MBS today. And of course, then there drew this exchange between the two leaders about how Saudi Arabia was actually a great leader in human rights, is how Trump framed it, and talked about his friend really taking care of business in the right way. So pretty remarkable. Given the
he was
context.
offended by that, and then the follow-on question to which he threatened to have ABC's license as he pulled, talking about the vote today on the Epstein files, which is anticipated shortly in the House of Representatives. That lasted the better part of about 45 to 50 minutes. Let's bring Mike Shepard back in here, as we mentioned, in our Washington bureau. Mike, we just have to step back and acknowledge how remarkable this was. No one thought questions would even be taken by Mohammed bin Salman, never mind this raucous conversation that took place with questions from all corners. We tried to run through a lot of it here, but broadly speaking, this attempt to mainstream or normalize MBS is well underway.
It really is, Joe, and Trump is leaning very heavily on this relationship that he has formed with the Saudi head of government, de facto head of state, really, in a way, and he is doing so not only with the trappings of the flyover of all the jets that coincided and heralded his arrival at the White House, but also with this appearance in the Oval Office. It's something we've seen him do with so many other foreign leaders, with Volodymyr Zelensky of Ukraine, you name it. And then tonight there will be a black tie dinner, not a state dinner with a capital S and D, Joe, but in all but name. And the president is really trying to roll out the red carpet in so many different ways to signify this relationship he has built with the Saudi leader. The top petroleum exporter in the world, Saudi Arabia, is critical to the president's vision for investment, and especially manufacturing here in the United States. You heard Mohammed bin Salman talk about his desire to expand and invest here in the U.S. In areas that include artificial intelligence and data centers. And he also talked about it as a two-way street. And we are expecting to see perhaps some license approvals for artificial intelligence data centers in Saudi Arabia to be able to gain access to those sophisticated U.S. chips.
Well, it seems like a lot was still pending out of the conversation today, but what are you seeing, Mike? I mean, you work in the tech world, and there's a lot of shock and awe, as we mentioned today, out of that availability, but did anything kind of change the game in what you heard them discuss around chips and the other technology that Saudi could be getting?
You know, Michelle, it's a great question, because we did kind of go through this exercise in May when the president visited Riyadh, and he also visited the United Arab Emirates, and we saw a lot of the same pomp and circumstance, but this time for the U.S. leader. And at that time, we did hear so much talk about deals. The question will be this time around, how much will be new? During the president's very first trip to Saudi Arabia after taking office in 2017, during his first term, we saw a similar unveiling of so many different agreements, yet a number of them were already in the works or have been forged or announced prior to his taking office. So what we'll need to see is how much is building upon what was discussed back in May during his first visit to the Middle East as of his second term in office, and then how much new we will see in terms of Saudi investment in the U.S. Like, what are we going to see happening here as well?
You know, when there are big questions about the AI spend right now that we discuss a lot, the AI race, to what extent will Middle Eastern nations like Saudi Arabia and the UAE help to pay for our build out here at home?
Well, they'll help to pay for it in a couple of ways, Joe. One is, of course, using some of their ample coffers to be able to finance some of this. There's just, so much need for money to continue to do all this expansion of data centers. It's very expensive. All those semiconductors are not cheap, nor is the steel and everything else that has to go into these AI factories, as Jensen Huang likes to think of them. But they're also going to be an engine, Joe, of how AI will be applied in the future. And we know that in the kingdom, they are pushing efforts into autonomous vehicles. This is something that, we've heard the NVIDIA CEO talk about, and other big AI leaders, including Elon Musk of Tesla. They have talked a lot about this. And you can't do that kind of that kind of autonomous driving and other ventures without AI.
Elon's at the big dinner tonight, right?
And he is. He is scheduled to be there.
Quite a who's who on the list. Mike Shepard, thank you so much, as always. Always great to have Shep with us on an important day like this. So we're going to keep tabs on what's happening at the White House. They're retiring to a lunch now. And then, of course, the big, as Mike put it, state dinner with a small S will take place in the East Room a bit later on this evening. We carry on here on Balance of Power with the voice of Jane Harman and our eyes set on geopolitics here. The former Democratic Congresswoman from California joins us here, former ranking member, the House Intelligence Committee, author of Insanity Defense, Why Our Failure to Confront Hard National Security Problems Makes Us Less Safe. The title of that book plays directly into our conversation, Jane, and it's great to have you with us once again on Bloomberg TV and radio. Should we be giving Saudi Arabia AI chips, Blackwells from NVIDIA, or F-35s? Because it looks like they're getting both today.
They may be. My head is spinning. Talk about insanity defense. That was a whopper of a press conference.
What'd you make of that session? I can't believe it even happened.
Back it up to the horses in front of the West Wing. I don't remember ever seeing that. Plus the flyover and the red carpet for someone who is not head of state. But give him credit. I was just in Saudi Arabia with the Munich Security Conference, and I saw what is a changed Riyadh with women driving cars, incubators for startups, and a climate where most of the population is thrilled about MBS's vision, 2030 vision, to change his country. No discussion of human rights, and no real discussion of human rights here today either, which I thought was unfortunate. And I thought that the president's gratuitous criticism of Mary Brewster of ABC was way over the top and unjustified. Yeah. But be that as it may, to answer your question, yeah, I think there will be more money from Saudi Arabia coming here, whether it's $1 trillion or not. It's kind of a soft number as I see it. How much will go into data centers? How much of it will go into job building? What I hear is that, unfortunately, AI may take away a huge number of jobs, especially of recent college graduates. So that needs to be factored in. But the economic relationship is pretty solid. There was also conversation about everything else, certainly including F-35s. And again, that's a little vague, but it does sound like we're sending Saudi Arabia the same planes that we send to Israel, which has never happened before, unless Congress intervenes. Congress has tried to block sales in the past, but not been successful. But that sale has been underway. There was no conversation, or I didn't hear it in all the flow of words, about anything about civil nuclear capacity. I thought it was good that that was left off, because that's very complicated, and I don't think vague promises would work there. But this is now a growing relationship. The other piece that was discussed was whether there will be some Saudi recognition of Israel, and that depends, as the Crown Prince said, on a path to 2 states. He's hanging in for that, and that was U.S. policy until this administration. And I, as an American, strongly believe that that is in Israel's security interest to agree to a path to 2 states. I don't know if Bibi Netanyahu's administration will survive in this form if he does. But certainly if Trump wants to settle wars, get huge numbers on the board, this torrent of words was in the correct direction.
Well, Congresswoman, I want to pick up on one item that you mentioned, that is the F-35s, which we, among the laundry list of items that the Saudi ruler has asked for, that seems to be the most sure at this point. How would that change the balance of power in the region, the dynamics out there, if, currently Israel, as you mentioned, is the one that has the F-35s. If Saudi gets them too, what does that change, for better and worse?
Well, Israel is unhappy about that. It's always had the qualitative edge in military aid, but this has been a very complicated period since October 7. And I think Israel's use of some of its material has been criticized, certainly by the United States Congress. So I think there may be an appetite to do other defense deals. It means a lot of money to the U.S. Trump was very careful, let me underscore this, because I know it's true for Israel too, I forget the use of words, but 2 or 3 words to say that this is not our most advanced software that F-35s contain in the United States. And there is a worry, of course, that Saudi has a deal with China, but I'm sure that to get these planes, they will have to promise that they won't share the technology. And oh, by the way, I can imagine that China is probably pretty astute in trying to reverse engineer a lot of our material, not just to Saudi Arabia. But I'm okay with that deal. I think I'm not okay if we start on a path to sharing or permitting more nuclear developments in the Middle East, unless we absolutely know that won't spur an arms race and undo whatever progress Trump claims he's just made with Iran. That would be very unfortunate.
Jane Harman, we're lucky to have you with us for a couple of reasons. We just have breaking news now coming from Texas in a pretty remarkable headline we didn't expect to see today. And you can put your hat on as a former member of Congress for this one, to interrupt with a completely different story. Texas, the Texas redistricting map has been thrown out by a judge. Texas cannot use this new redrawn map drawn by Republicans in hopes of generating, another 5 additional Republican House seats. This is from a panel of 3 judges just ruling today, a massive blow to President Trump's efforts to redraw the congressional map. And it, of course, follows Prop 50 passing in California that you know a thing or two about, Jane Harman. Are we going to find that Gavin Newsom actually has the upper hand at the end of this event? Or are all these maps being redrawn off schedule going to be a problem now?
Who knows? This redistricting arms race is very troubling to someone like me who was strongly for the commissions in California. But hey, if Texas is doing it, California's going to do it. This was a lower court decision, I'm sure, Joe. So it's going to be challenged, and let's see what happens as it goes up the ladder. And the California plan will also be challenged. I don't know where this ends up. I mean, some of the speculation is quite amusing that the people expect to win these seats may not win them. I just think it's a tragedy to the voters of the United States that the decade, the observance that is set out by the Constitution, that we redo the population statistics every decade, is not going to be respected. But I do understand why California did what it did in response to Texas. So let's see. I mean, this is one of the more exciting news days of ever. What else is going to happen in an hour?
Isn't that true? My God.
Certainly a lot to unpack here. But as that Texas ruling has come down, we certainly are also watching Indiana. Congresswoman, I wonder your thoughts on where things go from there. Of course, the president has been applying a lot of pressure on his fellow Republicans in the state.
Well, I think it doesn't end there. I think a lot of other states are going to try to get into the game. Sadly, I think the game is sad. That is really my point. I think the decision of voters should not be interfered with. But be that as it may, I'm certainly not going to watch or sit by as some in this administration try to prejudice the fair votes of Americans in the next cycle. I don't think that's right. So let's see what the courts decide. As someone who cared intensely about the Voting Rights Act back in the day, I thought it was wonderful that we were enfranchising all voters. Now to see us disenfranchising voters is a really sorry chapter in the American democratic story. And one more point on human rights, because I think human rights were really not discussed in this press conference. I would say MBS has a way still to justify what happened a few years ago with the journalist Khashoggi. He didn't really face it in the questions today. And I would also say that our U.S. case for, moral authority is a bit tarnished lately, too, by some actions of this administration. And in both of those make me sad, because democracy needs to be robust in this world. It's the ladder for the people of this world who deserve respect and opportunity.
Jane, it's great to have you. Thank you so much for weighing in
Thank you.
on all of these stories. That's, of course, Jane Harman, the former Congresswoman from California, former ranking member of the House Intel Committee, and pretty close to all the stories that we're talking about here. Michelle, indeed, human rights did come up in that conversation. It was the aforementioned Mary Bruce, who the president singled out, excoriated in front of that room, referred to as insubordinate and a terrible person, never mind a terrible journalist. Speaking to Jamal Khashoggi, which she was asking about, the president said, you're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman you're talking about, and whether you like him or didn't like him, things happen. But he knew nothing about it, pointing to MBS. Remarkable to see that happen live.
Remarkable at that point, and actually, Joe, if you remembered at the top of the remarks, the president said something to the effect that he appreciated human rights, among other things,
right,
as attributing to MBS being a great leader. So that was certainly part of the conversation throughout, while not intending to be on their part the subject that
That's
everyone
for sure.
takes away.
Yeah, in terms of human rights and everything else, he said. We want to assemble our panel. We're going to stay live here as we go into overtime with now a third story that we're watching. We've got the MBS visit at the White House that generated one of the most remarkable news conferences we've probably ever seen, or at least briefing with reporters in the Oval Office. We've got a vote today, an imminent vote here, on releasing the Jeffrey Epstein files in the House, and now dropped in our lap just about 5 minutes ago. News that the Texas redistricting map is being thrown out by a lower court, and I can only assume this is going to the Supreme Court. Let's bring in our panel. Lester Munson is with us today, Republican strategist and head of the international practice at BGR Group. And of course, Jeannie Shanzano is here, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, I am not sure where to begin here, so I guess we'll go with the most recent. What does this mean about a national rewriting of congressional maps if it cannot happen in Texas?
Yeah, I mean, this is a not surprising development. I'm sure that it will be appealed, to your point, right up to the Supreme Court. But this was always the risk of this strategy. And, just sitting here with you, watching this amazing White House press avail, so much of what the president was trying to do in there was focused on domestic policy. He knows he's in trouble. Republicans are in trouble in the midterm. And of course, one way to avoid that was to redistrict in Texas and pick up these 5 seats. And so this is a huge blow to Republicans. But of course, it may be matched by big blows to Democrats. So we really are still in the same situation. This is a very precarious way to try to move forward politically for any party. You are better off appealing to voters by focusing on what they care about than trying to redraw maps. It's a risky strategy.
Well, Lester, I want to pick up on that. Amid all that's happened today, as Joe said, it's hard to know where to start. But just starting off on, what Jeannie's talking about here and what the Congresswoman addressed, how dangerous is it for Trump to keep pushing this line on redistricting to the extent that, it does become this battle back and forth between the parties? Dangerous for arguably both parties. So how do you see it?
Look, I think the reality is this was already dangerous. We were already in a situation where states were so gerrymandered that the number of seats held by certain parties didn't come close to their actual vote. I'm from Illinois originally. I think there's 17 congressional districts. 3 are held by Republicans, less than 20%. And yet Republicans regularly get 40 or 45% of the statewide vote. So this is already going on. Yes, Trump turns the volume up to 11, to quote Spinal Tap. On a lot of these issues, it's kind of what he does, but he's not inventing the issue. This fight was already going on, and maybe it's a good thing that it's kind of elevated, and maybe we can get some sort of national resolution of this and a way forward that's more sensible, because these redistricting plans are bananas on both sides.
Wow, how about, well, he may have just turned it up to 12, Lester. On Truth Social, just now as we're talking, Jeannie, President Trump writes, I am working with Governor Mike Braun and other Indiana Republicans, Michelle just mentioned Indiana, on picking up 2 Republican congressional seats. The governor, a good man, must produce on this, he says, or he will be the only governor, Republican or Democrat, who didn't, which is clearly not true. I won Indiana, he says, in a landslide, the most votes ever gotten in the state, such an honor. A rhino state senator, Roderick Bray, who doesn't care about keeping the majority in the House in D.C., is the primary problem. Soon, Donald Trump writes, he will have a primary problem, as will any other politician who supports him in this stupidity. Thank you for your attention to this matter. he's not done with the pressure play here, Jeannie, is he?
He is not. And this has been one of the startling things about the last couple weeks. We have seen again and again and again, for the first time in this second administration, Republicans saying they are not going to abide by the president's wishes. He is pushing back hard on that, but we are seeing it repeatedly. I mean, this vote that's going on in Congress today, we may get a unanimous vote to release those files against the president's initial wishes. What we've seen on redistricting over and over again, we are seeing Republicans say, not in my state. So the president has a problem on this side, and he is starting to see the reality of living in a divided, separated system. You don't get everything you want, and this is not a comfortable place for the president to be. And I think we saw a little bit of the wrath and the anger he feels when he was responding to Mary Bruce from ABC. He does not like to be in the system of democracy that we have in this country, where he is forced, like all other politicians, to answer questions and to have to compromise and not always get his way.
Well, Jeannie, speaking of uncomfortable positions, and we've talked about this certainly all week and all month and all year, arguably, but today we get the big Epstein vote in the House. What are you watching for in terms of reaction from the White House and taking things politically from here?
Yeah, I think we saw in that press conference how frustrated the president is to even be asked about this and how he wants to turn it on the Democrats. I think what we're watching for is what happens really first in the Senate. I think we will get a vote there, and the president has said he will sign it, but I'm most focused on what happens in the DOJ. I agree with Tom Massey that it is likely a smokescreen, this investigation, under which they are going to say, can only release some of these files, and we are going to be right back to square one, which is, I think, a problem for the president, because this is not going away.
Got about a minute left, Lester. The votes today, maybe the president makes an order. He could have those files released if he wanted to. Will we ever see them?
Well, we're getting little parts of them.
We're getting
kind of day by
thousands.
day, right? Like,
Will we see something incriminating that people seem to be waiting for?
Don't we want the story to last for a long time? I mean, this is the best clickbait out there. It's been on the front page for months.
Well, that's true.
I don't know how it's going to end. I don't pretend to. The administration could release the files if they wanted to.
Right.
They don't need the congressional vote.
Right.
So there's a lot of kabuki theater going on here.
Kabuki theater with none other than Lester Munson. Thank you, sir. And Jeannie Shanzano, our great panel today, Bloomberg Politics contributor. Jeannie, thank you. Of course, we'll have much more straight ahead here on Balance of Power. In fact, we're going to spend some time with former Republican Congressman Denver Riggleman, who now runs an AI company, speaking to what's happening at the White House and knows a thing or two about the House of Representatives. We'll have that straight ahead here on Balance of Power, only on Bloomberg TV and
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are keeping an eye on Paramount Skydance shares right now. Paramount has formed an investment consortium with the sovereign wealth funds of Saudi Arabia, Qatar, and Abu Dhabi to submit a bid for Warner Brothers Discovery. Now, this is according to Variety, which cites unidentified sources. Right now, we have got Paramount Skydance shares. They are up by 3.1%. The target, Warner Brothers Discovery, up now by 4.5%. Paramount, according to Variety, would front $50 billion for the Warner Brothers Discovery acquisition offer for a total of $71 billion. And Meta Platforms has won a key lawsuit after a federal judge ruled that the company's acquisitions of the photo-sharing app Instagram and messaging service WhatsApp do not violate U.S. antitrust law. This is a major loss for the federal government, which sued the tech giant for antitrust violations in 2020 during the first Trump administration. Shares of Meta Platforms down by 0.5%. The U.S. stock market certainly narrowing its losses right now, looking at a decline of just about 6 points on the S&P, down 0.1%. The Dow now lower by 0.5%. NASDAQ is down 0.4%. And the Russell 2000 index of small cap shares in the green, up 0.9%. 10-year at 4.13%, with the 2-year currently yielding 3.58%. Gold is up 0.7%, 4,071 the ounce. West Texas Intermediate crude oil up 1.2%, 60.64 a barrel, and Bitcoin now higher by 1.7%, 93,371 on Bitcoin. Recapping stocks lower, S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, good to see Charlie Pellet in New York, and he'll be back at the top of the hour when we turn things over to Bloomberg Business Week Daily with another check on the Tuesday trade. Thanks for being with us on the Tuesday edition of Balance of Power here on Bloomberg TV and radio alongside Michelle Jamrisco. I'm Joe Matthew, having survived the near hour-long news conference, if we can call it that, a briefing with reporters in the Oval Office, and what is a big day here in Washington. MBS, the Saudi Crown Prince, visiting with Donald Trump, and they're going to have a state dinner following their meetings and lunch together. But we need a bit of a status check here because it's been an incredibly busy day. We are also anticipating a short time from now a vote in the House of Representatives on a discharge petition that would force the disclosure of the Jeffrey Epstein files, knowing now that President Trump is backing that effort, telling Republicans to vote for it. Some suggest we could see a unanimous result. And a short time ago, this hour, we learned that federal judges have blocked Texas's redistricting map, that which prompted Prop 50 in California and a national effort to redraw maps in time for the midterm elections. That story just emerging now on what has become a doozy of a day in political news. Michelle, we think about the proper voice at a time like this, someone with military and national security experience, has dabbled in the AI field, in fact, has his own AI company now, somebody who served as a Republican in the House of Representatives at the time that all this stuff with Epstein was happening. I think his name is Denver.
I think he's a perfect guest to have on today, certainly, Joe. I mean, how's your heart rate? This is quite a day, a doozy of a day, as you say, in political news, and certainly a lot to still unpack from the MBS visit, which is ongoing, as you say, and through tomorrow we could be getting news about what these deals actually might mean.
Indeed. And so the Denver I refer to, of course, is the former Republican Congressman Denver Riggleman, who's with us from Virginia, as always. Denver, it's great to see you. Thank you so much for joining us. We could talk about all of these stories or just one of them. I'm gonna get in with you here on AI because you know what it's like to actually purchase and operate a Blackwell chip, and it looks like the Saudis are going to be the next ones on the list here. With all the talk of national security concerns and export controls with China, is Saudi Arabia the right country to be next on the list?
No, I think, you know, what's amazing to me right now, Joe, and all the things that you see right now in the House of Representatives with the Chip Roys talking about, you know, bringing up the Muslim Brotherhood conspiracy theories again and Sharia law conspiracy theories and sort of the ridiculousness and pushing this hate, this Islamophobia. I find it amazing you're not going to get a whole lot of statements about what you're saying in the news. And I just heard the update in the news, by the way, for both of you. My heart rate went up, specifically with Paramount. And I can tell you why sometime if you ever ask me about that. I'm like, oh my goodness, there's so much there. But I think what you're looking at with Saudi, I think people in the country, the grown-ups, realize that you have to have certain relationships globally. But I think those global relationships have to be mature. And I think when you're talking about Blackwell chips, you're talking about AI, you're talking about technology transfer. My question is, what other technology transfer does Saudi Arabia have? For instance, haven't they just received surface-to-air missile systems from Russia? And when you're talking about real DoD decision makers, real adults in the room, which I think there's a lack of in this administration, I think what you have to consider is, regardless of the relationships you have to have for certain strategic goals or objectives, you have to look at the government itself, but you also have to look at what happens with something called FME, foreign material exploitation. And the fact is, if we're providing chips or F-35s, we're providing technology, advanced technologies, and the Russians are there also with their technologies, they can exploit what we have without us having insight into that. And I just wonder if anybody's looking at any of this in any way that doesn't actually have decisions just based on what Donald Trump wants, whether it's for his own business interest or whatnot. So I think that's the thing that gets people who've been in the actual defense business, who've been in Congress, who've had to make serious decisions, that even with the press conference, again, the news, the updates, it's unbelievable. Even with the press conference, our administration seems so decidedly unserious about what could happen to our American warfighters and to our citizens if they're not making decisions based on real intelligence analysis and really real foreign policy expertise.
Well, Congressman, there was, as we know, a pretty long wish list from the Saudis for today, and they did get, at least we know, the F-35 package they wanted. They're also in talks around the chips, as we mentioned, civil nuclear energy, that sort of thing. It does seem a lot was asked for and a lot was granted, whereas on the U.S. side, it's a little unclear beyond that $600 billion that's supposed to become $1 trillion. What is the U.S. side getting? Can you kind of unpack, from either side, did somebody win this negotiation? And if so, what is the loss on the other side of the ledger?
I don't think the American people won this at all. I think Saudi won, but I think if you see the people that won, you wonder what the cascading business effects are for the Trump family and those around them. I think that's the first thing you would look at as an analyst. What is the win? Is it lower oil prices? What does that do, sort of economically for the larger oil and processing companies in our country? I think that's what you look at. Michelle, your question on the F-35 is one that bothers me. As a United States Air Force intelligence officer, my expertise were fighter jets. I was trained on intelligence on F-15s and F-16s, and then the supersonic bomber, the B-1. And that's after 9/11. I deployed 10 days after 9/11. So this is a subject that does get to me. Is that, for instance, if the Russians had signed a deal in 21 or 22 to deliver Pansirs, which the NATO designator is the SA-22, it's a surface-to-air missile system, does multi-layer defense with missiles and guns. People can look it up. You can Google it right now. Just Google the SA-22 Greyhound. But those are unclassified things that you're seeing, even the weaknesses. And my big fear, Michelle, is that if we're providing F-35s, are they utilizing F-35s in practice runs against the Pansir or the SA-22? And what are the Russians learning about our weapon systems? Also, we don't know what the technology transfer looks like in the Middle East specifically, right? We don't know if those Blackwell chips are going to find their way into other hands, which was something we worried about with China and other Middle Eastern countries. And again, I just feel like we're not looking at this in a way that benefits the American people. It's a specific portion of those at the top of the government that look like they're trade dealing outside of what's good for America. And again, I wonder what the Republican side of Congress is going to do after they're screaming about Sharia law or about, the sort of Muslims, creeping into our country's infrastructure, the scary thing, right, Joe and Michelle? So I think, again, we have to be very, very careful when you don't have real decisions from professionals and you're doing this for personal gain or for other gains we can't see. What does that do to our war fighters in the future, and what does it do to our geopolitical standing in the future also?
That is a scary scenario that you outline, Denver, and we need to pull you into some deep waters with regard to what's happening in the House today. I'd love to know what you're hearing from your former colleagues, if you believe as well that this discharge petition to release the Epstein files will receive a unanimous vote. And if you're also part of the chattering class now in Washington who says it won't matter because the DOJ has an ongoing investigation into the likes of Bill Clinton and other Democrats that will make it impossible for them to release any Epstein files. How are you looking at this?
You know, the best way for a squid to escape is to squirt a lot of ink, right, Joe and Michelle? And I think,
like that.
you know, so I think what you're saying is a massive amount of ink squirting going on in Congress right now. And for me, you know, when you're talking about redactions, when you're talking about what kind of executive privilege he's going to invoke, when you're talking about the legal challenges, when you're talking about what this vote signifies, it's pretty interesting that they've had about 10 months to get their act together after they said they were going to release the Epstein files on day one. You guys remember the phase one binders, right? And the giddy influencers coming out with obviously empty binders. At this point, you know, I mean, it's mind-boggling that the sane or the rational would think that's anything but performative theater that you're saying. And I do believe right now that I don't think we're ever going to see all the Epstein files as long as Trump is, you know, in place. I think anything that you see, you know, the far right's going to say, no big deal, and the center and the far left's going to say, my Lord, what have we just seen here? I think we just have a bunch of ink squirting going on right now.
Well, Congressman, you wouldn't know it from today's events and how they've been pitched by the White House and the focus on the Saudi deal here. But, you know, the White House has been trying to get back to affordability as a message. So amid affordability, we've got MBS this week. We've got Venezuela cooking hot, which we've forgotten about almost this morning. All of these issues. You've been to Ukraine many times. I wonder if you fear that that issue will kind of fall by the wayside, that we're not having our eye on the ball in terms of what do we do next here. Certainly on President Trump's mind as the last war that he wants to solve, as he often says, and he's losing patience. But where do things go from here on the Ukraine front?
Oh, goodness. That's a great question. My gosh. But that is a great question. You know, as you know, I was just in Ukraine recently, incredible memory, and I'm about to go back, right, in the next few months. And I was just talking about Ukraine today. I think Ukraine does sort of fall by the wayside. I find it interesting that the Trump team stole affordability, the word, from the Spanberger campaign, who actually has a real plan here in Virginia, and all of a sudden they're grabbing onto her messaging that was successful. That's what I'm seeing right now when you're looking at the national landscape. But as far as Ukraine's concerned, Michelle, I'm very, very worried. I know it took them a long time to take Pokrovsk, you know, the Russians going in there, and obviously I get updates. I know a lot of people there. But I do think there's going to come a time, even with the advances in drone warfare, where Ukraine's going to have, you know, maybe some attrition problems. And I think, can they last through this administration? I hope they can. But I think at some point, the United States has to make that decision to arm them in a very, very huge way. And again, it goes back to the fact, I don't know if we're providing, again, F-35s, Michelle and Joe, to Saudi, and we're not worried about Russian equipment there. Are we not worried about Russian intervention or Russian incursions at all into neighboring countries? I mean, at what point after 10 months do we say, well, maybe the Trump administration just isn't that interested in what's going on in Ukraine based on whatever conspiracy theories or whatever foreign policy doctrine they've come up with?
Would Tomahawks make the difference, Denver? We talked about that up and down until the president decided it wasn't time to send those cruise missiles to Ukraine. And what if we did give them F-35s? Would be able to train Ukrainian pilots to make a difference?
Be rough. I mean, training F-35 pilots quickly would be very rough. I mean, they're some of the best pilots in the world. But I will tell you this. I mean, if there is a way, right, where we could use allied F-35s, that would be fantastic. Listen, Tomahawks would give the Russians a maximum pucker factor. I mean, that is just the truth. We are so much more armed, just more technological than the Russians on every way. They've shown themselves not to be effective in a large landmass war against Ukraine. Now, you got to give Ukraine credit. They're one of the most savvy opponents I think the Russians could imagine, based on the fact that they can change their tactics, techniques, and procedures on a dime. They have brilliant engineers over there, especially in drone warfare. But yeah, I think we're at a point right now that those type of arms like Tomahawks, I think it would give the Russians pause, because they really they wouldn't have much they could do against them. When you're talking about anything like that, when you talk about cruise missiles or you're talking about Tomahawks, the Russians would not be happy about that. And again, I think we should have probably done that sooner rather than later.
Really interesting. Denver, it's great to have you back. You mentioned, by the way, Abigail Spanberger. I know that you're working on the transition team. I believe that's public now for the soon
it is
to be installed Virginia governor. Come back and talk to us about what you're doing. I'd love to hear how that works for a former Republican congressman to be helping to stage the next Democratic governor of Virginia. We miss you. Come see us in Washington soon. Denver Riggleman, former Republican congressman from Virginia, U.S. Air Force intelligence officer, bringing us ever closer to the stories that we're following today on a breaking news day in Washington. We'll have a lot more on all three: MBS, Texas redistricting, and Jeffrey Epstein, all ahead in the late edition of Balance of Power.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. I'm Carol Masser, along with Tim Stenivek. We're live at Bloomberg headquarters in New York City. We've got the S&P 500 headed for its longest slump.
It's okay. You can invent that. We know what you mean.
It feels like a slump. It is a slump, and it is the S&P headed for its longest slump since August. In fact, we've got the S&P 500 down for a fourth consecutive day. We are seeing some selling in those world's largest tech companies, but we're off our worst levels of the session.
We are. If we take a look at the indexes right now, the S&P 500 down 0.4%, the NASDAQ down 0.7%, the Dow down 0.7. Charlie Pellet is going to have more in just a few minutes, but we were down more than a percentage point on some of these a little earlier in the trade.
Yeah, so much of the selling that we've seen as of late is really market watchers increasingly questioning that AI trade. Among them, JP Morgan's Daniel Pinto speaking earlier today at Bloomberg Africa Business Summit in Johannesburg.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
All right, slump or slump, whatever you call it, we've definitely seen a new narrative when it comes to the AI trade. That, of course, was JP Morgan's Daniel Pinto speaking earlier today at the Bloomberg Africa Business Summit in Johannesburg. Meantime, behemoths continue, Tim, to spend heavily on artificial intelligence.
Yeah, Microsoft and NVIDIA committing to invest up to a combined $15 billion. That would be in Anthropic. It's a move that ties the AI developer closer to two of the biggest backers for its rival OpenAI. Remember, OpenAI has ChatGPT. Anthropic, founded by Dario Amodei and a number of other people, including some people formerly of OpenAI. They have the Claude LLM.
I feel like that's circular financing.
That's the first thing I thought of when I saw this news.
We just keep building on it.
All
right.
Here's some money, and then you're going to spend it with us.
All right, more on the trade this hour and the AI trade and all of that.
Maybe we call it vendor finance. I don't know. What do we call it?
I don't know. Let's work on that.
Okay.
Right?
Vendor financing is another term.
Let's get a focus group and think about that one. Hey, top of mind for us is certainly what's going on in the trade. We're also going to get into what we've been seeing when it comes to domestic politics, a big ruling when it comes to Texas redistricting. We are going to get to that in just a moment. We're also going to get to some news, focus, I should say, maybe more correctly, on what's been going on at the White House today. And that is a meeting between MBS and President Trump, why oil isn't front and center at those discussions. We're talking, of course, about Saudi Arabia's Mohammed bin Salman. So we're going to get into that a little bit later on.
Yeah, Ellen Wald's going to be joining us in just a few minutes. Plus, Dr. Adam Posen, president of the Peterson Institute for International Economics, on these evolving global relationships and the economies and the economics that shape it.
Always behind it. Also, Andy Marsh, CEO of Plug Power, on the tough road to hydrogen power. And then a market reset, market sell-off, market crash. How do you describe it? We're going to get into that with Stephanie Gill, Tim, Chief Investment Officer at Robinhood Markets.
All that and more coming up over a packed hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, watching the markets closely, Charlie Pellet.
Hi, thank you very much, Tim and Carol. Indeed, down day here, but significant change in that Paramount Warner Brothers Discovery story that we told you about last hour. Paramount now says the Variety report of a Warner Brothers bid is, quote, inaccurate. A Paramount spokesperson has issued a statement about the Variety report. Warner Brothers and Paramount shares have paired their gains. Right now, we got Paramount Skydance up 2.1%. Warner Brothers Discovery up by 3.4%. Stay with Bloomberg for the latest on this developing story. The other story that broke in the past couple of hours, Meta Platforms winning a key lawsuit after a federal judge ruled that the company's acquisitions of the photo-sharing app Instagram and messaging service WhatsApp do not violate U.S. antitrust law. It is a down day today for the Dow, the S&P, NASDAQ. S&P down 25, down 0.4%. We've got the Dow down 0.7% right now. Again, the S&P down 0.4. NASDAQ down 0.7 with a 10-year yielding 4.12%. Spot gold now higher by 0.7%. West Texas Intermediate crude up 1.3%, 60.70 a barrel, and Bitcoin now up 1.5%. 93,220 on Bitcoin. So the Dow, the S&P, NASDAQ, all declining. Bottom line here, we're slimping along. S&P down by 0.2%. That is a Bloomberg Business Flash.
I know, slumping, it all works,
hey,
right?
Keep trying to make slimp happen, Charlie.
If I can make it a function on the Bloomberg, I'll be really happy. All right, Charlie Pellet, thank you so much. Hey, just moments ago, we got some more news domestically. A federal judge panel ruled that Texas diluted the strength of minority voters in redrawing congressional districts, likely racially gerrymandered, Tim.
The judges granted a preliminary injunction following a trial in October where plaintiffs said the maps unlawfully dismantle 4 minority opportunity districts. That decision comes as Republicans cling to a narrow advantage in the House ahead of the midterm election next year. It follows a July letter from the Justice Department citing racial gerrymandering in the map the state passed. That was back in 2021. With more, we head to the Bloomberg News Dallas Bureau and to Texas Bureau Chief Julie Fine. Julie, certainly a big decision, one that, redhead crossing the Bloomberg terminal, one that could have implications for the 2026 midterm elections as we gear up for those. I'm curious, is this the end or does this go to the Supreme Court next?
I mean, I would imagine that this will definitely be appealed and could likely end up at the Supreme Court. I mean, first of all, one of the most conservative appeals court is right near us. That is the that's the appellate division in Louisiana. So it could very easily end up there. Obviously, I think this has major implications. When you look at other states, you have California that is talking about redistricting. You have other states that are discussing it as well. This is something that will be paid attention to by the United States of America for sure. Major implications for the midterm elections.
Yeah, it's just kind of fascinating because it does make us think, kind of what's next. We did talk about, you mentioned California, and earlier this month, California voters, Julie, as you know, overwhelmingly approved new congressional lines that could net Democrats up to 5 more seats in next year's House election. So is it tit for tat? Indeed, what happened in Texas is going to happen in California, or not necessarily?
Well, I certainly think so far we have seen this. I mean, Gavin Newsom certainly said we are going to fight fire with fire here. That's what he said, referring to his own state. So, of course, I think people will definitely be paying attention to how this is handled in the courts in Texas. I mean, it's fairly unusual to see redistricting at this time of the year. Generally, you see it every 10 years after there is a census report. So this is something you obviously don't see very often, and you will now see it play out in the court system. And these cases will likely be expedited by the groups filing them because of the midterm elections.
Yeah, but it raises the question about what can actually happen in the next few months or, up to less than a year away, because that's where we are from the midterm elections right now. This is something that has to get done very quickly because this voting is going to happen very soon. These people need to be running right now.
Absolutely. I mean, here in Texas, the midterms are in March. In March is when the primaries are.
Yeah.
The primaries are in March, yes. So the primary elections are in March. So a lot of these people are deciding, first of all, are we going to run again for our current seat that has been redistricted severely? So, yes, obviously you'll see this moving very quickly. You have to remember the redistricting in Texas was just in the summer, and now we're seeing this come down in November.
Yeah, I feel like time has just changed dramatically, or the concept of such. Hey, Julie, thank you so much. Texas Bureau Chief Julie Fine
anytime.
There in our bureau in Dallas. All right, that's the latest on the U.S. home front. Let's get to geopolitics and interesting relationships, if you will, out of the White House today. This is Saudi Crown Prince Mohammed bin Salman is visiting Washington, D.C. for the first time since 2018. That's a trip that came just a few months before the killing of journalist Jamal Khashoggi. Now, today, MBS talked about upping investments into the United States from $600 billion to $1 trillion, also about access to sophisticated AI chips, data centers, the Epstein files, conflicts of interest, and the killing of that journalist. All of that, Tim, did come up during the press conference, if you will, and questioning from reporters at the White House.
Yeah, President Trump said the U.S. was likely to approve a defense agreement with the oil-rich kingdom and a civil nuclear deal, while reiterating that Washington would sell F-35 fighters to the country. He also said leaders had discussed the possibility that Saudi Arabia could establish formal diplomatic ties with Israel as part of the Abraham Accords. Here's Mohammed bin Salman and President Trump talking with reporters earlier today at the White House.
We believe in what you're doing, Mr. President, is really creating a lot of good things and good foundation to create more economical growth, more business in America. And it will also your work for the world peace. I believe, Mr. President, today and tomorrow we're going to announce that we are going to increase that $600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas. And the agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So
in
you
our
are doing
countries.
that now. You're saying to me now that the 600 billion will be 1 trillion.
Definitely, because what we are signing, it will facilitate that, and we
I like
will
that
build
very
on
much.
it.
All right. Saudi Crown Prince Mohammed bin Salman at the White House with President Trump earlier today. This evening, by the way, there's a black tie dinner, not an official state dinner, although at that dinner we did hear Elon Musk would be there.
Tiger Woods reportedly will be there as well.
Yeah, a lot of officials, right? There's also an investment conference planned for tomorrow that executives from companies, including Chevron, Pfizer, they will be attending. So we wanted to kind of put this in perspective, because typically you would see these two kinds of leaders meet and you think energy policy would come up, although it really didn't. Let's get to it with Dr. Ellen Wald. She's president of Transversal Consulting, senior fellow at the Atlantic Council, author of Saudi Inc., joining us from Boca Raton, Florida. Ellen, so good to have you back here. Feels like Saudi Inc. and U.S. Inc. are kind of merging. Tell me about this meeting, because it was kind of fascinating. It really wasn't about conversations around oil or the energy markets.
It was absolutely fascinating, especially if you had an opportunity to watch the press conference live. I think everything from the marble floors to the White House to whether or not Saudi Arabia is going to join the Abraham Accords was covered. What's interesting is the amount of money that Mohammed bin Salman is talking about potentially investing in the United States. And I think the big question on everyone's mind is, where are they getting this money from, given that oil prices are pretty low? And I think the answer really is you have to look at the Saudi investment fund, the PIF, because that's really where they have a lot of their investment dollars and ready to deploy. And it really, that fund is really independent of the price of a barrel of oil. So I think the question of whether Saudi can deliver this money, the answer is yes. But whether they actually will deliver on this is another question. And I do think that a lot of that money is probably earmarked for defense purchases, and that really depends on whether they do go through with this agreement to sell Saudi Arabia F-35s and other defense equipment that is somewhat controversial and hasn't necessarily been sold to Saudi Arabia previously.
Carol mentioned that you're the author of Saudi Inc., The History of Saudi Arabia and Aramco. And I wonder now how successful the Saudi Arabian government has been, the Kingdom of Saudi Arabia, of diversifying its economy away from oil. Has it been successful?
That is a really great question, and I think the answer is if you're looking at and you're trying to say have they achieved the goals that they set out to achieve when they announced their big plan to diversify from oil, the answer is no, they have not really achieved those goals. I think really a lot of those goals were not achievable goals. What they have done is they have introduced some very important changes that I think can certainly help make the Saudi economy more robust over time. We're talking about making it easier for foreigners to visit the country, both for tourism but also to work, opening up the workspace for women, and important societal changes like that, I think in the long run will help diversify their economy. But if you're asking whether their economy is still very much dependent on the energy industry, the answer is yes. Aramco, on the other hand, has over the past 50 years, I would say, significantly diversified itself from simply an upstream company that sold a lot of crude oil to a very diverse energy company that has multiple revenue streams. So they're not just dependent on what the price of a barrel of oil is. They make a lot of oil products. They're getting into natural gas. They make money off of trading oil and in the financial sense. And so they're making a lot of money that is not dependent on whether the price of a barrel of oil is $60 or $80.
So I guess this relationship that we are seeing between the United States and Saudi Arabia, I feel like it's always been a bit of a frenemy kind of relationship between the two nations. Having said that, there's been times where it's been stronger, times when it has not. Is this the relationship going forward, in your view?
What's so interesting about the relationship between the U.S. and Saudi Arabia is that Saudi Arabia has a very different view of the relationship than the United States does. In the Saudi mind, the U.S. is a best friend, that they've always been so close, and they've cultivated an entire kind of aura and idea about this friendship. They think the U.S. is a huge ally. If you look at it from the U.S. perspective, Saudi Arabia is, at least it can be, a strategic partner, but Saudi Arabia would not be considered an ally to the United States the same way Great Britain or Canada might be considered an ally. And so I think that leads to very different opinions about what exactly is going to go on. So, whether or not, Saudi Arabia has a defense agreement, yes, traditionally we have had defense agreements, but from the U.S. perspective, that's not always so guaranteed. If it's beneficial to the U.S., then it will happen. But it's not necessarily a guarantee. It's not necessarily this allyship that the Saudis often perceive the relationship to be.
Well, it's interesting when you say Canada and the UK, and in particular Canada, I feel like, it looks almost a friendlier relationship between the U.S. and Saudi Arabia than it certainly does between U.S. and Canada right now. I guess my question really, Ellen, is, are we laying the ground for whoever is in the White House next, be it Democrat or Republican, that this is the relationship, or could it change and get different depending, again, who is in the White House?
I think that there's always kind of a baseline, and you could see that when Trump was kind of fishing for a compliment from MBS, as oh well, he's the best president. They've had the best relationship with Trump, and MBS kind of answered that with, well, we've always had, Democrat or Republican, we've always had good relations with presidents of the United States, and then he mentions Reagan as a particularly good one. So I think that MBS is certainly looking at this as he's got to lay the groundwork for his good relationships with presidents that are going to come after Trump, whereas Trump is seeing it as the here and now.
The military balance of power in the Middle East, the potential F-35s that Saudi Arabia could get as a result of making a deal with the United States. President Trump said he would approve selling the F-35 fighter jet to Saudi Arabia. I'm just wondering how that changes the balance of power when it comes to the militaries in the region, especially with regard to Israel, which for years has been a U.S. ally. And also what U.S. interest the U.S. would have an interest in selling F-35s apart from getting the revenue to a U.S. company.
Exactly. I do think from Trump's perspective, he thinks that the F-35s are the greatest airplane ever to be made, and so he loves that everybody wants them. And so it's more of an economic issue. I think from the Pentagon's perspective, they're looking at it as more of a strategic issue. Now, the UAE apparently got assurances they would be able to purchase these when they signed the Abraham Accords, and it was believed that this would also be a condition for Saudi Arabia. I think it's very, very clear now that Saudi Arabia is not going to join the Abraham Accords. They're not recognizing Israel unless there's an assured path towards a Palestinian state. I don't see that happening anytime in the near future. So I think we're kind of going to be at a standstill here. And if the Pentagon has severe concerns about it, I think it may not actually go through as much as Trump wants it to go through.
Is that more tricky, or is it the AI chips that are more tricky? And does Saudi Arabia need both?
The AI chips are very tricky. I do think that that's really what's going to be the focus of this investment meeting and this dinner, is that the PIF wants to make these investments in these firms because that's their way of kind of getting their hands on this technology. I think from the U.S. national security perspective, they don't want their chips to be in any connection with Chinese technology equipment. And so there are serious concerns, cybersecurity concerns there that are going to have to be dealt with. But I do see the PIF potentially making investments in these firms. I don't see necessarily us producing semiconductors and chips in Saudi Arabia, but I do think the Saudis can make a case to try to get data centers in the kingdom, particularly if they can assure the security of the equipment in their country, and also if they offer, basically free land and free energy. I could see that being a very powerful draw.
All right, great stuff. Ellen, thank you so much. Dr. Ellen Wall, President of Transversal Consulting, Senior Fellow at the Atlantic Council. All right, we're going to stay on global relationships, the economies that drive them, and turn on over to Dr. Adam Posen. He's President of the Peterson Institute for International Economics. He joins us from, I believe, the nation's capital on this Tuesday. Yes, Washington, D.C. Dr. Posen, good to have you back here on Bloomberg and on Bloomberg Business Week Daily. These relationships, I first got to ask you, watching the relationship, what seems to be a very close relationship between the United States and Saudi Arabia, and I think about their economies. How do you see it? What's significant for you here in watching this?
Thank you, Carol, for having me back on Bloomberg Business Week Daily. I want to pick up on some things you discussed with your previous guest, which is there is a huge economic, leaving aside the national security incentive, for Saudi to behave in this way, in that MBS, the Crown Prince, has very definitely been seeing part of his agenda to try to transition Saudi away from over-dependence on export of fossil fuels. And it's the right thing for them to do from the economic perspective. And obviously, Saudi, for many decades, has been accumulating surpluses of cash and trying to invest them. They've been trying to diversify. I wouldn't go quite as far as your previous guest did in extolling how much Aramco's diversified, but they've been trying. I think the deeper integration with the U.S. is a path towards that, and it is a credible path towards that. That's not to say they haven't been doing a lot of good things in terms of domestic investment and on the economic front on liberalization. They have. And I know a lot of very serious money investors who are very excited by this. But just to say this puts them on the path. For the U.S., however, I think it's less important economically. It is more about the security relationship, or at least it should be. There's never been a shortage of people willing to invest in the U.S., or at least with the exception of a few years in the late 70s and early 80s, not since 1900. And that remains the case, even though things are happening to make the U.S. a little less attractive. So for the U.S., I think there has to be more of the security diplomatic conditionality. Just simply getting Saudi investment in the U.S. is not that big a gain.
What type of conditionality, especially in exchange for F-35 state-of-the-art jets?
Well, Tim, I think that's the right question, and I would not say it necessarily needs to be tied to Israel recognition in the Abraham Accords, but it needs to be tied to something of that caliber. So maybe it's something about how they're relating to Iran, or something about the Saudi mutual guarantees with Pakistan, some sort of agreement on how the Saudis will influence Pakistan. Or maybe it's about the investment which the Saudis have indicated they're willing to do in rebuilding Gaza and dealing with what will be refugee issues there. All I'm saying is that it has to be something substantial. But I also think you want the F-35s, of course, are a big carrot, but you also want to think of it in terms of the relationship. And this is what is key, whether it's UK or Saudi or Japan.
Adam, you talk about relationships, and I think about something that came up questioning by reporters of the president and MBS while at the White House, and that is about kind of the relationships that the Trump organization has with Saudi Arabia on business deals. And we have a story in the Bloomberg about the Trump organization planning a luxury resort in the Maldives with a Saudi Arabian partner. It's just one case. I'm just curious, you've watched, you've talked about, you've analyzed different administrations. This kind of what seems to be a mixing melding. I know the president answered the question. He said, I have nothing to do with family business. But how do you see this?
No, I appreciate your asking that, Carol, and I don't want to be mean, but it doesn't matter whether the president literally in the narrow sense has nothing to do with it or not. We had laws, and more importantly, we had norms, and we had expectations from the press, from the public, from the markets, that the U.S. did not deal in family enrichment when you're in public office, let alone when you're the president. Some of your viewers might remember the old John Adams miniseries in which John Adams alienated both his daughter and his son-in-law, or one of his sons and his son-in-law, because he wouldn't advance them while he was in the White House. And what matters is this very strong perception, which is obvious in Qatar, in the United Arab Emirates, and Saudi, but even with the gold that was offered just the other day to the president, that there is this perception that you link things. Now, I don't want to over dramatize this. There are a lot of countries in the world, including Saudi, including Turkey, including China, where this kind of ties go on between the leaders' families and chosen friends and foreign policy and other governments. It's not good, it's not fair, it's wasteful and distortionary, but it's also not the end of the world. Businesses and investors can proceed. But for the U.S., this is, going back to your original question, this is a huge step change. We've not seen anything like this, at least since Teddy Roosevelt, meaning 120 years.
So just to be fair, because we certainly get feedback from our audience, and to say that the president says, I'm not involved though, and we've had, any president that walks into the White House, Republican or Democrat, certainly has allegiances to industries or so on.
I agree. It's never going to be absolute. And we all know the stories of people going back to Jimmy Carter's brother selling beer, that there's always relatives who try to profit on these things. But so again, this isn't about ascribing malevolent intent, but you want to have a system in place where people expect and feel, particularly investors, but also average citizens expect and feel that this is an exception, not the rule, that you occasionally have the rogue family member, but that on the one hand, policy choices are not being driven and being perceived as driven by these things. And on the other hand, that economic choices are being made on a commercial basis. And that's why no matter how many times people of different parties and different administrations or appointments fail on this front, you want to have a system of scrutiny and rules and presumptions that discourages our elected officials from being so overt about it. I think, to be fair, the Trump administration and the sons of President Trump and Secretary Lutnick and the Middle East negotiator guy and all these people, they're being very open. And I think that in one sense does matter, like they are with crypto. But in another sense, that doesn't solve the problem, because then the perception is still people are being favored, decisions are being made on a bad basis. You have to rounds or hotel deals to make things happen. And
transparency doesn't necessarily negate actions, right?
Yeah. Well said.
Dr. Posen, you said it's not the end of the world if we're in a situation such as this or in a society such as this.
But it's not the end of the world. Yeah.
But I'm wondering if there are potentially long-term economic repercussions that happen in societies that don't necessarily have the same rules in place. If we can look to history or modern history to get an understanding of what the implications of that could be in the U.S. in your view.
Oh, I think they're enormous. I think then, because it's the U.S., which, as I've argued, Tim, has been the linchpin of the rules-based, law-based system of economies since World War II, it has repercussions around the world, because it means the U.S. is not only enforcing the norms against this kind of corruption or perceived corruption or tied political choice-making. It means that the U.S. is setting an example that you can get away with it, and other people should get away with it. And it breaks down the regimes and the operating principles we have to deter these things. So when I say it's not the end of the world, I don't mean to suggest it's not very harmful. It will reduce the returns on capital. It will reduce the ability of average people and normal businesses to get access to opportunities. It will divide the world. It will increase instability in investment markets. It will waste public money. It's bad in a lot of ways. I just merely want to be very clear that though it's unusual for the U.S. in the last 100+ years to behave this way, in our long ago history and in other countries around the world, this has taken place, and that there have been much smaller, much less overt examples of this by previous U.S. administrations.
Well, and just thinking about all you've just said, Dr. Posen, and then kind of squaring that
with the recent government shutdown and the domestic issues that kind of came to the forefront, you know, the 1 in 8 Americans who are on some kind of food assistance or food stamps, you know, the amount of Americans that are just struggling to put food on their table, a roof over their head. I want to bring it down then with so much focus on global issues. And some would say when you're president, you have to look beyond the U.S. borders as well as within the U.S. borders. But having said that, what is it that, you know, is maybe being ignored in your view domestically that's really got to be addressed?
Again, you're asking very profound questions. I'll just say that in an enlightened administration, the reason you get involved in the rest of the world is because it ultimately is to, if you set up a rest of the world that feels safer and less corrupt and more stable and less subject to disease and refugee flows and wars, that's ultimately to the benefit of the average American. And if you have open and free commerce on a rules-based basis, that raises American opportunities and American citizens' purchasing power. So I agree with you. There's a question of how you prioritize, and this goes to the point with Saudi. I'm not sure that that should be the biggest priority of an American administration right now. It's fine. You can walk and chew gum. It can be one of the things. So when you say what's in the domestic front, I think the removal of healthcare support, subsidies and access to Medicaid and to all these Obamacare-related things is going to materially affect the health and well-being of millions of human beings in the U.S. And that is bad economically, but it's bad in human terms. I think the reduction of options through the anti-migration policies, through other policies that make it so more people, mostly women in late middle age, have to stay home to be caregivers to elders and to children and to disabled people is materially bad for humans and is a huge pressure on people. And I think the combination of anti-migration policy, attacks on the Fed, tariffs, deal-making, some of which looks corrupt, all adds to a more inflationary environment, which reduces real incomes for people. So there's a whole bunch of things on the domestic front. But I just want to say that it's not about choosing the global versus the domestic. It's about choosing the self-interested versus the public welfare.
I think we need to leave it there. That I got to say, sometimes I'm in awe of our guests, and I certainly am on this Tuesday. Dr. Posen, thank you so much. Really appreciate all we could.
Thank you for having me.
Same here. Thank you for joining us. Dr. Adam Posen, president of the Peterson Institute for International Economics. Just a quick check on the trade. We're definitely off our worst levels of the session. Let's toss it back to Charlie Pellet with an update on the trade and some of your top business stories. Hey, Charlie.
Thank you very much, Carol Master. Indeed, worst level of the day. We were down 1.5% right now, looking at a drop on the S&P of 0.5%. Just about 90 minutes to go ahead of the closing bell. Earnings, of course, tomorrow out of NVIDIA. Stocks lower across the board. NVIDIA, by the way, down 1.8% right now, with the S&P down 30 points, 66.42 where we stand, down 0.5%. We are looking at a sell-off in the world's largest tech companies. That is driving stocks toward their longest slide since August. That would be 4 in a row. The Dow now down 0.8%. NASDAQ Composite Index also down 0.8%. But interestingly, the Russell 2000 Index of small cap shares holding on to a gain now of 0.6%. 10-year yield 4.12%, with the 2-year 3.58%. Gold is up 0.7%, 40.74 the ounce. West Texas Intermediate crude 60.73 a barrel, up 1.4%, and Bitcoin now up 1.6%, 93,272 on Bitcoin. After earnings, Home Depot down 4.5%, rival Lowe's down 1.1%, and repeating an earlier headline, Paramount says that Variety report of a Warner Brothers Discovery bid is, quote, inaccurate. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here on Bloomberg Business Week Daily. A vote has been going on in the U.S. House of Representatives on legislation requiring the release of Justice Department files on Jeffrey Epstein. That has been going on. It looks like
it is still happening or maybe just wrapping? We're waiting to see.
Still happening. We still see the votes moving. This is HR 4405. And right now, the yays among Republicans and Democrats combined are number 337. Still, 50 Republicans have not voted. 44 Democrats have not voted. So 93 votes remain. We're just watching this play out in real time right now. 341 votes to the yay. 1 vote to the nay. This is for HR 4405.
All right, and keep in mind that this measure will need to pass also once it gets through the House, if indeed it does, we'll need to pass the Republican-led Senate before becoming law. So there is a lot going on. And what's interesting is, you know, keep in mind that President Trump has also initiated a Department of Justice investigation, which could enable him to delay the release of key files, even if the measure becomes law. So that happened on Friday.
Yeah, you can see if you're watching on TV or YouTube, the votes continue to come in. 361 to support HR 4405, 1 nay still, Carol, 67 combined Republicans and Democrats have not voted at this point.
All right, so interesting. And this has certainly been an issue that has been, I think it's safe to say, many say, you know, plaguing certainly the White House and President Trump. He was asked about it earlier today in his joint meeting at the White House with MBS, Mohammed bin Salman of Saudi Arabia. So that came up in a question, I should say, not that they addressed it directly, but it was certainly asked by the reporters in the room. Representative Thomas Massey is a hardline conservative who has previously sparred with the president. He has helped spearhead the legislative effort to force the files release. He has suggested the president has been complicit in a cover-up. So there's been a lot. And what's been interesting, I think, is, Tim, to watch Republicans move to also be supportive of a release of these files.
I want to bring in Bloomberg News senior editor Wendy Benjaminson. She joins us from Washington, D.C. right now. Wendy, we're going to keep the tally up there, and we'll bring you official numbers as soon as we get them. But right now, this certainly is on track to pass the House. This is the bill to force Epstein files release. Does the House actually need to vote on this, or could the president just do this if he wanted to?
Oh, yes, absolutely. The president could have just ordered the Justice Department to release the files, but instead he is taking this path. And at this point, with the number of votes they have, there's no way it's not going to pass. It has essentially passed. Even if all 50 Republicans vote no, they have enough votes. So it has basically, or in a few minutes, will pass the House. But then here's where the chess game gets interesting. Then, as I heard Carol saying a moment ago, it goes to the Senate, where Johnson, the House Speaker, said earlier today he would hope that the Senate bill would be amendable, because the House bill that's passing just says the Justice Department must release these, and they could be held in contempt of Congress if not. They must have no redactions, no editing, nothing. We just get the full unadulterated files. The Senate could amend that. The Senate could amend that so that they can redact sensitive information or whatever information the Senate decides to do. They may not. They may decide that since President Trump has said he doesn't care, release them all, that they will do that. But the smart money seems to be that something like that will happen. And then Trump doesn't have to sign the bill. If he changes his mind, he doesn't have to sign it. He can veto it or pocket veto it. And then the other thing is the Justice Department could also say, as Carol also smartly said a moment ago, that now they've been ordered to investigate the Democrats that are involved, and this is an active investigation, and it's unfair to everybody if we release any information about this at this time. So there are a lot of games that could be played here. So we're not sure that even with that heartbreaking victim's testimony from this morning and last night's football game, that that we're going to get the files.
I mean, it's funny, like, what's going on within the Republican Party, Wendy, right now, in terms of support to have them released, not have them released, or have them released with, make it amendable?
Are you talking about sort of the Thomas Massey and Marjorie Taylor Greene wing versus Speaker Johnson?
Correct.
That's kind of civil war that's happening right now.
Yeah, like what? I'm curious about Republicans even supporting it at all.
Well, Donald Trump gave them permission to, and so it's, you know, the House in particular, the Senate also, all Republicans, but the House in particular is responding to an audience of one these days, and that one is Donald Trump. And so when he didn't want the files to be released, they wouldn't swear in Representative Grijalva, who would have been the last Democratic vote needed to force this vote that is happening right now. So he didn't want them out. They went to extraordinary measures to make him happy, to do what he wanted. And now, Sunday night, he said, go ahead, release them, I don't care. So now everyone's in favor of releasing them. And then if we do see amendments in the Senate or he doesn't sign it, watch for a flip back from these Republicans. Also, there's another thing here. The entire House of Representatives is up for re-election next year in the midterms. Right. Nobody wants to be, oh yes, I wanted to keep the Jeffrey Epstein files secret. That's just not a message you go to town halls with.
According to the tally that we're seeing, there is one Republican who's voted against H.R. 405 right now. We're still waiting for the final numbers to come in. Does seem like 9 still have not voted, 5 Republicans and 4 Democrats. But do we know who voted against it?
I mean, the House appears to have enough votes, but yeah.
It absolutely has enough votes. This has effectively passed the House. That one nay vote, I don't know at the moment who it is.
I would imagine the attack ads are getting ready.
Well, yes, or, you know, somebody will come over to him and he or she can change their vote. I mean, until that gavel hits, there's always that last-minute wrangling that goes on where someone pulls them aside and says, what the heck are you doing? Go change your vote. And it's like, oh, I voted no? Okay. And they'll change it.
Wendy, without being controversial, you know, here we are just coming off a government shutdown. I keep going to this because I still think about the food stamps, how many Americans were on it, who weren't getting it, you know, kind of the tough situations that some Americans are put in. I mean, I'm thinking about what Congress should be really doing domestically to help Americans, and maybe what this president promised many Americans to do. And here we are spending an awful lot of time talking about Jeffrey Epstein. All of the victims, you know, I think we all have compassion for them. But I'm just wondering, like, what business is not getting done that would help more Americans at this point?
Well, there's so many things that could be getting done. You're right, but this is a vote that was started in the 24 campaign when Donald Trump said to his base, I'm going to get the Epstein files released. We're going to finally figure out, you know, who was involved. We're going to release the client list, which now may or may not even exist. And so the MAGA base, one of the reasons they voted for Donald Trump is that this conspiracy about all these supposed, you know, billionaires and presidents and princes and all these very, very important, influential people who may have been involved in this horrendous crime. They really want to see those files released. So this is something that voters, yes, do want. On the list of priorities of voters, this might not be at the top of the list. But with the shutdown resolved, to your point, the more important policy move now would be to do something about health care, because they are going to have a vote in mid-December, on extending the ACA health subsidies. And the president right now is saying only just send checks to people. That's the only health care fix I want to see. And so it's going to be very interesting to see how that vote goes, considering what we've been talking about today and how they want to act on behalf of the president.
Well, so glad we could get some time with you to just weigh in on kind of where we are. As you said, it does appear that we have enough votes, or at least the House has enough votes to pass this legislation requiring the release of Justice Department files on Jeffrey Epstein. Wendy, thank you. Wendy Benjaminson, she's senior editor at Bloomberg News. She joins us from our Washington, D.C. bureau.
Hey, we are just shy of 1 hour and 20 minutes from the close of equity trading here, and we're seeing some buying late in the session. The S&P 500 down now only 0.2%. The NASDAQ composite down right now 0.5%. The Dow down 0.6%. The NASDAQ 100 down 0.5 percentage point. Earlier in the session was down over 2%. So seeing a significant improvement there, at least if you're long this market. If you take a deep dive into the S&P 500, only 3 groups, 3 industry groups are actually in the red: consumer discretionary, information technology, and industrials. Consumer discretionary really being dragged down 1.5%. Communication services, though, up a full percentage point.
Kind of fascinating, though, as you mentioned, when you look in the groups, we've got, 328 names in that S&P, actually higher, 174 the downside, despite what feels like kind of a downtrodden day. Having said that, you look at shares of Plug Power, and man, they are flying in today's session, up as much as 9.3% right now, a gain of about 7.5%, rallying in what feels, like I said, a bit of a downtrodden market. Keep in mind, shares of Plug Power have dropped about 23% in the past 3 trading sessions. They're off about 21% since the company reported earnings back on November 10th. Those earnings, Tim, by the way, both earnings and sales topped estimates. I should also point out there's a lot of negative sentiment on this stock. 22% of the float is short.
I want to bring in Andy Marsh. He's CEO of the $3.1 billion market cap green hydrogen company Plug Power, talking all about recent earnings and the outlook for the hydrogen power market. Plug Power provides hydrogen products, including electrolyzers, hydrogen transport storage, and dispensing solutions, and more. He joins us from New York. Andy, the past quarter, Carol went through some of the numbers, the outlook as well. What are the highlights here? I mean, give us the outlook moving forward, your view, and why you're optimistic.
Well, Tim, we're having an investor day today for Plug Symposium. And I think off the bat is that we see sales growth. When you look at our earnings, we did approximately $177 million in revenue. We expect that we'll be at $215 million in revenue. In the fourth quarter here, that'll get us to 0% gross margin, which is on track with what we're focusing on with our Project Quantum Leap. And it really positions us to be able to achieve EBITDA's break even by the fourth quarter of next year.
Andy, hang on for 1 second. We just want to mention some headlines crossing the Bloomberg terminal. The U.S. House of Representatives does pass that bill directing the Department of Justice to release the files on Jeffrey Epstein. We had said just moments ago that it appeared they had all the votes. So that indeed just crossing the Bloomberg terminal. Now it moves on to the U.S. Senate.
Another redhead crossing the Bloomberg terminal. This also about news out of Washington. The U.S. does plan to approve the sale of chips to the Saudi AI venture Humane. The U.S. plans to greenlight the first sales of advanced AI chips to the Saudi Arabian AI firm Humane. This is according to people familiar with the matter, making a win for the state-backed venture as Saudi Crown Prince Mohammed bin Salman meets with U.S. President Donald Trump.
All right, and as you know, we are talking with Andy Marsh, Chief Executive Officer of Plug Power. Andy, forgive us. There's a lot of news coming at all of us. Speaking of news coming at all of us, we reported last week, our Bloomberg NEF team reported out that oil and gas major ExxonMobil might pause its blue hydrogen project in Baytown, Texas, due to government subsidy cuts and insufficient buyers for the clean fuel. Might hydrogen and Plug Power be just too early to thrive and survive?
Well, the world's a lot bigger than Texas and a lot bigger than the United States. So much of our activity is actually global. We've grown our electrolyzer business, which produces green hydrogen, from $5 million in 2023 and targeting $200 million this year. We're doing projects with large oil companies in Europe, people like BP, Iberdrola, as well as with Galp in Portugal. So the climate in the U.S. may not be as exciting. The climate around the world is, we see continual growth. We've been at the Plug Symposium here today. I heard from High 24, which is an investment fund, and they're talking about all the projects they see are going on around the world, which will support the development of green hydrogen. And it's the largest investor fund in the world for hydrogen.
Hey, Andy, Carol and I were talking about what you do, and part of your business at Plug Power is using electrolyzers, so essentially creating hydrogen and oxygen, splitting water into hydrogen and oxygen. It's energy intensive, and this is in an environment where we're seeing power costs go higher as a result of investments in AI, increased use of electricity, not just by companies, but by consumers as well. How do you control costs when it comes to electrolyzing?
Well, Tim, that's actually one of our advantages of our technology. You can turn it on and off. One item you're not pinpointing is that, for example, in Germany, in the month of May, 17.5% of the time, the grid was zero or negative as far as costs. You could be using that time to generate hydrogen, low cost and competitive with natural gas. So I think it depends where you are in the world, but as grids become more and more renewables, and that's happening in Europe, as well as with nuclear power, hydrogen's actually a great flexible electrolyzers are a great flexible load on the grid. And then you combine that with the fact that regulations around the world are really forcing people to reduce their carbon footprint. May not be the way happening in the US at the moment, but it is happening. I spent a week in Australia. It was just fascinating, the commitment you see around the world for green hydrogen.
Well, that's what I want to ask you, Andy. We've only got maybe a minute and a half, 2 minutes left here. So, here we are on a day where we're seeing the United States and Saudi's Mohammed bin Salman, in the White House. Is it your expectation that your business, where the growth is, it's shifting from the U.S. to outside the United States? I know you guys have something that you just did in the U.K. So I'm just curious, is that the focus? Is that where the growth is?
I think the electrolyzer business, there actually is growth there in the United States. We see European players coming to the U.S. to leverage the renewable power to generate RNG to ship overseas. But we also have a good business in the United States with our material handling business. We expect growth with our big customers this year. People in 2026, people like Amazon and Walmart. So, the recent legislation in July of 2025 actually put an investment tax credit in for fuel cells that's 30% from 26 to 32, which is a real boom to